Very good morning. You're watching India Market Open, and if you're interested in what's happening in the markets today, that's great. But if you're only interested in what's happening with the IPOs, then you've come to the right place as well. I mean, I think there's an IPO every few hours that's announced. Either there's a listing, or there is an issue open, or a new one on the block. Shadowfax yesterday came in and joined the party.
Yeah, and multiple ones getting announced by filing their DRHPs as well. But there's so much exciting happening in the world. The feud 2.0 is turning out to be quite a scene to watch as well.
Yeah.
You're talking about former BFFs, Trump and Musk.
Yeah, and the fact that he's going to, he says that he's going to ensure that anybody that votes for the new bill is going to get pulled down.
Yeah, so
eventually.
Musk is saying that, Trump is saying that, hey, maybe the Doge turns on Elon Musk as well. And the big, beautiful bill passing, the dollar crashing, there's lots happening. Really.
There is too much happening to unpack. My favorite quote of that fight, though, is that Elon Musk is the most subsidized person ever. I thought that was rich coming in. One more point before we go ahead is
literally.
Perhaps. One more point going ahead is what's happening with the India-US trade deal. And I just want to talk about that very quickly before we move ahead, because this is something
you spoke about it yesterday.
Yes, it's something that I've learned from my sources, is that there is a stalemate there. So there is a bit of a problem, and India is completely sticking to its red lines, which is no access to the agri sector to the extent they want, especially to dairy as well. So GM foods, impact on dairy farmers, all of that is being taken into consideration. There's another extension of the deadline of the contingent in Washington from the Indian side before all of that is sorted out. On the other thing that our team is negotiating on, and this is what I learned, is that we want access and concessions for our labor-intensive sectors, so gems and jewelry, leather, toy making, all of that. So that is also on focus. Meanwhile, Donald Trump has now told reporters that he believes there will be a deal between India and the US, and it'll be a different kind of one.
I think we're going to have a deal with India, possibly. And that's going to be a different kind of a deal. It's going to be a deal where we're able to go in and compete. Right now, India doesn't accept anybody in. I think India is going to do that. And if they do that, we're going to have a deal for much less tariffs.
All right, so that's the latest. But overnight, U.S. markets ended mixed as traders seem to have, shunned tech stocks for now. That's why you had the Dow up nearly 400 points, but not so much the S&P 500 and the Nasdaq. They have a heavier tech proportion, clearly, and they saw some pain coming in. Trump's big, beautiful bill has passed in the Senate and now goes back to the House. Now, here's the tricky bit. He's saying he wants it on his desk by the 4th of July. That's 2 days to go. And now the House will have to go through the whole list of amendments that have been made. The current estimate of what this will add to the fiscal deficit of the U.S. economy is $3 trillion. Now, meanwhile, the 10-year has stayed flat as that bill has passed. 4.24% is the rate for the 10-year. Powell has also indicated that the Fed could have cut rates if tariffs were not announced. I think that's an important one to watch. And I don't know if we have that bite and if we can play it out. Okay, let's listen in to what Jerome Powell said, and then we'll talk a bit about why it's so important.
Chair, would the Fed have cut more by now if it weren't for the tariffs?
So I think that's right. In effect, we went on hold when we saw the size of the tariffs and essentially all inflation forecasts for the United States went up materially as a consequence of the tariffs. So we didn't overreact. In fact, we didn't react at all. We're simply taking some time. As long as the U.S. economy is in solid shape, we think the prudent thing to do is to wait and learn more and see what those effects might be. And again, they haven't really shown up. So for now, we're waiting.
Okay, so the only reason, and I don't know what you guys think, I think that was important because it tells you that post-July 9th, if the dust settles in a way which is positive for all, it opens up the scope for the Fed to come in and cut rates. The upside might be much bigger than we're imagining right now.
Very likely, and Jerome Powell has kind of, in that convention that they did, and kind of mentioned both sides, right, that they need to monitor the situation, but is the room open for a cut? Possibly, yes. So I think it's not off the table entirely, let's put it that way.
And it, in a sense, also is the counterpoint to all of the arguments that Donald Trump has made. to say, hey, why don't you cut the rates? So he's given a response.
So more handwritten notes. No handwritten notes in reverse, unlike what Trump is giving them. But yeah, that's the big factor. Brent is staying flat at $67 mark ahead of that OPEC Plus meet. Asian markets have also opened mixed on, those couple of factors, especially on Powell coming and saying that there could have been rate cuts, or there may be rate cuts is what the indication then becomes. Hang Seng up in the green. Indian markets poised for a muted start, I would say, 32 points up in the green, so nothing special happening there. But all of the action tends to be very stock specific, Alex.
You said it, stock specific, because at the benchmark level there was hardly any movement yesterday. Let's talk about the flows data first. And you had a net sell figure once again by foreign institutional investors, 1,970 crore rupees, domestic institution buying just to the extent of about 771 crore rupees. But let's take a look at what happened in trade yesterday. We ended with the benchmark just a sliver of green seen on the screen, about 0.1%, but the Nifty 50 stayed in a less than 100-point range. Actually, it was just about 90 points or thereabouts through the session. The reason we ended in the green is because of support from heavyweights like Reliance Industries, which moved up quite smartly in trade, and HDFC Bank. And Tuesday saw high amount of call writing at 25,600, put writing at 25,500, and created a very narrow corridor as a result of that. So very near-term base and very near-term resistance forming for the Nifty 50. We'll have to see how that changes over the course of today and tomorrow's expiry day as well. But the broader markets underperformed for once. You had both the mid-cap as well as the small-cap indices which lost ground. Not too much to speak of, just about 0.2% for the mid-cap index. But they've lost ground after 7 straight sessions of gains. And barring some high-interest counters, in fact, even the trading volume was lower than the 30-day average. This was seen across the board. The likes of Apollo Hospitals, of course, seeing volume to the extent of 4 times the 30-day volume, but that was because it was in focus yesterday. The PSU Banking Index has extended gains, and it was the top performer in trade yesterday. It is now gained for 6 straight sessions. And in fact, over the course of that 6 days or 6 sessions, it has gained over 6%. So it's playing catch up, you can argue, and draws attention once more to the financial space. The fact that this is one pocket that a lot of people are betting on. Most other sectoral indices, though, were range bound. Neeraj, I wonder if we're going to see more range bound trade. The signs are that that could well be the case.
Yeah, you could argue. I mean, so depending on the India trade, yes. But I just thought the important thing to also mark is what's happening to the dollar versus almost all currencies, and therefore, because that is a bearing on flows, right? Yeah. And just look at what the dollar has done. So 14.4% depreciation versus the Swiss franc, 13.4 against the euro, 10.5 against the yen, 9.6 against the pound. This is all YTD, and I think some 6th or 7th consecutive monthly decline for a clutch of benchmark indices. So the dollar is weakening, and that in effect has flows likely to be positive, let's put it that way. And then if you kind of think of what to do to, how do I say, the kind of market support, you would argue that that's positive. So the only fly in the ointment is something that a few guests have pointed out yesterday, and that's the first line on the trade setup, which is that the tariff volatility may make it prudent to book some profits in the intermediate term. Sure, we could have a resolution by the 9th, but if indeed there is a bit of to and fro out there, right, then the market will not wait for the resolution to happen. There might be some bit of profit booking that could happen as well. So keep that in mind. Remember yesterday or day before we were talking about how the greed and fear indices across various asset classes are pointing to extreme greed. So even that kind of ties in with this argument that maybe if you're sitting on handsome profits in the recent trades, take some money off the table, it might be prudent. The first set of quarterly updates as well haven't necessarily been the strongest. I mean, we saw, for example, in APL Apollo Tubes yesterday, very, very lackluster, if you will. We've not quite seen the brightest of updates from an NMDC or a South Indian Bank or some others, and we'll talk about some of them a bit later on. So the quarterly updates haven't been the strongest either. I think the one bucket, and Alex will talk about that in detail, but just because of what's happening to crude, you would suspect that OMCs will be set to gain further, and there's some specific news as well which we'll talk about. But upstream now is in a bit of a bind. There was a lot of talk around Reliance, ONGC, etc. gaining, standalone refiners gaining, I think that argument is shelved, and therefore you have a couple of heavyweights not quite looking good from a Nifty perspective as well, and keep that in mind as you trade.
I think some specific pockets as well. Autos would be one that I would call out. The numbers are a mixed bag, but the overall trend, I would say, leaves a lot to be desired. I'd watch out for IT. Does the poor mood on NASDAQ and what we saw on Wall Street last night spill over to IT today? That's one to see. Of course, the big focus continues to be what's happening in the primary market. HDB IPO list, Sambhav Steel list today, many more in the pipeline. Let me just run through what MK is saying on HDB Financial, because a lot of focus on it. They're saying buy with a target price of 900 rupees, right ingredients, clear idea and impressive execution. So already there's a target price uplift from what HDB is saying. Improving external settings complements internal strength to drive growth and sustained growth. Improved profitability to drive re-rating. They expected to deliver about 20% on AUM, 27% on EPS CAGR over FY25 to 28. Meanwhile, markets are poised to consolidate. Nifty has failed to make a significant headway but managed to hold on to the crucial 25,500 mark. This could be seen as a comforting sign. Technical indicators suggest that the market is in a phase of indecision. Key resistance levels need to be breached to move upwards. So India-US trade deal continues to be a big factor. That's going to be a patchy 4 or 5 days before clarity comes in there. The first quarter business updates also need to be looked at closely because they're coming in drips and drabs right now, so each needs to be assessed. Global macroeconomic data will also be watched. So immediate support may be at 25,400 to 25,300. If Nifty slips below 25,350, the next crucial support is 25,200. Immediate resistance at 25,670 to 25,740. Zone must be decisively crossed for further upside towards 26,000. On the bank Nifty, key resistance at 57,530, key support at 57,240. So let's go across to Puneet now for the setup on the derivatives.
Well, thanks so much for that. So again, a very narrow trading session which we saw yesterday on the Nifty, just a 100-point range. We actually recovered a little bit at the end, but still it was a down day, to say the least, almost up just about 30-odd points on the Nifty. Open interest largely remaining under 1%, but for the Nifty Bank, again, that's going to be in the news this week. We've been highlighting about the quarterly bank updates that might come in. Could benefit the Nifty Bank pivot, and we've seen open interest also be almost double of what on the Nifty is showing, 55,600 to 55,700. That's been the key mark. On the FI positions, we've seen some index as well as Nifty options being added by the foreigners yesterday, and we've seen that reflect in the longs position as well, between 36 and 37% now. That's been consistent and could be one of the key levels. We do see that number waning on the downside by the end of the month. That's what happened in the month of June. So this will be a key one to watch out for because it's also result season. IT will be definitely in focus because of that aspect. When you look at the open interest distribution both on the calls and the puts, again the big candlestick remains at 26,000 for the calls. We've also seen that at 25,600 as one of the key levels, while 25,700 and 800 levels have seen some marginal dip in open interest. The 25,600 is also one of the key levels. That's a new level being formed as one of the key supports for the longs. While on the other side, on the put side, we've seen some dip actually in open interest of 25,200 as well as something like 25,500 as well. So it's interesting that the longs are getting added, and we're seeing some position trimming essentially at the lower end of the 25,000 mark for the puts. When you look at the key stocks, open interest gainers as well as losers, on the gaining side, we've seen some kind of short build up on stocks like PG Electroplast. The open interest change on 361 is quite meaningful, over 60%. While on the open interest loser side, to wrap up the discussion, we're seeing some kind of longs unwinding on Uno Minda, while something like a Torrent Pharma has seen short covering as a stock that's been definitely in focus. So overall, again, a very interesting session today as well. We're expecting to have a trading range to be much smaller again, and a 31% implied open on the Nifty.
Okay. 31 point implied open on the Nifty. But what's going to happen with auto stocks? All right, I'm going to start with the notes on auto stocks. A lot of numbers have come in and we'll go through with them. In fact, we'll get Puneet back to give you the details of those. We'll be speaking to those companies as well. But here's what Jefferies is saying. iShares, TVS and M&M have outperformed again in June. Says Jefferies, India's auto industry has witnessed a divergent growth trend in June. Simply put, it's a mixed bag, some good, some bad. Wholesales are up 10% year-on-year for tractors and 3% for two-wheelers, but down 7 to 12% for passenger vehicles and trucks. iShares, RE, M&M and TVS continue to outperform with 13 to 22% year-on-year growth. Hyundai, Maruti and Tata Motors are lagging with 6 to 11% year-on-year fall in June wholesale numbers. So expect a downtick there. They go on to say that volumes were better for Hero Moto but lower for Ashok Leyland, Bajaj Auto, Hyundai, Maruti and Tata Motors as well. Here's Morgan Stanley's take. They say June auto sales is a mixed bag. Channel destocking drove mid-high single-digit decline in passenger vehicle wholesales, while two-wheelers grew mid-single digits. China's rare earth curbs are starting to weigh on EV production. It's an upside for them for TVS, iShares and M&M. They say that it was key positive surprises, while Bajaj, Maruti and Tata were negative surprises in this whole auto pack and the numbers that have come in for the previous month. So that's on the auto sales. Asian Paints, I thought, was the other big story. So first on what has happened, and then I'll get into what brokerages are saying. So CCI, that's the Competition Commission of India, has directed further investigation into alleged anti-competitive conduct by Asian Paints. If the final order is in favor of Grasim, it could lower the entry barrier for challenges in the industry. This is what Investec has said. In fact, Investec has come out with a sell call and a target price of 2080. Expect some pain here. Now, here's what's happened. The CCI has passed a prima facie order to initiate an investigation against the company. This is based on information received from Grasim Industries, which of course has Birla Opus under it. And the company has responded to the order. They're saying they're reviewing it, they'll take appropriate legal recourse, and they remain committed to fully cooperate with the CCI. But look at how this paint space is heating up. And I mean, yesterday I caught up with JSW Paints, who talk about how they aim to move up the ladder. Here's Parth Jindal.
If you look at the paints industry in general, there are two segments of it, right? There's the decorative segment as well as the industrial segment. Now, last year was an anomaly where the decorative industry was flat. And we saw the largest players in the space actually lose market share, and the newer entrants like us and others gain share. But overall, the industry was flat. And the decorative industry has been growing at a CAGR of 10 to 12% for nearly 2 decades. So it is bound to have a couple of years here and there of flat growth. And last year can be attributed to the general election. It can be attributed to a lot of state elections, which led to government spending also slow down. We're hopeful that that comes back. Industrial, on the other hand, had a very strong year, and as India industrializes, as India tries to become the manufacturing hub not only for our domestic demand but also for global, industrial will continue to see growth. And what really excites me about this opportunity is that we have two engines of growth. We have the decorative engine of growth, which, like you rightly said, has hit a rough water. There is intense competition. There is increasingly stiff competition. And then there's the industrial coating side of the things, where we are now the number 2 player. Between ANIL and JSW Paints, we become number 2. And we have a clear pathway there how to leverage their global technology and know-how and our B2B relationships to go to number 1. So we are very confident that the sum of the two companies coming together will allow us to take this company to the next.
Okay, so that full conversation is something that you can watch on all our social media if you want to know more about it. All right, third stock very quickly is Lupin. It's a thumbs up. They've got a US FDA approval for an ANDA of a drug which I'm not going to attempt to pronounce, but it is an ophthalmic gel, and it's used for the treatment of inflammation and pain after operations. So that's going to be a big one to watch.
Okay, all right. Yeah, I'm in the same boat. I'm going to henceforth avoid saying any of these pharmaceutical names. I've gotten approval, incidentally. But let's talk about a few stocks that I've listed out. The first one is the whole raft of oil marketing companies, and this is what Neeraj was referring to. The specific update is from the petroleum minister who was speaking at an event yesterday, and he spoke about the compensation towards the recoveries of the LPG subsidiary that these oil marketing companies have had to face over the last couple of years, in fact 3 years. Do we have what he said? If we do, let's play that out. Okay, we don't. But essentially what he said, that it's 100% certainty that that LPG compensation will be received, and so that could be seen as a positive. Remember that prices of LPG cylinders have been kept low under the PM Ujjwala Yojana, and the LPG prices for consumers were unchanged despite the soaring international prices. Just by the way, in FY25, the under-recoveries for these three oil marketing companies, state-owned, stood at 40,300 crore rupees. And take a look at the division of that 40,000 plus crore rupees. IOC has 18,900 crore rupees of under recoveries, and HPCL and BPCL 10,500 above crore, which is a significant amount. So watch out for them in trade. Sentimentally could be a positive, but I guess a lot of investors will wait for the checks to actually be signed and for the money to be sent. Seagull India, it's a pretty large order, and this is from the NHAI, seen in context of an update that you probably saw on NDTV Profit itself, that the order inflow through NHAI has slowed down just a tad bit. This is important because it's for a 4 to 6 lane northern Ayodhya bypass, which is a 34 odd kilometer highway. This is going to be executed on a hybrid annuity mode, and the order is worth nearly 1,200 crore rupees. So it's a pretty decent order. Watch out for Seagull in trade today. It was up and about in trade yesterday as well. And the third one is Dream, folks. It's once again in rough weather because it's sent an update to the stock exchanges saying that certain programs have been shut. And it says that this is with Axis Bank and ICICI Bank. This has to do, of course, with the use of the airport lounges, which are built into cards, as you know. They've said very clearly that the impact of the closure of programs is likely to be material. They've also said that they are committed to take actions to mitigate that impact, but they have not listed out how they will do so, and certain specifics are missing. They have said that the contracts with Axis and ICICI are still valid, but I would see that as a negative. The fact that programs have been cancelled, this is essentially source of revenue which goes away.
Okay. Yeah, LP, I mean, OMCs might well be the key stocks to monitor. NMDC, now some of this news came in yesterday, but the Citi note came in today and the June total sales came in overnight, so I thought it's important to mark it. So the June total sales stood at 3.58 MT versus 3.73 million tons. So there's a bit of downtick in the month of June. And remember, when they cut the fines prices by 9% and lump prices by 10%, I think the Citi research points out that NMDC's fine prices are at a 30% premium to export parity post the cut. And usually it's about a 20% parity that it stays at. And Citi says that they have a sell rating on the stock, saying that the stock trades at about 5.8 times EV/EBITDA on Citi estimates versus the average EV/EBITDA of the last 12-13 years being about 5 times. So therefore, some downsides anticipated. Their target price is 60. So keep an eye out for NMDC. V-Mart Retail, the Q1 total revenue is up 13% at 865 crores. Same store sales growth just about 1%. Like we're saying, not everything is turning out to be hunky-dory. South Indian Bank was also, I thought, pretty okay. So maybe V-Mart Retail, watch out for this one. IPL or India Pesticides, they've commissioned expansion of formulation plant. They've increased the capacity by 3,500 MTPA from existing capacity of 6,500 MTPA. So that's a large capex that they are putting up. So keep an eye out for that as well. But guys, I dare say, one of the stocks in focus, it's not our news, but but I think the Economic Times has highlighted this, that Emirates NBD is eyeing RBL Bank's stake for India and an Asia play. And RBL Bank is has run up quite a bit in the last few days. It's an F&O ban, so don't know how many heavy positions can be taken right now. But this news could well spur further interest in the stock, so could be an interesting one.
Yep. RBL in focus, but so many more stocks that are on our watch list today. Let's quickly go through them so you're well prepped ahead of trade. Seagull India, 1,199 crore order from NHI. That's why it's in focus. Lupin has a new drug approved. JSW Energy has inked a battery energy storage pact. India Pesticides has expanded its capacity. In fact, that expanded capacity has come on stream. Lloyd's Metal has shown business updates which are indicating growth. Those are the Q1 FY26 biz updates.
Okay. There's also Paras Defense. It's set to supply counter-drone systems to France's Cerber. I hope I'm saying that right. Hero MotoCorp in focus on account of the launch of the Vida VX2. On the flip side, the ones that are unlikely to do well, this is something that was on my list. Impact of closure of programs of Axis as well as ICICI for Dream Folks and SBI Cards. Goldman Sachs has downgraded the stock. All right, let's talk about auto sales, and as we pointed out earlier to you, this is a mixed bag. There are a few positive surprises, but largely it's looking a little bit muted. This was anticipated, but Puneet joining in to tell you about the key details of what he's picked up. Puneet?
Well, thank you for that. So we saw most of those come in during the day yesterday, and we highlighted that in our closing show. Post-market, Hyundai as well as Maruti came, both showed a 6% decline. What we've actually gone ahead and done is also look at the quarterly performance of these, because we are expecting to see results starting in a couple of weeks. Let's look at the two-wheeler pack first. We maintained that while Hero reported a 10% growth yesterday, for the quarter, it's actually down almost 11%. It's one of the biggest underperformers in the two-wheeler space for Q1, and that's visible in the numbers as well. When you look at the second key aspect is Bajaj Auto, again a very minuscule growth, but the key growth aspects was seen in TVS as well as something like an Eicher. Both for TVS and Eicher, if we can move on, it's a 17% growth. We've seen that performance of the scooter segment doing very well for the company, and it's one of the key beneficiaries of essentially the scooterization of India. In terms of Eicher, we've seen that premium share continue to go up. The company's sales is now comfortably above the 80,000 mark per month. And it's one of the key focus areas a couple of quarters ago that they highlighted to focus on sales rather than margin performance, visible in the strong performance of almost 18%. In the four-wheeler pack though, there's just one key winner, and that is Mahindra and Mahindra. We'll get to that in a bit. Maruti, about 1% growth in this particular quarter again. While other makers have actually degrown in quarter one and lost market share, Maruti has been just able to slightly maintain their market share in this quarter. Tata Motors, a 10% fall in quarter one, while the similar fate is for Hyundai as well. For Mahindra, it's a 22% growth in Q1. Outperforming the industry by a mile, to say the least. It's now the number 2 player in retail market share in the passenger car space, while Hyundai as well shown a degrowth of about 6% for the quarter. Finally, in terms of commercial vehicles and the truck makers as well, we've seen players like Ashok Leyland largely been able to maintain their share. But Tata Motors is the first one I want to highlight, down 6%. The company's lost market share in the small commercial vehicle space, and they've addressed that in quarter 4 earnings, looking to regain that in FY26, while Ashok Leyland has been a beneficiary of the bus segment coming back to growth with Switch Mobility, and hence a key beneficiary. Finally, in terms of VECV, because of lower base, the company has been able to be the fastest growing company in the commercial vehicle space, and that is again a key positive for Eicher Motors. While on the tractors, we've seen that for Mahindra and Mahindra as well, a strong growth number of over 10%, outperforming the industry, and Escorts has been able to maintain shares. So for the quarter and for June, the 3 key winners continue to be TVS, Eicher and Mahindra, while we could see some outperformance in the second half of this year by someone like an Ashok Leyland as well as mostly Escorts as well.
Okay. Thank you for that, Puneet. Sridhar Kalani joining in. He's auto analyst at Axis Securities. Sridhar, hi. Very good morning to you. I mean, do you see this as just indicative of a bit of a pain that is continuing in passenger vehicles? Let me start about PVs first, because two-wheelers and tractors seem relatively fine. This is a long-standing pain that is continuing to show in this month as well?
Yes, so what we can see is that the pain has been continuing from last few months in the financial year, rightly starting from April onwards. We can see the domestic industry underperforming. However, the exports is where we are seeing some support continuously coming in the passenger vehicle division, especially talking about all the top three OEMs like Maruti, Tata, and Hyundai. We have been continuously seeing decline in their volumes on a YOY basis, and if we see on a quarterly basis, the overall domestic passenger vehicle industry is largely muted. However, support is being largely seen from their exports segment.
Sridhar, then given what we know so far, and there are a few standouts that seem to be consistently gaining ground or at least performing better than the others, and there was one or two surprises, right? So Hyundai not looking as bad as some might have feared, but what would your top picks be based on what you've seen and your expectation of a normal monsoon perhaps and tractor segments firing, all of that put together? What would your top picks be?
In the passenger vehicle segment, definitely Mahindra is the top choice among us. We do not have any buy rating or a target price because we do not have a hard coverage on the same. However, directionally, what we can guide is that their SUV segment, the new launches in the electric division, the 3XO models, they have been outperforming the tractor division because of the monsoon, higher MSP, and government support. It is supporting Mahindra quite very well. Also, the new segments that they have diversified, which they call the 5 growth gems, is also contributing significantly, and the management has rightly guided that they will be multiplying it by almost 3 times to 5 times in the next 3 to 5 years. So directionally, I would recommend in the passenger vehicle and tractor segment, Mahindra, which is not losing its market share, instead continuously gaining its market share. Yeah.
In the two-wheeler space, do you have any picks? Assuming that rural comes back, Sridhar, then you have the motorcycle manufacturers traditionally that have benefited, but then we're not seeing that in the numbers just yet. So what would you suggest?
Right. So in the rural space, what is largely happening is what we can see is that the pickup and the speed, what is expected by the street or by us as analysts, that is not being seen. However, we believe that given the monsoons, the positivity around income tax benefits that has been given, government expenditure, this should we should see improvement in the festive period going ahead. We expect from July onwards, the inventory buildup might start this time. We are positive on EVs. We also believe that Hero MotoCorp might be one of the dark horses in the race, and Bajaj can also turn out to be pretty good. So overall, the two-wheeler segment out in the whole automobile space looks good to us. We are expecting mid to high single-digit growth on a YOY basis.
So in that order, TVS, Hero, Bajaj?
Yes.
Okay. And for passenger vehicles?
Passenger vehicle, directionally, I can recommend Mahindra for the time being. However, Maruti cannot be, sidelined largely because of the income tax benefits, the consumption boost that is going to come, and especially in tier 2 and tier 3, Maruti is the first preference for buyers. And in post the festive period, we believe from January onwards, there might be some announcement of 8th pay commission, which might again improve volumes for Maruti, and the continuous decline that we are seeing in the entry level passenger vehicles, we believe that might just stop, and we might see some mild acceleration going ahead in FY27 over there.
Okay, just last point. If there is a concession for India before the July 9 trade deadlines, do you see this as a positive for any of the auto or auto anch pieces?
See, if there is a if the Trump administration and Indian administration come along and they go through the tariff, and so that will be positive, especially for the auto ancillary companies and not so much for the auto OEMs, because auto OEMs do not have that much exposure, or I must say negligible exposure with the US trade. However, auto ancillary companies like Endurance, like Sona Comstar, like Motherson, Bharat Forge might benefit out of the same.
Got it. Okay. Yeah, I think through omission, you've told us what you don't like, and you've not mentioned a few names, among them Tata Motors. Thanks so much for joining us this morning, Sridhar. Pleasure having you.
Thank you so much.
All right, we have to slip into a short break, but we've got lots of action to talk about, not least to which the action in the primary markets. We've got some stellar listings to talk about today, or large listings at the very least. Do stay tuned.
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
Welcome back. You're watching India Market Open, and the initial indication is for a mild uptick, 42 points in the green for the Nifty 50, and I wonder whether for another day in a row we see a little bit of consolidation for the benchmark and whether volumes will pick up. There's the listing, of course, to talk about HDB Financial, and we'll bring you details on that in just a bit. But joining us now is Somil Mehta of Mirai Asset Chair Khan, as well as Neerav Ashar of Latin Manharlal Securities. Thank you so much, gentlemen, as always, for taking the time. Somil, I want to come to you first. Do we expect another range-bound day of trade? A lack of major triggers, at least on the benchmark level, but individual stocks are in focus?
Hey, good morning. Good morning to everyone. Yes, absolutely. I think it'll be a little range bound for a little while now. For at least for a couple of trading sessions, we've had a very good rally, 1,000 points rally in the last 10 trading sessions. That's a very, very sharp move on the upside. I'm expecting a small pause, little bit of time-wise correction between 25,600 and 25,400 levels. 25,400 will definitely act as a very, very crucial support going forward in the very, very short term. And in the medium-term outlook, I think 25,200, which is very close to 20 daily moving average, that this will be a very crucial support as well in the medium-term outlook. On the upside, I'll be expecting the targets of 25,900 in the very short term. However, next a couple of trading sessions, so probably a week, I'll be expecting a sideways correction, a time-wise correction, a pause, and then again a move on the upside. So bias remains positive. Buy on decline should be the strategy, and the focus should be more sector specific and stock specific. I'm expecting metals and power to do good from here. Metals are already buzzing, and the power sector has just started moving up. CESC, Tata Power, they're looking good. So I think stock specific and sector specific should be the focus.
Let's talk about these stocks that you've identified. CESC, one of them, but you've also got Vedanta. What are the picks today?
Yes, Vedanta looks great. It has a resistance and it's been consolidating for a little while now, but I'm expecting this consolidation to break on the upside. Stop loss should be 455 and the target would be 495 for Vedanta. The second stock which I've chosen is CESC from the power side, and it has already broken on the upside, flag pattern, positive flag pattern on the upside, and the momentum indicator has already given a buy signal, fresh buy signal. So it'll great setup. 170 is the stop loss and the target would be 190.
Okay, let me go across to Nirav also this morning. Nirav, very good morning to you. Auto in focus today, so is I would say IT to some extent. On auto, is there anything that you would want to build position in, looking at the kind of numbers that have come in? What is your overview there?
Good morning and thank you for the invite. I think as far as the auto numbers are concerned, not much of a surprise. It's been a mixed bag. I think M&M emerges as the clear winner over here, followed by TVS Motors and Eicher Motors. And the rest has been a kind of a disappointing story as far as the auto pack is concerned. I think Maruti has disappointed. We've seen disappointment from Hyundai, Hero MotoCorp, Bajaj Auto also not impressing. To sum up the story for the auto sector, I think the domestic volumes have been disappointing. It's the exports which have been the saving grace, and to a certain extent they have shown a lot of promise and potential. And I think as far as the category wise is concerned, we have passenger vehicle segment which continues to show a lot of stress, especially in the month of May and June. And we have the commercial vehicle segment which is on the road to recovery, and we should see improvement in the coming few months over there. Two-wheeler story is of course dependent on the rural side of the economy, largely dependent on the rural side. And I think from that perspective, we've seen record production of rice, wheat, pulses, which augurs extremely well for the rural economy as such, and self-sufficiency as far as the economy is concerned. So I think two-wheeler space should generally do well. And I think on the premiumization side, Eicher Motors is the stock to watch out for, because they've done very well on the export front. And the product mix has changed a bit in the sense that less than 350cc segment has done better than the more than the 350cc segment. Apart from this, I think we like two particular stocks. One is Force Motors and ISML Isuzu.
Motors, even after the run-up that it has seen?
Yes, I think it continues to grow from strength to strength.
Okay. I want to ask Somil about Force Motors. On the charts, are you seeing a further upside? Because the run-up has been astonishing, to say the least.
Force Motors, yes, the run-up has been really good. In the very short term, I would not suggest, but yes, medium-term outlook or a medium to long-term outlook definitely still looks very good. Every time it dips down, it takes support at 20 daily moving average, which is at 13,576 to be very specific at this point of time. So that will be a very good buying zone. My suggestion would be to take a positional call here and hold on to this stock for a little, upside. My next target for this stock would be around 17,000 in the medium-term outlook, not in the very short term. Short term, I'll be expecting a small consolidation or pause.
Yeah, it came down yesterday after a really strong move in the preceding few days. The question will be, what is the force on the stock going ahead? Or as we just decided, what is in the pipeline for the pipe companies? Let's talk about that too a bit later on. But first, after a period of underperformance, a new export opportunity could be a significant catalyst for Indian steel pipe manufacturers. Saudi Arabia has imposed anti-dumping duties on steel pipe imports from China and Taiwan for the next 5 years. Remember, this is a news that came in a couple of days back. But while there is news, there is analysis. And the analysis seems to be that this move will set open the Saudi market for some Indian players. Somit, tell us your analysis about this.
Well, as the Indian steel pipe manufacturers remain in focus given the fact that there is a recent news where Saudi Arabia has imposed an anti-dumping duty on any steel pipe that is coming in from China and Taiwan. Now, these duties will be imposed by June 30th of 2025, which means that it has already been imposed, and the rates that have been assigned is around 6.5 to 27.3%. And analysts believe that this anti-dumping duty could open up the export opportunity for Indian style steel pipe manufacturers to Saudi Arabia. And Nuvama has also come out with this note where they're quite bullish on these companies. So firstly, we tried to analyze these steel pipe companies. There are three steel pipe companies, and what we have seen is they have consistently underperformed. So why they have underperformed? Firstly, there was the weak domestic demand, the capital expenditure that done by the private and the government side has also been on the lower side, which has also led to this impact on the demand, while geopolitical issues, which means that the conflicts in the Europe that we have been seeing and the US trade tariff has also weighed on the share prices of the steel pipe companies. But if you look at the financial performance for these companies, now if you look at there are three companies: Venus Pipe, Ratnamani Metals and Welspun Specialty. Venus Pipe completely stands out here. The last 5-year revenue CAGR has been around 75.3%, which is double than what Welspun Specialty has done and nearly 3 times of that of what Ratnamani Metal has done over the last 5 years. The EBITDA CAGR for Venus Pipe stands at around 141%. For Ratnamani Metal, it stands at around 24.5%. The PAT CAGR stands at around 185%, while for Ratnamani Metal, it stands at around 21%. Now, we do not have the numbers for Welspun Specialty for Welspun Specialty, given the fact that in the earlier years they were reporting a loss. Now, if you look at the valuations, market cap and the order win, in that front also Venus Pipe stands out, at least on the valuation front. The EBIT to EBITDA is the cheapest, 17.8 times only. There is a 12-month forward valuations. Venus Pipe market cap stands at around 2,800, order book stands at around 575 crore, while that of Ratnamani Metal 20,200 is a market cap, while the order book is just 1,900 crore rupees. Welspun Specialty, the market cap is around 2,400, while the order book stands at around 330 odd crore rupees, and the valuations, if you look at, it's very high at around 76 times. So Ratnamani Metal, the valuations come in at around 24.4 times. Now, if you look at the order book breakup, it's pretty much similar for all the companies. For Venus Pipe, export around 40%, domestic around 60%. For Ratnamani Metal, 58% is export, while 42% is domestic. And when it comes to Welspun Specialty, 37% is the export order book, while 63% is the domestic order book. Now, if you look at the outlook for these companies, well, the outlook is quite positive given the fact that India has also imposed such duties on steel pipe imports, and this will boost the domestic demand, and again the export opportunity is also opening up. And if you look at the guidance given by Venus Pipe, they expect their margins to be around 16 to 18% for FY26 and FY27. For Ratnamani Metal, if you look at, they're expecting a volume growth of around 5 to 10% for FY26, and for Welspun Specialty, they're expecting a higher growth given the fact that they also have a lower base. They are guiding for 25 to 30% of volume growth that they are expecting for FY26. And lastly, if you look at what brokerages are saying for these companies, for Venus Pipe specifically, there are 8 analysts tracking the company. All 8 of them have a buy rating, and the consensus target price suggests for return potential of nearly 42% from the current level. For Ratnamani Metal, it's quite balanced. Top 3 buys are from Phillips Securities, Elara Capital and DAM Capital, and the target price ranges anywhere between 3,300 to 3,440 rupees.
Okay, and very interesting points then. Seemingly Venus Pipes, purely because of valuation perspective, seems to be pretty attractive. And take a look at, I want to pull that chart up if we can, or that table up if we can, on Venus Pipes specifically. The current market price at 1,355. Investec, which has the most conservative expectation on the price side, has an expectation of 1,665. Nuvama pegs it at 2,120. All 3 of those are a buy. All right, now Somit is back to tell you about our regular feature on India Market Open, and that is the latest updates from the dealing rooms. And this is, of course, heard on the street. It's something that has had a tremendous strike rate. And so what's on the list today, Somit?
Well, firstly, it's Glenmark Pharma. Dealers are indicating that large HNIs have been accumulating discount on anticipation of some positive corporate development announcement that could come in soon. Secondly, it's Axis Bank, where brokerages, where dealers are indicating that there are sell flows on the FI desk. And if you look at the trade for Axis Bank yesterday, it was the top loser in the Nifty Bank Index. In fact, it was the only stock that had declined more than 1.5%. In fact, it was down around 2.5% at one point of time. For Bajaj Finance also, dealers are indicating sell flows. They are saying that the Q1 FY26 update could be a bit on the weaker side, so keep an eye out for Bajaj Finance as well. For Coforge, dealers are indicating that a clutch of family offices and PMS have been accumulating this counter. They're expecting a better than industry growth rate and better than growth rate compared to what analysts are estimating when it comes to Coforge. So keep an eye out for Coforge as well. For MCX, the stock has been buzzing or gaining on the back of a rumor that they might announce a new product launch, a new weekly product launch, and that's the reason why the stock was up in trade yesterday. For Aegis Vopak, dealers are indicating that the sell flows that were supposed to come in is largely over from anchors that were allotted shares in the IPO. The anchor allotment did come out of the lock-in period on June 30th, and most likely the selling is over is what the dealers are indicating. And couple of news flows that we indicated earlier has come out to be true. For SBI Card on June 30th, we did indicate that there were sell flows, and in fact Goldman Sachs has downgraded the counter to neutral from a buy. And for RBL Bank on June 19th, we did indicate that there's a possibility of a fundraise that could come in RBL Bank. A strategic investment could come in from a Middle East investor, and today media reports are also reporting that Emirates might be interested in buying a stake in RBL Bank.
You know, the interesting thing about RBL, Sumit, that even yesterday it was in the ban. Right. It was up 4.5%. Now there is a...
In fact, after that Citi note that came in, the stock moved up and it entered the ban period. And hence it has been in ban.
And still was up 4.5%. Now today that one of the dailies has reported, it will be interesting to see what happens here. But the interesting, just quick two follow-ups. One is on the thing that you just mentioned. Aegis Vopak. That and Belrise came at the same time. Aegis Vopak has been plagued by these flows related issue. Otherwise, the numbers and the valuations seem reasonable, if I'm not wrong.
That's what the dealers are indicating. The valuations and numbers are reasonable. In fact, the growth outlook is also quite strong. So this is just a technical downtick that we are seeing because of the sell flows that could come in, given the fact that anchor allotment has come out of the lock-in
Just one quick follow-up. No dealers spoke about this LPG compensation and what it would mean for OMCs?
Well, the LPG compensation coming in has been in the news for quite a while, and they have not yet received anything. So I don't think stocks should react on that. But yes, if at all the money comes in, obviously it will be positive given the fact that they had to book this as a loss. So that could come in as a positive.
In fact, we should get that comment up from the minister as soon as we can, because that could be an important factor today. All right, thank you for that, Somit, and look forward to hearing more, of course, on Heard on the Street. But let's talk about the mega IPO this morning. 12,500 crore rupee HDB Financial Services IPO is set to be the latest offering to hit the market. But big offerings don't always mean bumper listing gains. My colleague Sajith has done that number crunching. Sajith, from the data, what struck me is that big is not always beautiful when it comes to IPOs.
Well, big is not always profitable as well, because if you look at HDB Financial IPO is around 12,500 crore IPO, which was subscribed nearly more than 17 times. But if you look at the history from 2008 onwards, of the top 10 IPOs, about 10,000 odd crores, 6 IPOs did not end in positive at the end of the listing day. HDB Financial is looking to list in positive, but there are certain technical factors that needs to be looked at, especially with respect to the float which will be there in the market. Roughly 25% is held by the public for this. Only 16% of that is freely available. And if you look at the institutions are holding nearly 3.38%, which is freely available shares, with FI holding at only at 4.16%. Remember, QIB was subscribed 55 times. So there could be a liquidity skews which may come in, because if FIs want to shore up these shares, and only the public will be able to offload these shares to them, and it depends upon whether the public wants to offload these shares to the institution. So watch out for that liquidity in this IPO, and that will determine the premium that is going to come in for HDB Financial.
Well, certainly we'll watch out for that. Sajid, thanks so much for that. Shweta Daptardar, Vice President, BFSI Elara Securities, with us as well. Shweta, how would you think of HDB Financial, presuming that it lists with a mild bit of a premium?
Yeah, hi, good morning. So we definitely are positive on HDB Financial Services, particularly from the fundamental perspective and the timing. So like I have said, even in the past, NBFCs have typically navigated distinct challenges over past 1.5 years. And at this current juncture, diversified product portfolio portfolios will definitely have a strong earnings profile CAGR over next to 2 to 3 years. And HDB Financial Services definitely fits the bill. So with a diversified product profile spanning across SME, retail lending, LAP, and consumer credit, definitely this company looks very strong from the fundamental perspective. Also, if you quickly take a grasp at the financials, next 2 to 3 years look pretty strong in terms of AUM and EPS CAGR. So anywhere between 19 to 20% kind of AUM growth and over 20% EPS CAGR stands imminent. So after a slightly weaker spell over past 2 to 3 years, wherein HDB was hit by pandemic challenges, I think at current juncture they are actually positioned at a very, very strong inflection point.
Shweta, in the event that we see a downtick, which is not something that is completely out of the cards, we've seen it in the past for these large IPOs, would you say that it's a good opportunity for investors to get in, or would you say that you can wait for a bit, wait for that profit booking perhaps to come and kick in and then come in?
Yes, so we are advising entering into HDB Financial Services at every correction. So look, today, like I mentioned in the beginning as well, so besides Bajaj Finance, Cholamandalam Finance, the upper layer NBFCs with a diversified product profile is something market is also trying to look at. So I think HDB Financial Services with this diversified product profile and a strong return matrix will definitely have a long run to go on in the near future. So definitely we are recommending this for a buy at every correction.
Okay, so 3 scenarios here, Shweta. One is you have allotment. What do? Should you add on? Second scenario is you didn't get allotment. And, what should you do at this point? At what level should you add on? And the third scenario is you want to be in the space, not necessarily HDB. What else do you look at?
Yeah, so if you have not got the allotment, definitely whenever the stock corrects, you can go for fresh addition to your portfolio. If not HDB Financial Services, currently what we are looking at from the positive earnings perspective is certain names such as Muthoot Finance. I think gold financing run will continue for another 1 year or so because microfinance credit pipeline is still choked. So at the lower end of the spectrum, gold financiers, MSME financiers will definitely do well. Second, by now, as you are aware, I'm placing my bets on diversified financial services. So we are also warming up to the idea of L&T Finance. So whenever the microfinance turnaround happens, I think L&T Finance will be a stronger bet. Third, we are also looking at housing financiers from next 1.5 years perspective. Apparently, LAP has been putting up a strong traction for NBFC HFCs, and affordable housing finance book is stacking up. So from that perspective, Aptus, Aadhar are nicely placed. We even like PNB Housing Finance at current valuations with a diversified HFC profile. So yeah, these are the names which definitely you should look at besides HDB.
Okay, so there are a lot of options as well. Are you expecting a listing pop, Shweta, very quickly before we let you go?
Yeah, so not a very huge listing premium, considering how we also saw how the stock moved with the grey market premium rates as well. But yeah, we continue to maintain positive stance considering the fundamental aspects of the company.
Okay, thank you so much, Shweta. Now, this is what is key, that after that issue price and that listing pop at all, how do these IPOs actually fare? So in 2025 so far, there have been a total of 65 IPOs that have hit the Indian markets, 22 main board, 43 SME, 35 of that have gained on their listing day. That is out of 65, 35 have seen gains on their listing day, while 25 IPOs have lost value. Out of 22 main board IPOs, 6 trade below their issue price currently. Among 43 SME IPOs on BSE, 27 trade below their issue price. So now here's the list of what is trading below the issue price right now, and you're seeing that there quite a lot of them. Is Eris Infra is one of them, Indofarm, Schloss Bangalore, Stallion India, Denta Water are some of them which are below. In terms of those who are above, Quadrant Futures doing okay, Quality Power, Skoda, Prostam Info, Ellenberry, of course. Ellenberry was yesterday's listing. So on and so forth for SMEs as well. I thought this was interesting, folks, because you have to, look at what the outlook for that company is going to be. And if nearly half are now below their issue price, it's not necessarily the best.
And it's happened with large companies as well. We'll talk about some of that in more detail. Let's slip into a very quick break. On the other side, we'll have the pre-open rates in and we'll talk more stocks. Do stay tuned.
Imports become the exception rather than the norm, and increasingly we do almost, last year for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make, in our categories that we have been supplying to our defense forces, some of the best platforms in the world.
Back with India Market Open right here on NDTV Profit. Promises to be an exciting day from a bottom-up stock perspective, even if the indices were to kind of flatline. Remember, Japan is leading the Asian market slightly lower. Here come the first rate on the pre-open session. I mean, we may not be 1.5% lower, but yes, we could be marginally flattish or in the red. So don't be surprised if that is how the thing were to shape up. And now, Chandan Taparia Johnson, he's head of technical and derivatives research at Motilal Oswal Financial Services. Chandan, great having you. Thank you so much for taking the time out and being with us. How are you looking at the markets currently, Chandan? The run-up is, in fact, I must compliment you that when the last time that you came and you said that you expect a 500 to 700 point rally, there has been a nearly 300, 350 point rally post that. Are you taking some chips off the table now, or do you continue to be bullish?
Good morning. Thanks for having me and thanks for reminding. So I think the momentum is still pending. I was expecting the rally of 500 to 750 points, and market really rallied well by around 1,000 points in last 12 to 13 days, and it rallied towards 25,650 after giving the breakout about 25,200 marks. I need to focus on a couple of things which are going to be key trigger to continue the bullish stance in the Indian market. First part is that India VIX is below 12.5 level. That is quoting at multiple months low levels. So lower volatility clearly indicates that bulls are likely to dominate, but momentum could get slow. FI's long short ratio has improved to 36%. Nifty has been making high top, high bottom on the weekly chart, and supports are intact. And if I have to consider and discuss about the seasonality factor, as per the data of last 10 years in the month of July, 9 times we were positive. Even Nifty 500 scenario remained same. Even Dow and S&P were positive 10 out of 10 times in last 10 July. So I believe that seasonality factor could kick in to commence the next leg of rally. And now I believe till it holds above 25,200, 25,250, ongoing momentum could continue to first hit the immediate target of 25,750 and then commence the next leg of rally towards new lifetime high of 26,277 in the Nifty index.
Happening in July, Chandan, considering the seasonality that you've just mentioned?
Yeah, so yes, expecting Nifty to hit towards the new lifetime high in the month of July. That is just 700 points away from the current level. I don't know what could be the trigger, but setup and momentum is intact to positive. However, in last 2 days, we have seen a consolidative move, but momentum could continue. And talking about Bank Nifty index, I believe positive stance could continue until it holds above 57,000. It can rally towards 58,000 to 58,500. Talking about sector, I believe broad-based buying could be there because Nifty 500 itself rallied well in most of the July in last 10 years. So sector like defense, selective consumption, even oil marketing companies, selective energy name, or few financial are likely to perform in this market scenario.
What about your top picks for this morning?
Yeah, so talking about top pick, positive view on the defense name. So whether we talk about the BDL, BL or HL, most of the stocks are likely to be on the bullish stance. So here I'm recommending to buy on BDL, Bharat Dynamic Limited. It has given a consolidation breakout of last 13 days. Even on the weekly chart, it has negated the lower highs, lower lows of last 4 weeks. So expecting first leg of rally in the counter, one can buy with support of 1930 and it can head towards 2150 to 2170 level. Second trading idea, that is buy on Punjab National Bank. I believe PSU banks are likely to do well. And in fact, as per the relative rotation graph, PSU are in the leading quadrant. That means the strength and momentum both are visible in most of the PSU banks. So PNB, SBI and other name will be on radar. But here I am recommending to buy on Punjab National Bank with support of 110. And this stock can head towards 190 to 120 marks.
Okay, Punjab National Bank. Let me look at what's happening at RBL and the pre-open session, just about 3 minutes in. So let's see if RBL is seeing any of that buzz on reports that Emirates NBD may come in. We have to actually confirm if that's correct, but the stock is up and about in early trade. I want to look at Asian Paints and JSW Holdings as well. Asian Paints, because of what we've seen with CCI, we should pull up Grasim as well. Or at the rate not really showing, but JSW Holdings up. That would be where the paints business would sit right now. We should look at Grasim. We should look at Axo as well while we're at it and see if we can get a rate in for Asian Paints. That's going to be important. One important story there. Let's look at some of the early movers in the auto space as well. That's something which is in focus. I want to see a Bajaj Auto. Let's see what an M&M is doing, what a TVS is doing. TVS relatively good numbers, Bajaj Autos not so much. There you have TVS Motors. So tepid kind of response to some of those auto stocks today. So those are some of the moves that you're seeing. Chandan, just on a Hero is doing pretty decently actually based on numbers. And actually their new launch would have helped as well. Are you liking it on the charts?
So yes, Hero Moto has been consolidating, but momentum is missing in the counter. Only the good part is it has taken multiple support near 41.15 last almost 7 to 8 weeks and now holding the support of 50-day exponential moving average. So here the bottom facing approach can be applied, buy on a small dip with support of 4100 for a bounce towards 4350 marks.
Gabriel India for a second day in a row is doing particularly well. If you can pull up that chart, seemingly another 20% higher, which is quite incredible. CIE Automotive, also from the broader space, is doing, it was doing well. It's cooled off just a tad bit. Sangvi Movers was something that I also looked at on the charts, and it seemed to be moving higher. Let's pull that up. NACL. Let's see. Okay, so initial rates, they'll settle. Neogen Chemical, or the other end of the spectrum, was losing ground, and Skipper as well, something to watch out for in trade today. But we've got the big brokerage call for the day lined up for you, and this is Goldman Sachs, which has downgraded SBI Cards to a neutral from a buy rating, but it has maintained its target at 1006. Harsh joining you to tell you why they've changed their rating. Harsh?
Well, yes, we've seen a 40% rally in the stock actually, and I'm talking about calendar year to date, which is very impressive. And what Goldman Sachs has tried to do is try to delve into why that is so. One, they believe that the consensus view on the street seems to be that improving performance in terms of early delinquencies have started to trickle through and reflect on the stock price. There's also a better margin outlook given the repo rate cut, and you are seeing a pickup in market share even in terms of card spend. But what is it that will likely keep EPS growth more gradual than what the street is penciling in? They are seeing EPS growth nothing before H2 FY26, and they are saying ROA and EPS pickup will be gradual. They are saying delayed conversion of spends to interest bearing loans will likely push EPS and actually see an EPS growth only in a gradual fashion and not in a lumpy fashion. Second, gradual improvement in margins will happen as well, but it will be gradual. There's going to be a slower improvement in operating leverage than what most analysts are penciling in, and the ECL policy, which is the expected credit loss recognition policy, will continue to pressure credit costs at least in the near term. Now, in terms of assumptions, they've increased their credit cost assumptions by 50 bips for FY26 and FY27. They've cut EPS estimates by 9.5% for FY26 and nearly 8% for FY27. They believe positives are reflecting in the price. They're positive on the counter, they're positive on growth, but they're saying too much has already happened in terms of stock price action.
Okay, thanks a lot for that, Harsh. Certainly watch out for that. A lower rate cycle was considered to be positive for SBI Cards. Somehow it hasn't quite played. The stock has been a bit of pressure of late. Nirav, any thoughts very quickly on SBI Cards?
Well, I think we've seen a fast recovery as far as the stock price is concerned, but I think now that realization that things are going to go about in a gradual fashion, and of course the provisioning, what we spoke about, ECL, that provisioning definitely tends to put pressure on the financials from quarter to quarter. Although it can be reversed over a period of time, but in the short term, this can be an overhang. So I think definitely the stock is bound to consolidate at the current levels.
Okay, some stocks which had some very large movements and strong delivery data yesterday, just wanted to mark a couple of them at least. Blue Dart was up 7%, volumes for 83 times the 5-day average. Asahi India 25 times, HBL Engines about 19 times with the 4.5% value, and Raymond second or a third day on a trot did really well. This is as per yesterday's move, and in today's session some of these might be starting off okay. I wonder, Chandan, if any of these caught your eye: Blue Dart, Asahi, HBL Engine or Raymond?
So most of the stocks are looking positive. In fact, if I start with Blue Dart, yesterday it rallied well, and we have seen a clear momentum with surge in the trading and the delivery volume. I believe ongoing momentum could continue with support of 6,700. It can head towards 7,150 marks. Talking about Raymond, in fact, the positive price setup is clearly visible. In fact, from last 4 days, the stock is up by more than 20% on the weekly basis, heading towards its lifetime high of 798 that made in July 2024. So Raymond also can continue its up move. One can buy with support of 750. It can head towards 800, 810 kind of level. Talking about HBL Power, I believe here also momentum could continue. So most of these stocks are likely to do well, and I believe most of the Nifty 500 stocks would be on radar for most part of this month.
Interesting update that has just been sent to the exchanges by Keystone Realtors. This is the former Rustomji, as you know, and this is a development or redevelopment, a cluster redevelopment that has been announced in Mumbai, in Andheri to be specific. 8 housing societies will be redeveloped by the company. It's an area of approximately 4.75 acres and a gross development value of as much as 3,000 crore rupees, which is a significant amount. The saleable area, according to the company, is 10.6 lakh square feet. And remember, in Andheri West, so this is a pretty bustling area of Mumbai. And they have apparently already executed a development agreement with 5 of those 8 societies. And a letter of intent has been received from the remaining 3 societies. The stock is up and about in trade today, so we'll see if we can get further details from the management as to when construction can take place and what the timelines are. But interesting move in the real estate space.
Yeah, yesterday Prestige got a 3,400 crore GDV project in Chennai. Today Keystone is doing this. So these cluster developments and large developments for the established real estate players is turning out to be very good. Nirav, very quickly, any real estate name, and particularly on Keystone, this one more cluster development, any thoughts here on Keystone?
Well, I think it's a big development it's a big project which has been backed by the company. And of course, at this point of time, most of the companies are focusing on cluster development because it gives them the necessary scale and the capacity to execute bigger projects and strong revenue visibility. So I think, as you pointed out, Prestige Estates, this macro tech developers, Rustomji, etc., are bound to do well. And I think we are also looking at Raymond Realty because they also have a very strong project pipeline. They have approximately 100 acres of land at Thane with a value of approximately revenue potential of approximately 25,000 crores. And they have executed some joint development agreements to the tune of 14,000 crores. So this is around 40,000 crores projects in the pipeline. So we are looking at Raymond Realty too.
I'm sorry if you mentioned it, I just want to confirm, is it a buy on Keystone at this point?
Yes, definitely.
Okay. Chandan, on the charts, it seems like it's going to have a positive uptick at the start, and the entire real estate pack went through a little bit of a break in the action, if you can call it that. Does it pick up on the back of this specific news flow, though?
So I believe selective real stocks are doing well. In fact, if I look at the counter like Oberoi Realty, it has been holding well. However, we have seen some corrective move in last 3-4 days, but multiple supports are clearly visible at lower zone. In fact, in last 17 days, it took multiple support at 1815. So this will be the counter which will on radar with support of 1850. It can head towards 2000 kind of level. Apart from that, we need to look at the counter like Loda and other to go for buy on decline stance in the market. And I believe upcoming RBI policy will be the key trigger for most of the real estate counters in the market.
Okay. All right. I wonder whether there's any move at all. Where did Asian Paints settle in the pre-open? And if at all there is a downtick, Chandan, what would you do with this? Okay, so it's 1% low. I wonder whether that will change over the course of the open. Chandan, quick answer on Asian Paints.
So I think wait and watch. Already it witnessed recovery in last 2 weeks. I think let it come down to 2300 to go for bargain buy.
2300, then it's a bargain buy, not right now. Chandan, we have 20 more seconds maybe. Your top one call based on the pre-open rates.
So I'll focus on BDL positive on the defense. One can buy for an upside target towards 2150 to 2170.
Bharat Dynamics or BDL, 2150 odd is the target. Chandan Taparia is focusing on defense stocks currently. They had an iffy week last one, but Chandan likes the patterns here, I reckon. So certainly watch out for this one. Here come the first trades this Wednesday morning, and a lot of individual stocks will fly around. But what's happening to the markets at large? 0.2%, not too bad by the way, considering how Asia is doing. Nifty IT 5.58% higher. I don't know if this got to do with currency movements or otherwise. Mid caps are flat, small caps could be flat as well. Flat, except for IT. Everything else is flattish. Let's get the heat map up on the screen. Do we see some IT names up here? Yes, we do. Infosys 1.5%, TCS 0.7%, Wipro 0.59%, Tech Mahindra. So that bucket is doing well for itself. Adani Ports has a release which is okay, not too bad, not too great either. 0.5%. Hero MotoCorp 1.35%. I think the city note lays out a fairly high target on Hero MotoCorp. Then there is Grasim and an M&M out there in the list of winners as well today. Don't quite see an HDFC Bank or a Reliance in the top 15. What about the losers? IndusInd Bank, the Goldman downgrade, really hitting the stock. Asian Paints, the probe accepted, if you will, and Asian Paints has said that they are duly cooperating with this. So anti-competitive practices probe, 1.4% lower. Nestle, BEL, L&T are amongst the others. So the standout movers, frankly, while IndusInd Bank and Asian Paints are the losers, you have to admit that the way IT's moved, and Infosys in particular, is pretty strong on a fairly flat day.
I'm actually surprised IT is showing this kind of move. Maybe there is a hope that Q1 will be good for the IT pack, and frankly, very unpredictable set of stocks, so it could be anything out there. Let's look quickly at what's happening to the broader markets as we move ahead. This morning, completely flat. I mean, can you get flatter than this? This is on the sidelines. Everyone's sitting on the sidelines as we go into trade. Stock specific, maybe people are waiting to see what happens with IPOs. Bank Nifty showing some action, but movement is not great. Yes, the index has hit a new high because that's where it's moving, but no big movement there, no big momentum there this morning. Let me pull up the sectoral heat map for you very quickly and show you what's moving up there. Nifty IT now gaining strong 1% up on the Nifty IT. Is this benefiting from Jerome Powell saying that if tariffs, he's indicating that if tariffs don't really come in, maybe the Fed will cut rates. That could be the big indicator here. Nifty Metal also doing fine, so is energy. FMCG stocks a bit weak. But if you look at it, the market mood doesn't seem negative at all. It's not an outpaced kind of a rally, but not negative at all. Let's look at specific stocks as we move ahead. Okay, pulling up Zentech, they've completed an acquisition of a 76% stake in an aerospace company. So that's in focus. Paras Defense will be in focus as well. We'll be speaking to the management. I want to look at what's happening to Asian Paints once again. CCI has prima facie found that there could have been anti-competitive practices that impact maybe on Grasim. Grasim is the complainant in this case. So let's look at Grasim. Let's also look at what's happening with JSW Holdings as well. Some of the other stocks over there, all of them red. JSW Holdings and Axo, just to look at the new players on the block. Keystone is the other one that I'm looking at. They've bagged an important, pretty large redevelopment project, and that's looking good. That could well be one of the big movers of the morning. That exchange filing coming in a few minutes ago. But it's a huge project that they have bagged in Mumbai for redevelopment. So that's about 5% up in early trade. Let's look at some of those auto stocks. Hero Motor, of course, doing well, but what's happening with the TVS? What's happening with the Bajaj Auto? M&M in the green, good numbers. Maruti Suzuki completely flat. I think off the auto pack, you'd probably see just Hero really responding in any real way. The rest of them mildly up in the green. Tata Com, there's a Macquarie note which has given an outperform on Tata Communications. That's about 2.5% up. Let's also look at Sigal. The arm has 1,199 crore of orders. So Sigal also seeing a bit of a boost, but no major upside that I can see just at the get-go, Alex.
Yeah, a couple of the names that have moved in the recent past are continuing to move higher. And we did mark in the pre-open session Gabriel India, which has that corporate restructuring that was announced. Remember, this is part of that Anand group, and all of the automotive businesses of that group will be consolidated and housed under the roof of Gabriel India. It's expected to be EPS accretive from the get-go, which is why it's finding so many buyers at this point. Upper circuit on a second day on the trot. But a couple of names from the broader markets that are moving. Let me start with the losers first. You have City Union Bank, which has already recovered some ground. I wonder whether there were some large trades that pushed the stock lower. It is down about 3% or so. You have Sadhana Nitro, which is losing a little bit of ground, and that is one of the bigger losers on the Nifty 500 that I pulled out as well. Ratan India Power losing ground, so Sadhana Nitro as well, down about 5% or so. Ratan India Power also one of the big losers, down about 5%. Dreamfolks, I spoke about this, the fact that ICICI Bank and Axis Bank, there are a couple of programs that have been closed for Dreamfolks, and they say that the impact is going to be material, the street taking note of that. NSCL on the winning side is doing particularly well for itself. It's gaining about 5% once again. And we spoke about Venus Pipes as well. Somit told you about the implications of the Saudi Arabia duties on Chinese pipes. And this is one of the key beneficiaries, one would assume, for that if Indian companies are to fill that void or that gap. It's up about 6% or so, and REITs as well from the broader markets doing well, up and about in trade today, so 4% or so. But Nirav, I want to come to you on Venus Pipes, and the analysis seems to suggest that out of the 3 or 4 pipes companies seemingly, based on this Saudi Arabia update on duties, if there is a beneficiary, then you would look at Venus Pipes for multiple reasons, not least of which because of the rate of increase of its revenue as well as its EBITDA growth, but also because valuations are attractive. Would you agree?
Well, I think one important factor which we need to take into account is that whether they have the necessary capacity in place to execute such orders, because if there is an order from Saudi, it has to be a scalable order. So I think whether they have the necessary capacity in place, or if they can put up the necessary capacity as soon as possible to execute these orders, if at all they were to bag these orders. But I think on the execution side, there should not be a problem, because all these companies have already been doing export orders, and they seem to be well versed with the quality requirements and the quality checks, etc. So execution should not be a problem, but capacity constraint could be something to watch out for.
Okay, Venus Pipes in focus. I just want to pull up Gabriel once again. I mean, this stock doesn't quit. Yes, they are reorganizing their business structure, and on a 20% circuit, second day in a row. Nirav, you know, what are you thinking when you're looking at Gabriel? Obviously, no opportunity to buy right now, but if there is it, you know, are you buying into this excitement about the stock?
No, we have missed the stock, but I think an interesting trend which is emerging of late, because we've been just focused on the IPOs. Of course, the entire focus is on the IPOs. But another trend which we have observed is that a lot of companies are focusing on internal restructuring. They are focusing on demerging certain of their verticals, going in for separate listing of their units. More focus on capital allocation, more focus on different businesses with their peculiar requirements. And yesterday only we've seen a lot of examples of this kind of restructuring. Case in point was regarding Apollo Hospitals, where we had the pharmacy business and the digital health, and all these being proposed to be separated, demerged. At the same time, we had Bharat Forge, where there is some internal restructuring which is going to go on because of their the defense business, which is the Kalyani Defense Systems. And we have this Gabriel group, which was very low key in the past, but suddenly this announcement, which we are seeing about the restructuring of the operations, bringing all the operations under one roof. And clearly the attempt is to discover and create more shareholder value, unlock more value in the medium term.
Okay. Thank you so much, Nirav. Just one quick word from Chandan before I let you go. Post open, anything that you're spotting?
Yeah, so like selective stocks are doing well. PNB, I think we'll see momentum. The one stock which we discussed in the morning could be an action. And apart from that, I believe most of the PSU bank will be on radar. So one must look at the counter like PNB, Ken Bank and all. And positive on the Nifty IT. This sector has given a consolidation breakout on the daily chart after a consolidative move last 10 days. So counter like Emphasis, Tech Mahindra, Coforge, Persistence, even Infosys could be in action. So apart from PSU bank, one need to look at the selective IT counters on radar to see the momentum in the market.
Okay. Chandan, thanks so much for joining us this morning. Pleasure having you on the program, as always. Let's talk about Paras Defense. It's in focus on the back of a recent order win for anti-drone systems and quite a bit of action in the defense pack. Before we're joined by the management to talk about this latest update, Anushi is joining in to give you some more context on this order win and perhaps also some of the other metrics for the company. Anushi, morning.
Hi, morning Alex. So it's an important order win that we are looking for Paras Defense. Now they've backed a 22 crore of an order from French-based Survey, and this is a deal to supply 300 Shimara 200 systems, which is a counter anti-drone system that we are looking at. So this is designed to neutralize the hostile drones and would be beneficial in the area for the France over there. The company in general aims to unlock new export opportunities forward, and this is in line with the 50,000 crore of an export opportunity given by the Defense Ministry as well by 2029. If you look at the order book positioning of the company, it currently has an order book of over 900 crore. This is in comparison with the FY24 order book of 630 crore. The company does see that it expects to have a 40% of a revenue growth forward and aims to become a global leader in the optics and optronics system over the next 3 years. Along with that, they do expect these two metrics to come in with better profitability going forward. So Paras Defense continues to remain in focus. It's the export side of the picture which will be more important going forward.
Okay, well, thanks Anushi for that. Amit Mahajan, Director of Paras Defense and Space, Johnson right now. And Amit, we've been talking to you quite a bit of late. Your company's in news for many reasons, more reasons than one. This is from a numbers perspective at the beginning, doesn't seem to be a very large one, but is this opening up, how do I say, for lack of a better word, floodgates for you for the future?
Good morning. Firstly, it's always a pleasure talking to you.
Thank you.
And I don't mind the high frequency that we're talking together.
No, we like it. We like it.
Yeah. But the significance of this order is not in the value. It's in the mindset of a global consumer, which he started looking at India not just as a manufacturing hub, but today is looking at India as a development hub. Now, today, the technologies that can be developed are no more the responsibility of the West, and they have started believing that an Indian company can develop a system and a European company can consume it. They have been magnanimous enough to understand this and then put their layer of software or algorithms and then deploy this particular system for their customers. So this is a paradigm shift that I would like to see. It definitely opens the floodgates, but it's a change in mindset which is going to be permanent from here on.
Amit, hi, morning. Alex here. And we've spoken about things in the recent past for obvious reasons, but I do want to understand, as you pointed out, this is not about the value of the order. It is in terms of the technology and what you're building and also what it indicates for the future. I'm just wondering about localization, about the prospects for Indian companies exporting more, for your company per se also. Let's not talk about only this order, but does this change the dynamics going forward? How soon could you have a larger share of exports in your entire revenue book?
So the exports, like I've always been maintaining, that is a plan B for Paras Defense. The domestic market is extremely potent and right now positioning companies like Paras as priority one, because we are IDDM kind of companies. And if you can see a defense acquisition policy, it will mention that IDDM companies or IDDM products will be priority number one when it comes to procurement. So we enjoy a market which gives us that priority and obviously that importance and whatever comes along with it. We have good visibility of business and all of that. Said that, what I'm trying to say is export market, you cannot defy if there is a demand, if there are events which are happening globally, including happening in India, if it generates a requirement for consuming an Indian developed system or Indian manufactured system globally, this is the time that Indian manufacturers need to be really upping their readiness for an export potential like this. And then plan A and plan B can go hand in hand together. The good part here is because we are developing this technology, the profitability, the viability of a product sale to a European company still holds good. Otherwise, if you are going in a globally competitive landscape, then export becomes a plan B.
Okay. Specifically on this particular technology that you've gotten into the deal with, can you take us through where it sits in your offerings and what are the avenues that could open up now that you've started doing this?
So I want to tell you this particular technology that we are discussing and we've got an LOI from Cerber. This is something that we together launched as a concept a few months, couple of years back. Then we started developing this technology. I want to mention here specifically that this particular product is one of its kind in the world. It's a wideband detection and neutralization system. So it can detect a drone which is operating from 400 megahertz to 6 gigahertz. Now that's a very, very wide band. It's not a band jam system or a band detect system. It's a wideband detect and neutralization system. This system particularly you can say 90+% of drones it can detect and neutralize. So when we are looking at this technology, you're looking at this as a very, very cutting edge product globally, not just for India.
By the way, I think the street is liking what Abhin Mahajan is saying because look at that stock that's starting to trend higher as this conversation is going on. Amit, and I heard you start off this conversation saying that this is a mind space product more than a numbers thing, but I'm still trying to understand. So therefore, does this, okay, it can do one of the two things, right? One, it can open up doors for more products with newer customers for you, or existing customers if you will, but they're already your customers, so they know about you. Or that the opportunity size of this product itself is large, even though the initial number is smaller. Which of the two is true?
Both. The opportunity size for this product is large because this product
How
is
large,
one of its
Amit? How large? How large?
I want to tell you the value of this product is very well known, but these are not going in hundreds. These are going in thousands.
No, is
On
that,
quantities.
volume, sorry.
But what's the opportunities? I'm just trying to think. I mean, could it run into multiple 100 crores or annually? How? I mean, just give us some metric.
Multiple 100 crores is a conservative figure. Because this is a man-portable. You imagine this is not a very long, this is not a big system. It's a system as big as your suitcase. And you can carry it, put it in your VIP convoy, and you make sure you're creating a bubble of 2 kilometers omnidirectional where you can detect hostile drones and you can neutralize them. So you can imagine if I can use it for a VIP convoy, where all I can use it.
I'm just wondering, so you mentioned the frequencies that it tracks, and please forgive me if I don't understand all of the technical parameters of this. It's not something that I specialize in, but I'm just trying to understand the range, Amit. And so therefore, if you're talking about the utilization of something like this in a border region, in a scenario where warfare has moved more towards utilization of drones, what kind of coverage would you need with this kind of a product? Or would it be, and so we had one of the defense forces, a general, explained to us about how the anti-air defense system works and its layers. So if you talk about that, where does it fit in those layers?
So this becomes your front line. Okay. What it does is it is an agile system. So your system is quiet till it detects any hostility. It has completely software controlled and configurable human interface. So if it detects a drone, it will first alert the operator. It will make sure that you are designating that drone as a hostile drone. And after that designation, you can neutralize it. So this can happen in an omnidirectional, omnidirectional means I'm saying 360 degrees. Or it can happen directional, where you are using it in the border. You're not worried about what happens inside the border. You're looking outwards. So you can configure it that way. What happens is this can become your frontline soft kill mechanism. This will then has the capability to alert various other functions and get other countermeasures active, and then you can work on the intelligence given by the system. But by itself, if it is a radio frequency based drone, you can cover it more than 90%. You are making sure that you can neutralize that particular drone.
Got it. Sorry. Amit, I just want to come back to those numbers. So you said that into hundreds of crores is conservative.
Yeah.
So if you are the only one, do you expect heightened order inflow because of this over the course of the next 12 months? Could there be some guesstimate that you can attach to that?
I would like to mention here that this is the beginning. I want to keep it humble.
Yeah,
let this small order be the beginning of our export to European regions. Cerber is also going to be our partner as a gateway into Europe. So he's going to, and he already operates in more than 18 countries worldwide. So he's going to make sure that he's not just consuming it for his order, but he's also going to, use it for his solutions for other countries as well. So I'm expecting more orders to come. This being a revolutionary product, it requires awareness, it requires integration with your legacy systems, and maybe it might take some time before it really explodes into a huge business. But that business is going to happen for sure, because your radio frequency drones are not going to go away just as yet.
Okay. And Amit, how long does this technological edge stay with you, you reckon? I mean, because tech moves very quickly these days, right? So you are first, and it's the only unique product. Could somebody else make something like this in the next 1 or 2 months, or you reckon there could be some lead time there?
No, it requires more effort than that. I wouldn't say that it's something that nobody can do it.
Yeah, of course.
But it requires specialized design tech, and which we have done it. We would like to hope that in spite of somebody trying to do a full wideband jamming and wideband detection, there will be some edge that we will maintain at all times over and above that product. Considering we are also partners with Cerber, they also have their inputs and the algorithms, the refinement of the detection systems. These are all things which will keep us ahead of the curve at all times.
Just one more follow-up. You mentioned that while this opens up newer order or newer companies, from the existing clients that you have, there could be upsides as well, right? Because it's a big technology thing. So
Yes.
Are you hearing conversations with existing clients for this order or other orders via Paras Defense? Because of
Absolutely.
this?
So
Because of this?
I wouldn't say because of this. These are two parallel activities. What we have developed for Cerber is Chimera 200. Now it has an Indian version of that, and I'm very, very proud to mention that it by itself has found their own customers. It has cleared field trials, and I don't want to name where all it has cleared the trials, but all those places this has performed over and beyond the expectations of our customer. At some places, it has been able to create itself a category of procurement that this category did not exist when they went out for procurement. Now there is a separate category created for this called as wideband detection and neutralization system. So it already has a domestic clientele sitting in front, and we are expecting orders domestically as well.
Amit, so unfortunately we ran out of time 3 minutes back, but I still have a follow-up question, a quick one. Order book position was 835 crore at the end of February. You've given us conservative estimates for how much this could yield. So give us a conservative estimate for how you see the order book moving as well in FY26.
It was already beyond 900 as we closed in the financial year. And considering we have executed a large part of it now, we maintain that particular order book even after execution of Q1.
Got it. Okay, Amit, wish you all the best for that. Thanks so much for taking the time out and being with us and explaining us in detail.
Thank you so much.
That's, Paras Defense, and that's an interesting one. Now, we've of course got sources talking about this news report on Emirates NBD trying to get, or maybe wanting to get a stake in RBL. I think our sources are saying that Emirates NBD is focused on closing IDBI Bank transaction currently, and therefore RBL Bank may not necessarily be in the scope of things right now. So keep that in mind. But RBL Bank for itself is still about 1.7% higher. Aptus Value is the other stock in focus on the back of a credit rating upgrade, which could hugely benefit the company's cost of borrowings. We'll be joined by the management in just a moment, but before that, let's bring in Harsh to give us more context. Harsh.
Well, yes, it's a credit rating, credit rating upgrade, and it erstwhile the credit rating was AA minus positive. Now it is AA stable. So that's the credit rating upgrade, which is reflecting on your screen. But most importantly, what does this do to cost of borrowing? Does it come down? That's the first thing I want to understand. The second thing is with regard to the repo itself. We've seen a sharp downtick with regard to the repo in the last 4 months. How does that impact cost of borrowing as well? And both of those mutually exclusive. And I'd want to understand whether transmission of rates, how much of transmission will happen, how is competition looking at transmission of rates as well. It's a competitive space to be in. And last off, impact of all of this on the ROA number.
Harsh, we'll try and probe some of these points for sure. P. Balaji, Managing Director of Aptus Value Housing Finance, joins us right now on the show. Mr. Balaji, good having you. Thank you so much for taking the time out and speaking to us. To your mind, what does such an upgrade do in the current context wherein the tailwinds are very, very strong for lending profitably and quote unquote making money?
Good morning. As Harsh rightly told, the upgrade is from AA minus positive to AA stable by care. And actually, if you look at this upgrade, there are two benefits that will accrue to the company. One is diversification of borrowings as mandated by RBI, which means we'll be in a better position to negotiate better borrowing rates and also the amount with insurance companies and mutual funds. So that is one thing which is going to help us. Then the next thing is obviously the reduction in the cost of borrowings because of this upgrade. upgrade, there will definitely be at least 0.25% reduction in the cost of borrowings on the incremental borrowings. Now, Harsh's next question was that, for on the existing borrowings, what could be the impact with the repo rate being cut by 1% by RBI? What does this mean to Aptus? If you look at our total borrowings, it's almost 57% is linked to variable rates and 43% is linked to fixed rates, which means for 43% of our borrowings, there will not be any impact on the cost of funds. For that 57%, again, if you break that into two, 30% is linked to market related rates, either a repo rate or a T-bill rate, which means this 1% reduction on that 30% of the borrowings will come immediately. As we see it as of today, 0.6% has already come in, so 0.4% is yet to come. It will come in any time. And as regards this balance 27%, which is linked to MCLR, it depends on the banks to pass on the rate cut benefit to us. As I see it, it will take at least 3 to 6 months for us to get that benefit. Having said that, what is happening is on the incremental borrowings, we have already seen 0.4 to 0.5% reduction in the borrowing cost, which means we are negotiating rates around 8 to 8.25% for the housing finance company. So that is actually going to result in a huge benefit for us. And as regards the passing on of the benefits that we are getting on the cost of funds, maybe we need to, if you look at our loan book, 20% of it is linked to variable rates, which means for that 20% maybe we might have to pass it on in this quarter. But for the balance, 80% is based on fixed rates, so we don't have any. We are not under pressure to pass on those benefits. Of course, if the if the benefits are coming through us more, then maybe we might have to pass on some of the benefits to the ultimate customers.
Mr. Balaji, you've answered a lot of questions that we didn't ask, and I'm glad you heard Harsh listing out the things that he would like to know, and you've answered quite a few of those things. But I do want to understand, you've pointed out for incremental borrowing, 0.25% is what is the benefit that is likely to accrue to you on account of this rating upgrade. I'm just trying to understand also in terms of refinancing of your existing borrowings, because that is something that you can potentially do as well over the course of the coming quarter. We're starting a new quarter, and I'm guessing that is when things will start rolling on the ground in terms of your borrowing. And over the course of FY26, how much of your book do you anticipate that you will be able to refinance, and what is the implication towards the last quarter of the current financial year in terms of the spreads that you will be able to generate and what will accrue to your book?
If you look at the refinance, it depends on of course, this upgrade is going to help us, but we need to negotiate hard with the banks for getting the refinance benefits, because maybe the ones which are contracted at a slightly higher rate earlier, which are either linked to MCLR or the repo rate cut, to that extent, we might have to renegotiate hard, and then it depends on, while for that, I will not be able to give a timeline, because it depends on how fast the banks are able to accept this and then give back the reduction in the cost. So if you look at you were talking about the Q4 of this year, how much the cost of funds can reduce. Definitely, if you look at my 30% of my borrowing, which is around 1%, definitely that 0.3% benefit will come. And on the MCLR, which is around 27%, at least 0.5%. So which means at least 0.3 to 0.4 to 0.45% benefit should come in as a spread benefit.
Okay. Just want to sense also very quickly on the lending side, and of course that is something that you will benefit from in terms of the rate reduction that is taking place. What is your own estimate for the period that we're in right now? Do you anticipate that loan volume or disbursement will go up in the near term?
Disbursement, as we have been projecting, will be giving around 20 to 22% growth every year, and the AUM growth should be around 28 to 29% for the next 2 to 3 years. Considering the huge runway for growth and the market availability, we are confident of doing that.
Okay. Sorry, Mr. Balaji, just wanting some more detail there and just granular data, because the belief is that in particular housing finance, but everything else, which is NBFC, would have a fairly strong growth over the next 12 months at the very least, likely lasting much longer, would you believe the next couple of years could be very, very strong growth?
Definitely, because if you look at we all know the mortgage penetration in India is low as compared to the countries across the world. It is just 10-11%. And if you look at the affordable housing finance companies who are operating in the tier 3 or tier 4 locations, the housing shortage is much more acute than what is there in the urban areas. So, which gives us lots of potential for any of the affordable housing finance companies to grow fast. That is the first thing. Next thing is the government benefits, basically the subsidies under the PMAY scheme, and also the tax benefits that are available to the customers and the company is likely to be a guiding factor for the growth. So definitely in affordable housing finance companies in this area of serving the customers in tier 3 or tier 4 locations can see good amount of growth.
Mr. Balaji, thanks so much for joining us today. Absolute pleasure having you with us, and look forward to speaking to you in the near future as well.
Thank you. Thank you. Thanks a lot.
I do want to point out that at this stage, the benchmark has given up early gains. It is currently trading as flat can be. And in fact, a few pointers also on the broader markets. You have the mid-cap index that's down about 0.25%, and the small-cap index losing about 0.5%. The star of the show, though, is the IT index, and it started off with gains of about 0.8% at the start of the trading day today. It's built on those gains, up about 1.6%. But let's go back to the exclusive details that we saw just a short while back. We marked it for you, and this has to do with Emirates NBD picking up a stake in RBL Bank. Sources telling my colleague Vishwanath Nair that it's not keen on doing that, and Vishy is joining in to tell you why that is. Vishy, what are the details here?
Good morning, Alex. This morning, news reports has suggested that Emirates NBD would be willing to pick up a significant minority stake in RBL Bank. This is part of their Asia expansion strategy, specifically India expansion strategy. We know that Emirates NBD has already shown interest and is one of the few bidders who are looking to pick up stake in IDBI Bank. Therefore, this news report had shaken up, and what you're seeing is a response from the bank. RBL Bank clearly saying that there is no interest, that this does not look correct. This also is speculative. They have completely denied this news report. What we understand from sources is that Emirates NBD has absolutely no interest in picking up any minority stake in an Indian bank. What they're looking at is a controlling stake, and that is why they're going after IDBI Bank, because there they will have controlling stake in the bank. They're not at all interested in picking a minority stake and only being a part of a broader journey. They want to control an Indian entity.
Okay, that's an important clarification coming in, Vishy, because that stock has been buzzing after that report, and now we're hearing very clearly that that's not quite going to happen. We're talking about RBL Bank. So it's come off the highs that it was showing. Vishwanath Nair there with those details. All right, let's talk a bit about M&M. M&M is in the fast lane. Good monsoon has helped. Passenger vehicle sales have seen good growth. Positive rural sentiment has boosted tractor sales. Listen in to this conversation that we had with the CEO of the automotive division.
If you could help us understand, I was just looking at a trend in the month of June, as well as if I have to look at the quarter as a whole, strong numbers that have been reported. What has led to this kind of a growth this time around?
Firstly, thank you for having me on the show. So again, a strong month, like you said, growth of about 18% and for the month, and for the quarter, again, 20% plus. In line with what we have put out as mid to high teens growth for SUV. Frankly, the strength of the portfolio is what is carrying us forward. We've had some successful launches over the last 12 months. We've had 2 ICE launches in 3XO and Thar ROXX, and then we have 2 very strong launches in the EV space as well. So it's the demand for these products and the consistent demand we have seen for the products we launched before that, which is holding us in good stead.
Right. So now, is it the SUV portion which is actually firing, and where is it coming from? Is it from rural India or urban India?
Yeah, so as you know, within the passenger vehicle industry, SUVs has consistently outperformed the rest of the industry. But having said that, I think M&M has actually done better even against the industry SUV growth numbers. So we're outpacing that as well. For us, the growth has come from both rural and urban. And if you look at last year, I think urban was probably a little bit stronger than rural. But what we've seen this year in Q1 is we have growth coming out of Bolero, we have growth coming out of infrastructure and other investments which the government is doing in the rural areas as well. So that's starting to pop up as well, in addition to the urban growth, which has been going on consistently for us over the last 6-7 quarters.
Right. So, are you expecting this kind of a trend to continue where, SUV sales will see higher growth even in the rural market?
Yeah, historically, we have seen over the last 3-4 years that the share of SUVs overall in the passenger industry has gone up. I mean, if you go back 5 years, it was about mid-30s in terms of SUV as an overall percentage, but today it's in the 60s. So we believe that will continue to be the case. People are traveling longer, people are traveling on roads which can have varying quality, so they look for an SUV, and the safety that an SUV gives is also something which is a key buying factor.
Right. Overall, how much of this contribution has come in from the ramp up of new models which have boosted sales, versus the older ones?
Yeah, absolutely. So like I said, the 4 new models that we put out in the last 12 months, that's given us significant growth. But having said that, the core part of the business, which is Scorpio and 700 and Bolero, have been a strong backbone for us as well. So Scorpio continues to do 40,000-50,000 as a family. So that continues to be a bedrock for us. And on top of it, the growth is coming from the new models.
Okay. Now, when you talk about exports, we know it's still a small portion. How soon are you expecting that to ramp up? Because currently you just have 2 players in terms of peers who are capturing the export market to a large extent. There is expectation that M&M is going to follow suit as well on that front. So what's the trajectory looking like from an export perspective?
Yeah, it's a long-term game for us, international expansion. Even this quarter, we actually had very strong growth, 30% plus. But reality is it's a long game, and we will take it in a methodical way. We have aspirations outside even South Africa and Australia, where we are quite strong, and we want to go into the other markets as well. So you will see some of that plan unfold over the next 3-4 years. We probably will lead with EVs. The world-class EVs that we put out has seen strong interest, not just in India, but outside as well. So that's probably will be a core part of how we expand internationally.
Okay. And when you talk about the EV portion as well, what percentage of your portfolio in terms of PVs will be EVs from here on? Because to my knowledge, the capacity that you have is around 5,000 units per month. Last we spoke was around 3,500. Have we ramped up to 5,000 units per month in terms of production? And secondly, the contribution that it will have to the overall portfolio.
Yeah, absolutely. So you're right. Operationalizing 5,000 is what we had said in Q1, so that we are there. But you got to remember that we just have put out only the top variant at this point in time. So we are in the 4,000 range in terms of production. But as the new variants come into play, in preparation for festive, we should come very close to the 5,000 number as well overall. In general, this year, our projection is that we'll probably have about 6 to 8% penetration of our market could be in that range of EVs of our overall portfolio. And that's what we are looking at, and we are on track for that kind of penetration.
Okay. And how big an impact is the rare earth magnets unavailability? Because there was a lot of hue and cry on that front. Has that anyway impacted the EV portfolio from a production perspective, or are you seeing any impact in the coming months when in terms of production?
Yeah, so as you know that China has put new export controls on rare earth minerals that needs end-use certification to ensure non-military. You see, the rare earth metals is not just for EVs, it actually goes into quite a bit of key automotive components. But if it has to come out as assembled parts, you just have to get end-use certification. And currently we have inventory for the affected parts to meet our production needs, but we are also working actively with our supply chain to ensure that we are able to source the assembled parts. We are also exploring alternate materials, and we're working with SIAM and the Government of India to expedite the certification that we need. So we are working very closely with our suppliers to ensure that there is no disruption to production. Currently, we have inventory.
Okay. And taking into consideration inventory, Mahindra is not sitting on a lot of inventory, but what is the industry looking like? Are you seeing inventory which is piling up, or what are channel checks indicating?
Yeah, so June, as you know, is generally a shoulder month for us and for the industry. And July onwards, we start to see stocking up happening. So from the numbers I've seen, it's a little bit on the higher side for the industry, but nothing I'll be very concerned about. This is traditionally a lean month for us and for the industry. So nothing of concern per se, but we obviously need to see some customer traction coming in as an industry in July and August going forward.
Okay. July and August is going to be interesting as well because 15th August is when you do unveil your new platform. We spoke about it last time as well, and we're talking about Vision.T, and that's the concept that you've teased so far. Anything that you would want to add on it?
Yeah, no, absolutely. We're excited with it. It's a new freedom event. We will reveal a new platform which will anchor our new vision SUVs. We are excited to share our vision and hope the customers will respond to the same excitement as they've done over the last 5 years.
Right. And very lastly, Nal, the kind of growth that you've seen in the first quarter, 22% kind of a jump in terms of volumes. Are you expecting that trend to continue in terms of FY26 as a whole? Or you think there could be some dips and it would probably normalize in that 15 to 20% kind of a range?
It's very hard to do crystal ball gazing so early in the year, but our projection is that we'll do mid to high teens, and right now we're on track to deliver mid to high teens growth.
गोल्ड प्लस ऑप्टिमिस्टिक रिफ्लेक्टिव ग्लास लगाओ, धूप की गर्मी को दूर भगाओ और बिजली का बिल भी बचाओ।
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen.
Welcome back. Market's taking a bit of a turn, but all the focus on these two screens. Watch this very carefully. HDB Financials and Sambhav Steel, both about to list in another minute or so. And those are going to be really the big ones today. You're seeing the pedigree on that visual for HDB Financials coming in here. The might of the HDFC, entire institution behind them. Sambhav Steel might just be the surprise of the morning. All right, as we get that listing detail in, let's just try and get you a sense of what these companies are about. I'm starting with Puneet. Puneet, talk us through Sambhav Steel.
7, 6, 5, 4, 3, 2, 1.
We'll get those rates up very quickly for you. There you have it. HDB Financial about 13% up. It was a large size, but Sambhav Steel turning out to be the exciting one this morning as well as far as listing gains are concerned. Harsh and Puneet both joining us. Puneet's going to talk about Sambhav. Harsh is going to talk about HDB Financial. Let me start with Puneet. Tell us about Sambhav Steel.
Well, thank you for that. So it's definitely operating in the steel pipe segment, and it's slightly different than what my colleague Swamita put out earlier for Venus, but it does, compete with the likes of APL, Polo amongst others. But we haven't seen an IPO in this space in a long time, and Sambhav largely using proceeds to pay off debt. That should help reduce the interest costs and help margins as well. The key aspect also was the 21 times subscription for the company, with retail investors pouring in almost 8 times in terms of subscription. So definitely the investors getting rewarded there of those who had applied and also got allotment. One also aspect is the margins. It was around 12% over the last 2 years. We're still awaiting details for the fourth quarter. So if they're able to maintain 12 to 13% margins for FY25, that will be a big boost. And going forward, the company is adding new adjacencies with new categories as well when we spoke to them when the IPO opened. So those are some of the key positive about Sambhav, and definitely a stock up almost 22% now, rewarding its shareholders.
Okay, so Sambhav, they're showing an interesting listing pop, no doubt about it. Let me go across to Harsh. Harsh, the big focus has been HDB and is listed with a premium of close to 13%.
Well, yes, this typically means, and focus now shifts to performance and valuations, right? IPO out of the way. Let's talk about valuations first, because performance will obviously have to follow. When you're looking at the current price to book, post the IPO, post the fundraise, the book value is around 222 rupees per share. This is as per calculated book value, of course. So be cautious about that. But 3.7 times is the price to book approximately at the current 830. Between 8 and 850 would be around 3.5 to 3.8 times price to book. Now let me take it 1 year forward, and the way we've extrapolated this is we've said FY25 profitability will continue in FY26, but basis what analysts seem to be suggesting, they seem to be pricing in a better profitability than FY25, because the credit cost cycle has likely bottomed, and now we're starting to see, or rather the credit cost cycle has peaked, and now we're starting to see a bit of a taper with regard to credit costs, which could aid profitability as well as ROAs. Mind you, at peak, ROA was at 3%, last 5-year peak. And therefore, you could well see a better valuation than what I am suggesting, which means that the 1 year forward that I am extrapolating is around 3.3 times price to book. But it could well be better than that basis current market price at a 20% growth, and that kind of an engine and the backing of HDFC Bank. You could well see and this could well be justified in terms of the price to book valuation that we're seeing at the moment.
Okay, 842 is what we're seeing on HDB Financial. Some rates today or some notes today looking at up to 900 rupees. Our analysts saying buy on a dip. No, dip is not visible right now. But yes, now the real challenge starts for a company the size of HDB Financial Services. The listing is out of the way. Now we get down to business as usual. Not quite business as usual for Wipro Infrastructure. Prateek Kumar, the CEO of Wipro Infrastructure Engineering and MD of Wipro Enterprises, joins us on this show today to talk about a very, very exciting deal, which is Wipro actually getting a big chunk and an exclusive negotiation with Luwak Group. Tell us about this, sir.
So thanks, first of all, the opportunity to talk about something which we consider is extremely strategic as an investment in our aerospace business, where we have been, by the way, for the last almost about 14 years. So we have, as Wipro Infrastructure Engineering, we have been present in Wipro Aerospace with our facilities in India, in Israel, in the United States. And we have been seeking to expand our customer base. We were looking to see how we can engage further with customers in Europe and be able to get into platforms which are complementary to what we do. And obviously, we were looking for an organization with the right kind of technology depth, the expertise, and also the culture and value system which will resonate with who we are in Wipro. And Luwak was just the company, and they're based in France. They have 10 manufacturing facilities spread across 5 countries, legacy of almost about 4.5 decades. And we just felt that it was absolutely the right fit for us to build what has been our objective, to build a very globally competitive, integrated aerospace platform, which we think that this acquisition will help us in achieving.
Okay, so what are the details that you can share, Mr. Kumar, in terms of the size of this acquisition, how you're financing it, what are the timelines of it coming on?
So the specifics of the deal size I will not be able to share, but to help you and the listeners understand, it's a majority acquisition from our side. The leadership of Luwak will continue to lead the business and help it grow. And we are very, very happy and fortunate to have their continued presence in scaling it up. As far as the funding is concerned, it's all coming through our internal accrual, and we are not going to be dependent on any external financing for this deal. Suffice to say, from Wipro Infrastructure Engineering, and we have done about 14 such acquisitions over the last about 8 to 9 years, not in aerospace, but cutting across all our businesses. And I'll just leave you with this, saying that this is perhaps the largest acquisition we have done in Wipro Infrastructure Engineering. The acquisition is yet not completed. We have signed the definitive agreement, and I think we're going through the regulatory steps, and we think it will be another 3 months or so before we can completely consummate the deal.
One word on this whole, if I can use that term, fanfare in the minds of laymen, investors, etc., about the turn that the Indian aerospace sector has taken both on the defense side and otherwise. And what do you make of the opportunity size as well as the tailwinds currently? Because let's say the opportunity was always there, but it's not that we've capitalized on it in the past, right? Is this time different?
Yeah, so I think it's a good cautionary tale as well. I mean, this sector is not for the weak-hearted, let me tell you that. It requires a lot of patience. It requires your tenacity to be able to live through the highs and lows which this industry typically does experience. And we have been at it for, as I mentioned to you, for almost close to about 14 years. And only now we can say that we have been able to reach certain degree of depth, capability, and ability to go for programs which we always wanted to do. Having said that, I think the opportunities are huge. One, of course, the Indian commercial and defense space itself is growing, and therefore there is a lot of investment which is needed in bringing up the local supply chain itself, and which is what is attracting many of the tier ones across the globe to look at India as a good manufacturing base in aerospace, and by the way, in other sectors as well. As well as what we can potentially be doing for overseas markets as well. So combination of two, and it just felt like it was at the cusp of and at the edge of that opportunity, but it just feels like from a timing standpoint and people making investments from a longer term standpoint, you require the entire ecosystem to come, and with the right kind of policy backing coming from the government, it just feels like the timing is right. But it's not, if you are into grabbing quick headlines and be able to see quick returns, people will be disappointed. You have to go in with the appetite to be able to go through the waves and highs and lows and be able to stay put.
Let's, Mr. Kumar, just come in on the context of why this deal is important and why we're talking about it right now, with India really bolstering up defense spends. We're making sure that we're safe. We've seen Operation Sindhu recently. How does this deal fit into that larger picture for India being more resilient and Atmanirbhar?
Yeah. So one, of course, it just gives, if I give you a little more flavor on what we do in aerospace, we have so far been in landing gear parts. We have been in actuators, what we actually call it. We have been in very complex mechanical assembly, which we have been doing. And when you look at what Luak Group brings to the table is that they are into structural assemblies, they are into fairly detailed parts. They have post-processing capabilities, and also, of course, they are in customer segments where we are not directly present. So combination of that would be extremely useful just from getting the know-how and the expertise, as well as both sides getting introduced to the customer base, what Wipro has today and what Luak carries with it. We are not seeing it merely from what the defense opportunity could be, because the larger opportunity and where larger presence has been more on the commercial side, and that continues to grow handsomely. And so it's not to say that defense is not a priority. We will actually be looking at that as well, but it's going to be a very balanced walk, looking at both opportunities. And for sure, to your point, as the local aerospace industry begins to scale up with the right kind of supply chain getting put in place, not too far away from where we are in Bangalore, in Devanahalli, in the entire aerospace park, you see the growth and the development which has happened over the last few years. It's fantastic. which gives a lot of encouragement to overseas players to look, could we actually either partner or invest directly to have a foothold in the Indian aerospace ecosystem to be able to cater to the growing demands in the country. So all these boxes just feels like it's getting ticked nicely, but nothing happens in one go. It all needs to come together collectively for it to be able to deliver.
Okay, thank you so much, Prateek, for joining in and just sharing that very interesting story of what is happening in this space. A company that doesn't come out in the limelight very often. So I want to thank you for actually coming out and talking about all the great stuff that's happening. We have a great conversation lined up next. Sushant Bhansali, CEO of Ambit Asset Management, joining in. Sushant, very good morning to you and great to have you on India Market Open. You know, are you also completely enamored with what's happening in the primary market? Do you think it's crazy? Do you think it's a bubble? How are you looking at it? Let me start by talking to you about the hottest topic right now.
Yeah, no, I don't think it's a bubble per se. There's lots of money which institutions are collecting domestically, and they've been sensible in the last 2-3 years. This time of not putting that liquid float into the markets directly on the secondary side and making valuations much more expensive. They have been conservative. They have been taking, I would say, lots of promoter productivity blocks as well as primary offerings and using the money judiciously. So I would say it's a very judicious use, and that's how capital markets should work. That the money which is being used, that's a primary purpose of capital markets. That money is used for capex. And with the primary offerings, this is how it's going. Now, at times, it can happen that private equity funds will fund the capex and then come to the public markets to get an exit. But ultimately, that's the money which went for capex. So I don't see necessarily it as a bubble. Of course, there are opportunities IPO windows. It was shut for quite a few months in the recent past, and that's why once it opened up, I think people were ready to make use of the opportunity, and that's why so many IPOs and probably even QIPs are coming through in a short period of time.
Okay. You know, do you see it also as an option, IPOs, QIPs, and of course I would add promoter stake sales to it, a whole host of block deals. Do you see it as an option being exercised to take off the froth by the smart money when the time is right?
Definitely, every seller will try to maximize their gain, and if there's an opportunity and they believe that they're getting good price for the shares, they will always want to use that, and that's what is playing out. It's not necessarily fraud at times. It's just that people believe that the risk-reward ratio is in their favor, and that's why they would rather take money now than do it later. There is end use of that money, and if that's a wise use, why not?
Okay. Some people argue that it's also a Sushant, good morning. Of course, Neeraj here, good to have you. Some people argue it's also the right thing to happen for the ample liquidity to find its place. Now, my question to you is, some of these deals are landing up in some very good hands. Is that also something that a retail investor, for example, should take notice of, Sushant? Any thoughts on that?
Yeah, so broadly, if you look at developed markets, the institutional shareholding is much higher than majority owners or the business owners, right? In the Indian market, historically, the promoter stake would have been 50-60%. And if by doing this, it is coming down, I think it's better for capital markets. There is more stability, there is more liquidity in the markets. So markets are much more efficient in long term. And pricing is also very much efficient. So in a way, bringing the promoter stakes down and institutional shareholding increasing is very good for capital markets in the long term.
Got it. Sushant, how are you viewing markets per se right now? I mean, there has been a good sparkling rally. Is this making India look a bit expensive? Or do you reckon that things are okay on the valuation front and it might be a good time to invest?
Yeah, it's not excessive, I would say. Of course, it's no more cheap the way it was 2 months back in many segments. For between September and February, almost 90% of the stocks corrected. And between March and June, almost 90% of stocks are up as well. But a sum total of that is almost 70% stocks are still below the September levels. So there are opportunities as well. Of course, there are many where the P ratios had gone up to 50, 70, 80 times, and even today they are 30, 40, 50 times. So it's not cheap, but I would say the froth definitely has gone off in lots of segments. Most of the segments, I think, have reported more than 20% offs compared to September levels. And those are the sectors where there are good companies, but because of liquidity reasons, because of which I think the prices melted massively, especially in January and February. Those opportunities are there, and selectively, market is getting polarized. If you look at the last 3 months, even though broader markets have come up more or less, I think just 3 or 4, 5% below the lifetime highs. But as I said, 68% of the stocks are still below September levels. And in lots of segments, the polarization is taking place that the stocks which are going up are handful, and these stocks have gone up almost 30, 40, 50, 60% as well in the last 3 months. So polarization taking effect, and that's because the economy, I would say, is now stabilized after 2 or 3 very good years. Sorry, FY22 and FY23 and part of FY24, the earning profile was quite broad-based. It is now narrowing down. It is getting more concentrated. A handful of companies are now able to deliver 20% earning growth. If you look at FY22-23, almost every second company was delivering 25% earning growth. But now it has come down to almost every fifth or sixth company. And that's why market is rewarding companies which are delivering performance, and money is moving from weaker companies to stronger companies. So companies which have got good pricing power are the ones which are able to sustain their earning growth, and that's where smart money is now moving.
Is the smart money looking at private banks afresh, Sushant? Just wondering what you're making of it, because
yes,
you could argue they've not participated to the full extent.
Yeah, so I think the smart money participated last year in private banks. I think that's the time the opportunity was. Now everybody is following that. So if you look at BFI segment, I think smart money followed private banks in second half of last year. This year, the last few months, I think smart money is being going on to the insurance side within the BFSI segment.
Okay, Sushant, you guys used to, or maybe you still do, but write some very strong, very good monthly notes, right? About the current theme, about what is it that you guys believe is the first amongst equals when it comes to the investable landscape. What is the theme for July, if you can tell? And if not, what is the,
why not?
what is the June one?
Yeah, these are public newsletters, so there's nothing private in it. So we're writing on chemicals this month. So
what's the story?
Yeah, so we believe that there are quite a lot of tailwinds on the chemical side, both globally as well as domestically. The inventory levels globally are stabilizing, so there will be a lot of demand, and which will ramp up the pricing side of chemicals. The prices have bottomed out a lot across many categories of chemicals, and the capex cycle is behind us. So this is the time where the cash flows will be, there'll be more free cash flows for the next 2 or 3 years. I think Street is not very convinced on chemical side. They're not too gung-ho like they were 2 years back, and they were disappointed over the last 2 years. So we believe time for chemicals has come, and this is what we are going to publish in a couple of days.
Okay, and is there a particular segment within chemicals, Sushant? Because we know it's not a homogeneous sector. So are there particular verticals within chemicals where you guys believe, I mean, I look forward to read to your note, of course, but what will the particular verticals be?
Yeah, there are many. I think agrochemicals is one such where there will be, I think, lots of global tailwinds which will come into play. Monsoons in India as well as globally, I think the rainfalls have been decent, and the inventory levels, more importantly, are at a historical low. I think inventory to sales ratios is at decadal low, and that there are lots of tailwinds in agrochemicals. Alongside that, lots of import substitution opportunities where lots of capex has taken place in the last 3-5 years. and looking at how I would say trade deals are getting negotiated in the last few months, many import substitution companies.
Sushant, you'll have to allow me to cut in because my colleague Subhana Sheikh is in conversation with G. Ramesh of HDB Financial. Need to cut across.
12,500 crores. I'm also told that we are the largest listing that we've had in terms of number of applications for $1 billion plus IPO in the last 4 years. So, first of all, thank you to all the people who have shown trust in us. It's really a validation of our business model. In terms of our non-HDFC, I mean, our business model is independent of HDFC Bank. We don't depend on HDFC Bank for business. We have independent technology stack, independent origination stack, and an independent risk management stack. HDFC Bank has been a great provider of patient capital and guidance on corporate governance and risk management practices.
वेलकम टू सीएनबीसी आवाज सर, आपका टाइम देने के लिए बहुत बहुत धन्यवाद। लिस्टिंग के लिए भी बहुत कंग्रेचुलेशंस। मेरा पहला क्वेश्चन ये रहेगा कि एचडीएफसी एज अ ग्रुप हम देखें ट्रेडिशनली एसेट।
Okay. Sushant, sorry, just had to go across to that new listing and we started the conversation with that. Sorry, we were just finishing your point around chemicals, Sushant, if you just want to finish off that point.
Yeah, no, I think especially chemicals on agrochemical side, amines will be, I think, good. And there are lots of import substitution stories. Yeah, I think they will, they have lots of tailwinds in the next few quarters.
One final question, because a clutch of new listings have come in, but let's assume from a size perspective, the one notable one is HDB Financial. NBFCs have the tailwind with the new Reserve Bank of India moves as well. Is that a bucket to reckon with in the next 12 months? Do you think money can be made there?
Yeah, I think for good NBFCs, the time is quite good. The valuations are not too expensive related to, if you look at the last 10-year history, that there are times when the valuations take a knock, and which is what has taken place in the last 2 or 3 years. So it's a good time for good NBFCs because one, liquidity is now more in supply for NBFCs. RBI, which has been tightening on the NBFCs for quite a lot of time over the last 2-3 years. They have in the last few months, I think, sort of softened on them. They want them now to participate. RBI was quite, I think, convinced that unsecured lending was going haywire, and that's why they tightened all these through various measures, and they're now softening it. But more importantly, because of all this tightening as well as the credit cycle period which was going by, the smaller NBFCs as well as I think those who didn't have a solid business model, they are suffering right now, and it's a great field to operate for the good NBFCs for the next few quarters. Credit growth is coming back, and NBFCs will be, I would say, allowed to participate alongside banks equally. That has been, I think, if you look at a few of the actions which RBI has been taking, both in terms of circulars, relaxations, etc.
Sure.
So looks like NBFCs, good NBFCs will have a good time for the next 12 months.
Okay, and good NBFCs will have a good time for the next 12 months. We can't let you go, Sushant, without asking you what you make of IT. No one can quite tell. Is it you have a positive view, not quite positive view? IT stocks up today. It's also unclear what's happening on the US economy front.
Yeah, that's the precise reason why I think IT has, I would say, gone up and then again come down. One news and it goes up, and then another 2 months of, I would say, going down. So it's been tipsy-toffy for the last 2 years for IT companies. The valuations are in favor of IT companies. I can only say that at this point of time. How the US economy shapes up will determine the future course of earning growth, and you can't, I would say, lose much now. How much you will gain will depend on how the US economy does and how Europe is coming back quite nicely. So companies with good European exposure, I think their earning growth should be much better compared to companies with much better in a sense that of predictability. If US economy continues to do well and the recession is only a fear and doesn't come down that massively, then even the companies with US exposure will do well. Valuations are in favor of IT companies today for sure.
Valuations are favorable in IT companies. Thank you so much, Mr. Bansali, for joining in today. Well, a lot to unpack there. Banks in focus as well, especially IndusInd Bank. Now, there's a note today from Goldman Sachs on the lender and have downgraded it to a sell, but have hiked the target price. Swami joining in to break that down.
Well, yes, Goldman Sachs has come out with this report on IndusInd Bank where they have downgraded their rating on the bank to sell from neutral, but have hiked the target price to 722 from 634. Now, the brokerage is saying that the IndusInd Bank franchise is structurally weaker, which could lead to lower return on equity and return on asset for the bank going forward. They have cut the EPS estimate for IndusInd Bank for FY26 and FY27 by around 25% and 17%. Now, this EPS cut is largely on the back of the fact that they're expecting persistent margin pressure going forward for the bank, and this will be because of weaker yield trajectory and elevated funding costs for IndusInd Bank going forward. They're also saying that the valuations are on the lower side, but they will continue to remain below the book value given the fact that there is poor visibility on the turnaround plan for IndusInd Bank going forward. They're also saying that productivity drag and strategic overhang to keep the cost to income ratio elevated, and they're expecting lower PCR and elevated slippages to keep the credit cost on the higher side for IndusInd Bank. However, on the flip side, they have also given few factors which could lead the brokerage to be more constructive on IndusInd Bank. In short, this could lead to an upgrade for IndusInd Bank going forward, and those factors are if they see a market share retention, a stronger market share retention from IndusInd Bank. They're also saying that the asset quality is also stronger than expected, then that could also lead to an upgrade going forward. They also say that improved NIMs on either lower cost of funds or better pricing, lower cost to income ratio, and faster than expected recovery in macro and liquidity environment, these factors could lead to an upgrade going forward. But as of now, they have downgraded the counter given the fact that they're expecting lower return on equity and lower return on asset going forward for IndusInd Bank.
Okay, thank you so much for that, Swami. Just another set of stocks I want to highlight before we wrap up, because a lot of news building up is GE Vernova, Siemens Energy, Hitachi Energy. What has happened in this bill that has been passed in the Senate, Neeraj, is that they've restricted the tax breaks for renewable energy post 2027, and order books of global majors with capacity shortage could now turn to Indian MNCs. That's why some of these are in focus. The restrictions will increase the chances of global players sourcing capacity from Indian MNC players, which is why PowerInd is also in here. GE Vernova, like I mentioned, could be some of them. For solar players, there's higher sourcing from countries like India, which is possible. Think Wari, think Premier. So, these are some of the stocks that could see some action going forward. Once it becomes clear to the street what's happening, these details coming in as we're speaking. Well, that's all the time we have in India Market Open, but we're far from done. You'll hear from Sambhav Steels, you'll hear from HDB, and a whole host of news coming up on the other side.
गोल्ड प्लस ऑप्टिमिस्टिक रिफ्लेक्टिव ग्लास लगाओ, धूप की गर्मी को दूर भगाओ और बिजली का बिल भी बचाओ।
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make, in our categories that we have been supplying to our defense forces, some of the best platforms in the world.
The markets move fast.
And so should your portfolio.
expert insights, real-time stock picks.
Do I buy Ola?
Should I hold ICICI CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims?
Hi, thanks so much for joining in. You're watching Ask Profit on NDTV Profit. My name is Alex Matthew, and this morning, action in the primary markets are absolutely red hot. In fact, you have a couple of listings that are in focus today, one of which is HDB Financial. It has listed at a premium. There's also Sambhav Steel, which is in focus, and what a listing pop it has gotten. Let's pull that chart up. It's up about 21%, 22% at this point, but it's off the high point of the day. It listed actually with gains of over 30%. We're joined by the management this morning, Suresh Goel, who is the chairman and executive director of Sambhav Steel, as well as Vikas Goel, who's the managing director and chief executive officer of Sambhav Steel. So, gentlemen, पहले मैं आपको बधाई देता हूँ. Congratulations on a great listing. Let me start by asking you, Suresh ji, can you give us a timeline on utilization of the funds and what you're going to be using it for? As I understand it, it's going to primarily go towards repayment and reduction of debt.
Yeah, Vikas?
We are going out of 440 crores, 390 crores of the repayment of the debt and 50 crores for the general corporate fund. So now we are virtually debt free and our PAT will be increased. That is our now outcome of the IPO and we are very happy. हम आज बहुत खुश हैं कि आज हम NSE के प्लेटफॉर्म पे आए, हमने आज बेल रिंगिंग की और आज हमारे एक नए जीवन की शुरुआत हुई इस नए जीवन पे और हमारे सभी इसमें हमारे पूरे परिवार का, पूरी टीम का और पूरे हमारे स्टेक होल्डर्स का मैं धन्यवाद करना चाहता हूँ और सबका योगदान से ये संभव हो पाया.
बहुत बहुत धन्यवाद करता हूँ मैं सभी का और बात जब करते हैं हम संभव की तो संभावनाएं देखकर उनको संभव बनाना ही हमारा प्रयास है.
क्या बात है, आपने तो टैगलाइन दे दिया इसमें. संभव स्टील का टैगलाइन, ये नया टैगलाइन होगा सर. हाँ सुरेश जी.
जी पुनीत जी.
ओके
जी सर.
जी सर. तो
टैगलाइन क्या है सर? एक्चुअली मन में भरोसा है जी.
बोलिए सर.
हाँ जी, मन में पूरा भरोसा है पुनीत जी कि हम जो है वो संभावना को देखकर संभव बनाएंगे और हम जो विश्वास रखते हैं कि सब संभव है और संभावनाएं जहाँ पे हैं, जहाँ पे देश की तरक्की है, वहाँ पे हम हर उस कोशिश जो करेंगे जिससे हम देश के साथ में जुड़ सकें और देश की सेवा कर सकें.
सुरेश जी और विकास जी, आप दोनों को बहुत बधाई आईपीओ की. हमने पिछली बार बात की थी जब आपका पहला दिन था आईपीओ का खोलने का, तो तभी हमने बिजनेस की काफ़ी बात की थी. आज थोड़ी नंबर्स की भी बात कर लेते हैं. आपने बोला था कि आप इससे अपना बहुत सारा डेट चुका देंगे 390 करोड़ का, उससे आपको इंटरेस्ट कॉस्ट की काफ़ी सेविंग्स होगी. तो क्या हम उम्मीद कर सकते हैं कि 70 to 80 बेसिस पॉइंट या 1% की सीधा इम्पैक्ट आएगा आपके एबिडा पे FY26 में? क्या वो हम संभावना रख सकते हैं?
सर एबिटा तो हमारा पैट बढ़ जाएगा हमारा, क्योंकि हमारा इंटरेस्ट की कॉस्ट जो है वो कम हो जाएगी और आज लगभग हमारा जो रीपेमेंट होने के बाद जो इन इस सेकेंड क्वार्टर में हमारा पैट बढ़ जाएगा और ऑफ कोर्स जो हमने लास्ट ईयर जो हमने कैपिटल हमारी यूटिलाइज जो फैसिलिटीज़ हमने इंस्टॉल की थी उसका यूटिलाइजेशन भी इस साल हमारा बढ़ रहा है क्वार्टर टू क्वार्टर, तो उसका भी जो EBITDA भी हमारा बढ़ेगा जी।
जी मुझे बस आपके कैपेसिटी के बारे में पूछना था। आपने पिछली बार बात की थी कि आप काफ़ी नए प्रोडक्ट्स में भी जा रहे हैं। करंटली ओवरऑल आपकी कैपेसिटी कितनी है आज की तारीख में?
जी सर, आज 350,000 टन हम स्टील स्ट्रक्चरल स्टील पाइप्स बना रहे हैं, 60,000 टन स्टेनलेस स्टील एंड 1 लाख टन प्री गैल्वनाइज्ड कॉइल एंड पाइप्स। तो जो प्री गैल्वनाइज्ड पाइप्स एंड स्टेनलेस स्टील हमने लास्ट ईयर ही शुरू किया है नवंबर में, तो अभी उसका हम बेटर यूटिलाइजेशन इस साल कर पा रहे हैं जी।
और सर आपकी ओवरऑल यूटिलाइजेशन आपने बताया तीन प्रोडक्ट्स में आपकी कैपेसिटी कितनी है? इनकी सबकी यूटिलाइजेशन 60 से 70% की होगी अभी, बिकॉज आपके IPO में आप काफ़ी डेट पेमेंट कर रहे हो और काफ़ी जनरल कॉर्पोरेट पर्पस के लिए, तो आपकी यूटिलाइजेशन मैं अनुमान करो कि 50-60-70% होगी। तो अभी वो कितनी यूटिलाइजेशन और आप क्या उम्मीद कर रहे हो कि वो कितनी जाएगी अगले 12 से 18 महीने में?
सर हमारा प्रयास ये है, हमारा जो अगर 3 साल का आप रिकॉर्ड देखेंगे तो 70 से 75% हमने फिनिश गुड पे हमारा यूटिलाइजेशन अचीव किया है और अभी नए प्रोडक्ट्स पे रैंप अप हमारा हो गया है। तो इस साल भी हम मानते हैं कि हम 70 से 75% ओवरऑल जो है हमारा यूटिलाइजेशन परसेंटेज रहेगा।
ओके और आपके ट्रैक रिकॉर्ड के हिसाब से जो वॉल्यूम ग्रोथ है अगर वो आप बता पाएंगे और जिस प्रकार से आप यूटिलाइजेशन करंटली कर रहे हैं उसके हिसाब से आपको लगता है कि अगले 3 साल में आपको कैपेसिटी बढ़ाना पड़ेगा?
देखिए इसके अंदर में कैपेसिटी की जब बात करते हैं हम, तो हमारी इंस्टॉल कैपेसिटी जो है उसका हम बेहतर यूटिलाइजेशन कर पा रहे हैं और हमारी जो तीसरी यूनिट अभी लगाने जा रहे हैं 1.2 मिलियन टन की, जो 3 स्टेप्स में लगेगी, जिसका हम उम्मीद करते हैं कि दिसंबर 2026 तक हम पूरा प्रोडक्शन ले आएंगे, हम कमीशन कर लेंगे उसको। तो उसके बाद हमारी कैपेसिटी भी और इंक्रीज़ हो जाएगी और हम और बेहतर रिजल्ट की और बढ़ जाएंगे।
बस सुरेश जी एक आखिरी सवाल, आपने पिछली बार बताया था कि आप स्टेनलेस स्टील में भी आपका एक प्रोडक्ट रेडी है और आप वो कैपेसिटी भी इंक्रीज़ कर रहे हैं आगे जाके। करंटली स्टेनलेस स्टील में से आपका रेवेन्यू परसेंटेज कितना आता है? क्या आपको लगता है 10% आपका स्टेनलेस स्टील से आ जाता है अभी, और वो कहाँ जाएगा अगले 2 से 3 वर्षों में?
जी विकास
सर तभी हमारा जो अगर लास्ट ईयर की हमारी जो बैलेंस शीट हमने जो दिसंबर तक की दी है उसमें तो बहुत कम यूटिलाइजेशन रहा है, लेकिन अभी हम ये मानते हैं कि इस साल लगभग हमारा 30% जो है वो स्टेनलेस स्टील से हमारा रेवेन्यू जनरेट होगा। और आगे जब हम कैपेसिटीज़ हमारी इंक्रीज़ करेंगे, जैसा कि अभी बताया चेयरमैन साहब ने कि 1.2 मिलियन टन हम 3 फेसेस में लगा रहे हैं, जिसके फर्स्ट फेस में हमारी जो कैपेसिटी इंक्रीज़ होगी तो हम स्टेनलेस स्टील से हमारा रेवेन्यू लगभग 50% के आसपास हो जाएगा।
ओके सुरेश जी, विकास जी, हमारे साथ जुड़ने के लिए बहुत बहुत धन्यवाद और बहुत बहुत शुभकामनाएं। सॉरी मेरी हिंदी इतनी स्ट्रांग नहीं है, मैं फिर भी कोशिश कर रहा हूँ आपसे बात करने की, बट थैंक यू सो मच फॉर ज्वाइनिंग अस।
जी जी
सर
थैंक यू सर।
थैंक यू
बहुत बहुत धन्यवाद सर, बहुत बहुत थैंक यू।
Look forward to the next one. All right, there you go. So it's a new listing debutant on the stock exchanges, and just gives me an idea that I need to improve my ability to be multilingual, because this is really the story of the new corporate India. There are more regional players that are coming in and that are hitting the bourses and creating wealth for shareholders. There you go, 20.6% higher. And look forward to speaking to them in the near future to figure out what their plans are going forward as well. But it's time now to talk about Ask Profit. And by the way, standard message to you at the start. We've got a couple of ways for you to reach out to us. One is the message on the or the number on the top of the screen, which is where you can message us, and you also got the landline number on the bottom of the screen. I do want to point out that we will soon be speaking with the management of HDB Financial as well, so watch out for that at 10:45. You see that the message at the bottom of the screen. But let's get our experts in for the day. We've got Rajesh Agarwal as well as Vaishali Parekh joining in. Rajesh, you heard me floundering and struggling in Hindi, but really the point is that it's a good listing pop for Vaibhav, or rather Sambhav. What do you make of it, and would you buy at this point?
Good morning, Alex. Good morning, Vaishali. I saw, and it was a good try, I would say. You just floundered and subcomnight the word. Anyways, I understand how it happens. As far as Sambhava goes, I think listening to the management looked exciting, although we haven't gone through the numbers and all, as we haven't covered the stock in our IPO report too. So it would be difficult for me to comment at this point of time. But as far as listening to the management went, I think if they reduce the debt and the margins improve and the way they are trying to increase their share of revenue from stainless steel, that's a good point, I would say. So if that happens, definitely, because stainless steel as we all know that they are good margin products adding to the bottom line. So that would be a great thing to watch out for, I would say.
Thank you for that, Rajesh. The next question is also a very interesting one. Siddharth from Kolkata is writing and he's saying that he's holding AkzoNobel shares of 200 odd shares at 850 a piece and wants to know if he can tender he should tender his share once the open offer gets triggered or not. It's not triggered yet, Rajesh. But do you think that is something that one must pick up right now, considering that Asian Paints also holds almost 4.5% in the company, and the question really is whether that company will tender its share in open offer or not. But as an individual, do you think that is the right thing to do?
See, it depends. Like at the time of the open offer, if the market price is lower than the offer price, then obviously one should tender. But going ahead with the kind of fundamentals this company has, AkzoNobel, I would like to say, it's a good stock to hold for a long-term horizon. So, and we are turning bullish on the paint sector. We have recently come out with IC on Asian Paints too. So, just because of the crude factor and the fact that this entire sector has not done anything from the last so many quarters, I would say. So it's a good stock to hold for long term, but tendering or not would depend on the timing of the offer. When the market price, you have to compare whether the offer price is higher or lower on that point of time.
And he's sitting on quite a bit of gains. Siddharth is sitting on gains of over 5 lakh at this point. So it's a weighty decision to make. All right, we promised that we would be speaking with the management of HDB Financial Services. This is the new debutant on Dalal Street with gains of about 12.5% as we speak right now. And Vishwanath Nair, NDTV Profit's banking and economy editor at the NSE right now to speak to the management. Vishy, over to you.
Thanks, Alex. So we've got G. Ramesh, the MD and CEO of HDB Financial. You know, on the day of your listing, 12 to 13% listing pop, as they call it in the market. So how are you feeling? What exactly are you seeing? I mean, earlier we were talking. You said you were a little bit relieved now that this part of the journey is over at least.
Right. So this is the largest NBFC IPO till date, 12,500 crores. I'm also told that this is the largest amount of applications for $1 billion plus IPO. So first of all, thank you to all of you and to all the people who showed faith in our company. Thank you very much. Our company is fundamentally very strong, and we believe that we have an ability to ride through cycles, make sure that our business works well.
I want to also talk to you a little bit about this the pricing discussion, right? Because that is a discussion that took center stage when you first announced your IPO. It's between 700 and 740. Now it's listed at over 830. I wanted to get a sense, this is probably where your unlisted shares were also trading, before the IPO announcement came in. Do you think that maybe this is sort of validation for you as well as those people outside who are dealing with a very small set of shares but still pricing the company at a certain level?
So our focus is on making sure that we create long-term value for the company. The process that we ran for discovering the price at the IPO, we believe is the best practices that the industry follows, which is talking to investors, talking to anchors, and talking to bankers. So that's been done. And I think our focus as a company now is to make sure that we deliver the right level of corporate governance, deliver the right level of value to the stakeholders over the long term. We are a 17-year-old company, we're not a startup. Our focus has been on making sure that we have the right building blocks and make sure that we're building the company the right way.
So now the June quarter has ended. You're in a couple of weeks, there'll be time for you to report your first quarter results as a listed company to the broader market. What are you hoping to deliver?
So We have the timelines, we have a June deadline, and we are already on 2nd July, so we'll make sure in the next couple of weeks we put out our numbers.
In terms of numbers, what are you hoping to deliver?
I said we have fundamentally strong long-term growth story. That will be intact.
Okay. I want to ask you a quick question around the current macroeconomic environment. While there is a lot of optimism, there is also a little bit of fear because of the uncertain global scenario, some amount of growth slowdown that has happened in the recent past. Does that show up anywhere on your business, in your business at this point in time? Are you seeing any kind of signs of a maybe slowing economy, or maybe or are you seeing the reverse, which is that things are actually looking like they're going to pick up?
So again, it's a business that goes through cycles, right? Our business goes through cycles, whether it's commercial vehicle sales, or whether it's consumer sales, or whether it's enterprises. When India grows well, there's demand for more capital. When India is growing slowly, obviously capital demand comes down. Is something that we are acutely conscious of, which is why we have a product portfolio approach, which is to say that which segment of the economy is likely to do well over the next 12-18 months, and can we allocate more capital to that business, and so that we can ride out cycles. I think over the last 17 years, we had at least 2-3 major events that we can talk about that we successfully rode through. Something that again, can't really give you guidance for a quarter of a year, but what we are sure is that our business is strong, capable of riding through cycles. We monitor it on a real-time basis.
I don't want financial guidance, but just a sort of flavor of the current macroeconomic scenario. Are you seeing more reasons to be happy about growth?
So there are signs that things are looking good. For example, I think monsoon is expected to be good this year. Some of the challenges that we have had last year, for example, was extreme heat. We didn't have that challenge this year. So those are things that we monitor. We monitor primary equipment sales and vehicle sales. We look at how much of cash flows really happening in the market. As I said, we are a company with deep distribution, presence in 1170 cities. So we have a real sense of what's really happening in the market, and we keep fine-tuning our business strategy to make sure that we are actually addressing the micro market, not at a country level, but at a micro market level.
There's a lot of focus around also where the regulators approach on bank-owned NBFCs is, right? Because of the draft guideline that is there in place, we don't have any visibility on when the final guidelines are coming in. But does that play into your future planning strategy at all?
So as we speak, it's a draft put up for discussion. With the IPO, the bank has actually managed to come to a 74% stake, which means that we met our minimum public listing compliances. So as we speak, the company will continue to be a subsidiary of the bank. As the regulatory landscape evolves, maybe we'll have to look at what are the options that we have.
One of the comments I was listening to about Shashida Jagdishan, the MD and CEO of HDFC Bank, had to say earlier today was that feels like their child has grown up now and then taking on the world at large. When you're seeing the relationship between the company and its parent, I know that there is no real business relationship between the two. Right. But the fact is that they are a majority owner. Do you think that will also evolve now that you're a listed company and you will have your own compulsions as well going ahead?
Right. So I think the benefit of the bank has been really patient capital, right? I mean, they started the company in 2007. We're listing in 2025. So patient capital, certain standard of corporate governance that's expected out of HDFC group of companies, a certain framework in terms of how you manage your customer and your stakeholders, and your risk management processes. So that we expect to continue. We don't see that changing at all in terms of the ethos of the organization. But as I said, it's an independent business. Together with HDFC Bank and rest of the group companies, what we really hope to do is to address as many Indians as possible through our financial products which are of value. That will continue.
Okay. Is there a goal for expanding your market base at all, or are you happy with where you are? You have 31 states and you're present in all of them, and the presence is wide. But maybe because of business compulsions, do you think that maybe you need to tweak that at all in any fashion?
So, how many branches we put up, how many distribution points we put up is really a function of what we think is the core business strategy that we have. Now, one of the exercises that we do is actually look at primary sales of things like consumer durables, mobile phones, two-wheelers, and look at the tail and understand where is the growth coming from and how do we work with our partners to maximize their value. And that's, we don't think that the market is saturated yet. We don't think India is at a state where we've reached saturation. Right. So that will continue to happen. We'll continue to look at new ways of delivering products, at a value to our customers. That will continue.
Well, I want to ask you one last question. 2007, when you were in that conference room with Aditya Puri deciding on what this company is going to look like at the end of it, now 18 years or later, is this close to what you had imagined, a 1 lakh crore book in 18 years?
So, it's a journey. It's really not a goal. It's not an end we have in sight. But I think what we had very great clarity is that we will address a segment that's distinct from the bank, aspirational India, and I think that's something that we have built over the years and managed to deliver growth consistently and through cycles. I think that's something that we are very proud of.
All right, Mr. Ramesh, thank you so much for joining us on this conversation, sir.
Thank you so much. Thank you for inviting me. Thank you.
All right, so that was G. Ramesh, the MD and CEO of HDFC International.
Yeah, thanks so much, Vishy, for that, and interesting conversation. We'll know soon what the numbers stand at for the quarter gone by. The numbers will be out, as is the case for everybody else that is listed on the stock exchanges. Let's talk about the questions that have come through then, and there's an interesting one, and incidentally on HDB Finance as well as Sambhav, we've got Kishore Kumar and Shailaja who have both tuned in, I believe, from Bengaluru and Hyderabad respectively. And what they're asking is, they're looking for that listing pop. At what point should they book? Rajesh, question is for you. I know that specifics maybe you cannot comment on Sambhav, but would you book out within the first month or so, and what levels would you look at to book?
See, in Sambhav, I would say at least book partial profit today.
Okay.
If not full, book partial profit. And there are better choices in the market in steel space as such. So why not book 21 22% profit at this point of time, maybe switch to some other company. But HDB, we are very bullish on that. One, because of the pricing, they have kept a lot of on the table for the investors, because we all know that in unlisted market is trading at 4 figures. And with the kind of company, strong parentage, the strong brand, risk management, high credit profile, and not to forget 1.9 lakh crore customers they have. They have diversified product portfolio, loan book is in excess of 1 lakh crore. I think this company can give you very good returns if you hold for at least 12 to 18 months. I won't be surprised if it moves to 4 figure. So it's a hold from our side. And after the cooling down of the IPO and all those things, if it comes down to maybe 780, 750 odd levels by any chance, that would be a good entry point too.
Okay, interesting. And Rajesh, you did mention what steel companies would you go ahead and buy right now?
See, in steel, if I have to look pure stainless steel, as the gentleman in Sambhav Steel we're talking about, so why not Jindal Stainless? That's a better company to go for in stainless steel products as such. And if we talk of pipes, you have a likes of Apollo or a Venus Tubes doing well at this point of time.
Yeah, Venus in particular is up and about in trade today, isn't it?
Yeah, it is. We can pull up the stock.
Yeah, let's do that.
Yeah.
And Venus, yes.
5.6% as we speak. Interesting moves, and in fact it has upheld the kind of gains it has seen from the start of the trade, right? So significant amount of moves there. All right, the next question is on Infibeam Avenues. Kales ST is writing in, he's holding 5,000 shares of Infibeam Avenue, bought at 22 a piece. The stock is currently trading at 16, so sitting on significant amount of losses. Vaishali, hi, good morning. I'll come to you on this one. What are the charts indicating?
Hi, very good morning, all of you. So yes, there's nothing much happening in Infibeam. I think it is just on a corrective mode. Only consolation is that it has come towards a previous low. So 16 should be the support, and let's see if it bounces from there on. Till then, nothing really significant happening in this stock.
All right. So what would the advice be?
Keep a stop loss of 16 and hold.
Okay. All right. The next one's from Vadodara in Gujarat, your hometown. You want to take the question? Okay. Kaushik wants to know what to do with Shakti Pumps, bought at levels of 973, and he's got 15 shares, and he's not given us he's given us a time frame, long term. Rajesh, on the fundamentals, then Shakti Pumps bought very close to the current market price, maybe a little higher. Would you hold?
Yes, it's a hold from our side. The company has been doing well, getting good orders. And with the rural theme going forward, monsoon being good, around 105% of the average. I think it can move to around 1,020, 1,050 odd levels in the next 3 to 6 months. It's a hold from us.
Hold on, Shakti Pumps is the view that Rajesh has. All right, viewers, it's time to slip into a very short break, but don't go anywhere. We'll be right back answering all your queries on the other side.
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make, in our categories that we have been supplying to our defense forces, some of the best platforms in the world.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims?
Hi, welcome back. You're watching Ask Profit. And by the way, I keep telling you about the show that is up next, which is Know Your Company. I like it a lot. And the reason I do is because it allows you to understand the very small details of one particular stock every day. It's run, of course, and driven by the research team of NDTV Profit. And there is a rating that you get at the end of the show that gives you an idea of whether or not you should continue to invest or to invest in a particular company. The stock today is JM Financial. And the reason why they're focusing on it is they're asking, is it a turnaround play? Should you participate in that turnaround story? And how do the valuations stack up against peers? We're also going to be speaking with Digant Haria, who's the founder of Green Edge Wealth, about what he makes of this company. So you can watch all of that at 11:30 this morning. I do want to take the next question, which incidentally, and I didn't plan it, it just happened that way, if you can believe it, is on JM Financial. And Satya from Bengaluru has bought JM Financial at a price of 136,000 shares. He hasn't given us a time frame, but he's wondering whether to book profits. Any view on this one, Rajesh?
I think one should try to book profit at this point of time. It has run up quite a lot in the recent past. And I would suggest a switch from JM Financial to a Geo Finance or a Poonawalla that's on a better stack. Even EB Capital is doing very well. So these are three better choices going forward at this point of time.
Book profits for JM Financials. All right. Next caller, Dheeraj is calling in from Hyderabad. Dheeraj, hi, away. Good morning to you. How can we help you today?
Good morning, ma'am. I purchased actually Narayan Hrudayalaya today morning.
Okay.
At 2070, 200 shares at 2070.
Okay.
So should I continue holding it for the very short term? As the stock corrected from its peak, I tried to use the opportunity, but it did not work well as of now.
Yeah.
So should I continue going it with, or should I shift to something like TCS, which touched around 3485, or VA Tech Babag?
Okay, got your question.
These two counters, should I go into something?
Understood. Can you define very short term for me?
1 month, ma'am.
1 month. Okay,
3
Vaishali.
to 4 weeks.
Okay, got your question, Dheeraj. Vaishali, I'll take this up with you. 1 month is a good time period to continue to hold Narayana Hrudayalaya, or should he shift to counters that he mentioned?
Yeah, according to me, overall full hospital sector is doing well. So in between, all these whipsaws can happen, and you cannot be so in a hurry, because then you have to time your entry level at the right time. So I would say right now, if he has already bought, keep a stop loss of 1950, because if it breaks, then there could be further corrective move. But otherwise, if I'm looking at a long-term picture, I think this stock will continue to do well. So according to me, if it's for short-term, please keep a stop loss of 1950.
Okay. Prakash has got a question, and this is I'm going to make an exception because he points out that this is part of a portfolio rebalance. And he's wondering whether to fully exit a couple of his holdings from his long-term portfolio. One is CESC and the other is Tata Power, both of which are making a decent amount of profit. He's asking if we should exit and move to something in the defense space or in the NBFC space. What's the view, Rajesh, on the fundamentals and on the valuations, relatively speaking?
In fact, we have a buy call on both CESC and Tata Power. So that's the situation. So I would say stay put with us. Coming one by one, CESC is doing very well. The numbers have been decent. The capacity expansion has taken place, and they're doing well in Kolkata. Value, if you talk of valuation, it's trading at around 10 times earnings. So valuations are also very good, I would say. So it's a buy call from our side. And as far as Tata Power is concerned, it's a play on both conventional and renewable. And both have huge capacities, huge expansion plan belonging to a good group. So both are a buy from our side at this point of time. Somebody is holding can continue to hold. As far as switching to other sectors, I think if you have spare money, you can buy some amount of defense stock, despite the fact that they have run up quite a lot in the recent past. But still, going forward, long-term story looks intact because of the good order book they already have, and with the focus of government in giving new orders, international order coming in. So everything is going in favor of defense stock. And as far as NBFCs are concerned, we have already discussed that we have our likings of Poonawalla and Geo Finance or AB Capital. These are better picks in the entire space.
All right. So that's a comprehensive answer. Hopefully that answers your question and your portfolio rebalancing is successful. Actually, you don't have to, because it's a hold on both of the stocks that have been mentioned. All right. Murli is calling us from Bengaluru, as he usually does. Murli, very good morning to you today. How can we help you today?
Very good morning, and my wishes to co-panelists and anchors. This query is a fundamental query on Rajesh Agarwal, my favorite analyst, fundamental analyst. Number one, I bought Prestige Estates.
Okay. 200
shares at the rate of 16.11.
Okay.
And a very high PE, very low. This thing, the ROE is very low, but still, the last few quarters, the results were below expectation due to approval pending from government. Once which expected the first quarter, so they are expected to have a better years ahead, 26 and onwards. Can I add more? It's a 15% return per annum. I'm willing to wait for long term. Or switch over to DLF or Oberoi Reality.
Okay.
Which has overall reality has a better ROEs and financials. A similar book value. All our debt equity is very low.
Yes.
So
Murli,
what should I do? 15% return per annum.
Yeah, Murli, since you, and I know that you do quite a bit of research before you buy, I'm just wondering, did you see the development that we spoke about on Keystone Realtors this morning? They have just gotten a project in Andheri. It's a cluster redevelopment. And have you studied any other real estate companies apart from the ones that you mentioned?
No, I did study about DLF and Signature Global.
Okay.
Which is also a Keto I didn't try.
Okay.
Though I've seen some news, but I didn't try that.
Understood. Understood. Let me ask Rajesh what he thinks about both Keystone Realtors, the latest development. Rajesh, Andheri West is the region where they have gotten into an agreement with 8 societies, as I remember it, for a gross development value of 3,000 crore rupees. It's a pretty prime area in Mumbai. And they have several other projects as well in the pipeline. So one, what do you make of that? And specifically on Prestige, if you bought at levels of 1,611, can you anticipate a 15% compounded growth over the next few years?
See, Alex, real estate as a sector has its own inherent risk of inventory or corporate governance or interest rate and all those things going forward. And with the kind of latest news flow coming in, that a lot of inventory has been started building up after a long period of time because of lack of buyers and a lot of premium projects coming up. So there is a little bit of concern, but the fact remains a lot of companies have gone for debt repayment in the last 4-5 years, and that's a very positive point for all these companies. The debt equity ratio, as Mr. Morley has pointed out, has gone down. So that's the very big fact. The second is RBI coming in and cutting down on interest rate massively, putting in liquidity. That's also a positive for the entire real estate fact as such. Prestige State, it's doing well. Even Keystone is doing well, and with the recent development, they're going to do well in the next 2-3 years because these kind of projects take gestation period of 2-3 years. Even DLF, they have sold out their premium project in a few hours of their launch. That was a very positive news. But everything has already been discounted in these prices. I think major upside from these would be a very difficult task. One stock that comes to my mind at this point of time in the entire realty space, which is in a decent valuation, I would say, is AB Real Estate. That's Aditya Birla Real Estate, previously called Century Textile. Now they are fully into real estate development. Prior, sometimes back it was only a Worli project which they were doing. Now they are moved into Bangalore and other cities doing very well. The Birla Estates, the subsidiary, they have very premium projects, and their realization is going to go up in the near future, I think. So with a target of around 3,000 odd rupees, I think AB Real Estate can give better returns if somebody is ready to hold for maybe 18 to 24 months.
So that's with regards to where these real estate companies stand. Our next question, in fact, our next caller, Vikas is calling in from Hyderabad. Vikas, hi, a very good morning to you. I believe you have a question on Gensol Engineering.
Yes, hi. Very good morning.
Good morning.
So actually I purchased Gensol Engineering at the price of 213.
Okay.
300 stocks.
Okay.
So from the last 2 days, again it is rising about 5%, 4.99%.
Yeah.
So can I hold it or should I sell it, stocks?
And when you bought Gensol Engineering, was it the charts that you bought or you saw the fundamentals of the company?
At the time of 3 months ago, I have purchased it.
Okay.
Yeah.
Okay. Okay, Vikas, got your... Okay, I got your question, Vikas. I'll take this up with Rajesh. Rajesh, with everything that's happened with this company, the entire saga, would you still recommend Vikas to continue to hold? Because he's bought it at 213 and the current price that it's trading at is 46.
See, if somebody asks purely on fundamentals, it's a sell from my side because we all know the kind of story that unfolded in the company for the last 3-4 months or even ahead of that. Siphoning of funds, being very recommended to NCLT and all those things that happened, and that's not good news. It went from circuit to circuit from highs of maybe around 400 odd rupees to 40 odd rupees. And now it's started from the last 2 days, started moving up. I don't know till when it will go up to on a higher circuit. But again, you never know when it will start moving into lower circuit also. That time your exit won't be possible. So it's your take to take when you want to book losses. Losses is for sure, I understand, because getting 213, I think it would be a Herculean task. So it's better to get out of this stock as soon as possible.
When there are no sellers and only buyers, it's an so point well made, Rajesh. And further erosion in capital is not something that can be ruled out. All right, the next question is on Motilal Oswal, and Vikram from Bengaluru has got this question. His buy price is 677. And he's wondering whether to book profits and re-enter at lower levels, or would you add more at the current level? He points out that he is a long-term investor and want to have a stock from this sector or this space or this segment. Vaishali, on the charts, what would you make of it? He's holding with gains of about 52,000 or thereabouts.
So I would say long-term perspective, well, I think the stock is showing projections of upward targets of 1050 to 1200 levels. And in this sector, one can also look at Angel. So that also is showing a lot of strength. So I guess one should continue holding because, well, it is showing a lot of strength, but in between whipsaws cannot be ruled out.
Okay, so that's with regards to where Motilal Oswal stands, and hold is the view that Vaishali has. All right, our next caller, Bindu, is calling in from Hyderabad. Bindu, hi, a very good morning to you. How can we help you today?
Good morning.
Good morning.
I have 200 shares Afcon Fincha at 428.
Okay.
I want to hold for short term, like 1 or 2 months.
Okay.
Is it the right thing to add?
Okay, got your question. Yeah, go ahead.
Should I quit and should I enter into another sector?
Okay, got your question, Bindu. I'll take this up with Vaishali. Vaishali, not sure if you have enough data on the charts for Afcon's infra, do you?
Just have a look.
All right.
So Afcons are currently at 427 levels.
Right.
Well, there's nothing much. I mean, from whatever I have got, it's just been consolidating. I would say 410 acts as support and 450 acts as a resistance. So once we see the stock moving above that, we get a clarity that yes, it is on an upward trajectory towards 480 to 500 levels. That's all for now, right now.
Okay, so that's the view on Afcons India. The next question is on TVS Motor in focus on account of the auto sales data. And by the way, quite a few fundamental analysts looking favorably at TVS Motor, particularly because of the strides it has made in the electric vehicle space. But this is a shorter term question. It's coming in from Krishnan, who's writing in from Cochin. And he's bought at levels of 1,971. He's looking for an outlook for the next 6 months. Vaishali, on the charts, what are the prospects? He's in the green at this point.
So I would say continue holding because the stock is ready, showing signs of a breakout. It's just hovering around at the 2950 to 2850 levels. So either ways, if it goes to below 2850, please exit. Otherwise, continue holding. In all likelihood, if this goes about 2958, it gives a multi-time period breakout. So that would give you a target of 33 to 3400. So TVS Motors, according to me, is going pretty strong. Continue holding.
Okay, continue holding is a view on TVS Motor. Alex is calling us from Kerala. Very good morning, Alex. How can we help you?
Good morning, Alex. I have a query on GNFC.
Okay.
I am holding at 649. Why I bought this? I am looking at the intrinsic value. It's near the intrinsic value of my buying price. That's why it's trading far below the intrinsic value. And how is the outlook on the sectoral outlook on this chemical and fertilizer on back of this anti-dumping and this lower supply of from China? How is the sectoral view on the chemical and fertilizer?
Understood. I like that you've anticipated my question, Alex, and you've answered it before I asked. So kudos. That shows that you're watching and you're participating in the show regularly. Let me go to Rajesh on this. GNFC bought at 649, he says, because it is trading below its intrinsic value. I haven't looked at it, but do you agree?
Yes, I do agree that because we have also tracked this and it's trading at a huge discount to what its valuation should be. according to us, it should be above 800 odd levels. Just because it's a PSU, it gets it doesn't get that kind of discounting. But the sector it is into, fertilizer and chemicals, both are doing well. Fertilizer, as we talked about, 105% of long-term average monsoon is there. So government's focus on rural and all, rural spending is going to go up. So we believe that fertilizer as a space is going to do well, and GNFC is a prominent player into that. And as far as chemicals is concerned, I think after a long period of time, chemical space as such has started moving up. So that is also a plus point. So I think one can continue to hold for a target of 800 plus odd levels into the next 12 to 18 months. And plus the fact remains that these companies give good dividends too. So you can at least have some amount of inflows coming in as dividends.
Okay, so that's with regards to where GNFC stands. The next question is on Eternal. Nikhat is writing in and wants to know, he's bought 40 odd shares at 267 a piece in August, wants to know if he can continue to hold or sell. Rajesh, I'll come to you on this one. The buying price is still slightly elevated as compared to where the stock stands right now. But last week it did see a gains of around 8 odd %. But this week, I think since Monday, it's been seen in terms of profit booking. What is your view with respect to where Eternal stands, and with respect to how FY26 will fare for these platform companies?
See, we are not bullish on these stocks for a short term, be it Eternal or Swiggy, because of the fact that numbers have not been exciting. And that was because they were very aggressive on expanding their dark stores, and that took a toll on their last 2-3 quarter numbers. And we believe that going forward to in the next 2-3 quarters also, the way they are going to expand in Tier 2 and Tier 3 cities, the numbers are going to take a toll. So nothing exciting on the bottom line front. Plus competition is heating up, be it Eternal, be it Swiggy. Now we have heard that Amazon and other players also coming in, not only in food delivery, but also into quick commerce space. Jio is also entering into quick commerce space. So competition is going to hurt up. Margins are on the lower side, valuations are stretched. So at this point of time, we are not very bullish. At best, these can be taken as a good trading bets where you get swing highs and swing lows. So that would be a call, I would say. I would say if you have a trading position, then keep a stop loss of 240 and carry on with your position. Otherwise, fundamentally, we are not that excited.
Krishna from Hyderabad also has a question on this, and I'm pretty sure that that is answered by this. I do want to point out, viewers, unfortunately, we've lost Vaishali's line on account of a technical difficulty that we're facing, and so we're going to have to focus on fundamental questions that you have sent in and slightly longer term questions. But Sumit has written in asking about whether or not to purchase Amber at the current market price, and he's ready to invest or put in as much as 2 lakh rupees, but he's got a relatively short term outlook, just the next couple of months. What are the prospects like in that time frame? Rajesh, of course, I can't push you to give me a time and a price in that short a time frame, but what's the view?
See, basically these companies are doing very well, but this year, due to the shorter summer period, monsoon arrived early and the entire pack is facing some issues because of that. The entire pack, be it EC companies or holding companies or others. From yesterday, we have seen these stocks started moving up again. We have seen traction in the entire pack of AC companies yesterday onwards. And I think this is going to continue for 2-3 more days. So maybe a target of 7,400, 7,500 quite possible in the next couple of weeks, if not days. So hold it that time. For a longer term horizon, it's better to book profits. So when it comes to around 7,500 odd levels and re-enter at lower levels when it cools down to maybe 6,500.
So that's with regards to where Amber Enterprises stands. That is just out of curiosity, anything in the EMS space that you're liking right now? A lot of analysts are suggesting and leaning towards Sirma right now.
Yes, we are also liking Sirma as yes, because I was also going to tell that. because other players are trading at a very stretched valuation. If you look at Dixon, trading at a P of in 3 digits, although the company is very good with good product profile and all, but valuation doesn't give comfort. The only company which looks a little better is Sharma SGS, or the other one is PG Electroplast.
Okay, thank you for that view, Rajesh. All right, our next caller, Raghu, is calling in from Bengaluru. Raghu, hi, a very good morning to you. How can we help you today?
Hi, good morning, Mahima. I hold SJVN stock from last 10 months.
Okay.
Buying price is 132. Is it good time to average now, or hold, or exit?
Okay, got your question, Raghu. I'll take this up with Rajesh quickly. Rajesh, what's your view like? SJV, and should we average out at the current levels to continue to hold it?
Continue to hold, yes. Averaging, no. Because valuation has already discounted all the positives. A huge play on hydropower gives out good dividend, but around 9800 odd levels, there's not much of upside left in the medium term. So for a long-term horizon, continue to hold, but adding at this point of time won't be suggested. By any chance, for market conditions or whatever, it comes down to 90 odd levels, then you can think of adding.
Okay, the next question is from Ravi, who's writing in from Vijayawada. He wants to buy NTPC from a shorter-term perspective. Rajesh, what's your view with regards to where NTPC stands? What are you expecting? How will Q1 fare for them?
We are very bullish on the power sector as such because of the power shortage and the government's focus on increasing power capacities and all. And NTPC being the largest player in power in our country, I think this is a very good play for long-term players. Gives out good dividend also, has holding in NTPC green, that's again a valuation positive. So it's a hold from our side. Somebody looking to add can even add.
And can even add NTPC at the current levels. All right. Our next caller, Gautam, is calling in from Vizag. Gautam, hi, a very good morning. How can we help you today?
Yeah, very good morning. I have purchased Adani Power shares, almost 800 shares at a price of 612 per unit.
Okay.
So I just want, and I would like to wait for another 6 months.
Okay.
So is it okay to hold, or should I sell it off?
Okay, got your question, Gautam. Rajesh, what's your view on Adani Power?
It's a hold from a side. As I said, power as a piece is doing well. And again, Adani has got a huge capacity. The numbers have been good from the last 2-3 quarters. I think the numbers are going to be good in coming years too, because of huge capacity, cost control, and the kind of demand which we are witnessing in the power. So it's a hold from a side. Maybe medium target would be around 650 odd rupees. But what I would suggest is try to hold for a longer term horizon.
Hold for the long term. By the way, a standard disclaimer, Adani Power is part of the Adani Group, and so is NDTV Group, of which NDTV Profit is a part. We've got the next question from Sudhir Agarwal, who's writing in from the National Capital Region, and he's got 1,250 shares of Varun Beverages Limited, which he's bought at a price of 527 rupees. He says that he's invested in it for 2 years, considering its monopoly status in India and the recent entry of Campa Cola, or rather Reliance through Campa Cola. It seems to be a deterrent. Is that a real threat, and should you hold on, is the question that he's asking. Rajesh, on the fundamentals, therefore, what are the prospects?
See, strong company, I would say. It's the largest bottler of Pepsi outside US. Doing very well not only in India, but neighboring countries like Sri Lanka, Bangladesh, and other countries, Africa also. They have moved into non-carbonated drinks too, and that segment is also doing well. Volumes have gone up. This year, as I said, because of summer being a shorter period, the number might come a little subdued. But for longer term horizon, it's a good play to hold. As far as concerns about Campa Cola is concerned, I think it's just a matter of time when Campa is being sold at a huge discount to the other players. You get a 10 rupee Campa Cola 200 ml, and there's a huge discount to other players. That's just a matter of time, because ultimately they will also need to move their price upside. So this competition would be there for a short period of time. But as far as my understanding goes, but for a longer term horizon, Varun Beverages is a good play to hold.
Okay, so that's with regards to where Varun Beverages stands. Our next question, Darshan is calling from Bengaluru. Darshan, hi, a very good morning to you today. How can we help you?
Hi, ma'am. Good morning. My query is regarding BEL. It's trading at the all-time high, 428. I would like to know if it is a good time to enter for a short term, around 6 to 1 year, or wait for a correction or something.
Okay, got your question, Darshan. Rajesh, your quick view on BEL. Is this the right time to make an entry?
See, there is no right or wrong time in the stock market if the company is good, because you never know, tomorrow something might happen on a geopolitical side and market would fall. So you cannot time the market. If the company is good, if you're not comfortable with timing, go for a staggered way of buying. As far as Bharat Electronics is concerned, a very strong company. We have a buy call on this. Order book is good. New orders are coming in. They are going for new product launches. So I think in all, Bharat Electronics is a very strong company to hold for a long period of time. If not the entire lump sum, go for a staggered buy.
All right, Rajesh, thanks so much for joining us, for answering all the questions you did today. Pleasure having you on the program. That brings us to the end of this edition of Ask Profit. It's been an absolute pleasure from Mahima and myself and the team that put the show together. Thank you so much for watching. Up next, as you know, is Know Your Company. So do stay tuned. This is NDTV Profit.
तू ही तो है जिसकी सच्चाई वाली क्लैरिटी की वजह से मैं आज यहाँ हूँ।
गोल्ड प्लस सिल्वॉक्सी मिरर्स, ऐसी क्लैरिटी कि आपको सिर्फ सच नजर आए, चाहे कितने भी साल बीत जाएं।
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make, in our categories that we have been supplying to our defense forces, some of the best platforms in the world.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola? Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Imports become the exception rather than the norm, and increasingly we do almost
Hello and welcome. You're watching KYC. I'm Harsh Saita, and it's a great time, if at all, if you get to invest in a really good turnaround. And you know, just about any time is a great time to invest in a turnaround. And today's candidate is one of those. And we've started to see an uptick in the stock price. In fact, the stock is a 2.5 bagger in the last 3 years. And the stock we're going to talk about today is JM Financial. And the person we're going to speak to today is Digant Haria. He's obviously one of those who has written about JM Financial in a large fashion on his blog. And his blog was the key trigger on the stock moving as well, at least over the last couple of weeks. And the stock over the last couple of weeks has done very, very well for itself. So here's what I really want to know. JM Financial, in terms of a turnaround, they're exiting certain businesses. And they're exiting businesses in the lending space. When you exit businesses in the lending space, you will typically start to recognize credit losses. How much of that? How much of the credit loss has already been booked? What is the comfort on the current book and on recoveries? It's a larger book size in relative terms. Approximately 3,000 to 3,500 crore is the business that they are exiting. Okay. So how much of that can they garner in terms of recovery? How much will they be recognizing on their profit and loss account? The second one, how likely is the recovery on the wholesale as well as the ARC going to be at 4,000 crore? Because that's the value which Digant has ascribed as part of his valuation. And we will talk about this as part of the valuation metric in our metrics as well. How quickly will the recovery happen is the other piece. Timing of the recovery is crucial. The quicker the recovery happens, the better it is, the more the certainty, the more it's pushed, the worse it gets. What is the risk on the retail housing book? Because that book, they're going to continue to grow. In fact, they've guided that retail housing, they will double the book size by FY27 from the current book size of 2,800 crore. That's a large and tall ask. Can that also happen? And what's the risk like? What do they do with the balance book? They've said that they'll double it. And where to from there? What's the comfort with regard to asset quality on retail? That's all that I want to understand. Now, in terms of the merchant banking business, the whole point of doing lending is to try and leverage the balance sheet, all the cash flows coming into the balance sheet from the merchant banking business, and thereafter lend. Now that they're withdrawing to a large extent from lending, what does the merchant banking business do in terms of risk? Mind you, it's a cyclical business. We have seen that between September to maybe March, April, or even May of this year, we've hardly seen any IPOs. It automatically creates a drag in the business. Can that business continue to sustain in terms of growth? And what's the other lever that it will rely on in case of a slowdown in the merchant banking business? Where do they invest the cash coming in? They've also suggested that they will do payouts, buybacks, dividends, return money to shareholders in a big fashion. So is that what it will happen, or will they invest in a newer business? And therefore, given the multiple moving parts, how do valuations look and how do they stack up? All of this we'll try to break down with Digant Haria, who's the founder of Green Edge Wealth, I beg your pardon, and he will be joining us later today. Now let me quickly talk to you about the company first, try and give you some context on what JM Financial is all about. I'm going to start off with when it was incorporated way back in 1973. It was incorporated as an equity broking firm and was also doing investment banking. Nimesh Kampani saw a huge opportunity in Indian capital markets, bringing what foreign firms used to do in a domestic market, in domestic fashion. And that is what he wanted to really tap into back in 1973. And here's a broad glimpse of the journey. In 1980, it became the first company to introduce fully convertible debentures in Indian capital markets. Even I was surprised by the number of firsts that JM Financial has clocked over I don't know, the last 40 years. Now let's talk about 1986. It engaged in the business of stock broking and securities back in 1986. It introduced equity warrants to the Indian capital markets between 89 and 94. Listed on the Bombay, Ahmedabad and Delhi stock exchanges. Introduced deep discount bonds to the Indian capital markets. Managed 4 transactions in excess of 100 crore back in the day. That's a large amount. 1989 to 1994 we're talking about, which was unmatched back then in the Indian markets. It's the first private sector mutual fund, and it commenced operations in the 90s, in the early 90s. In 1999, it did a joint venture with Morgan Stanley, and this is in areas of investment banking and securities business. It later on went on to break up its JV, but we'll come to that. Between 2002 and 2006, here's what it did. Managed India's first IPO through book building. 3 firsts for it. First Indian dual tranche FCCB, which is foreign convertible bond issuance. First $1 billion IPO and first conditional IPO. Did all 3 of that. And thereafter launched a private equity fund between 2002 and 2006. This is. Let's talk about 2007 now. It's separated from the joint venture it had entered into with Morgan Stanley. Continued to lead the Indian investment banking financial services industry as a 100% Indian company, and launched a real estate fund as well, which it still continues to operate. Let's talk about 2008 to 2012. Commenced the ARC business, expanded operations in the fixed income business. Just try and understand how deep it is with regard to its capital markets foray. 2012 to 2017, it received a license for housing finance from the National Housing Bank and commenced the SME business. Also, between 2016 and 2018, it started its wholesale lending business, which is the one which has caused some bit of discomfort, or rather a large bit of discomfort to the financials over the last 5 years. And we'll pick and we'll try and understand all of those. Now let's talk about the business as of today. What does it do? Its business can be broken up into 4 parts. The first one is the capital market related businesses. Investment banking, broking, and both retail broking as well as institutional broking, wealth management as well as asset management. Core fee-based business. Now let's talk about mortgage retail. This is a business which is around a 2,800 crore AUM business. Currently does affordable home loans, small loan against property, and gives loans to educational institutions. The third is the mortgage wholesale business. Builder loans, large LAP, early stage financing and structured financing. This is where the problems lie at this point. All the NPAs currently sit here, or a large part of it. Then there is ARC, which is asset reconstruction. Distressed credit, which they purchase and then they try to conduct recoveries. Not happening at this point. Then they have SRs, which they have to liquidate. And then they also ventured into turnarounds. Those are the things which are really not working for it. This is where the company is actually losing money, and this is what they are likely going to avoid doing going forward. So let's understand the revenue breakup under each of these. And I've broken this up. Right, you have asset management and investment banking, which constitutes, if you just add up, 67% revenue FY25, 61% FY24, just about 60%, just maybe 53-55% in FY23. So it's gone up gradually as a percentage of the top line. Mortgage lending has actually come down. And look at the other segment. That may just be completely ignored, but broadly it is this which is contributing to the top line. Now, this is the revenue contribution, of course. And it's again important to understand, because we've understood the businesses and now we've understood where the revenue is actually coming in from. So, now that we've understood the full business as a whole, let's talk a little bit about the metrics. I'm going to start off with the income statement. Thereafter, look at the balance sheet. We won't look at cash flow here. We will look at asset quality and return ratios. Thereafter, we'll look at street cred, shareholding, valuations, and we look at outlook. Outlook because it's a turnaround, mind you. So you want to look at what is it that they're changing going forward. I want to start off with the income statement first. And again, you'll see interesting nuggets and you'll want to understand how this turnaround is working. First, you look at the income statement, looks like a very uninspiring set of numbers, right? And therefore the thumbs down. Look at the top line, look at the operating profit, which has been calculated by Chinmay, who's the analyst. Provisions, which is the credit cost number at just about 7% and on a very, very high base. Look at that provisions number versus the PAT number. It's a 400 crore provisioning which is being done on a 800 crore profit after tax in FY25. Nearly 600 crore of provisioning done on a 400 crore of profit after tax in FY24. Clearly not looking good, right? And it is the problem with regard to credit costs, which is impacting profitability. Let's now flip over and look at the credit cost number over the last 4 years. And you'll notice the same trend. Look at the credit cost in FY23, it was low. FY24 was elevated. FY25 is elevated. Do we have the FY22 number as well? Because that number stood at 350 crore versus the 770 crore profit after tax. And that kind of caps off all the 4 years of credit cost and profit after tax. Now let's talk about profit contribution. And this is where it becomes very, very interesting. Look at the contribution of two pieces to profitability. Look at asset management and look at investment banking and their contribution to profitability. 80% in FY25 contributed by investment banking and asset management. Mortgage lending just 13%. Look at it in FY24, look at it in FY23, and what you will realize is a large chunk of the top line comes from these two, and the profitability, a larger chunk of that comes from these two. So it's basically the drag is coming from the lending business onto the profitability. Clearly going away from lending business makes sense at this point. Now let's talk about the balance sheet for a little bit. And I'll be quick about this. Healthy amount of equity compared to the borrowings, given that it's a retail lending business, even going forward, look at the AUM of the retail lending business around 2,800 odd crore, right? Now let's quickly look at, so a neutral here. You want to see improvement with regard to the way in which at least the AUM grows in the retail lending space. And we'll wait and watch as to how that growth comes through. But the guidance is 6,000 crore of retail AUM by FY27. That's a tall ask. Let's talk about asset quality now. The GNPA and NNPA ratios reflecting on your screen. Again, uninspiring set. The GNPA ratio is at 12%. The NNPA ratio is at 2.5%. Not looking good, right? And therefore, we've given this a thumbs down. Let's talk about return ratios now. Look at the erratic nature of it. 7.5%, 5%, 9%. Single digit. Not good enough for an Indian capital market play and financial conglomerate, which is why it gets the valuation it gets. And therefore, we'll give return ratios a thumbs down as well. Let's look at street cred though. The turnaround seems evident. Last 1 month, 18% higher stock price. 3 months, 64%. And 1 year, 75%. Clear thumbs up with regard to the performance that it has done with regard to shareholder returns. Fantastic returns given. Now let's talk about valuations before I look at outlook. Look at the price to book of this one. Around 1.6 times is the price to book. It trades at around 19 times price to earnings. And if I were to just pull this a little bit further and try and analyze it a little bit in more granularity, the market cap is around 15,000 crore. And this I've picked up straight from Digant Haria's blog. Let me be very honest, I've just copied his blog. Around 15,000 crore is the market cap. Recovery from lending plus ARC is expected to be around 4,000 crore. Based on fair value, the retail lending business should be worth around 1,500 to 2,000 crore. I've taken 2,000 crore as the number. 2 to 3 times price to book. and investment banking at 10 to 12 times earnings is roughly placed at 9,000 crore of earnings. Basically, it's the drag from investment banking or from the lending business which is being caused, or which is the impact on the valuation, which is impacting the valuation at least at this point. If that were to change, and that is changing, this may well be up for a re-rating. Hence, this becomes very interesting. Let's look at shareholding as well. And it's a closely held company, 56% interest by the promoter within the company. And you're looking at FIs which hold around 17%, DIs 7%, and public just a shade short of 20%. We've given this one a thumbs up as well. Quickly on to outlook and what to expect and what the commentary from FY24 year end, which was the turnaround commentary, seems to suggest. They will exit the less profitable businesses, wholesale and ARC. Businesses exited have been well provided for. They're entering the loan syndication business instead, and that will contribute to top line as well as bottom line. They aim to do balance sheet light businesses, focus on ROE and cash flow, focus on fee and commissions, and they are focusing more on the retail mortgage AUM of 6,000 odd crore by FY27. Buybacks and dividends will be a focus area to return shareholder value. All of this is positive if they are able to play it out the way it does. But there are still some downside risks, and we highlighted that at the start of the show. And let me bring in Digant Haria, but before that, very quickly, how the KYC rating stacks up on this one. Let's quickly pull that up. Yes, we have that. So clearly not looking good on any of these metrics. But mind you, in turnarounds, you have to look at what's going to happen going forward. And a lot of that has already happened in terms of stock price action. Is it still something that would interest a buyer or not? And what the downside risks are? Let's quickly explore those. 4.5 on 8 is our KYC rating. Digant Haria joining us, founder Green Edge Wealth. Digant, great having you. And you know, I was going through both your blog posts, extremely informative. I want to first start off by understanding what the downside risk to exiting the current business is. Do you believe that this 4,000 crore of recovery can happen without turbulence?
Yeah, hi. See, whenever, the business pivots, or, whenever there is a turnaround, so there is an old business which has to run down and close. Then, the new businesses take off. So I think last year, Harsh, was something that the old businesses were running down, and which is why, in your presentation, you showed that the credit cost or the provisions are high, and the NPAs are high. It's just because, whenever a loan book is running down, the NPAs optically look higher because, your denominator is also shrinking very fast. But I think, this year you will see that, they have done all the provisions. So this year, actually, there could be a lot of write-backs because, their NPAs are backed by land and projects. It's not as if it's a retail loan which will never come back. So I think there could be a good amount of write-backs also. So whatever pressurized their earnings in the last 3 years, I think in your slide you showed credit cost of last 3 years. I think we'll actually see the reverse of that in the coming 3 years. So what was a headwind then would probably become a tailwind over next few years because these projects will see the light of the day. So the past business, I think whatever pain had to be taken has been taken. Now those will also actually start delivering some better numbers. Obviously, the past business runs down and they will create newer businesses which are not as balance sheet heavy. In newer businesses, that, 2-3 years of clean runway, there will be no NPA problems. There will be just fee income and interest income coming along the way. So I think the numbers will start looking very, very different from this year, which is FY26. So that's the opening comment, Harsh.
Sure. Let's talk about why they went into lending in the first place. What's your rationale? And is it to a certain extent also to insulate the business from the cyclical nature that merchant banking and fee-based kind of businesses generally face in terms of downside? Is it to try and level off that risk? And doesn't this decision open the business back to the same risk that they faced when they went into lending in the first place?
Well, that's a very good question. So see, if you remember the Lehman crisis, so this 2003 to 2007 was a party time for the Indian stock markets. And, then all the broking stocks, be it Edelweiss, Motilal, JM, everybody became 10 times, 15 times in those, 4 or 5 years. But then came that Lehman crisis, the global financial crisis. And by 2009-10, their incomes plummeted by say 60-70%. So it was in this 2010 that, a lot of these guys decided that we have to try and go to new businesses. This just fee income and broking income is not enough. So everybody chose different paths. Like Edelweiss also took the lending path. Motilal Oswal only ventured into housing finance, but they ventured into asset management. So they started this Motilal Oswal Mutual Fund and PMS. And similarly, if you look at JM, they decided to enter the lending and the ARC business. Now, if you go back to 2011-12, lending was at the nascent stage. The public sector banks were banned from doing real estate lending. And then, that is where JM saw the opportunity that, if banks are not being allowed to do this by RBI, the NBFCs will see a boom time. They actually saw a boom time between 2013 to 17, and that is the time when, these Edelweiss, Piramal, India Bulls, JM Financial, everybody did really well in the lending business also. So at that point in time, everything was going right. But then, this sector itself got hit by so many things. First we had demonetization, then we had RERA which came in, then we had the ILFS crisis, and then we had the COVID or the pandemic. So, in 4 years, there were 4 big events which actually broke the back of the whole real estate industry. And even very, very conservative players like JM. JM was the least hit in all of this. You look at Piramal, you look at Edelweiss, they had to do so much to come out of the crisis. But JM obviously just had to go through some losses, but, nothing compared to their strong balance sheet. But the cycle was so bad, Harsh, that even a conservative player like JM had to take a hit. Then regulations also changed after 2020 in such a way that this is no longer a viable business for any NBFC to do it. Only HDFC Limited used to do it, but now it is merged with a bank. Now they'll also not do it. So this whole real estate wholesale lending is becoming more and more the forte of these, private equity kind of funds and, private credit market, and not the listed NBFCs or banks. So I think it was a natural cycle. Now you ask me that if they are going to exit the lending business, won't they again face the same problem of being too dependent on the stock markets or the capital markets? Now, the answer to this question is that, they have seeded 3 new businesses, right, which they are not shutting down and which they are growing. So one is a wealth management business. Second is the mutual fund or the asset management business. And third is the affordable housing finance business. So I think all these 3 businesses have now, almost 6 years, housing finance has 7 years of history. Wealth management has 6-7 years of history. Asset management has 3-4 years of history. So I think these businesses are much lesser cyclical compared to the stock markets. So I think whatever they lose out of that lending, that will be made up here. And also in the lending business, they are not completely getting out. Like they are getting out of the old format, which was you lend for 5 years, 7 years. Now they will enter into small deals, which are 6 month, 12 month, 18 month. Because let's not forget that deal making is the DNA of JM Financial. They have been the deal makers of India, whether it is M&A, whether it is IPOs, whether it is QIPs and, all these different kind of structured products. So I think they'll continue to do that. But now they will earn more of fee income and less of interest income out of that. That is their ambition. And I think that is precisely the DNA of JM Financial. So I think that, the bad, last 3-4 years, that the difficult part is really, really over. Now it is how well they can scale in these new businesses.
Sure. So Digant, now I have just 3 minutes. I'm going to quickly try and do a rapid fire so that I can cover as many questions as possible. What's the risk like on the retail book?
Right. So retail housing finance, I think the risks are extremely low. They have built a model where they source their own loans. So I think this is a growing space, a very hot space. I think this company itself can become a 3,000-4,000 crores or 5,000 crore market cap by 28. So this is actually a high potential. I don't see much risk in this business specifically.
And can they grow at the guided 36% CAGR? Because they're currently at 3,000, they're gunning for 6,000 by FY27.
I think it's okay if they do 25% also. See, 35% may be aggressive, but it's okay if nothing, hell does not break loose if they grow at 25%. And I think they have set up the infrastructure, now they'll grow. So I just feel that maybe if not FY27, FY28 they'll reach 6,000 crores. At least that is what we are building in.
Got it. And with regard to the top line, may not be the best way to look at it, right? Digant, there's a book which is contracting. Therefore, top line may not be the best way. What is it on the bottom line that you're looking at in terms of compounding? Because you'll see a lot of the line items go away. Like, for example, credit loss being the biggest line item will probably go away entirely over the next 2 to 3 years. What's the bottom line estimate that one can expect in terms of compounding over the next 2 to 3 years?
So I think, see, last year, like FY25, they did around 800 crores of profit. I think you add, say, 150, 200 crores to that just because of the credit cost. We spoke that there could be write-backs in the old business so that credit losses will be very low. So maybe, 1,000 crores of base profit. And after that, you can have a 15-18% kind of compounding because, see, all these affordable housing finance, wealth management, asset management, investment banking, all these businesses in India are growing at 15 to 20%. So according to us, 1,000 crores becomes the base number for profit for JM Financial from this year. And above that, you can actually see 15 to 20% kind of compounding playing out. So that is the base case which we are working with. Obviously, we need to see how they deliver over the next 12 months.
Okay. Digant, 20 seconds. Downside risk, if any.
So downside risk, see, whenever there are sharp corrections in the stock market, obviously, this stock will correct because there is a perception their incomes will go down. So there could be interim volatility, but long-term really looks clear. Yeah.
Excellent. Thank you so much, Digant, for coming in, speaking with us on KYC today. And viewers, completely out of time on this one. Thanks for tuning in. Stay tuned to NDTV Profit. More action on the other side.
That's huge. That is a biggie. It's on.
Gold Plus Clear Glass. पार हो या नियर, सब कुछ दिखे clear.
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make, in our categories that we have been supplying to our defense forces, some of the best platforms in the world.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world.
Hi there, you're watching Markets at 12 with me, Shreyansi, saying first things first, let's take a look at the markets, see what the markets are up to, and it's not much of a move coming in as far as the markets are concerned. Firstly, let's take a look at the sectoral picture that we in fact have at this point in time. So just to select few sectors holding on to a tinge of green at this point in time. And the ones to add to this list are metals, auto, pharma, as well as IT. So those are some of your sectors holding on to a tinge of green. On the flip side, there's realty, finance, bank, PSU bank, defense, media, as well as oil and gas holding on to a tinge of red at this point in time. Tell you what, let's also take a look at the top losers from within the Nifty 50 pack as well. But first things first, let's take a look at the Nifty as well, because it's holding on sub those 25,500 levels at this point in time. When you take a look at the Sensex as well, not much of a move coming in for Sensex, so just a 170 point downtick coming in for the Sensex. Just like yesterday, there's a little bit of a range-bound trade that you're seeing at this point in time. So let's take a look at the top 50 losers from within the Nifty 50 pack, and from within that pack, there's IndusInd Bank, of course, that's holding on to a tinge of red at this point in time. Shriram Finance. Add to that list Bajaj Finserv as well as Bajaj Finance, L&T as well as HDFC Life. On the flip side, let's take a look at the top gainers from within the Nifty 50 pack, and to that list you can be adding JSW Steel, Tata Steel, Hindalco, even Ultratech Cement and Hero MotoCorp doing quite well for themselves. But those were some of your counters that are doing good at this point in time. Speaking of IndusInd Bank, that's the one that is under pressure, especially from within the Nifty 50 pack, and it's in fact the top loser from this particular pack. Tell you what, let's take a look at the note that you have coming in from Goldman Sachs, and you do have Somi who's standing by with the highlights of this note.
Yes, Goldman Sachs has come out with this report on IndusInd Bank, where they have downgraded the rating on the bank to sell from neutral, but have hiked the target price to 722 from 634. Now, the brokerage is saying that the IndusInd Bank franchise is structurally weaker, which could lead to lower return on equity and return on asset for the bank going forward. They have cut the EPS estimate for IndusInd Bank for FY26 and FY27 by around 25% and 17%. Now, this EPS cut is largely on the back of the fact that they're expecting persistent margin pressure going forward for the bank, and this will be because of weaker yield trajectory and elevated funding costs for IndusInd Bank going forward. They're also saying that the valuations are on the lower side, but they will continue to remain below the book value, given the fact that there is poor visibility on the turnaround plan for IndusInd Bank going forward. They're also saying that productivity drag and strategic overhang to keep the cost to income ratio elevated, and they're expecting lower PCR and elevated slippages to keep the credit cost on the higher side for IndusInd Bank. However, on the flip side, they've also given few factors which could lead the brokerage to be more constructive on IndusInd Bank. In short, this could lead to an upgrade for IndusInd Bank going forward, and those factors are if they see a market share retention, a stronger market share retention from IndusInd Bank. They're also saying that the asset quality is also stronger than expected, then that could also lead to an upgrade going forward. They also say that improved NIMs on either lower cost of funds or better pricing, lower cost to income ratio, and faster than expected recovery in macro and liquidity environment, these factors could lead to an upgrade going forward. But as of now, they have downgraded the counter, given the fact that they're expecting lower return on equity and lower return on asset going forward for IndusInd Bank.
Well, absolutely, Somit, and that downgrade is weighing quite heavy on the stock. Downtick of about 2% coming in for IndusInd Bank. But tell you what, let's get you a very important perspective on a very important story. In fact, hopes for an Indo-US trade deal are dim at this point in time. India stands firm on its red lines for agriculture and dairy, while New Delhi also seeks concessions for its labor-intensive products. No relief appears likely on US tariffs for steel and auto components. And to get a sense of what this really means, what's the political paradigm backing it, what are the prudent steps that India can be taking, we have on the show this afternoon Ajay Srivastav, who's the founder of Global Trade Research Initiative. Ajay, thank you so much for taking time out and joining us this afternoon. The first question, in fact, that I wanted to ask you was from your brief, because you do have, you've also said that the FTA would be politically unsellable without the tariff relief. Help us get a little bit color when it comes to this particular opinion.
Yeah, Shreyansi, in any normal FTA, what happens is that both the sides, they cut their MFN tariffs. In this case, for the first time, what is happening is that India will be cutting its MFN tariffs. US will not be cutting its MFN tariffs. All they will do is that they say they will not reimpose that 26% tariffs on us. Instead of that, they will impose just 10%. So this is very strange. This is not a normal FTA. It is not WTO compatible. So we need to know what we are getting. And for that, I think Indian negotiators are pushing that at least labor-intensive goods from India, they should be allowed entry into US at zero tariffs. Currently, the tariffs are 8% to 20%, even more on most of these?
Absolutely, India is seemingly also not budging on agri and dairy in terms of that red line being there. It's a dark shade of red that you're looking at, right, when it comes to those requirements. I want to also understand what that really entails. What do you understand in terms of those requirements as well? And is there any case where dairy and agriculture imports from the US can be capped at a level that is manageable for India?
So all this started when Mr. Trump said that India has great trade surplus. So we say that agriculture and dairy accounts for less than 5% of US exports to India. So it's very insignificant, but still he's insisting upon opening dairy and agriculture. For us, dairy and agriculture, they are not a trade issue. They are more of a livelihood issue on which half of our population, exceeding 700 million people, their livelihood depends on this. So these are clearly red lines for us, and no firm openings can be offered in dairy or agriculture for US.
Absolutely, that's something that we're looking at, right? But I also wanted to understand what is the prudent step going forward when it comes to India, right? Since you're an expert when it comes to this domain, I want to understand, should India, in your opinion, be waiting to see US deals with other countries before inking one and going ahead and inking one? So what do you make of the timing as well? Is there a prudent approach? Is there prudence in terms of waiting?
I think India should draw its red line. That's what India seems to have done. And then we should not wait for what's happening at the other deals. US is currently negotiating with more than 20 countries, and except for UK, US is not nearing the completion of any of the deals. Every deal has some problem. Japanese deal has a problem. South Korean deal is not happening. And it's strange to know that US already has an FTA with South Korea and Japan and Canada, but still Mr. Trump has imposed country-specific tariffs on them and renegotiating all these things. So any deal with the US is not a final deal. If India does this deal, it's very good. But it doesn't mean that Trump may not be coming with the new demands next month on something else. For example, 2 days back, we heard that Trump says that anyone buying oil with Russia will impose 500% tariffs. So these things will keep on coming. We should be ready with our red lines. Within those, we should not compromise on those red lines, and then we should negotiate wholeheartedly.
All right, then. So that's very important commentary as well coming in from you, that any deal with the US is a tentative deal. There's a lot of to and fro when it comes to these deals. And since we've mentioned Donald Trump, I also wanted to talk about the US president. Is the US proposal of a 10% surcharge effectively worse than the Trump-era tariffs? What do you make of this as well?
That's why I say these are not normal FTAs. And this will be totally WTO non-compatible because all these 10%, 26%, it violates the WTO commitments of the US. So my first observation is that the moment Trump goes, all these deals, they will need to be reviewed by the next administration because there is no support of the Congress or to any of these tariff hikes by Mr. Trump. And yes, so I say India should have its red lines very clear. And India has offered its industrial goods to the US that accounts for more than 95% of the US exports to India. That should make them happy. That should solve their trade deficit issue if they want to export to us. Agriculture is a no-no for us for reasons we've discussed.
Well, absolutely. So since you've emphasized that the red lines need to be in place, that's the important commentary coming in here. I also wanted to understand, it's quite the catch-22, right, for India to be deciding at this point what to do next. So I wanted to understand, what do you think about the worst case scenario? Should India then go ahead and do a deal without relief from sectoral tariffs in steel, auto and aluminium? Because you've emphasized that those red lines need to be in place, but what happens when they're not there?
It's all right. What happens, Mr. Trump has not imposed these 26% tariffs on India alone. He imposed country-specific tariffs on 57 countries, and he had deal only with UK so far. So India will be in the position with 56 other countries. So India will not be in unique position. If there is no deal, it will be like the position of other 56 countries. And we see what Mr. Trump does. And anyway, no deal is better than a bad deal. And also we have offered everything. We offered opening of 95% of US exports to India. That is most of the industrial goods. Agriculture is no. They have to understand. My sense says, India, if Indian deal fails, then the balloon of this country's specific tariff, it will be pinched. It will be pinned, and other countries can see that. Their fear of this country's specific tariffs will be reduced to a great extent. So it's in the U.S. interest to get this deal with India going.
Absolutely, which brings me to my next question. You've briefly touched upon this, you've talked about it, you've possibly alluded to it, but I wanted to get a very clear answer about this. India's offering to reduce its own MFN duties as well. Are we giving more than we're getting at this point in time? Just not when it comes to MFN duties, but just in general also, when this deal is something that you're looking at. Now, of course, you've said that no deal is better than having a bad deal, but let's say we go ahead and do have a deal. Are we giving more than we're getting?
Of course, we are giving much more than we are getting. The basic premise of this country's specific tariffs is that US wants one-sided concessions. With Australia, they have a trade surplus. Still, Trump has imposed 10% tariffs. So there is no logic to all these things. He wants to extract extra. It's like blackmailing other countries. He says, if you don't pay us this ransom, you will be imposed with more tariffs. And US being the largest markets, all the countries are complying meekly or reluctantly or whatever way. But we should all be clear that all these deals, not only with India, with the UK, they're all one-sided deal favoring US.
Well, absolutely, Mr. Srivastava. Since this is such a catch-22 for India as well, I'll throw a catch-22 your way as well. Do you see room for the US to be shifting its stance? What is your quick answer there as well?
The US, I think they are intelligent people, and they will see if India deal doesn't come, then it will hurt their negotiation with all other countries. They will get more emboldened to seek more concessions from the US.
All right, and I also wanted to understand what you think about this FTA in terms of MSMEs. Put the spotlight on the MSME sector for the moment and understand what this could be possibly meaning for this particular sector. Is it going to be helping them? What do you make of this one as well?
So most of the MSMEs are in the labor-intensive sectors like garments, textiles, leather, shoes, handicrafts. And currently, if deal happens, then the tariffs ranges from say 6% to 20% on these products, plus 10% of base tariff. This is what will be offered by US if deal happens. If deal doesn't happen, then these MFN tariffs 6 to 20% or more, plus 26% will be this. And Indian side, they have nothing much to show in terms of gains from this deal. So I think we are getting the impression that Indian side is requesting US to drop all tariffs, including the MFN tariffs on the labor-intensive goods, and that should benefit the MSMEs. But if that happens, we don't know whether that will happen.
Well, absolutely. That's all up in the air. There's a question mark hanging around the possibility of that as well. And there's a lot that is uncertain when it comes to this deal. And there's a lot that is in a little bit of a catch-22 category when it comes to this particular deal. But I wanted to get your conclusion sort of thoughts about this. What would be a fair and balanced outcome? Because you have outlined that having no deal is better than having a bad one. But is that something that you would call a fair and balanced outcome? What do you think is the best possible scenario for India?
So we have been negotiating free trade agreements for long. This is not the first one. And I say this does not fall into the category of traditional FTAs. Here, US, one side is not cutting MFN tariffs, which needs to be cut, so it makes it WTO incompatible. Second, US country-specific tariffs have no congressional approval. They have been found flawed by the US judiciary also. The case is pending in the Supreme Court. So whatever deal is there with India, with UK or any other country, they will need to be reviewed, and most of them will cease to exist the moment Mr. Trump goes. That's what is my take.
All right, then thank you so much, Mr. Srivastava, for taking time out and joining us today. That's quite the commentary coming in. India needs to have those red lines in place, and no deal is better than a bad one. And there's a lot of uncertainty when it comes to this. But thank you so much for joining us with that very fresh perspective. But tell you what, let's take a look at one counter that is buzzing away in trade. Capri Global is the one that you're looking at. In fact, that's in focus after the company raised 2,000 crore rupees via QIP. Harsh is joining in to help us out with some more details.
Well, yes. So Not just that, and that happened maybe a while back, the 2,000 crore fundraise, Shreyansi, but more importantly, it's about the valuation at which they achieved that 2,000 crore fundraise, which is at nearly 3 times book, which was impressive. And you have a slew of investors as well, and some very interesting names within that slew of investors. You had Quant Mutual Fund, 3P Investment, you had Abacus, BlackRock. You also had domestic investors being ICICI Pru, ICICI Lombard, SBI, HDFC Ergo, HDFC Life, PNB MetLife. So a slew of investors showing interest. But let's try and understand how not only this company but the space as a whole is evolving. And Rajesh Sharma joining us, Managing Director at Capri Global Capital, joining us live. So first off, congratulations on this very successful raise at nearly 3 times book. Was an impressive one at all counts. Just give us the perspective. What does this fundraise do to your capital adequacy, and what does this give you in terms of growth runway? For how long does this equity raise last you?
Yeah, thank you. So this 2,000 crore of capital will make our capital adequacy ratio somewhat in the range of about, if we put it to the March number, it will be about 36%. And our growth runway with the co-lending guidelines in place, where about 18% book is in the co-lending arrangement, we believe that up to 50,000 crore rupees of AUM, this capital would be adequate. So and that we are trying to reach by FY 2028. That is our internal aim. So if we can do that, till then the capital adequacy will be adequate.
Understood. So what do these investors bring to the table? Because in relative terms as well, it's a large fundraise, even for your standards. Because now the market capitalization is at 15,000 crore. This 2,000 raise is quite large in that sense. What do these investors bring to the table, and what's the expectation like in your conversations with these investors?
So these investors bring a lot of responsibility on us, that we have to behave responsibly in terms of asset quality. We should not give any surprise. We should do the sustainable growth, and we are committed that we will honor the faith shown by them. Since we are only in secured segment, but yet diversified with the MSME, gold loan, retail construction finance, a micro lab against property, and housing finance through subsidiary, with these 5 only secured collateralized segment, we are planning to grow at the pace of 30%. As I said, we will reach to 50,000 crore AUM by 2028. Now, we are not targeting growth alone. Growth has to be along with the sharp focus on the asset quality and keeping your yield intact, your margins intact. So the whole focus is continue to remain focused on the asset quality. There cannot be any compromise on that. Plus, growth is not adequate. Growth has to be particular yield levels to maintain your margins. So our focus is growth with asset quality, with keeping your margins spread intact.
Got it. So is the growth of around 30% going to be linear across all your lending verticals, or is there going to be a predominant focus on growing one or two, and maybe the others grow at a slightly slower clip? What's the kind of mix that we expect by FY28?
So FY28, we believe that gold will be in the range of about 40%, and the rest of the segment, MSME plus micro lab, will be about 20-22%, and construction finance will be about 17-18%, and about 20% will be MSME. This is the range. It can vary between 2 to 3% here and there, but by and large, it will look like that.
Gold lending norms that the RBI has put out, of course, diluted and likely in your favor. But what would the impact of that be on your business? And you believe that you're in compliance with pretty much all of them. Are you comfortable with that?
Yeah, we are comfortable with that. I think the co-lending guidelines are now more clear. They have also allowed the known priority sector loan also. And they have also involved some of the guidelines said that it should be more focused on the CLM1. In a nutshell, I think the regulator have provided more clarity. So that will help us to adopt that. And I think banks are also equally keen in co-lending model because their retail exposure also goes up without taking a specific risk on the NBFC. And the benefit of co-lending ultimately goes to the smallest customer whom banks are not able to reach. So with the collective togetherness of cost of fund efficiency coming from banking system and collection efficiency, origination capability coming from NBFC of the world, I think this is a good partnership, and we believe that co-lending will pick up further from here.
I want to talk about cost of funds. 100 basis points is what the RBI has shaved off the repo. How quickly does that reflect on your numbers? I'll come to spreads in the next question, but first let's try and understand cost of funds.
So first of all, it reflects the moment the mood become very buoyant in the banking system that credit has to be enhanced. If you see a couple of days ago, even our honorable finance minister have also advised bank and us the credit flow should increase. So I think there is a clear focus and synchronized across government, regulator, and also with the lenders. Now credit has to be go in a manner that it reaches to the last mile, and the country should reach towards our target of becoming the third largest economy. And that focus remains. What brings it immediately on the table, that positive buoyancy in the mood. Whether it reduces the cost, answer is no. Only on the MCLR reset date, your cost of fund goes down. But the incremental borrowing, what we are going to do, that immediately becoming at a lower cost because MCLR have already gone down. The co-lending, which are linked with the repo rate, the benefit has come instantly, immediately on the existing borrowing as well.
Okay, and what does that do to spreads? How much of this gets transmitted? And your spreads have also inched up over the last maybe 5 odd quarters when I'm looking at your numbers. Give us some perspective on what's happening with regard to spreads.
So as far as the RBI, because of the RBI, whatever rate reduction have happened, that benefit will ultimately get passed on to customer. Reason being, there's adequate enough competition on the ground in the retail segment. So when our cost of fund goes down, everybody try to pass on that to investor to maintain their market share. So I think that will be benefit to the customer. However, as far as the capital specific is concerned, because we raised 2,000 crore rupees of capital, and in any lending institutions, capital infusion is the biggest thing for capital rating upgrade. So we expect that our rating should get upgraded, and in case that takes place by mid of August or so, then we can expect that our risk spread will come down. So in a immediate term to medium term, our spread on the borrowing should come down. However, as again I said, RBI rate reduction and other thing, ultimately it gets passed on to the customers.
Sir, sorry, I'm going to interrupt you for a moment. This possible upgrade in credit rating, this is very interesting. You're expecting that to likely come in August, and you're saying spreads will actually contract.
Spread will not contract.
Okay.
I said the risk margin will, the risk spread when apply on the MCLR will come down, which means our rate cost of funds will go down.
Got it. By how much, sir? What will that impact be?
So we expect that impact should be in the range of about 50 basis.
Okay.
So that's what the impact is that you're penciling in. This is Shreyansi as well joining in the conversation, sir. I wanted to quickly get a sense of what you think about your plans for geographical expansion. What are you penciling in there as well?
So geographical expansion, so far we are in the north and west. I think this year we are planning to enter in the south. We already opened some of the branches in the Telangana and Andhra. But second part of this year, we will start preparing ourselves to enter Karnataka and Tamil Nadu as well. And then we will add our home loan branches also. So the plan is in place. We are amid of the hiring of the team. And I think the team should be in the place by end of September or October. Thereafter, the branches will plan it out, start opening and hiring. So in the last quarter, we should see some activity happening in the southern Tamil Nadu and Karnataka. And next year, we'll see major expansion coming in the south. UP, we are going to add more branches because we are seeing very good traction in Uttar Pradesh also.
What does this do to your OPEX ratios, sir?
So the way scale the business more, I think technology investment and data science capability investment have already taken in place upfront. So now the AUM going from 22,800 crore to possibly 31,000 crore rupees, with the leverage on the operation will kick in, and I think that will give us the benefit in terms of our cost income ratio coming down. If you see that when we growing, our cost income ratio gone up to 70%, now it has come to 55%. We expect that it should come down further. In 2 years' time, we should stabilize about 45% or so.
What does that do to your profitability, sir? Because your profitability has seen a lift. 200 crore in FY23, 480 crore in FY25. So what does that do to profitability, and where should your normalized ROA be at? 4% plus?
I would say that normalized ROA, we are targeting anything between 3.75 to 4. And because we have built a very high quality fee income, there could be something uptick on that, but let us remain conservative. If we achieve 3.75 and between 4, and that is sustainable, that will be fantastic.
Right, and that was Rajesh Sharma, Managing Director at Capri Global Capital, joining us. Thank you so much for taking time out and helping us understand what your growth roadmap really looks like. But with that, we're completely out of time on this edition of Markets at 12. Thank you so much for tuning in. Do stay tuned, because we do have an interview lined up with Apollo Hospitals in just a short while from now.
गोल्ड प्लस ऑप्टिमिस्टिक रिफ्लेक्टिव ग्लास लगाओ, धूप की गर्मी को दूर भगाओ और बिजली का बिल भी बचाओ।
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make, in our categories that we have been supplying to our defense forces, some of the best platforms in the world.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold ICICI for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims?
Hello and welcome to NDTV Profit. You're watching Profit Buzzers. I'm Hiral Dadia. Let's quickly take a look at what markets are doing at this hour. Let's pull up Nifty 50 on the screens, and then a bank Nifty. Clearly, if you see in terms of Nifty as well, you're seeing it at the day's lowest levels. But what's interesting is it's broken the 25,500 mark in intraday trade. We did hit a high of around 25,600. So it's almost 100 to 110 point range that Nifty has been trading in the first half of the trading session. Let's pull up Bank Nifty, because that trend, which has been divergent with regards to the private banking space as the PSU banking space, that is what will be interesting to watch out for. 0.5% downtick coming in with regards to Bank Nifty as well. If we can have the PSU bank index and the private bank index, that will tell us if that divergence has continued. Today, the PSU bank index is trading under pressure, which was seeing gains over the last two trading sessions, seeing cuts of around 0.5% coming in there. And the private bank index continues to drool under pressure with cuts of 0.3%. Let's look at the sectoral heat map, and then we look at the gainers and losers on Nifty 50 and then the broader markets. There you go. Metals is the top gainer today, followed by consumer durables, healthcare, auto, and pharma. What's losing out is real estate, which is down 1.3% in stake. Defense has been trading under pressure, as well as, in terms of the broader markets. Let's pull up even the mid cap and the small cap index and see what's happening, whether they are mirroring the trend in terms of benchmark indices. There you go. There is some bit of positivity today in terms of mid cap 150. And if you talk about the small cap 250 index as well, that is down around 0.3%. So no major trends that you're seeing. Let's look at individual stocks in terms of Nifty 50, because that is going to be interesting with the kind of gains that you're seeing. JSW Steel, Tata Steel, that is what, and a Hindalco, that is what is actually fueling the metal index in today's session. Ultratech Cement is up in trade. Tata Motors, post the auto sales numbers, is up in trade. Bharti Airtel, Asian Paints, Maruti, Sun Pharma, a few of the other gainers. Losers, you have a Shriram Finance, Bajaj Finserv and Finance, so Bajaj Twins are trading under pressure. HDFC Life is also seeing some bit of profit booking in trade today. IndusInd Bank, on the back of a Goldman Sachs report, is down in trade. And you have a L&T, HDFC Bank, RIL, which are down. In terms of, movers of the broader markets as well, if you can just look at a Gabriel India, that's an interesting stock to watch out for. That company is locked in upper circuit for a second consecutive session. So strong moves on that one. Bajaj Consumer is another one. In fact, when there was a management change, that stock was up in trade, and today as well, Bajaj Consumers has climbed to the day's highest levels. Venus Pipes, Rights, on the back of an order win, is up in trade. Tata Communication is another one which is seeing gains of 5%. Jindal Worldwide, 5% downtick. Ratan India Power is trading under pressure. Narayan Hridayalaya, second consecutive session, but the pressure has continued on this one. Reddington down in trade, and a Hyundai, which is seeing cuts of 3.5%, and this is post the auto sales numbers. So that's what the market picture is looking like. But let me welcome in our guest, Samir Dalal, as well, from Natwarlal and Sons and Stockbrokers. Samir, good afternoon and welcome to the show, and a pleasure to speak to you at NDTV Profit as always. My first question coming to you is, seeing the way the markets have been panning at this hour, you have the volatility index as well, which is within that 12 to 15% kind of a band, which is telling you that there is some bit of comfort that exists. In this kind of a scenario, what would your bets be? Would you advise investors to buy? If yes, what would those top 3 stocks be on your list right now?
Yeah, so good morning and thank you for having me. Well, good afternoon and thank you for having me on your show. So you're right, the volatility index is not showing much of a spike, which is because the markets have kind of, again, after giving the breakout about 25 to 100, have found kind of a range that they're trading in. And this range is because there's no immediate trigger which people see barring the results and maybe the 10th of July or 9th of July, the trade treaty that could get signed with the United States. People are not expecting major moves either side. Let's talk about the fact that this is the case. We do believe that the earnings are going to throw out a bit of a negative surprise, according to us. I mean, if you look at it largely, we haven't really seen that much uptick on the ground. Yes, the GST collection for not the May month, but the June month, for the April month was quite good. June was a little, May was a little subdued, and we need to see how the June pans out. But we are not expecting any major this thing. So we think that the earnings are not going to be up to the mark. They're going to be in line to slightly below expectation, and the markets have run up far more. So there is more of a risk of a downside kind of correction possibility, we believe, in the near term. We continue to believe that the long term for India still looks good, but we think in the near term it's run up. Now, the question, what should you do? Well, you have to be selective. So there are certain counters within the market which have probably not performed the same way the broader markets or the indices have performed, right? So they continue to trade at decent valuations. They have long-term growth opportunities. So those are counters that you should start investing in. And the last question that you asked, which would be the top 3 picks at this point of time? So one of the counters that we mentioned in the past also on your channel is Hero MotoCorp. We think there's a lot of opportunity there. We think the stock has corrected and is consolidated quite well. We believe the growth in numbers will be quite good when it goes forward. Plus, they have their investment in Ather Energy and the electric vehicle side. I think we're going to continue to see traction, so they're going to get some benefits from their investments there as well. Another counter that we continue to think that in the entire space is been a little subdued is Ambuja Cement. If you look at the cement counters, Ultratech, Shree Cement, Dalmia, they're all making run-ups. But Ambuja still trades significantly lower than its all-time high. Yes, valuations are expensive. But then we believe that if the cement industry has to do well, then one of the largest players, the second largest player in the industry, cannot be something that is ignored. It cannot not do well, because if that is the case, then they would start stealing market share. So we think Ambuja Cement has a bit of an upside on the large cap stocks. And the third, again, I would like to say the banking and financial services always remains one of our top picks. We think the opportunity there is great for growth. Yes, competition is there. Yes, deposits are not coming, and because of which NIMs may be a bit under pressure. But if you look at it long term, if we believe the India growth story is strong, then without the banking and financial services side, we can't really do too much. So we think IndusInd Bank in that space where a lot of the pain point is done with, their provisionings been done. And now we believe that the new management, whenever they get appointed and comes through, will have a clean sheet to allow this bank to grow. They have a great franchise, and it's trading at a little under book value. So we think there's upside potential there, and we think a lot of the pain is done. So, I mean, the problems have been disclosed, and so I don't think there's going to be too much more of pain there. So trading under book value seems like a great opportunity to buy.
Right. So Samir, 3 interesting names. IndusInd Bank, which is probably getting out of the woods from a regulatory and governance perspective. Hero Moto and Ambuja Cement. 3 interesting names that Samir has that one should be looking at from an investment perspective. But let's shift focus to a Gabriel India. Interesting story. Yesterday, the stock was locked in upper circuit. Today as well, the stock is locked in upper circuit. And if you see a 5-year chart, I don't think so there have been any downsides on that front. I mean, it's what, 979,000% is the kind of returns, Puneet, that we've seen. In fact, he joins in to tell us more. What is happening with the Gabriel India? Because the stock has been moving, but last 2 days, 20% upper circuit.
Well, definitely, and I think it's one of the most significant restructuring that the company as well as the group has done. So it's part of the larger Anand group. And specifically, what was interesting is that they only had one of the key products, which is suspension products, within the listed Gabriel India. Now, what the Anand group has done is integrated 3 to 4 of its other companies which were there within the auto space into the listed companies. So from the unlisted side, all these businesses have now come into Gabriel India, and these are functional businesses. They have high margins, more than the traditional business of Gabriel India, and hence the positive pivot is coming from that aspect, that it's an existing business coming into the listed entity, which is already established, and the growth outlook just significantly rises from this aspect.
On this aspect, what is the kind of bump up that the listed entity will see in terms of the top line? Or from a margin accretion perspective and profitability, anything that we have on that front?
So specifically, let's pull up the table where we're speaking about the post-restructuring stake of Gabriel in these companies. So there are 3 companies that you need to know about. One's of course Dana Anand, Henkel Anand, as well as Anand CY. Now all these 3 companies, they don't have 100% ownership in these companies. So in Dana Anand, they have 25% stake, while Henkel Anand is about 49% stake is what they have. So this will be the profits of these companies will come in the bottom line in terms of the financial aspect, while for the key aspect on the revenues as well, that's the other one I want to talk about, because while Gabriel is around 4,000 crores in terms of revenue, What's interesting is that all the other verticals that are getting integrated are almost 4,000 crores combined. So you get almost doubled of your revenue within just in the click of time to get all these businesses in the listed entity, and hence that will propel the profit. So for Dana Anand, they are of a revenue of about 2,600 odd crores, while someone like in Henkel Anand is almost 900 crores. So those are two key verticals that will be integrated. One of the key questions to the management would be if they'll be able to raise their stake over 50% so that the revenue also gets integrated, but that'll be something to watch out in time as well. But Samir, a very good afternoon to you. Thanks so much for joining in today. Do you actually track Gabriel India?
So we don't have active coverage on it, but I just want to point out something. So you talked about very clearly the fact that this is a merger this integration that's going to happen is going to lead to profitability growth and also going to lead to revenue growth and all of that. But you got to realize that no other promoter is going to be giving his stake up for free, right? I mean, his profits up for free. So there will obviously be some part of the capital that will expand, and that number of shares will go up, and the EPS accordingly will happen. It's not that the existing Gabriel shareholders are getting everything for free. So this kind of 40% run-up that has happened, I think, is a bit overdone. I think this is a great opportunity if you've already invested to take some money off the table. I don't think you're going to be able to sustain these high valuations once you get more clearer picture on what the merger ratios will be or whatever everything is going to be. I think this is just market overreacting to some news. For me, if I was an investor, I would take money off the table is all I want to say, for the simple reason that no promoter or no entity is going to say that my private entities, which I own in my own capacity, should not give me a value and give it free to the shareholders. So don't assume that everything will come free.
No, so Samir, definitely, because the company has given up a share swap ratio as well. They'll be issuing roughly about 1,158 equity shares for every 1,000 shares held in AIPL, which is currently the investment company for all these. The key aspect, though, is that, and that's visible on your screen right now, the revenue of all these verticals, and definitely that will be one of the key aspects within what was discussed in the call as well, that the profits and the EBITDA margins are much higher than the traditional business. That was one. And the second is that these verticals also has an aluminum forging company within them, within Anand CY, which is very underpenetrated and underused as of now. So that could be the big pivot in EV specifically, where Gabriel has a focus. So Samir, point fairly taken. Do you have actually any preference or any picks within the auto component space? If you mentioned about Gabriel, but do you have any that you pick within the auto component space that you like?
So, we discussed this on your channel last, I think I spoke on it on Friday itself, and the two stocks in the auto ancillaries that we like. One is Motherson Sumi. We think that stock has a lot of growth opportunity ahead of it. Yes, it's going through a bit of a pain point because of its exports to the US, maybe getting taxed at a particular rate. But once all of these treaties, like I said, with Europe, with India, with Mexico, all of them eventually get signed, business will continue as normal. If they need to, they'll probably be able to set up a plant there. I don't think they have any issues. They are very strong as a management that can even look at acquisitions in the North American market and scale that up. So they're not averse to that. So I think that's one of the companies that will come out a winner at the end of the day. The other company that we like is Sona BLW. Yes, it's gone through a bit of pain in the recent past because of its promoter, like we discussed, also passing away. But now the new management will come in, and everyone's waiting to see what the new management is going to do and what their focus is and how they plan on growing the business. But I don't think it's going to be too much different from what the strategy has been, because there is a board at the end of the day which is spearheading also. So we think that business, and once again, like I said, the US treaties and all get signed, that business will also see some uptake. They do a lot for the electric vehicle side, and we think the opportunity there still continues to remain very large. So these are the two companies that we would focus on, where the stocks have actually corrected from their 52-week highs. Valuations are, I'm not going to say cheap, but I'm going to say they're a little expensive. But if you have to pay in India, if you have to pay for growth, it has to be expensive, right? So you're not going to get anything cheap. So from those angles,
Samil and Sona BLW become your top picks in the auto ancillary space as well. Thanks for that, Samir. Stay with us. In fact, another segment that has been underperforming is the steel pipe segment. In fact, a new export opportunity probably could be a significant catalyst for Indian steel pipe manufacturers, because Saudi Arabia has gone ahead and imposed anti-dumping duties on steel pipe imports from China and Taiwan for the next 5 years. In fact, this move will set open the Saudi market for Indian players. Somit joins us to tell us what is it, for the pipe makers, and what are investors betting big on?
Well, as the Indian steel pipe manufacturers remain in focus given the fact that there is a recent news where Saudi Arabia has imposed an anti-dumping duty on any steel pipe that is coming in from China and Taiwan. Now, these duties will be imposed by June 30th of 2025, which means that it has already been imposed, and the rates that have been assigned is around 6.5 to 27.3%. And analysts believe that this anti-dumping duty could open up the export opportunity for Indian style steel pipe manufacturers to Saudi Arabia. And Nuvama has also come out with this note where they're quite bullish on these companies. So firstly, we tried to analyze these steel pipe companies. There are three steel pipe companies, and what we have seen is they have consistently underperformed. So why they have underperformed? Firstly, there was the weak domestic demand, the capital expenditure that done by the private and the government side has also been on the lower side, which has also led to this impact on the demand, while geopolitical issues, which means that the conflicts in the Europe that we have been seeing and the US trade tariff has also weighed on the share prices of the steel pipe companies. But if you look at the financial performance for these companies, now if you look at there are three companies: Venus Pipe, Ratnamani Metals and Welspun Specialty. Venus Pipe completely stands out here. The last 5-year revenue CAGR has been around 75.3%, which is double than what Welspun Specialty has done, and nearly 3 times of that what Ratnamani Metal has done over the last 5 years. The EBITDA CAGR for Venus Pipe stands at around 141%. For Ratnamani Metal, it stands at around 24.5%. The PAT CAGR stands at around 185%, while for Ratnamani Metal, it stands at around 21%. Now, we do not have the numbers for Welspun Specialty for Welspun Specialty, given the fact that in the earlier years they were reporting a loss. Now, if you look at the valuations, market cap and the order win, in that front also Venus Pipe stands out, at least on the valuation front. The EBIT to EBITDA is the cheapest, 17.8 times only. There's a 12-month forward valuations. Venus Pipe market cap stands at around 2,800, order book stands at around 575 crore, while that of Ratnamani Metal 20,200 is a market cap, while the order book is just 1,900 crore rupees. Welspun Specialty, the market cap is around 2,400, while the order book stands at around 330 odd crore rupees, and the valuations, if you look at, it's very high at around 76 times. So Ratnamani Metal, the valuations come in at around 24.4 times. Now, if you look at the order book breakup, it's pretty much similar for all the companies. For Venus Pipe, export around 40%, domestic around 60%. For Ratnamani Metal,
okay, one of the biggest corporate stories in the last few days has been announced by Apollo Hospitals, a move that has been welcomed by the street. And now we have a chance to understand the rationale and the strategy behind it. Here's what's been happening. Apollo Hospital will be demerging its omni-channel pharmacy and digital health business. This will take place in 18 to 21 months, and then the new entity will also be listed. It will unlock investor value, which is why you saw that run up in the stock price on the day it was announced. But what is the idea and the strategy going forward? To speak more on this, I'm pleased to be joined by Sunita Reddy, MD of Apollo Hospitals. Ma'am, thank you so much for your time. To us here at NDTV, we always love speaking with you. Let's just understand the thought behind this. When a lot of companies and hospital companies in the medical space are value adding and adding on businesses, you are looking at demerger as the way ahead.
Yes, so if you look at what we're doing, Apollo Healthco as it currently is in the retail pharmacy space and the online digital space. So being in a different business, which is largely retail and which is also digital, we required to really separate the company, and I think that with Advent coming in as a shareholder, this was imminent. Having said that, the rationale behind it, one is that, two separate businesses, two separate companies, and the second is the synergies will still remain, because it's very crucial for us to continue to work with the digital funnel that currently Apollo Healthco has. If you look at the digital funnel, they have 120 million consumers, 40 million downloads, and they do about 900,000 transactions per day. So the synergies between capturing the the volumes in the funnel is very important, and that does not go away. What goes away is the creation of a new company, which, if you look at the sum of the parts valuation, was not getting valued. The second part of it is to look at the fact that now with this new company, with this composite scheme, what are we achieving? We are moving Apollo Healthco omni-channel business into the new Apollo technology company. The second part of it is the amalgamation with KeyMed, which is the back end. And this adds huge value. Current revenue is over 7,000 crores. This is the second significant change that will add value to the company. And of course, Apollo Hospitals will still continue to own 17%. Over a period of time, post the 18 months, the front end of the company, which is AMPL, which is the pharmacies, which is very retail in nature, will be added to this new company. And with this, it becomes Indian owned and Indian controlled. So technically, you have two companies. One is Apollo Hospitals, which is not Indian owned and Indian controlled, and then you have the new company, which is Apollo Health Technology Company, which is Indian owned and Indian controlled, and moving beyond the sum of the parts valuation, as well as locking in the synergies that the digital space brings to Apollo Hospitals, which is of course the funnel for large volumes.
And that value unlocking is something that analysts and the street has recognized well. If you can give us a sense, ma'am, of what the leadership now looks like for both. What is this new entity going to be called? I'm sorry, I'm bundling up 2 or 3 questions, but around the same space. What is the leadership going to look like? When will it be listed, and what are we calling it?
So the new entity is going to be called Apollo Health Technology.
Okay.
And what does leadership look like? Clearly, Shobna Kamaneni will be the executive chairperson. Shobna is my sister and has really grown the pharmacy business and has started the digital. So she will continue to lead this. We have an excellent team of professionals who are part of this. And Sangeeta Reddy, who is part of Apollo Hospitals, will also be on the board of the new company. And in addition to that, we have 4 independent directors, and of course, we have already got Advent as an investor, who will now own 12.1% of the entity.
Okay, so
with regard to hospitals, I'm sure you're already familiar with the team.
Yes.
We have a very professional team, and we continue to have Preeta Reddy as vice chairman. I'm there as managing director, and Sangeeta also playing a role as joint managing director.
Okay. No, it's just amazing how the businesses are run. So, which is why I just wanted to highlight that point. And thank you so much for giving us clarity on that. I'm just going to ask you. So, on the listing timeline part, ma'am, do you want to come in 18 to 21 months to change all of these structures and listing post that?
Yes, 18 to 21 months.
Okay. Okay. Let me just come to the hospitals business for a second and what it looks like post this restructuring. One of the reasons that analysts are excited, the street welcomed it very well, was because of the value unlocking which was seen. And let me bring that down to the core margins of the hospital business versus the consolidated business, which is what we talk about every quarter. As a standalone, will we expect the hospitals business to see the 24-25% margin range going forward?
Yes, I think we clocked last 24-25, 11,280 crores of turnover with a 24.3% margin. We are quite optimistic that these margins won't go away. Of course, we're adding 4 new facilities by the end of the year, which will be just partially dilutive because, we have very, very strong cash flows. And in terms of growth, current growing at 14%, with the addition of the newer potential growth, uplift in revenues of another 10% over the next 3 years. And of course, maintaining our ROCs, current ROCs of existing hospitals at 26%. But over a period of 3 to 4 years, this will be in excess of 20%. So I think there's growth, there's EBITDA growth, there is stability in margin, and new volumes coming in from the new company will definitely improve both EBITDA and improve margins.
In terms of, and I'm talking about hospitals now and the hospital business, in terms of expansion, I think it's safe to say among the listed players, the most aggressive expansion is with Apollo Hospitals. Some 4,300 odd beds is what you plan to increase. Are these going to be largely greenfield? Is this going to have a bit of a hit on EBITDA for some time while that expansion rolls out? If you can give us any color on that.
So the 4 hospitals that were opening this year are brownfield. Kolkata was an acquisition which required some renovation. Gurgaon was an acquisition that required renovation. Sandhya Light was a building that already existed. Pune was an acquisition of 250 beds where we're adding 200. So in terms of, I think that these are brownfield. Further 2 years later, we will be adding 2 greenfields, which is Wadley and OMR. I mean, another facility in Chennai, which is on that OMR highway, the new part of Chennai.
Okay. So in terms of the impact of that 8,000 crore capex spend on the profitability, do you see that as any kind of a concern, the financing of that? If you just can give us a sense there.
So in terms of profitability, our existing margins are at 24.3. We believe that better operating leverage coming from volumes in the existing will drive it to 25. Having said that, we are also looking at cost-cutting measures, which will save us 80 basis points. So while looking at 120 basis points loss from the new hospitals, there will be an 80 basis point saving from our current strategy. And we do believe that new volumes, operating leverage will contribute to this. Having said that, we already have very robust cash flow. So we're generating 1,200 crores of EBITDA. This is vastly different from the time when we last added hospitals when we had only about 700 crores of EBITDA. Today we have 2,700 crores of EBITDA and we have free cash flow of 1,200 crores. Debt equity ratio 0.2 of debt. So very strong balance sheet that will enable us to grow both organically and inorganically.
Just a couple of questions on Apollo Health Tech, if I may. You've talked about a 25,000 crore revenue target. How do you go about this? What is the strategy there? And is part of it, at least for the pharmacy business, adding more of own brands and own products?
It certainly is. I think if you look at, let me break it down for you. If you look at, each of the verticals, you can expect to see a 20% growth. And this 20% more than, as you talk about private label, currently 17.6% of revenues in the offline comes from private label. The strategy is to push private label both on online as well as through KeyMed, which is a completely new funnel. So as we look at the EBITDA going forward, when we reach currently moving from 16,239 crores to 25,000 crores, there is a clear visibility of 1,000 crores of EBITDA emerging from offline, from the pharmacy business, 700 crores from EBITDA from KeyMed, and very conservative 50 crores of EBITDA coming from the digital business. So clearly, I think that 2027, we have a very strong growth path ahead with profitability and huge growth in EBITDA.
And will the insurance business have a big role to play? Because that is a fairly new addition,
Yes.
I think just about a month. How has that been doing?
So I think, we've just started. We could look at 80 crores of turnover from the first year and then move into profitability where the margin is 20%. So I think when I said conservatively 50 crores of EBITDA coming from that, insurance will be one of the revenue streams that will continue. And don't forget, 24/7 has 4 revenue streams. So I think that there's an opportunity to do so much more.
Surely. Exciting times ahead. Thank you so much.
Most welcome.
Sunita Reddy there with all the details of the deal that has really unlocked value for shareholders. That's why that focus on Apollo Hospitals. Of course, some time to see that new entity list. 18 to 21 months is what they're talking about. Thank you so much.
Thank you. Thank you.
We'll take a very short break, but we continue with all of the market action on the other side.
तू ही तो है जिसकी सच्चाई वाली क्लैरिटी की वजह से मैं आज यहाँ हूँ।
गोल्ड प्लस सिल्वॉक्सी मिरर्स, ऐसी क्लैरिटी कि आपको सिर्फ सच नजर आए, चाहे कितने भी साल बीत जाएं।
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make, in our categories that we have been supplying to our defense forces, some of the best platforms in the world.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and
Welcome back. You're watching Profit Buzzers on NDTV Profit. Overall, in terms of markets as well, a very divergent trend, Puneet, that you're picking up in the mid-cap and the small-cap index as well. I mean, there is no similar trend that you're picking up in terms of today's sessions. Likewise, what was happening in the PSU banking space yesterday, that has been reversed, and you're seeing pressure that has built up on that front. Overall, you're seeing the markets also at the day's lowest levels. We are at 25,487. So far in terms of Nifty 50. In terms of individual stocks as well, let's just quickly pull up the top gainers and the contributors to Nifty 50, and then we look at the ones which are really pulling it lower. There you go, HDFC Bank, RIL, L&T and a BEL. BEL in fact was one of the gainers yesterday on the back of an order win, is seeing profit booking today. Bharti Airtel, Tata Steel, Ultratech and a JSW Steel. These are a few of the names which are seeing some strong moves. But moving on. A couple of stocks that are buzzing in trade today, and this is on the back of order wins. You're talking about Seagull, Paras Defense. In fact, NDTV Profit did speak to Paras Defense as well. And all right, strong moves there. Anushi is with us to tell us more about all of them. Anushi, over to you.
Hey Hiral. So firstly, I'll start off with Seagull India. It's a big order win that we are looking at. The company has received an order of 1,199 crore, and this is from NHAI that they've received. That's National Highways Authority of India. This order pertains to the construction of the Nadan Ayodhya bypass road. So do note that in the last few quarters, the analysts were asking for an update in terms of where this order flow is coming. So finally, we have a confirmation on this, and the size is 1,200 crore almost. So total length of construction is 35.4 kilometer. Now, in terms of order book positioning, if we see in FY25, they had an order book of 10,806 crore, which is a 3.4 times of a book-to-bill ratio that we are looking at. Do note that the company targets a revenue growth of 10 to 15% and an overall target inflows of around 5,500 crores. Another stock in focus is RITES, and they have received a $3.6 million of an order from African Rail Company. That roughly translates to about 31 crore of an order size, and this is for supply of 2 fully overhauled to Alco locomotives for deployment in Zimbabwe, Mozambique as well as Botswana. Order execution period for this is 9 months. The third stock in focus is, in fact, we did speak to the management as well, is Paris Defense. They've backed a 22 crore of an order from France-based Cerber, and this deal is to supply 30 Kimra 200 systems. This is an anti-drone solution that we are looking at. It's a counter UAS system and is designed to neutralize the hostile drones that are there in that particular region. As we look, do note that the company aims to unlock new export opportunities going forward. If you take the order book in consideration of Paris Defense, that exceeds 900 crore as of now.
Okay, thank you so much, Anushi, for that. In fact, we did speak to Paras Defence's management as well. Let's quickly listen into what he had to say.
The significance of this order is not in the value. It's in the mindset of a global consumer, which he started looking at India not just as a manufacturing hub, but today is looking at India as a development hub. Now, today, the technologies that can be developed are no more the responsibility of the West, and they have started believing that an Indian company can develop a system and a European company can consume it. They have been magnanimous enough to understand this and then put their layer of software or algorithms and then deploy this particular system for their customers. So this is a paradigm shift that I would like to see. It definitely opens the floodgates, but it's a change in mindset which is going to be permanent from here on. It was already beyond 900 as we closed in the financial year, and considering we have executed a large part of it now, we maintain that particular order book even after execution of Q1.
Right, so that's with regards to where Paras Defense goes. Samir, 3 stocks that we're talking about: Paras Defense, RITES on the back of an order win. Any views or recommendations out of the 3?
So actually, all 3 of them, Eagle I don't cover, but the other 2 Paras I find extremely expensive on valuations. No, I'm not denying the fact that, India's capability of defense is only going to keep increasing, and what the management rightfully said, that this opens up an opportunity not only to Europe, but to other nations in Asia and Africa for selling their defense products, given the fact that a country like France is picking up some of their, products, opens up a huge avenue for business. But this is all going to take time. It's not going to happen overnight. Secondly, we got to look at the fact that you're dealing with countries where then, payments can become delayed, your cash flows can get affected. So I would not be, and given the valuations at 80 times, I don't see too much upside in the near term for an investor who invests today. Comes to RITES. RITES is, yes, getting orders. But if you look at the last few years, the turnover has actually been decreasing. The profitability has been going down. The orders that are coming are going to hopefully help them maintain the top line and maybe even grow it a little bit going forward. But till we see some significant change and, executions picking up and more order flowing through more aggressively, given it's trading at 30 plus times earnings, limited again upside. So I would not be buying either of these 2 counters, and third we don't cover.
In fact, let me get in Brijesh L of IDBI Cap as well. Brijesh, 3 stocks buzzing in trade. What are charts indicating?
So purely from the chart perspective, to start with the Paris has shown some strength. But having said this, the level of 1550 is a very decent base. So for me, technically, as long as 1550 levels are held, I think the structure will remain positive, and maybe this continuation of the trend will be there. So if I need to take the upside view, then somewhere close to 1800, 1850, that can be the possible upside. And recently, the stock also went up to 1950. So more or less somewhere close to those level, 1900, 1950 can be the upside range. The lower demand is at 1550. So if any given point of time, if this 1550 is broken, then one needs to be taking out their profits and stay away, because from there the momentum will change into swiftly shift into a downtrend, and then this can be a little bit worry. Coming to Seagull, so it's a newly listed, and there's a very limited charge, but then today, like the formation is quite positive. But eventually, what we have seen is the selling came from the level of 300. So this pullback can go back to 300, and at the level of 300 again, we can see some supply or maybe some resistance. So one has to be cautious near 300 is the take. And now coming to the right specific at the level of 296, maybe it can be a slow mover. The level of 300, 330 is a resistance zone. So on an immediate basis, if it sustains above 300, then maybe another 10% kind of a move can be there. Slow and steady. We are having a positive bias on the rights. So rights can be, out of these three, rights is something which one can take the bet.
Brijesh, but the realty stock is one of the realty stock that's buzzing is Keystone Realtors. Actually, it's inked back-to-back milestone in Mumbai's redevelopment space. Let me get in my colleague Anushi to give us more on this. Anushi.
Right, so the redevelopment area continues to remain focused for Keystone Realtors, as in the last two updates that we are seeing for the companies, and this is a particularly big one that we are seeing, wherein the 8 housing societies in Mumbai has selected the company for large-scale cluster redevelopment project in the Andheri region of Mumbai. So what is happening here is that the company has already received development agreement, which has been executed with these 5 societies that we are looking at, and with the remaining 3 societies, they've signed the LOIs, that's letter of intent. So development agreement expected to be signed in the next few days as well. If you look at the gross development potential of this overall project that we are seeing, that stands at 3,000 crores. So it's a big project size that we are looking at. Even the recent update which came yesterday, now they had received a letter of award for redevelopment project in collaboration with Maharashtra Housing and Area Development Authority as well. And this was for the redevelopment project in Sion region for a total GDV size, that's a gross development value size of 4,521 crores. So both of these additions of over 7,500 crore that we are looking at. This is in line with the company's FY26 guidance which is given, in which they expect the project additions to be greater than 6,000 crores. In fact, they are looking at launches of more than 40% or so. This is the kind of growth that they expect, exceeding the 7,000 crore of mark that we are looking at. Pre-sales, they're targeting about 33% of a growth at 4,000 crore. In fact, if we look at FY25 operational trends, it seems a stronger start for FY26 considering the FY25 metrics, wherein they added 9 projects with a total GDV potential of 4,700 crore, and they did surpass the guidance of new additions which exceeded 4,000 crore mark that we are looking at. So Keystone Realtors buzzing in trade since these last 2 sessions on the back of these updates.
Thanks so much for that, Anushi. But Sameer, any particular view that you have on Keystone Realtors?
Yeah, so I think last week only is one of the stocks that we had suggested on your channel when I spoke, that we thought that in the real estate space, that was one of the stocks that was trading at reasonable point of price. It had seen a correction. And, like we said, that Bowman is quite an aggressive promoter entity. He's looking at constantly taking up new projects. He has lots of ongoing projects. We believe as the sales continue to happen, meaning the sales are happening, but as the projects keep getting into the construction activity picks up and the cash flows start coming in and he starts recognizing the profitability for these sales that he's already done, we think the profits will see a good jump, and then the valuations may not look as expensive as they do at the point of time. He's constantly expanding his redevelopment projects within the city of Mumbai, and there's a huge scope, I think, for redevelopment. So we believe the next 5-6 years, you'll see Rustamji, that's the brand that they sell under, continuously getting orders, We think the top line, bottom line will grow. The leverage is not too much at this point of time. And in fact, it's almost nil. But given that he's got these new projects coming on stream, of course, he's going to have to take some leverage to pay up some upfront costs of capital and things like that. So even after doing all of that, I think the the debt is not going to be high. And we think there is upside. Disclaimer, I'm holding the stock in some stocks that we've been recommending for quite some time.
Okay, so that's with Keystone Realtors. Hiranba Industries, that stock is up in trade. In fact, 37% in the last 10 days, today trading at the day's highest levels. And that's because the agrochemical player has actually turned up the tempo on its growth game. Commercial production has kicked off at its Gujarat-based subsidiary and expected to boost annual revenues by almost 375 to 475 odd crores. Overall, there could be risks in terms of regulatory risks, competition, as well as pricing pressure. And margins are expected in that range of 12 to 14%. Coming to you, Brijesh, what are charts indicating with the 8% up move today? Are you seeing further strength?
Yeah, maybe there is a possibility some strength may come in because this level of 275, 300 was the previous breakdown zone, and now again it has re-entered that breakdown level. So most probably there is some strength which is coming in the few weeks, few months before this. 550 was the level from where the supply came. So more or less, I think this can go back to 450, 500 level. So I think somebody is having a position should hold on to the longs and with the 300 as a base, with that as a stop loss, and then 450, 500 can be the possible upside. The retest is most likely.
That Brijesh, but there's another stock I just want to pull up real quickly is SBI Cards. Now, that was in focus after a brokerage note. It's down almost 2.09%. And it's been consistent with the day. Now, the key aspect of why we're tracking it is because Goldman Sachs has now, downgraded the stock to a neutral target price above 1,000, just a tinge above 1,000 as well. But while they're saying that it has balanced risk reward post the sharp valuation re-rating, the key aspect mentioned is that the near-term growth EPS could be impacted, and it's largely because of the credit cost and the growth, which could be faltering as well in the near term. So that is the key aspect. They've gone on to cut the EPS by almost 9.5% for FY26, and they are seeing some delayed conversion of spends to interest-bearing loans, which was one of the key re-rating triggers. I think the stocks also reflected that as well. But Samir, let me come to you on SBI Cards. I'm not sure if you have a view, but specifically, it's been a laggard to say the least since its listing at about 700 to 750 rupees. How do you see, and what's your view on the same?
Yeah, so it has been a bit of a laggard, and the reason has been that they constantly keep having the NPAs that keep rising. There was a thought that once the card, all these new tie-ups that they have in place stabilize, and then the NPAs don't keep rising endlessly, there will be a re-rating. But they've always had this issue because this is a business that grows and survives actually on the customer being charged very heavy penalties and very heavy interest rates for late payments or missed payments or part payments. And at the end of the day, if there is a situation where someone is paying delayed or paying late, it's because he has the difficulty or inability to pay or intent not to pay. So that is where the problem is like. But we believe that this business has great opportunity to scale up over time. Now, it's just how soon they can get their act together in the sense of how soon they can get their credit rating ability to get so that they give these cards to people who actually start repaying and the NPA start coming down and they can make profitability on that. So we think that will take another couple of years. The stock could probably be in a range between again 700 down on the low side to maybe 1,200 on the upper side. But after that, once that happens, we think the stock has a lot of opportunity to scale up. So we think it's a long-term play. It's a 5 to 6 year play. If you get it lower, great. If not, at 900, I would be a little cautious, but I would like to buy it closer to the 800 odd levels.
So that's with regards to SBI cards as well. But moving on, Tata Communication, a bullish initiation coming in on this counter from Macquarie. They have a target price of 2,300, stock at the day's highest levels. And what they are saying is they see a bull case path for the shares to double over the next 3 years, enabling digital transformation for enterprises. Brajesh, 5% up move today. Expecting a double in the next 3 years from a fundamental perspective. What are charts indicating?
So basically, the trend is positive. So this continuation of the trend will be there, and I'm not confident whether it will be a double or something. But then we can talk of 2200, 2300 over the next 4-5 months. So the structure is positive. Whatever we do long, the 1300 is the base. So that should be the stop loss for the long bets. And maybe it's already moved up. So I would, if I need to buy, I would wait for some kind of correction, 1700, 1650. So whenever it comes close to those levels with a base of 1300, I would take a long bet for 2200, 2300. So yeah, structure is positive. So I think slow and steadily it should move on the higher side.
Okay. Samir, coming to you on Tata Communication, how are you looking at it?
I don't have an outlook on this company at this point.
Okay, so that's with regards to Tata Communication, but let's quickly go through some of the volume buzzers in trade. Rights we've already spoken about, but Flair writing industry, the volumes are up 6.5 times. You have its 30-day average. Apollo Tyres as well as another one where the volumes are up nearly 5.5 times, and both of them have a significant return potential as well from the analysts that are covering it. Brajesh, what are charts indicating for both these counters, Apollo Tyres as well as Flair writing?
So Apollo Tyre, I think there's a trading opportunity. This can see some momentum, and we can see 480, 485 as a trading bet from the current point. So it looks good. The volumes are quite decent in Apollo Tyre in today's session. So these volumes cannot be ignored. So closer to 485 or maximum 500, that can be a trading bet. Coming to Flair rating, I think I'm not very sure. After it has seen a very good from the days it has given up its gain. So at the level of 290 is also the resistance zone. So it all depends upon how it closes. If it closes below 260, 265 levels, then there can be this whatever the breakout we are seeing might not work. And even though if it continue to stay positive, the level of 290 may act as a resistance. So one has to be cautious, and somebody's having a position, it is advisable to take some profits near 270.
The other one, which is also buzzing on volumes, is something like a Blue Dart. It's 4.5 times its 30-day average. Let's pull up the 5-day chart, because yesterday as well the stock moved effectively. Now it's just given off some of the gains, up 1% still, but volumes are a very big aspect here. Brajesh, Blue Dart, as well as if you can comment on something like Rights as well. Again, a stock which is, and the weekly chart of Blue Dart is very interesting. The last 2 days has seen that sharp jump on that. Brajesh, on Blue Dart first, specifically, do you see this up move to continue as well as something on Rights?
Yeah. We are having a view on the Blue Dart, and we do like closer to 6,000, 6,500 mark. We had the buy trades in this specific Blue Dart, and on the way up, I believe this at the level of 7,500 there will be a small supply, because that has been the previous resistance zone. But on the long-term perspective, we understand that the 7,500 will also be taken out, and the 9,000 plus level should be seen in the Blue Dart. So we are extremely positive, and whenever there is opportunity or maybe some dip, it's always a buy kind of a scenario. And on an immediate basis, I think this can go up to 7,500, and then some cool off will be there.
So that's with regards to the volume buzzer. Samir, very quickly, from the 5 or 6 names that we just spoke about with Brajesh, which are volume buzzers, any topic that you have?
So on corrections, Blue Dart is something that we also like. We think the last mile delivery opportunity in India is just at the beginning, at the cusp of growth, and we think that will do well. This is a company with good return ratios, no leverage, great cash flows, just 67 times trailing earnings. Yes, even if there's a 30% growth, it still means it's a 45 times forward earnings, which is a little bit expensive. So any corrections would be great buying opportunity. That is one of the counters that we think can give you good returns over a longer term, but wait for corrections before you buy.
Wait for a correction in terms of Blue Dart, that's the word coming in. But moving on to the primary market, that has been busy in 2025. 65 IPOs launched so far, 22 main board, 43 SME listings. But let's head across to my colleague Mahima, who joins us to tell us, which are the IPOs which actually are trading below the issue price, how many are trading above, and what is the entire scheme looking like so far? Mahima, over to you.
Right. So, as you rightly mentioned, so far in 2025, we've seen 65 IPOs that have hit the last street, out of which 22 were main board and 35 were SME IPOs, 43 were SME IPOs. 35 IPOs did see gains on the listing day and 25 IPOs saw losses on the listing day. Now, in terms of 6 IPOs, out of total 22 IPOs are the ones that are actually trading below their issue price. And overall in the SME space, 27 IPOs are trading their below issue price versus that of 43 total SME IPOs. Now let's take a look at what these names are exactly. In terms of the main board space, counters like Eris Infra down almost 23% versus its issue price, Indofarm down almost 21% versus its issue price versus Shoals. There's Stallion India as well, and there's Denta Water as well, which are all down versus their issue price 7%, 4% and 4% respectively. Now there are counters that are also doing much better at versus their issue price overall. Let's take a look at those counters, of course in the main board space first. Quadrant Tech doing well, up almost 62% from its issue price. Quality Power up 55%. Skoda Tubes almost 40%. Postram Info almost up 38%. And Ellenberry Gases, a very recently listed company, up almost 35% versus the issue price. Now let's also take a look at some SME names as to how they have performed. Some names that have not done very well in terms of SME IPOs. These IPOs include your Capital Numbers that have not done well. Super Iron Foundry also not done very well. There is Nucleus also that's not done well. So this is the overall view as to how IPOs have fared so far in 2025.
Thank you, Mahima, for that. I think that was with regards to the main board IPO. Samir, very quickly, any buy recommendations that you would have from the ones which are below the issue price, where you're seeing valuations cheap, or the ones which are trading above, the issue price?
So one of the counters that we like, which was just listed today, is HDB Finance. We think the growth is going to be quite strong there. It's trading at, I wouldn't say cheap, but at decent valuations compared to some of the other larger NBFCs like a Bajaj Finance. So I'm saying, given the fact that it's got a good promoter background, HDFC at the end of the day, quality, it's got good financials and good growth opportunity ahead of it. That is something that can be investment that can be made for a 3-year to 5-year horizon. Of course, there are other IPOs, but let's stick to this one at this point in time.
Well, got that, Samir. But thanks so much, Samir, as well as Vijesh, for giving us your views on a whole host of stocks. But that's all the time we have on this edition of Profit Buzzers. Thanks so much for watching. Stay tuned to NDTV Profit.
That's huge. That is a biggie. It's out of it.
गोल्ड ग्लास क्लियर ग्लास, पार हो या नियर, सब कुछ दिखे क्लियर.
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make, in our categories that we have been supplying to our defense forces, some of the best platforms in the world.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola? Should I hold ICICI CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Imports become the exception rather than the norm, and increasingly we do all.
Hello and welcome to NDTV Profit. You're watching IPO Adda, and the company in focus today is Travel Food Services. It manages travel QSR and lounges in the biggest airports in India, and is one of the largest player in that market. And joining me today is Varun Kapoor, who is the MD and CEO of the company, and Vikas Kapoor, who is the CFO of the company. The company's IPO is opening on July 7th, closes on July 9th. Price between 1,045 to 1,100 rupees per share. It's an OFS of 2,000 odd crores, and it values the company at over 14,484 crores at the upper end of the price band. Gentlemen, thank you very much for joining us on NDTV Profit. To begin with, Varun, you're in a segment which is expanding fast and growing fast because it's clearly linked to the air traffic which is coming into our airports. Why are you only raising money through OFS, and why not fresh capital?
Good day, Sajid. No, thank you for having us on your show. It's a pleasure to be here. And yes, we operate, like you rightfully said, we operate in the aviation segment, operating travel, QSR, and lounges. This particular, we are looking at, as you mentioned, the listing of the business. We're looking at the OFS particularly because, as a company, we've been there actually for about 16 years. And we are a successfully operating, profit-generating company. We're zero debt, and we actually have a good amount of cash on the books as well. So with that in mind, there was no need for doing a primary capital raise. And at the same time, we were keen to take the business on the journey of being a public entity. So we've done an OFS from one of the promoters as part of this listing.
Your company is a joint venture with SSP Group, which is globally known for its lounges and airport services. What would be the role of SSP going forward from here on, and how do you see the entire shareholding changing because of the IPO?
Right, Sajid. So SSP has been in the business as a strategic partner. They're global leaders in this segment. They operate across about 37 countries, market leaders. A lot of learnings coming to our business, from that partnership with SSP. So no doubt, I think part of that, they are really strengthening, really working, and really adding value to this whole partnership that TFS is. From that point of view, I think with this whole IPO there, they very much remain committed to the business, and the way the shareholding would look like post-listing is while one of the promoters, the Kapoor Family Trust, is selling down a certain portion of its shareholding, both the promoters, both the shareholders would remain very much so in the business for the foreseeable future. And I think both the strengths will continue to be there, and the business will continue to operate the same great way it has for the last few years, hopefully in the future as well.
Varun, if you can also take us through your business model. What is the way how do you generate revenue as part of your operations, and what are the levers which are at work with respect to your entire operations, which is QSR in restaurants, in airports, and also the lounges?
No, sure, I would love to do that. Very simply put, we operate these stores. It's a simple business model. We run these stores in airports, in aviation, where we operate travel, QSR, and lounges. We actually take the spaces, we build, we operate, we manage these stores. Whether it's travel QSR, it's as simple as restaurants and airports. We say QSR because everything's about quick service in an airport environment, as you'd very well imagine. So when customers come up to the store, they are interacting with our teams at those stores. A transaction takes place. We provide them food and beverage, and hopefully they've had a great experience. That's on the travel QSR side. Equally on the lounges. Lounges more and more important part of the journey for travelers today in airports. And you can see that today with travelers coming to our lounges. We build, we conceptualize, design these lounges. We actually then run, operate, manage these lounges. And again, there we have tie-ups with partners, airlines, your card companies, such other partnerships whereby consumers come today to lounges. You see that very much across airports, not only in India, but globally. And that's the way our model works, where these, the customers come to our lounge and they avail those services. So I think it's about consumer experience, and that's ultimately what we aim to deliver across our entire property and real estate.
Vikas, come in here. Varun gave us a brief idea of the business model. If you can give us a brief idea of how the margins are in this business and what are the levers that can impact or increase the margins from here on, because for FY25, if I look at the core margins, it's around 32.8%, though it has risen from the previous year. How do you look at margins and given the kind of we're seeing the growth which is happening in number of airports and others, how do you look at cash flows as well?
Sure. Thanks, Ajit. So basically, in terms of margins, as you rightly pointed out, our margins are strong and healthy. The focus is always on financial metrics combined with operational efficiency. The core thing that we try to drive is the scale and the breadth of the real estate that we operate in the airports that we are in. And predominantly within that space, we try to maximize margins by improving on operation efficiency, customer experience, as well as ensuring that there is enough value for money for the customer who is buying from our travel QSR or visiting our lounge for a great experience. Going forward, we believe that the margins will remain stable and growing consistently because that's been our historical performance from that perspective, and we tend to concentrate on our financial metrics from that perspective.
Varun, if you can come in here and give us a sense of the growth, because your top line has grown by nearly 20% in the last year, and the previous year it was around 30%. Given that your entire growth is linked to the air traffic growth, which is pegged at 8 to 9% for domestic and 6% for international, do you expect to grow at the same level, or as services increase, you will be able to manage to increase the growth?
Right. No, that's a great question, Sujit. And if you see, we are in a beautiful market. India is no doubt a growing market. It's a market that has grown, significantly over the past decade. Expect to continue, if not growing better, like you rightfully said. I think no doubt the tailwinds of just that structural growth. We are the fastest growing large aviation market in the world. I think that no doubt in our business contributes a lot to the structural growth of what we deliver. Passengers coming through the airport, and we obviously create an offering for that. I think superb efforts you can see very much. I think the last few years in terms of the investments, no doubt by the government, by airport operators, and even the airlines, the way that entire network expansions are taking place, no doubt adds real wind and real, below the wings, as one would say. So I think we see the structural growth being very strong, like-for-like growth historically, as you would see, as well as the new business, as new airports, new terminals come up. We very much would be there, and we'd look at catering to those customer requirements. And I think there's a big runway in terms of growth, not only in India, we also, as you know, have expanded globally as well. In markets, and we see that entire piece about experiences, customer journeys, the value of differential travel QSR and lounge offers, play out considerably across aviation, and that's very much our intention to deliver.
Because, can you come in on the cost structures here for your businesses? Is it on a revenue share with your, airport operators, or is it a fixed fee that you pay to them? Thus, my question is very limited to how easy it is to maintain this kind of margin, and is the cost factored in as part of your revenue already because you have a tie-up with the airport operator?
Thanks, Ajit, for the question. Predominantly, our model is very simple in the sense that, yes, the way we look at the rev share or the MG or the minimum guarantee model that is there, whichever is higher, that is the base model of occupancy cost. Plus, there are certain times a fixed cost which is charged by the airport operators or the landlord of the place. From that perspective, our endeavor is always that we tend to be towards the revenue share side of things, predominantly because of our operational efficiency and the brands that we bring to the table from that perspective. So that's what we endeavor to do from that perspective, ensure that our contracts where we are sharing the revenue with the airport rather than paying MG because the sales are not coming through. So that's predominantly been our performance in the past as well. Going forward, what we believe is on the rev share or MG is it's what kind of brands you bring to the table, what kind of real estate you operate in the airport space. That kind of gives you a leverage in terms of ensuring that yes, you are able to maintain those margins that we have as on date.
All right, so that was the management of TFS talking about the growth aspects of the company going forward. Viewers, please keep in mind this IPO opens on 7th of July and closes on 9th of July, and this is completely an offer for sale. All right, moving on, let's also take a look at how the markets are doing right now. Obviously under pressure, Nifty 50 down almost 0.5% as we speak. Let's pull up that. The Bank Nifty also under pressure, almost down 1% there. Let's also try to pull up the constituents in the Bank Nifty and see what counters are putting that pressure. The broader markets also seeing pressure. The mid cap 150 down 0.4%, the small cap 250 down 0.6%, but Nifty Bank only Axis in the green. There's IndusInd which is down 2%, AU Small down 2% as well. BOB, Canara Bank, HDFC Bank, SBI all down by about 1%, and because HDFC being a heavyweight also seeing that pressure on the Nifty as well. Let's also pull up the advanced decline ratio in fact and see where the broader end of spectrum is seeing pressure. There you go. There's 700 odd advances versus that of 1500 odd declines, so that's more than 2:1 ratio. We're seeing more than two declines over one advance. Let's also pull up the sectoral heat map and see how sectors are faring in trade right now. There you go. There's Nifty Metal seeing gains of about 1%, consumer durable up by about 0.5%, Nifty Auto doing fairly well in trade today, up by about 0.15%, but Nifty Realty continues to be under pressure, down by about 1.8%. Followed by there's PSU Bank, Nifty Finance, Nifty Bank. There's also Nifty Energy not doing very well in trade today. So that's with respect to where the sectors stand. Let's also quickly pull up the BSE 500 and see what counters are buzzing there. There you go. There's Jindal, which is down 6.5%. Narayana Hrudayalaya down 5% almost. Reddington not doing very well. Equinox, Godrej Industries, Phoenix Mills, Tube Investment, Eris Life Sciences all down by about 4 to 3 odd percent. There's RITES, which is up 5%, doing well in trade today. Tata Communication doing well. Sterlite, Heidelberg, Apollo Tires, Quest Corp all up by about 3 odd percent as we speak. But speaking of Quest Corp, the stock is up, and why is this upside exactly? We have Jasmeet joining us and giving us more details on the counter. Jasmeet, what are you picking up?
Well, right. So let's understand more about Quest Corp and see how the stock is turning out post the demerger. While the company is into staffing and workflow management and it's present in 8+ countries with roughly about 4.6 lakh associates. While company serves 3,000+ clients, and post the demerger, company is split into 4 different sectors. One would be the general staffing, the professional staffing, the digital services, and the GCC as a service. In terms of revenue, the general staffing contributes majorly, about 85% odd, while the professional goes second in line with 5.5%, and then comes the GCC, the smallest sector. Talking about the outlook, so post the demerger, during the con call of management, the management feels they want to aspire and become the global staffing player by 2030, while they also expect a 3% YOY growth. Now, why did this demerger happen? The company wanted to just simplify the business structure while exit the non-core structure and focus on their core structures. How did the split happen is basically the Quest Corp undertook the workflow management while the Digitide, the divided entity, took up the BPM and InsurTech, and the Blue Spring took up the facility management service. While talking about the analyst rating, there are 9 buy ratings for this particular stock with a potential upside of 30% odd. While talking about what the brokerages say, there is IIFL which has a buy rating on the stock with a target price of 410. Well, the stock is already up 3.5% today. And what do they expect? They see the benefit of formalization, industry consolidation, and improved management focus to hinder and contribute growth towards the company. While they also say the revenue growth was impacted in FY25 basically due to the BFSI hiring slowdown, which they see will improve. While the company to focus on its core business after having exited the non-core business. It will be interesting to watch out how the Q1 turns up for the company in the following time.
Right, we have not seen much of an action coming in Quest Corp since the demerger. In fact, I am referring to one of this IFL note which has given the growth outlook for its various businesses. For the general staffing business, they are expecting the revenue and EBITDA to grow at a CAGR of around 9 to 12% over FY25 to FY28. For professional staffing, they are expecting the revenue and EBITDA to grow at a CAGR of 15 to 18%. And when it comes to the overseas business, that segment is expected to see its revenue and EBITDA grow at a CAGR of nearly 5 to 11%. So a decent set of number growth is what IFL is expecting. They have a target price of 410 on Quest Corp. So that stock would definitely remain in focus. But another stock that has been buzzing in trade of late is Herenba Industries. That stock is up nearly 37% in the last 10 trading sessions. Now, what does this company do and what's the growth outlook here? Let's get in Varsha with more details on the same.
Yeah, thank you so much for that. So yes, in the last 10 sessions, the stock has seen a 37% of rather given 37% returns to the investors. Now this company is mainly an agrochemical company which is involved in pesticides, herbicides and insecticides. Now why the buzz in the stock price? One is the subsidiary company has commenced commercial production at their Gujarat unit, and this is expected to add annual turnover of around 375 to 475 crore. Now this was just a week back news. Also that Dicafil, which is a previously sick unit for the company, has commenced production as well, and this will be focused on contract manufacturing and R&D setup. Now on the product strategy though, they're focusing on increasing their product registrations, and there has been strategic shift into formulation products, which is a value addition to the technical products. Technical is nothing but the AI, which is the main ingredient in herbicides. Onto the future outlook, if I were to talk about, the management views FY25 as a transitionary year. Now we all know that the chemical industries and especially agrochemical industries is going through pricing pressure, and that's what has led to slow growth or rather degrowth in FY25 in all the chemical and agrochemical industries, and Herenba was no exception there. But they're targeting revenue of around 35 to 40% in FY26, with EBITDA margin is expected at in the range of 12 to 14%. But lastly, we should also talk about the risk involved in the business. One is the pricing pressure of overall which is going on in overall chemical industry, and intense competition is also one of the risks that the company has, because there are a lot of agrochemical companies who are coming into picture. Regulatory risk and product obsolescence are the other two risks which this company carry.
All right, Varsha, thank you so much for giving us all those details on Herenba. The next stock that we're focusing on is Dreamforks. Now, the stock has been under pressure. If we can try to pull up the last 10 days or 15 days of trade for this particular counter, it's been under pressure, and there's a reason for that. Now, the company has closed certain programs for Axis Bank and ICICI Bank from 1st of July. This is the recent filing of Dreamforks. They've said that the impact of this closure will be quite material for them, and company has said that it is committed to take actions to mitigate the impact as well. These contracts, of course, the contracts that have already been entered into will stay intact, but going forward, certain programs might be closed with respect to where Axis Bank and ICICI Bank stand. Now, last week, when there was a development and a PTI story out there for Dreamforks, it said that the company might see certain closure of contracts with certain banks, post which when we spoke to the management came out and said that there were no such notices from the clients. But following this, there was a filing yesterday saying that there are certain amount of programs that are being closed with Axis Bank and ICICI Bank. Now it's interesting here because 93% of their revenue comes from lounge services and 7% comes from non-lounge services. Plus the trigger as to why this is happening, why closure of certain services are happening, is because company did witness a temporary disruption in September 22 of 2024, and this was and because of this there was a sudden closure in terms of 49 lounges across 34 airports across India. So this is one of the reasons as to why this is happening, and plus of course we've seen structural changes by banks also happening. We've seen that banks are replacing blanket usage with spend based model on lounge accesses, which is kind of actually hampering the overall usage of lounges. Plus banks are entering into direct partnerships with lounges itself, so the middleman, that is Dream folks, is getting out of picture, and low credit card penetration has always been a problem in India. It's as low as 5% right now. So till this doesn't grow, the overall impact on Dream folks could continue. Now the pressing questions here could be as to how much they can scale their lounge business, and if banks and partnership, what's actually the survival factor here. So that's with respect to where Dream folks stand, and this is with respect to Dream folks. But shifting focus, after a period of underperformance, a new export opportunity could be a significant catalyst for Indian steel pipe manufacturers. Saudi Arabia has imposed anti-dumping duties on steel pipe imports from China and Taiwan for the next 5 years, and this is set to open up the Saudi Arabia market for Indian players. We have Somin joining us to tell us more on that.
We actually have Vansh joining us.
All right, we have Vansh joining us. Yeah, Vansh, can you hear me? Yeah.
So the Indian steel pipe manufacturers remain in focus, given the fact that there has been a recent news that the Saudi Arabia has imposed an anti-dumping duty from steel pipes coming in from China and Taiwan. The duties apply from 30 June for a period of 5 years, and the rate for the which the duties have been applied ranges from 6.5% to 27.3%. Analysts believe that this anti-dumping duty could open export opportunities for Indian steel pipe manufacturers to Saudi Arabia. Also, Nuvama came up with a note where they are quite bullish on these companies. So let's understand the reasons behind it. So the companies are to perform on account of decent valuations, strong order book, and good future outlook. So company has also guided strong. Company has also maintained strong volume guidance. So all these stocks are in focus today.
If you look at Venus Pipes, basically the story here is that the Saudi Arabia has imposed anti-dumping duty on pipes that are coming in from China and Taiwan. So this opens up a good export opportunity for these companies. So that's the reason basically they could stand to benefit out of here. And apart from that, if you look at the growth that has come in for these companies, now we are comparing here basically Venus Pipe, Ratnamani Metal, and Welspun Specialty, because these are the only 3 companies that are present in the steel pipe manufacturing business. Now, if you look at the growth in it, the revenue CAGR for Venus Pipe, it has nearly 75%, which is more than double. Which is more than double of what the other companies have been doing. For example, if you look at Welspun Specialty, revenue CAGR for the last 5 years stood at around 35%, while that of Ratnamani Metal stood at around 26%. The EBITDA CAGR for Venus Pipe has been around 141%. The PAT CAGR has been around 185%, which is way more than what its peers has done. In fact, here we do not have the Welspun Specialty EBITDA and PAT CAGR number because of the fact that on the earlier years both these companies reported losses. So also Venus Pipe specifically, that stock is up around 5 to 6% in trade, because there are 8 analysts tracking the company. All of them have a buy rating and if you look at the return potential for these companies, it stands at around 40% odd plus.
Right. So that's with respect to where these pipe companies stands. Now we are joined by Vintage Coffee's management today. Balakrishna, T. Balakrishna, CMD of Vintage Coffee and Beverages, joining us now. Hi, Mr. Balakrishna. Pleasure speaking with you. We were just discussing last week itself that we've seen a significant downtick in terms of coffee prices, both Arabica as well as Robusta. Of course, the downtick is not as intensive as compared to how coffee prices have increased in the past 1 year. But just want to get your sense as to what's happening with respect to where prices are concerned. What's the development there, and then how are you seeing the demand pick up?
Yeah, good afternoon. Thanks.
there is a slight change in the coffee prices. If you see the couple of weeks, I think if you can able to see that Robusta and Arabica both, there is a pressure on the prices, especially because the output of the coffee has increased in Brazil and Vietnam, and also there is a small slight drop in the coffee prices, but that is not going to have any sort of any impact. In fact, this will help us, especially the value added product like a soluble coffee and all. So where we can able to reduce the prices and bag more orders, and the consumption is as growing, so it is always an advantage for us, because it has increased a phenomenal. Actually, it has gone up by 130% if you see the compared to the last 2 years. So it is slightly settled because of the output is more, and I think it should be settled in a region of around 3,600 to 3,500 or 800 levels only. It will be there.
Right, sir. Sir, Soumit Sarkar also joining into the conversation. As I can see, in the last 1 year, that is from Q4 FY24 to Q4 FY25, your capacity utilization has nearly doubled, and you're running at 100% capacity utilization right now. So firstly, what led to this big surge in the capacity utilization, and do you have any capital expenditure plans going forward?
You see, there is a demand for the coffee. As I said, globally the coffee industry is doing extremely good, and soluble coffee consumption is increasingly growing 6 to 7%, and typically the freeze-dried coffee consumption is going more. So we were doing any 50%, 60% of installed capacity. Now we have achieved 100% capacity utilization, and also we have in a plans of already we have informed to the exchange and all that we are expanded, already enhanced the capacity by another 2,000 tons. Now it has come to 6,500 metric tons. So there is a demand is there, and we are now moving according to the pace.
Right, and so any capital expenditure plans?
We have a plans actually. We have a plans to actually, to be frank, actually, so we are trying to expand the capacities further, because there is a demand and we are getting a good response from the markets, and the orders are on hand. So confirmed orders are there, and so we want to go for the additional capacity.
Right, so any amount that you have finalized that you will be using for this capital expenditure? Nothing so far.
Not yet.
And any fundraising plans that the company has to fund this capital expenditure that you will be doing?
Company is internally discussing, so we are yet to take a decision on that. So we will revert on that one very soon.
Right, sir.
Okay. Mr. Balakrishnan, just want to get a sense right now in terms of your revenue mix, around 86% is exports. Do you think that will change in the near given future, or will that remain the same, or do you think that exports percentage will go up? And then overall, what's your reading on margins expansion then from a longer term perspective?
Yes, I just brief you. The 86% may remain 86 or 90%, because ours is an export-oriented unit. Obviously, we are bound to export the entire product, and of course, we can sell it in domestic market up to 50%. But typically, if you see the Indian market, also soluble coffee consumption is growing. Now there is a demand in Indian market too. So slowly, we want to sell in Indian market also, either through our own brands or with the private labels or from the institutional sales. So therefore, the focus will be more on exports only. So we'll try to be, and because we have an orders on hand for exports, and that is the reason actually we recently announced the capacity by another 2,000 metric tons, which has come to 6,500, and going into full capacity utilization. The current year will be morely focused on the exports market only.
Do you think your cost of export?
Sorry.
Just want to understand, has your cost of export gone up right now because of the entire Iran-Israel conflict?
Not really, because Iran-Israel conflict is not going to have any sort of this thing. But the only thing is that there is a slight delays in a transit and all, because of the logistics has become a slightly an issue, because we also import a lot of coffee, because we import coffee and then we process and do the value addition and again re-export. So Indian coffee and as well as the imported coffee, both we use it. So because of the logistics, maybe there is a delay by another 10 to 15 days. That's it. That is the only thing. With regards to the price and all, will remain same, and we are quite comfort and quite happy with the present scenario of the coffee prices, what levels it is there, and this will give a moral support to the soluble coffee industry to increase the sales volumes.
Right, sir. Thank you, sir. Thank you for joining us and giving us your time. It was great talking to you and getting an outlook on how the company can do going forward. Well, with that, it's a wrap on this edition of Top Trades. Stay tuned and keep watching NDTV Profit.
गोल्ड प्लस ऑप्टिमिस्टिक रिफ्लेक्टिव ग्लास लगाओ, धूप की गर्मी को दूर भगाओ और बिजली का बिल भी बचाओ।
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make in our categories that we have been supplying to our defense forces some of the best platforms in the world.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers. Hello and welcome. You're watching India Market Close. I'm Harsh Saita. With me is Neeraj Shah. Let's quickly look at how the Nifty is shaping up for the day. We're seeing around 0.5% lower on the Nifty, around 140 odd points lower. Let's look at it intraday as well. Get some perspective, 1% lower on the Nifty Bank. So this is no surprise, but we're at the day's low as we speak. Let's pull up the Nifty Bank intraday as well, and that'll give us perspective as to how the Bank Nifty is pulling down the Nifty, 1% lower on the Bank Nifty as well. So clear pressure coming in from the Nifty Bank onto the Nifty, and within the heat map of the Nifty, if we can quickly pull that one up, metals seem to be the one which is doing relatively okay. 3% higher on Tata Steel, 2.5% plus on JSW Steel as well. Ultratech having a good day as well on a day like this especially. But what's not doing well is the lenders. Look at those last 4 names over there, and then not so far behind are also some more financials, and HDFC Life and HDFC Bank or Jio Financial are some of those which are really pulling down the index. Reliance Industries also down 1% or so in trade. And let's pull up the contributors, and that will give us better perspective on what's happening. There you go. HDFC, Reliance contributing to around 77 negative points on the Nifty today. Couple that with an L&T and an ICICI Bank. This one's been a laggard this week. And you'll see why there is that drag. In terms of gainers, while there are a few, but just in terms of point contribution not coming from them, and which is why you're seeing pressure on the Nifty. Let's quickly look at sectors before I toss it across to Neeraj for broader markets. Metals 1% higher, I did mention that. Auto flat on a day like this, nothing much to complain about. Consumer durables resilient, 0.6% higher. But you're seeing PSU banks and the Bank Nifty under some bit of pressure. Realty is the other pocket which is under pressure. The Nifty India Defense Index is also down 1% in trade today. But Neeraj, the advanced decline, if we can pull that up while Neeraj comes in, that will also give us some perspective on how the day has gone. It's been a tough day.
It's been a tough day, all right, and when heavyweights are pulling the index lower,
yes,
it would show that way. But more importantly, this which has not been for a while now. We're starting to see this, or at least seeing this today. Let's see if this becomes a trend. And you know, Harsh ties in beautifully with the conversation that we had yesterday, that if there is going to be volatility ahead of the July 9th deadline, it might be better to take some chips off the table. That the quarterly updates haven't been that great hasn't helped either as well. So key takeaways from the market today. I mean, we broadly know this, right? I mean, auto sales data has looked mixed with largely a negative bias, but the Nifty auto is holding out. And IT is bucking the trend, if you will, but difficult to predict continuity. In today's session, for an Infi to be up the way it is, it's pretty strong. But let's get the top movers and gainers. So the continued uptrend being seen in these two names. Gabriel, 20% yet again, second day on a trot. NSCL, another 5% after a series of 5% up moves that we've seen there. LPG compensation is likely. It's not moved the stocks though, HPCL. And you know, we spoke about this in the morning. Somit said that because this has been spoken about so much, that it may not make a difference. And that's exactly what we're seeing. HPCL is down 1.5% today. The others are kind of likely flat in trade. Keystone Realty, of course, got a large redevelopment project, up about 3%. NMDC, a city note, downgrading the stock, target price of 60 because of the cut in iron ore prices, and that is down. And yesterday's listings, so Globe Civil, Ellen Barry and Kalpataru, all of them are not having a good move. In fact, today's listing should come up. HDB Financial, still, actually both of them are steady in the session today.
Well, yes, in fact, the new listings today have shown remarkable resilience after that opening pop as well. They've held up fairly well for themselves. But let's bring in Shivangi Sarda to get us better perspective on how things are. Shivangi, what do you make of the markets today? Some bit of pressure?
Yes, absolutely. Very good afternoon, Harsh and Neeraj. Thank you for having me. So we've seen that there has been some sort of profit booking from the last few trading sessions. And honestly, we've rallied a good amount last week. And, the other favorable factors were also intact. But we've seen some bit of profit booking, and which has dampened sentiments. Nifty put call ratio is also below 0.9, which is creating some sort of call writers, strengthening. So overall, we are looking at short-term or maybe, intraday bias, which is becoming weak. But the positional support levels are still intact. So positionally, we are still on the buy on decline strategy with positive rollovers and seasonality-wise July being good. But, of course, in the immediate basis, maybe for the expiry day POV as well, we are witnessing some bit of pressure. We're looking at 25,350 very closely. This will be a major make or break zone here for Nifty. If it, fails to hold above these levels, then we could see 25,000 marks. But overall, we are expecting these levels to remain sticky. And on the upside, we're looking at 25,750 as the next resistance for Nifty. Positionally, of course, again, reiterating it that buy and decline would continue over here. So talking about Bank Nifty, we've seen that, of course, there was outperformance in the previous week, today being a little slack on that front. But we've seen remarkable interest in the smaller banking names, which have caused the entire index to hold up quite well. Some of the heavyweights are still in some pressure, which is causing some bit of pain here. We're looking at 56,500 as the support here, with the upside towards 57,500 marks.
In particular, Shivangi, and we'll talk stock specific, but in particular, is there some bit of negativity building into the Bank Nifty and within specific names? And HDFC Bank, for example, slipping below the 2,000 mark, is that a big deal?
Now, Harsh, if we look at the RRG, that is relative, strength, if we compare the sectors, banking stocks are going into the weakening quadrant, which indicates that there would be some bit of a pause over here. Of course, we've seen the NBFCs and the banks in strength and rally from the last 7 odd weeks. So, of course, there is some bit of pause which is expected here. But overall, we're not, seeing a lot of underperformance here. Of course, 56,500, as I mentioned, is an important zone over here. It'll act as a make or break zone. However, positionally, rollovers have been quite positive, which indicates that, after this some time correction, the index will then again get ready to trade in the new lifetime high territory zone.
Okay, and Shivangi, your picks for this afternoon?
So on my radar, first up is Laurus Labs. We've seen that this entire space has witnessed good buying interest, and from the last 4 trading sessions, there has been remarkable volumes and price surge here in this one after it surpassed its previous hurdle of 680 odd levels. So the buying has been continuous, and we've seen that even on a month-on-month basis, we've come out of a consolidative band breakout and then good follow-up action here as well. So recommending a buy here on Laurus Labs with a target of around 750 and a stop loss of a target of around 790 and a stop loss of 750 levels. And the second pick on my radar is Tata Steel. We are seeing a lot of action in the metal pack. Tata Steel specifically has witnessed short covering move, and we've seen that from the last 2 weeks specifically, it has recouped all of its losses of the June month, and we've seen that it is trading above its crucial exponential moving averages as well. So recommending a buy here with a good momentum trade for a target of 172 and a stop loss of 162 zone.
Shivangi, I just want to quickly bring up Laurus one more time because those rates didn't come in correctly. Let's quickly pull that one up. Your call on Laurus is buy call 790 being the target, 750 being the stop. Am I right?
Absolutely.
Okay. So that's the call with regard
fairly
to
tight stop loss.
Yes.
Considering that the price is 756. Shivangi, you must be unusually confident about this.
Yes, Laurus Labs, we've seen that there has been a fair bit of a up move in the last 5 trading session. So we're maintaining a close stop loss over here. But of course, the kind of price stickiness at the higher zones is indicating that, this is getting ready for a good up move, even at these levels.
Got it. Shivangi, real estate as a bucket has sulked now for more days in the last 15 than probably any other sector. Is there a short idea in real estate?
Absolutely, Neeraj. Real estate pack has been, quite sulking. But of course, we've seen that these stocks have been quite lackluster in terms of the price movement. If we look at some of the names like Oberoi Realty, these has given up its gains of the weekly basis. But on a weekly basis, we've seen consolidation from the last 3 to 4 weeks. So even though intraday there is some bit of a pressure, but on the higher time frame chart, the structure hasn't weakened yet. So a little wait and watch here. The stocks are at the levels where they could rebound. So fresh selling is not advised here.
Shivangi, I know that one of the calls you made was Tata Steel, but are you constructive overall metals, and where would JSW qualify if I were to push that into a list and give us your levels with regard to a JSW? Okay, believe that we've lost Shivangi for just a minute, but maybe, but Neeraj, steel is something which is buzzing today. It's the top gainer on the Nifty 50, both Tata and JSW. Likely some bit of easing on raw material prices, keeping those stocks in focus. 3% higher on both of them. And we'll have a bull versus bear on this one as well. But it's interesting because from the lows, something like a Tata Steel, something like a JSW Steel has really rebounded.
Yeah, they have, and I wonder if some part of it is also got to do with the whole thought of rebuilding of select portions which have been under strife recently, as also maybe, just maybe, optimism around China spends if that comes about. So, I mean, all of that on the table, presumably.
Maybe we need to wait a bit and take Shivangi's view at the end of this segment. What we'll do is we'll quickly move ahead. We have Chintan Haria with us, Principal Investment Strategy at ICICI Prudential AMC, joining us. Welcome and good afternoon, sir. And the conversation will largely be banks. Talk to us first off about about the sector as a whole. We've seen cuts in terms of the repo, which means that you will see some amount of pressure in the near term with regard to both margins and ROA. You've suggested as part of your note or your thesis saying that banking is still a predominant part of the Nifty profitability. Would you see that that may not be the case, at least for the current fiscal, or do you see that as continuing to drive Nifty earnings?
Yeah, thanks, Harsh, and hi, Neeraj as well. Effectively, if we look at banking, we are not only looking at banking as its core, but also the entire gamut of financial services which encompasses with the banking and gets consolidated, right? So as we move from $3 trillion, $4 trillion to 5, 6, $7 trillion, that's one of the ways to basically participate in the India growth story. And while quarter to quarter the interest rates can keep fluctuating, and globally also we are uncertain about what will happen with interest rates, and in India it's more certain because we are blessed right now with a beautiful macro of lower crude oil prices and a very strong government revenue and balance sheet. So we don't have to worry about any significant macroeconomic event in India. Globally, what happens is not in our control, but that's where banking as a segment, which accounts for more than 30% of almost all broad market indices in India, is a play on growth. And as and when foreigners will come back in terms of the Indian markets, we believe that banking is the segment which is one of the most liquid and large plays on India. And with the consolidation that has happened in the banking sector over the last 5 to 7 years, and with the private sector banks now accounting for 40% of India's business, right? It used to be less than 10% when I started my career in 2007-8. So in 17, 18 years, we are talking of, from 10% to 40% and growing faster. So a larger piece of the share from the private sector banks, and they form a large part of the indices as well. So that's where we believe from an investor standpoint, banks in general and private sector banks definitely are something which should be part of their core portfolio.
But Chintan, this is an everlasting debate. PSUs have also turned a corner, public sector banks, and therefore, how do you view that pocket? Because that's a pocket which has now turned around completely. Is there any additional lever left or additional steam left for them to surprise on the upside, both in terms of earnings or growth?
So I think if you look at, you're right, as far as credit costs are concerned, the NPA cycle is concerned, we are at its nadir in that sense. The balance sheets are clean. Going forward, if they are able to the deposit mobilization in PSU banks is also reasonably strong. It can be stronger, but of course, with the way the equity markets are performing in general, we are seeing deposits, deposit accretion in the system being smaller because of real estate and equity markets doing well. Having said all of that, PSU banks are a very strong force in terms of their reach across India. So they will perform well, but we do believe that among the overall pack, private sector banks can possibly grow faster. PSU banks will also grow because of the consolidation that they've seen. So net, the levers are there for them also to do well, and I think they are also well efficient managed. And more importantly, again, going back, the subsidiaries of some of the large PSU banks are doing fantastically well in terms of insurance or AMC business. So if you consolidate all of that, there is value there as well, and arguably there will be immense value. So maybe the foreigners don't come and buy them immediately, but at least as far as we are concerned, we see value across the PSU banking chain as well.
Got it. Chintan, good talking to you. It's been a while, but good to see you. So the question would be, I believe you guys are launching a product as well with regards to the private banking space, right? I mean, is it only private banking focused? And if you are constructive on PSU banks as well, why is it only private banking focused?
So if you look at from a product perspective, the private bank ETF was launched way back in 2019, right? So we had the bank ETFs available, which had private and public together. Then we launched India's first private bank ETF in 2019, I guess. And this launch currently, which we are speaking from 1st July to 14th July, is the private bank index fund. So the platform is on the index fund side, which makes it easier for those who want to do SIPs as well as participate on the mutual fund side. So ETF is already there of the private bank, and we are basically extending that to the index fund now for those who want to participate on the index fund route. So That's where it is available. And if someone wants to participate in the banking per se, then anyways the bank ETFs are available and the bank index funds are also available. So this is just one add-on if you want to focus on the private sector banks, which arguably have grown fast over the last many years, not in terms of price movement of the stocks. Of course, I'm talking about the market share that they've gained over the last 10 to 15 years. Then basically the private bank index fund becomes a good add-on to the overall portfolio of investors.
Okay. And I'm presuming that you reckon that this cycle will last for a bit. The only question to my mind that comes is that with all the rate cuts that have happened, there is a belief that in that BFSI space, the non-banks could actually have a swifter run in the near term, let's say in the next 12 months, maybe next 18 months. I know you building out a product for a longer time, but could it well happen that banks underperform NBFCs over the course of the next 12 to 18 months?
Tough to predict, but if we look at not just NBFCs, but the entire capital market players, insurance companies, etc., if you look at the last 3-4 years, they've already done very well, especially the capital market players, right? Wealth management, AMC businesses, etc. And if we compare essentially that as a segment also, within that, a few years back, we did launch the ICICI Prudential X Bank Nifty Financial Services Index. So if someone wants to play that, there is a product for that also available. But it is tough to predict which way in the next 12 to 18 months, whether it will be NBFCs which will do well or banking. Surely from a risk return perspective and stability perspective, we've seen banks provide a more stable long-term growth environment. And in lower interest rate environments, maybe NBFCs will also have a place since their cost of funding comes down. But overall, I think the entire gamut of financial services in India is going to grow. And as you mentioned, it is meant for the long run. So when indices are at their highs and anyways, it is difficult to find value in the markets that easily, this becomes a good fitment from a long-term patient investing perspective. These are not products meant for 6 months, 12 months anyways, as you rightly mentioned.
And Chintan, how should one look at growth at this point? Private banks have always grown at a far faster clip, and I would say far faster clip to the industry than has been the case in FY25. FY25 has been a slightly muted year, even for private banking growth. Is that a concern for you? Does that reverse in FY26? And does system growth as well pick up in FY26? How do you view that?
So I think it's a question of where in the cycle we are. The capex itself in the system, the private sector capex itself has not picked up too much. It's essentially the public sector, the government capex, which is driving large part of the growth. And there are unutilized capacities within the private sector which are still remaining. And we've seen obviously a slowdown in consumer facing segment also. So all of this put together, there is probably a speed bump in terms of the growth. But as we move along FY26, FY27, as probably the budget cuts in terms of taxation puts more money in the system, the rains have been reasonably good. We are hoping for a bounce back because last year being an election year, the June quarter was muted. So YOY, if the June quarter results look better, hopefully there's a bounce back there. But more importantly, from a 2, 3, 4 year perspective, we do believe that the entire segment is going to benefit from the growth. But is it going to be like the thing is if inflation comes back significantly, dollar depreciation is one thing which we are seeing. One of the worst years, so first half years for dollar, almost 11% depreciation. If it depreciates a lot more, and we are seeing inflation in the system and in inflationary environment, there is a chance that the growth in loan growth, deposit growth also looks better because prices will go up. So it may not be good from a macro perspective, but from a banking growth perspective, we will probably see well. So inflation is something which we probably all can expect to go up if US goes the way of dollar depreciation to manage their debt. And if that happens, then equity markets also benefit. And of course, in turn, the growth as far as the banking sector is concerned.
Okay. Chintan, last question with regard to how you stack up your preferences. NBFCs are obviously seem to be somewhere lower down, banks somewhere in the middle. So between banks, would it be PSUs first, private banks first? How does that stack up? And where do insurers and AMCs stack up at this point? Risk, reward, growth, all of that included. Just give us a broad sense.
So I think if you look at the overall valuation piece, clearly the banking the pure banking is reasonably valued, and there, because they've seen a slowdown in terms of the past growth in deposits and loan growth, that segment improving, and when foreigners come back, they're probably going to buy these first. So that stacks up higher. As far as insurance is concerned, that is also an evergreen theme in India, and that probably is secondary. They've also gone through a consolidation phase. The other aspects of capital market plays, because the markets have been so buoyant, probably the valuations are not so cheap across many of the capital market plays. But if you look at the long-term runway growth, 5 years, 10 years, then probably those valuations are also justified. So as long as there is no major accident globally, and we don't see a financial crisis globally, I think that in India, the growth being justified, and hence the valuations are what they are. But it's about picking the right segments within overall, and I think the best ways to play it is through the banks itself.
Okay, Chintan, we'll let you go on that note. Thank you for coming in, speaking with us. It was great getting that perspective with regard to the whole financial sector. All right, and we'll quickly move ahead as well. Stock of the day, Paras Defense. Stock is up over 3% in trade, and I would want to attribute that to the conversation we had today morning with Paras Defense's management. So bullish, Neeraj, with regard to the way he was defining the product and defining the addressable market for the product. Those couple of factors really stood out for me. But before we have that conversation, let me go across. We have Anushi standing by to give us what's keeping Paras in focus and what stood out in terms of commentary. Anushi.
Thanks for that, Harsh. So a couple of trigger points that we've seen for Paras Defense. Firstly, the rally in the defense sector that we've seen in the last 3 months or so. The stock is up over 70% in this last 3 months period itself. But today's focal point remains on the 22 crore of an order win that the company came out. It in fact has bagged a 2 crore of an order from France-based Cerber, and this is for an anti-drone solution system that we are looking at. So it's entering into that field as we are speaking about. So the deal is to supply 30 Chimera 200 system. What exactly is this Chimera 200 systems? Let's understand that. Now, this is a counter UAS system, that's unmanned aerial system that we are looking at, which is designed to neutralize hostile drones as we speak. So the focus would be to protect in the areas in the European region that we are looking at. Company aims to unlock new export opportunities forward with this kind of an order that we are looking at going forward. But what are the key takeaways post the NDTV Profit interview which took place? Firstly, the domestic market will continue to remain potent, extremely potent, as far as where the focus will be divided between the export side and the domestic side. As far as where the or rather the product consideration is considered, they believe that this is 100 crore of an opportunity for this product. This is even on the conservative side that we are looking at this figure. In fact, the volumes are expected to cross even more than 1,000. So that is something that we should be keeping in mind. It is an interesting development that we are seeing as far as where this product could lead to the incremental revenue growth for the company. In terms of how the order book has so far fared for the company, it's a 835 crore of a figure that we had last seen in the presentation in Feb 25, where the management had emphasized that the current order book has exceeded 900 crore mark. This is a growth from 600 to 300 crore that we are looking at earlier. If you look at the current order book positioning, as spoken about earlier, it has exceeded the 900 crore mark that we are seeing. In terms of where the management guidance is concerned and where the financial performance is, it had clocked in a strong FY25. Revenue was up over 44%, while if you look at the margin side of the picture, that was also at 26% as compared to 21% in this financial year. Net profit seeing more than a double growth as well in FY25. Now, in terms of where the high value opportunity for the business is concerned, firstly, laser system, 3,000 crore of an opportunity, optical telescope along similar kind of a size that we are looking at, along with that existing business and optical system will lead to about 2,000 crore and 6,000 crore of a market opportunity that we are seeing. This is over the next 5 years of a timeline that we are looking at. Management has guided that they want to become global leaders in the optics, optronic systems over the next 3 years. They are seeing a revenue growth of 40% as well going forward, and this is along with a better profitability that they're expecting this to continue. However, what could be the only consideration now for companies like Paras Defense is the valuation pictures because of the kind of run-up that we've seen in the last 3 months or even the 6-month period. It's the valuations, more than a 60-70 times of a multiple that we are looking at. So will the stock continue to remain in favor is something that we should be watching out, but the order inflow projects and the outlook continues to remain on the stronger side.
Well, Anushi, thanks so much for putting all of that into perspective. On a weekday, it's held out. In fact, Harsha and Anushi spoke about the management commentary. Here on what Amit Mahajan, who is the director, spoke about this when he was asked about the significance of this order. Listen in.
The significance of this order is not in the value. It's in the mindset of a global consumer, which he started looking at India not just as a manufacturing hub, but today is looking at India as a development hub. Now, today, the technologies that can be developed are no more the responsibility of the West, and they have started believing that an Indian company can develop a system and a European company can consume it. They have been magnanimous enough to understand this and then put their layer of software or algorithms and then deploy this particular system for their customers. So this is a paradigm shift that I would like to see. It definitely opens the floodgates, but it's a change in mindset which is going to be permanent from here on. It was already beyond 900 as we closed in the financial year. And considering we have executed a large part of it now, we maintain that particular order book even after execution of Q1.
Okay, so that was, of course, Paras Defense. And Neeraj, you had that conversation. Now, before we delve further into this, we'll obviously take views on Paras Defense. Let's slip into a short break. On the other side, we'll have heard on the street, and we'll talk more about Paras Defense and defense in general as well. And we'll take maybe Neeraj's few takeaways, key ones that he took out of that conversation with Paras Defense. Stay tuned.
तू ही तो है जिसकी सच्चाई वाली क्लैरिटी की वजह से मैं आज यहाँ हूँ।
गोल्ड प्लस सिल्वॉक्सी मिरर्स, ऐसी क्लैरिटी कि आपको सिर्फ सच नजर आए, चाहे कितने भी साल बीत जाएं।
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make, in our categories that we have been supplying to our defense forces, some of the best platforms in the world.
तू ही तो है जिसकी सच्चाई वाली क्लैरिटी की वजह से मैं आज यहाँ हूँ।
गोल्ड प्लस सिल्वॉक्सी मिरर्स, ऐसी क्लैरिटी कि आपको सिर्फ सच नजर आए, चाहे कितने भी साल बीत जाएं।
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims?
Back with India Market Close right here on NDTV Profit. Now, at that time of the show, when we get you all the dealing room chatter, what is it that is worth knowing? From the dealing rooms, Somit Sarkar joins in with that intelligence. Somit, what are you picking up today?
Well, multiple stocks that remain in focus. Firstly, it's Marico. Now, if you look at the share price chart of Marico, it has seen some wild moves. At one point of time, it was down 2%, then it became flat, and now again it's down 1.5% in trade. Now, what dealers are indicating here is that there are sell flows on FI at desk on anticipation that the Q1 FY26 update could be on the weaker side. So keep an eye out for Marico. Then there is Vedanta and Nalco. Now, dealers indicate that there is a pair trade that large HNIs have taken. They are buying Vedanta and they are selling Nalco. Now, specifically for Vedanta, dealers indicate that NCLT hearing and the outcome related to demerger could be announced anytime soon, and hence this kind of buy flows that we are seeing for Vedanta. When it comes to Dixon Tech, dealers are indicating that despite that big downgrade that came in from Morgan Stanley yesterday, we are continuously seeing strong buy flows that are coming in for Dixon Tech. Now, a couple of reasons that they have highlighted. Firstly, they are saying that the Q1 numbers are expected to be very strong from Dixon. The growth could be northwards of 30-odd%. And secondly, they are saying that the company might announce a joint venture with a global company. So these both reasons are mainly the factors why the stock, these both factors are mainly the reason why the stock has been gaining in trade. When it comes to Godrej Properties, dealers indicate that there are sell flows on HNI desk on anticipation of a negative brokerage report that could come in. When it comes to M&M Finance, the stock has been down in trade, and dealers are saying that the Q1 update could be on the weaker side. And when it comes to Industars, dealers indicate that there are buy flows on FI desk in trade. The key trigger here for Industar could be a big dividend that the company could announce or a buyback. Now, any of these announcements is due anytime soon from Industars, to keep an eye out for Industars as well. And Sagility is another stock that we should keep an eye out for. The stock is up around 7% in trade. There's a buzz on the street that an initiating note, a positive initiating note might come out anytime soon on Sagility India.
Wow, 6.5% and counting. Thanks a lot for that, Somit. And interesting to know about some of the expectations on the results. So that's
Not results, these are updates.
Updates, yeah. But what I mean
Yeah.
is in the results season. So I'm guessing this is gonna keep Somit very, very busy, because after some point of time, the quantum of results that come out in India, they inundate you literally. But on a slightly wobbly day, let's get in Kush Bora, founder of kushbora.com, on the charts, and on the fundamentals, Vineet Bulinjkar of Ventura Securities. Absolute pleasure to have both of you on the show. Thank you so much, gentlemen, for joining in. Kush, not bad. I mean, you probably want some corrective moves as well to come in sometimes, so which is welcome and healthy maybe. But can this go deep?
Hi, Neeraj. First, a very good afternoon to you and to all the viewers. Hi, Vineet. As you very rightly pointed out, Neeraj, very rightly pointed out, you do need some sort of profit booking, some sort of pullback for, fresh entries. And this is what the opportunity, is. This is the opportunity that the market is providing. Now, let me also admit something, that this move is slightly divergent to what the data was suggesting. The reason I say that is because yesterday itself, the PCR was a little under 0.7, at least on the, on the trackers that, we, that we track the data on, because I heard, some others, say that, the PCR was close to 0.9. But at least anyway, the data that we track, PCR was already just a little under 0.7. Even now it remains at 0.71. So already oversold, on the PCR. Wix super low. Had this move come with a 4 or 5% spike on Wix, maybe more, and Wix crossing 13.5, 14, I would have perhaps taken that. But as I said, slightly contrary to what the data is suggesting. But yes, we would consider this more of a pullback move. And when we say a buy on dips, these are the kind of dips that we talk about there, that the market is providing to enter. Now 25,400, 25,500, this is the support zone that we have been talking about. Markets did slip below this for a brief while, but right now they are, they're within that band. So we should perhaps consider a more positional, support zone, positionally strong support zone of 25,250. I still reckon that this is a market where you want to go long. The only data perhaps that is suggesting that, this move was on the cards or is now perhaps market reacting to is the call base shifting lower. You had that at 26,000. Yesterday it was at 25,600, and today the call base has shifted firmly to 25,500. So while from an expiry perspective, which is today for the weekly options on the Nifty, the upside may be a little capped. I think positionally this is a good entry point and a good risk reward ratio for targets of 24,700 and 25,700 and 25,900. So yes, this dip does look like an opportunity to buy, especially considering that you're already oversold on some of the parameters.
Okay, hi Kush, good afternoon to you as well. In terms of picks this afternoon, are you seeing those opportunities here, and what would be on top of your shopping list?
Hi, Tamanna. Given the optimism that I have on the market, no sell calls. I mean, I don't see these as selling opportunities, not just yet. So hence, both the calls on the buy side. One of them is sale. Metals have been doing well, and this one stands out along with a couple of other names that we've discussed in the past. So sale for a target of 137, 140 with the stop loss around the 130 mark can be considered long. It's had a good move in the last half an hour or so, and hence you might see it closer to the first target, so you might want to bump up that stop loss to 133. The other one is CESC. We are seeing a breakout here, a rounding bottom formation breakout. The stocks sustaining above the 175 mark is a healthy sign today. Also, in a profit booking kind of a mode market, the stock is gaining grounds. So yes, relative strength apparent. 180 to 188 are your targets. 170 is where you place that stop loss. So yes, still constructive on the markets and the stock.
Okay, so constructive at this point. Vineet, good afternoon. What are you constructive of on this point, looking at the kind of hit that we're especially seeing in Nifty Finance, Nifty Bank? Is there anything there that you're looking at as an opportunity to build positions?
So, you know what, I would want to wait on the markets because, I was expecting a rally into the 5th or 9th of this month, given that Trump's tantrums could be thrown open. But the fact that the market is reacting ahead of that has me a little bit circumspect. And I would like to wait on what the outcome is maybe on the 5th or 9th of this month. So not really recommending anything at this moment.
Okay, so why wait? Let me come back to you on that. I found that interesting. Wait till the 5th of the 9th. Now, one of two things can happen ahead of the 5th or the 9th. I assume you are talking about the ongoing bilateral talks between India and the United States for the trade deal, right, Vineet?
Yes.
So, from what we're hearing right now, it's a very tough negotiation, a bit of a stalemate going on. And either way, it's not going to be something that, either side can come and say that, oh, we had a great deal. Do you see a possibility of a huge negative, a huge drawdown as well?
So, what it is that, so what is happening is that the international community is asking India to liberate a little bit too much. They are more dictatorial in their approach, and India is absolutely denying them on grounds where they are not ready to let go. Example is agriculture and your dairy. So there's a little bit of tiff going on, and I'm a little circumspect that we might not get a deal at the end of this period, and then the markets could possibly succumb to some kind of his tantrums that come in, and you never know what he will say if the deal does not go in his favor. And we have seen how vocal he is and how it has impacted sentiment. Also keep in mind that there is such a large flow of paper that is coming in, IPOs, that it would pressure the secondary markets. So just waiting on this, want this thing to get out of the way before we can say something more on the markets.
Okay. The other thing, Vineet, is the kind of, maybe it's too early to judge because it's only 2 days, but the pre-quarter updates that have come in thus far, or the auto sales numbers that have come in for maybe June at least, if not the whole quarter, aren't exactly very promising. Could it be a wobbly quarter? And which sector to your mind could actually deliver the weakest set of earnings?
So, since you pointed out to the autos, I believe that the autos with the results might spring in a bottom. And because everything is forward looking, all our tax cuts, interest rates cuts are going to act in the future. So I would want to buy the dip if there is any on the eve of the earnings. And here, the stocks that look good to me are the EV space stocks, especially TVS, Ather, and Bajaj. I'm still a little circumspect on Hero because I'm waiting for, some kind of good noises to come around the numbers and acceptance of their models. But the other three I am very bullish on and positive, and I think they will do well going out after the results.
Okay, Hero may be in news also because of that Vida VX2 launch. Kush, just very quickly, Hero on charts relatively to all of the other auto companies today is doing well, and more because of the launch than the numbers, really.
No, Taman, I don't share that enthusiasm on the charts. It's been facing pressure at the 4400 mark, the 200-day moving average also acting up. Relatively speaking, TVS and Eicher Motor stand out, even though today they might be underperforming. But on the whole, if you see, these two have done significantly better. So if you catch a break above the 4400 mark for Hero Moto, then perhaps. But up until then, I think this will continue to consolidate.
Okay, Dreamfox is the next stock in focus. Well, it's actually been in focus for a number of days now, but right now it's under pressure. It's announced because it announced closure of certain programs for Axis and ICICI Bank cards. Now, let's first get in Mahima with the details, and then we want to dwell on this a bit more because we just recently spoke to the management as well. But Mahima, to you first.
Rightly mentioned, yesterday in their filing they did mention that they have announced closure of certain programs from Axis Bank as well as ICICI Bank from 1st of July. The company has also said that the impact of closure of programs is likely to be material as well, but they've also come out and said that they're committed to to take actions that will mitigate the overall impact. As you rightly mentioned, last week when we spoke to the management, they'd come out and said that there are no notices that they were receiving from clients for ending any kind of partnership. Of course, it's not an end of partnership, but of course closure of certain programs per se. Now, why banks are choosing to end partnerships or closure of certain programs? The company did witness a temporary disruption of service in September 2024, post which there was sudden closure in at least 49 lounges across 34 airports in India. And if we see the revenue breakup of the company, 93% of their overall revenue comes from lounging services and 7% of revenue comes from non-lounge services. Now, recently banks are also going through structural changes in terms of where these credit cards stands. Banks are replacing blanket usage spends versus that of spend-based model. So that means after a certain amount of spending on your credit card, you'll be able to access lounges. Secondly, they're also entering into direct partnership with lounges rather than using a middleman like Dreamfox. And thirdly, of course, credit card penetration in India is as low as almost 5 to 6%, which has always been a problem. So considering all of this, this could have an overall impact on Dreamfox going forward. So the question really is that if banks are trying to end their partnership or closing certain programs with them, will their going concern be under threat? And of course, if they're also planning to overall expand the non-lounge services, which is right now just 7% of their total revenue, how likely it is that they'll be able to scale at a larger scale. So these are the pressing concerns right now for Dreamfox for sure.
Thank you for that, Mahima. I mean, we all had that conversation. That's why I'm bringing it up here with Harsh and Neeraj, where we spoke to the Dreamfox management. And that's all right. These things happen in business. Just what I found a little surprising, and I don't know what you guys think, that when we asked the management very clearly, is this happening? They said no. Can this happen? They said no. Will there be an impact? They said no. And now it's happened. So,
I mean, I remember that conversation, Tamanna, wherein you're right. I mean, I don't have anything more to add, but for the fact that she said that there is not going to be anything on the anvil which could have a material impact. And well.
Yeah, and the disclosure today suggests otherwise. So yes, so clearly that story seems to have played out.
But which probably means that maybe, just maybe, this is not a done deal as yet. Maybe the stock could remain under pressure because now the street will start factoring in what if there are other cancellations.
How much more? The stock's down nearly 20% from the top.
Vineet, you have a view on...
A stock can be down 99% and still half further from there. I'm not saying Dreamfox will do that.
No, Vineet, any view on Dreamfox? I mean, simply, the thing is that cancellations like this can't happen in such a short span of time. Even if you were to believe that, okay, at that time there was nothing and then it's just something is not sitting well. But just your view on Dreamfox?
I think it's overvalued and their offering is limited. And there is a new IPO which is hitting the street. a QR IPO which has got a lot of non-lounge revenues. So people would be switching into that, exiting from this.
Conversation actually with that IPO team as well. All right, the other big story that we're tracking today on NDTV Profit, State Bank of India has decided to classify the loan account of Reliance Communications Limited as fraud, quote-unquote fraud, a move that dates back to transactions from August 2016. Vishwanath Nair joining with more details.
Right. So what's happening with Reliance Communications essentially is that there was a loan agreement that was cleared by the banks, which were led by State Bank of India. This was a few years ago. And then since 2016, because the company has been under insolvency since then, a lot of scrutiny has followed. And now State Bank of India has gone ahead and classified the account as fraud. What has SBI done in the interim? Well, so over the last few years, State Bank of India conducted multiple checks on the company. They gave them an opportunity to speak back, come back with responses on the allegations that the banks are raising against Reliance Communications. And what the final outcome of this entire thing was, that actually the company did not even give any clear responses. And because of that, now a committee within State Bank of India has decided that this account is apt to be called fraud. Going ahead, what is likely to follow now is that there's going to be a notice sent to the RBI about this specific account, and then within 30 days, a bank is supposed to report this case to the Central Bureau of Investigation, and on the basis of that, there will be an investigation that follows. Remember that the loan amount involved here is 31,580 crore approximately, and that's across multiple entities, which are Reliance Communications as well as its subsidiaries and associate companies. And it's on the basis of the loans extended there and the multiple sort of violations that the company has done in these loans, because of which State Bank of India is taking these actions. Specifically, what are the violations? They've taken money from the banks for a specific reason, let's say to grow the company or to invest in a certain business, and then instead channel it through other entities within the group, and then use that money for reasons other than what they were described originally in the loan document. And therefore, State Bank of India is calling this account a fraud.
And there's a specific name of the account as well as the proprietors, isn't it?
Yes, because Anil Ambani was the director at the time when these events happened. So his name is specifically mentioned in this letter that State Bank of India is going to send to the RBI. There's a reason for that, because once you're classified as a fraud, you're not allowed to access public markets or debt markets for 5 years. And that is why the name of the proprietor becomes that much more important, and this action against Anil Ambani is going to be significant. What the CBI investigation will likely look into is the role that Anil Ambani played in these decisions that the company took. How much was he in the know? How much was he involved? All of that will come through during these investigations.
Okay. So that is one big story we're tracking. What else is happening in the markets right now? Let's talk about that. ITC, I just want to pull the ITC stock up for a second, and then we'll get to that exclusive story that Shrimmi is talking about. Look at that sharp dip. In part, reason could be because there are new sets of taxes to come on certain items, including cigarettes, which will be in that sin goods classification. So important story coming in from Shrimmi on NDTV Profit. There could be a higher cost to smoking cigarettes, drinking a cola, or driving a high-end luxury cars. We are learning that luxury and sin goods may attract an additional health and green cess. Shrimmi, is this going to be over and above what these items are taxed at right now?
Yes, indeed. What we are picking up at this point that the government is considering a proposal to introduce new health and green cess on luxury and sin goods, and a move that could lead to higher effective GST rates on select items such as you rightly mentioned, cigarettes, carbonated drinks, and high-end automobiles. So currently, Tamanna, these products fall under 28% GST slab and are subject to compensation cess. So as per the proposal, which is still under the deliberation phase, the compensation levy on these select items could be subsumed into the new health and green cess. So effectively increasing the overall GST rates on these select items. So the context here is clearly that the potential restructuring of this entire compensation cess regime is set to expire on the March 31st, 2026. And to replace that, we could see the health and green cess, maybe over and above the GST rate, which is 28%, or could be subsumed in the existing slab. Now, the discussion, what we are understanding from sources, is underway within the government. With both states and the central government is working on it, and in fact, this will be taken up as one of the key agenda of the upcoming GST Council meeting. Remember, the group of ministers being formed, led by MOS Finance Pankaj Chaudhary, who is exploring various options for the future of this compensation cess. And if you remember, 2.69 lakh crore raised to compensate the state for GST revenue loss will be fully repaid by January 2026. So the 40,000 crore which is remaining, from these compensation cess may be distributed to states as well, and that, that formula is also expected in the upcoming GST Council meeting, Tamanna.
Shimi, just while you are with us, one more piece of information seems to be that the GST Council will take up rate rationalization matter in the upcoming meeting as well and may remove the 12% slab. Are you picking up something here?
Yeah, so this has been in discussion, Neeraj, for some time. In fact, the last council meeting already constituted a GOM to look into the matter. And in fact, the GST 2.0, which we have been talking about, is, moving towards three-tier structure. So sources was telling us at this point that this GOM is pushing for overall of the current four-slab GST structure, which is 5%, 12%, 18% and 28%. So the discussion are ongoing to reduce the number of slabs now to 3, with the possibility of abolishing this 12% slab. But if implemented here, this change could see several goods, including certain food items, to go into 5% slab, while other could be shifted to 18% bracket. So the overall the purpose of this whole restructuring to simplify the GST system, of course, and reduce the compliance cost. But we will definitely see that GST tax structure is moving towards three-tier structure.
Okay. Well, the stories move the stock. Shimi, thank you so much for that. Thank you for bringing us that update, and something that everybody watching with quite a keen eye, one would presume. Vineet, it's for long believed to be inelastic demand. I'm just trying to understand if indeed GST rates were to inch up higher. If not, would it have a demand impact on, say, a product like cigarettes, part one? And if not a demand impact, can it have a sentimental impact on maybe a business like ITC or a stock like ITC?
I think ITC is already taxed at the premium slab, so I'm not looking at too much of impact coming out there. So cigarettes are already at the higher tax slab, and some could move from 12 to 18. But ITC's products are primarily catered towards the upper end of the segment. It will get absorbed. It would be a one-time impact, and then things move on as normal.
Well, but the question was only, so the thought was only if this one would move up higher. Yes, they are at the highest rate, maybe cigarettes right now, but what if there could be some more, and which is, but Vineet is saying that he doesn't believe there could be a dramatic impact. Could there be a trade impact, Kush, on ITC? How do the charts look here? Because it's right now trading at the lowest point of the day. It was down, but it sunk further after this story has come.
There's no trade on ITC. The reason being that 410 has a very strong put base also technically. This 405, 4010 is a bit of a support zone and has been acting up for some time. I would wait and watch. If it were to break this 410 mark convincingly close below it, then perhaps for levels of 400, you could consider a short trade. But for now, it seems to be holding ground. The volumes aren't really as big on the way down. So yeah, the nutshell, no trade on ITC just.
No trade on ITC yet. What about an RBL, Kush? After flying high, and we reported this morning a statement coming in that there is no truth to a story in a newspaper today that Emirates NDB is going to be looking at RBL. Quite a bit of a hit is what it's taken. Is it at levels where you would feel comfortable buying? Kush, that question for you. RBL?
Am I audible, guys?
I don't think you can hear. Kush, can you hear me? Okay. Okay, something's happened with Kush's line. We'll get that back. But let me get that question to you, Vineet, on RBL. Flying high and then now taking a break.
I think their NPAs are just too much to absorb. The market will not re-rate it. In fact, I won't be surprised if it goes to 180 levels now.
Okay. All right. So that's on RBL. Now, in terms of the other piece that we spoke about was the defense counters and Paras Defense in particular. And both of you, Neeraj and Tamanna, both of you had a conversation with.
Actually, he did. He did.
Okay.
Yeah.
So you did. What was your key takeaway? Because when I was listening in, he just sounded extremely bullish, right?
I mean, so just laying it down very, very quickly, he said, one, that the product is, they are the lone star when it comes to this technology right now in the world. Two, it has the potential to open up newer clients because it can do anti-drone monitoring and whatever, negating the impact for various kinds of drones and various diameters of drone, something like that. And three, has the potential to enhance the share of wallet share from the existing clients as well. And when asked specifically about whether could something like this get him business worth in 100 crores, he said, no, that will be too small a number. So presuming that it can go to northwards of 100 crores into 4 figures, presuming that is the case, and I don't know whether that's an annual number or otherwise, for a company which is earning a revenue of 350, 400 crores, it certainly seems to be a large enough thing, and which is why I think the stock did what it did today.
Okay.
Vineet, do you have a view on this one? Sorry.
Yeah.
Vineet, do you have a view on this one?
It just doubled in the last 4 months. It's a little too uncomforting for me.
Kush
likes that. Vineet doesn't like stocks which have doubled in 4 months. Kush loves them because they give a good trading opportunity, isn't it, Kush?
No, I like it when I have been recommended 3 months ago.
You don't like it when you miss the bus. Okay, fair enough.
But Kush, your idea on Paras Defense.
So honestly, this is Vineet's subtle way of saying I told you so, or rather not so subtle.
Yeah. You can argue that. Never hurts, Kush. It never hurts. Jo dikhta hai wo bikhta hai. But yeah, tell us.
Yeah.
Recommended 4 months back. Congrats to you.
Wow.
Okay, this is too much conversation. Kush, come on. Let's try and get your trading idea on Paras Defense.
1750, 1830 are the next targets. Continue to hold good accumulation. Very strong support zone near the 1590, 1600 mark. That should act as a stop loss. So all in all, very constructive. I believe Tamanna had a question on RBL before my audio just conked off. So if it's all right, should I make a comment on that?
RBL, because RBL was the hot stock, right? And today, after that clarification has come in, it's taken quite a turn. Is it a buy right now for you?
Structurally, it's not broken any support zones per se. Positionally, also if you see the 270 mark, in the start of or rather the mid of 2024, the stock actually resisted at 270 for about 4 months, 3.5, 4 months, and hence the supply pressure. Even now, if you see the high for RBL was close to the 270 mark. So structurally, nothing has changed much for me. If I had a position, I would continue to hold. I wouldn't buy it just because the move is big today and we're at the low point of the day. I just want to see if this spillover comes in for tomorrow as well. If it does hold down, hold up around these levels, then you can again re-enter for targets of 270 with about 230, 235, that being your stop loss.
So that's the take on RBL as well. We're trying to cover as many bases as possible. Let's quickly take a look at the top 3 stocks on our radar at this hour. Jasmeet here with 3 of those. Jasmeet.
Well, right. First on my list is Keystone. 8 housing societies in Mumbai selects the company for large-scale cluster development project. This project is based out of Andheri, and the GDV for this project stands at 3,000 odd crores. While the recent updates for the company gets an LOA for redevelopment project in collaboration with MADA, while for the redevelopment of GTB Nagar in Sign, and the total GDV for this project stands at 4,500 odd crore. While the next stock is RITES. The stock is up 5% in trade today, while the company received a purchase order from African rail company, while the order is to supply 2 fully overhauled locomotive trucks, and the size of the order is 3.6 million USD. Talking about the other orders that company also received on the same day, while the company's JV, that's Rites and Aryan, received an LOA from South Western Railway. The order is for Tumkura station redevelopment, and the size of the order is 37 odd crore. While the last one on my list to watch out is Sai Silk. The stock is up 11% in trade today after the company comes out with a business update for the quarter of June. The company received a turnover of 379 crore, which is roughly a 42% hike. And the company currently has 69 stores under the name of Kanchipuram Vayalakshmi Silks, and the company adds one additional store in this quarter. Currently, company has 4 new stores under construction, and let's see how the quarter 1 turns out for all these companies.
10% higher for Sai Silks as well. So, well, thanks a lot for that. So, 3 very interesting buzzers. Kush, any opinion on any of these?
So from the realty pack, I think Keystone is seeing some selling pressure off the high point of the day as well. So I'd give it a miss, or at best a hold. Call with a stop loss near the 630 zone. I think in this space, Marathon is a stock that we've discussed time and again, continues to impress on the volume front. So if you don't have it yet, you might want to consider an entry in Marathon. 675, 700, looks like the stock could easily head to those levels in the coming days. 640 is where you place that stop loss. Sai Silk, very strong up move, still slightly off the overheated territory. So maybe if you want to consider a small trade with a stop loss near the 164 mark, for targets of 174 and 178, you could still consider this momentum and very strong one at that.
Okay. Kala Mandir, Sai Silks basically, I'm just wondering, I mean the business updates were good and if we have them we can pull them up as well, but I'm just wondering what has prompted that kind of sari sales, silk sari sales in this season. It's not wedding season, it's not festive season, and what really is happening there would be interesting to hear from the company and understand what's happening there. I don't know, is this a stock you track at all, Vineet?
Yeah, so we do track it, and there has been a subtle shift towards sari culture among the Gen Z also. And there were recently articles around that a couple of days back. So I guess, there is someone is doing some bottom fishing on the stock after that article is out.
It's very interesting you say that, and that perspective coming from Vineet Bolinjkar, Gen Z is wearing saris. If you're watching this, you're Gen Z, or want to be Gen Z, and if you know someone who's wearing saris, please write to us in comments. We want to hear from you. And just on that note, a quick plug on this company that I'm speaking to on Disruptors this week is this sister duo who run a company called Suta Saris. They started from 6 lakh rupees, 75 crore turnover in 9 years, completely bootstrapped, have been denying investors left, right and center. Their innovation is that they've made saris which you are ready to wear. So even if you don't know how to tie a sari, it's fine. And they put pockets in their saris.
Very important.
Very important. I clearly have an audience who doesn't care for this, but
no, of course not.
I was impressed.
I'm impressed with the fact that somebody's thought of the innovation finally. Saris need pockets.
And wearing.
Yeah, Mahima.
I mean, you are wearing.
No, in the sense.
I didn't hear that.
For a lot of them, for a lot of us, we wouldn't know how to wear a sari.
Okay, I think we're going to stop this conversation with both of them who have nothing to add. Mahima's in the studio. I'm going to go to her in a bit and get her take on it. But meanwhile, the other story that we have today, Apollo Hospital has planned a separate listing of its omni-channel pharmacy and digital health business within 18 to 21 months. The demerger is expected to unlock value and drive growth. Earlier today, I spoke with Sunita Reddy, MD Apollo Hospitals, about what is happening with the company, and it was a detailed conversation, but this is something that stood out for me because in our interview to NDTV Profit, Sunita Reddy clarified what the leadership will look like and also what the roles of the family will be. It's an interesting family, Apollo Hospitals, because it has 4 sisters who are running the show, and what their roles now will be after this demerger is something that she talked about. Listen in. If you can give us a sense, ma'am, of what the leadership now looks like for both. What is this new entity going to be called? I'm sorry, I'm bundling up 2 or 3 questions, but around the same space. What is the leadership going to look like? When will it be listed, and what are we calling it?
So the new entity is going to be called Apollo Health Technology.
Okay.
And what does leadership look like? Clearly, Shobna Kamaneni will be the executive chairperson. Shobna is my sister and has really grown the pharmacy business and has started the digital. So she will continue. She will continue to lead this. We have an excellent team of professionals who are part of this, and Sangeeta Reddy, who is part of Apollo Hospitals, will continue. Will also be on the board of the new company. And in addition to that, we have 4 independent directors and of course, we have already got Advent as an investor who will now own 12.1% of the entity.
Okay, so
with regard to hospitals, I'm sure you're already familiar with the team.
Yes.
We have a very professional team, and we continue to have Preeta Reddy as vice chairman. I'm there as managing director, and Sangeeta also playing a role as joint managing director.
So I thought that was interesting. You can watch that whole conversation, of course, on all our socials. And she talks about the plan for the hospital business, for Apollo Health Tech, which will be the name of the new entity as well. Vineet, I wonder if you've seen this, this entire development. We saw the stock spike up on the back of the demerger, obviously, and the announcement, because the consolidated picture was not as healthy as just the hospital's business. But do you think that this is a great play if you are looking at hospital healthcare, either of the two entities? Of course, opportunity for the second one in about 18 months.
So very optimistic on both the ventures. Number one, Apollo Group trails at a discount to rest of the group, and there's a re-rating on board out here. And the other two businesses, I think they're high-tech, future digital, and medication looks very, very good to me. Both should do well going ahead.
All right, Apollo Hospitals. Apollo Hospitals is a buy for you, Kush?
It is. Very good moves. Hasn't really been a vertical one-way, overheated kind of an up move, a steady gradual up move, volume accumulation also interesting, this week and the last. So I think, good upside still to be had on this one. 75, 75 is the first level to look at on the upside. The recent swing highs, once that is taken on, you're looking at a 7,700 as well. 7,300, good stop. So fairly healthy risk reward ratio, steady up moves on this one. So yeah, Apollo Hospitals does look good on the chart.
Okay, Vineet, do you like hospitals as a sector, and within that, Apollo, how is it looking to you?
I just gave my view. I think that among the large caps, Apollo Hospital is quite undervalued. And with this demerger, what is going to happen is that the hospital space gets a lot of upside room to catch up with the peer valuations. Additionally, the digital tech and the medicines business is going to do, pharmacy business is going to do very well because it get its own concentrated buyers who are looking for high tech, high growth businesses.
Apologies for that, Vineet. Let me quickly go across bull versus bear segment. We have in focus Tata Steel. Mahima with us for that segment. Mahima.
Right. So to start with, in terms of how Tata Steel is doing in trade today, of course, there's a bull and bear case both. To start with, iron ore prices have seen a decline, and this could overall aid the margins for the company. Plus, the company has also taken cost control measures that could lead to profitability hike as well as margins improvement going forward. But Indian steel prices have declined 3 to 4% since May, so this could overall hamper the top line growth. In terms of the Netherlands business, Netherlands plant is nearly running at its full capacity and has turned EBITDA positive in Q4. So that's a big positive there. But while the Netherlands plant is actually catching up, the gains that the Netherlands plant is seeing is partly offset by the losses that the company is seeing in its entire UK business. Now, overall, European steel prices are also up 44% QOQ to almost $367 $7. But having said that, domestic steel prices are currently at a premium, and this premium is as compared to the imported steel, and this is despite of the 12% safeguard duty that India imposes on imported steel. So that's the bear case here. Lastly, in terms of where the guidance stands, they've targeted FY26 savings of around 11,500 crores. But if we look at the stock valuations, it's currently trading at EV to EBITDA of around 11.2 times versus its 5-year average of 7.76 times. So the stock is currently at a higher premium as compared to its 5-year average. So that's with respect to where valuations stand. Lastly, as to what analysts are recommending, there are 22 buy calls, 7 hold calls and 5 sell calls, but there is hardly any upside potential there because it's just at minus 0.5%. So no return potential per se for Tata Steel as of now, as to where Bloomberg analysts are suggesting. So this is the overall bull versus bear case for Tata Steel.
Okay, so that's on Tata Steel. Kush, firstly, thank you, Mahima, for that. Kush, do you have a view with regard to a Tata Steel?
Fairly bullish, Harsh, on Tata Steel. In fact, the entire metal pack, SAIL, Hind Copper, these are a couple of stocks that we've already discussed. As calls, Tata Steel also doing well. Momentum indicators are actually starting to flatten out a little, and the call congestion near the 170 mark would suggest a limited upside. But if that is taken out, then the stock could head to all-time high levels of 185 and higher. So yes, from a near-term perspective, there is resistance at the 170 mark, but overall the trend remains upwards. So if someone wants to consider, then with a stop around the 155 mark, you could take a positional bet on Tata Steel for targets of 185 and higher.
Okay, Vineet, do you like metals, and what within metals?
So within metals, I think top pick is Tata Steel.
Okay.
The stock has been consolidating for a very long time. And, since October, we've seen a trading range and, it's moving out of that. So I think there is a lot more left in the stock. I think it's just the beginning of the story in steel. Steel is going to get a very good upside going ahead. Believe that the cycle is turning, and Tata Steel is a topic there.
Okay, well, we're talking about companies and the NDTV profit impact as well as in some cases just the news impact that is coming in. Now, point is Sigachi Industries, which has announced that the fire accident in the Telangana unit, which resulted in a loss of 40 employees while leaving 33 injured, and it's had an impact on the stock. Let's hear the details about this. Uma?
So in the first official statement that Sigachi Industries has released, it's a communication to the Bombay Stock Exchange and the National Stock Exchange, where of course the company is listed. They have informed saying that after the accident, 40 team members, they say, have died in this particular accident, and 33 people are injured and are in hospital. They have also committed to paying 1 crore rupees to the families of each of the people who has died in this accident. They have also clarified that certain media reports had suggested that there was a reactor explosion, and that reactor explosion was not the cause of the accident, and they have said that the plant shall remain closed for approximately 90 days. One clarification here, the district administration, I've just spoken to the collector of Sangareddy, Pravinya, and she has clarified that the official figure is still 38, and she said till last night it was 36 deaths, and this morning one body has been recovered and one person is succumbed in hospital, and therefore the number of deaths is 38 as far as the government records are concerned. One other thing, the Chief Minister, when he visited the plant on Tuesday, he had a meeting with the company officials, and they had been quite upset with the fact that the top management of the company was not present there. They were informed that they had come there on Monday and that they were not able to be present on Tuesday, but the state government industry ministers as well as the Chief Minister said that they should have been present as responsible people. And the second thing that they had asked was a breakup of how many were skilled workers and how many were unskilled workers, because very obviously the maximum number of deaths are of people from outside the state, whether it's Andhra Pradesh, Bihar, Karnataka, Odisha, West Bengal, all those states is where people have come in from to work as it would seem unskilled labor in a unit where skilled labor should be employed is the opinion that has been expressed by the Labour Minister, Mr. Vivek, as well. The second aspect of it, of course, will relate to more measures that the government has said they will be inspecting all such, not just the high-risk units or similar chemical pharma units, but also the medium risk and low risk as well. And to bring in more protocols, they have also established now a state disaster management authority, which will now also have to listen to the guidelines that will be put forth by a 5-member probe committee that's been put in place by the Chief Minister.
Okay, so that's of course the take coming in from Uma Sudhir from Hyderabad on Sigachi Industries. Of course, very unfortunate incident, and the stock obviously under pressure, but that's probably the least of the concern with regard to that story. Let's go across. Vineet, you know, we've seen a 100 basis point rate cut now. Our NB, and we've seen a decent rally within financials as well, right? Where is it that you are seeing value at this point? Is it NBFCs? Is it larger private banks? Is it PSU banks? Is it small private sector banks? Where is it that you're seeing value?
So I'm seeing the value in microfinance stocks, Credit Grameen, Ujjivan Finance, and followed that by NBFC, followed by PSBs, and then the private banks. That is the pecking order. Special mention I would like to make is of DCB Bank. Their body language is very strong. They're looking to grow 20% at least over the next couple of years. And we're going to see some expansion in NIM also going ahead. So that stock looks to be a cherry pick among the, the mid-sized banks as such.
Okay, I'm just wondering what you're making of IndusInd. Note today, which Goldman Sachs note actually, which shows a lot of worry about IndusInd Bank. But the fact is that this is the point at which you will know who the new management is. Those names will be with the RBI. A lot of reports doing the round about who is going to be the next person. Vineet, is this the time to build a position in IndusInd Bank if there's any interest at all?
I think definitely it's a contra play.
Yeah.
And should be bought into aggressively because, see, the organization has been there for a very, very long time, almost for 30, 35 plus years. And you have a RBI, which is very watchful. And, the kind of frauds that have been detected did not really go beyond 1 year of profits. So, I think if you discount 1 year, recovery process will obviously start. And of course, that is going to be back-ended. But I'm seeing once the new management is in place, we will see the bank get back to its growth trajectory. And the valuations at 0.6, 0.7 times book is absolutely PSU 2019 stress case valuations. Doesn't get worse than that.
Exactly.
And I don't think that the environment is as bad as then.
Exactly. Is it pitched for a contra play because it's too big to fail? The issues are more about not even regulatory issues. There were some issues which is not a large part of the balance sheet, and there's going to be a new captain on the ship. Just IndusInd Bank, Kush, and BTST ideas.
Sure. IndusInd Bank, yes, definitely, something that should be looked into. Ever since it made that low near the 650 mark and has been rising, there is a rising trend line support that has come in, and also a bit of a resistance near the 870, 875 zone, making an ascending triangle formation, which suggests that if you get a close or two above the 875 mark, then the stock could actually start moving higher. So yes, the risk reward ratio extremely favorable. So keep a stop loss near the 835 zone, and you could create a long position in IndusInd Bank. As far as the BTST idea goes, it's in Canfin Homes. Good move on the stock today. Volumes also, on the upside. There were 5 sessions of consolidation, just prior to today, and now the stock has broken out of that. Momentum indicators also pointing north. So for targets of 825, 840 with a stop loss around the 795 mark, you could consider a long trade on Canfin.
Okay, now the other one which is in focus today is Tata Communications, and Macquarie has in fact initiated coverage with a bullish note, outperformed rating, 2300 being the target price. So despite the 5% uptick today, you still have plenty of room to play this. Puneet's here giving us all of the details with regard to that one. Puneet.
Well, thank you for that. Definitely a huge target price, 2,300 rupees per share. And the key aspect of the note is that Macquarie is anticipating or estimating Tata Communication to double its revenue in the next 3 years. They've gone on to say that in a bull case scenario that will be the case, and said that the company is enabling digital transformation for enterprises in the country. They've also gone on to say that the Tata Communication is leveraging one of the largest world's largest digital pipeline networks today, and is adding enterprise business as one of the key growth verticals going forward. They've also mentioned that they see an optionality in Tatacom's growing digital services business, where the company generally is in the leader quadrant, so could see some growth prospects, and they're anticipating the company's digital connectivity to have and become essentially an enterprise digital partner for these enterprises. So it's revolving around the company's growth prospects in the enterprise business, and that's the bullish momentum coming from Macquarie on Tata Communications.
Okay, so Macquarie on Tata Communications, very excited about that stock. Just before markets close, few stocks that I want to take you through very quickly, Vineet. Let's start with Tatacom. Are you sharing the enthusiasm that Macquarie has?
Tatacom, I don't track Tatacom since a while now, so will not be able to comment on that.
Okay, what about you, Kush? The stock has shown some movement today.
Yeah, on the daily setup, it's a little overheated, but the weekly setup is where it gets a little more exciting. So yes, on the upside, 1925, perhaps 2000 plus kind of levels also on the cards, given a breakout above the 1775, 1800 zone. So this is a good move on the weekly setup. Keep a stop loss near the 1700 mark if you consider a fresh trade on Tata Communications. At this juncture, yeah.
Fresh trade on Tata Communications. Have you seen any of the listings today, Vineet? And that question not for Kush, but for Vineet. HDB, Sambhav Steel. Did you find? Yeah.
HDB. I think Bajaj Finance is still a much better pick. It's grown faster over a longer period of time, still continues to outbeat in terms of AUM growth. NIMs are very good. And HDB for a large consumer segment has been very, very disappointing in terms of growth. And valuations are also rich. So I think I will stay with Bajaj Finance and buy more. Why buy HDB?
Vineet, Bajaj at this point, valuations more expensive, of course, versus an HDB?
Yeah, but the NIMs are also better, right?
Sure. Point taken. Okay. What do you make of an Asian Paints at this point, Vineet? Would you completely stay away from the paint space?
Actually, if you analyze the entire market share game, Birlas have taken share from Asian Paints. The other two players are unaffected. And if you talk to users of the paint industry, people are saying that it's a better product than Asian Paints. No one is talking about the other two players. So clear-cut, the market share losses are with Asian Paints, and until we do not see any sign of change happening there, or they getting into an aggressive mode, we'll stay away from that stock.
Look at the recovery though that we've seen in Asian Paints today, and after this Competition Commission of India's prima facie order on them, you've still seen this sharp recovery. Kush, if you had to bet on, I wouldn't say Grasim because it's a larger play, not just the paints business in it, or if you want to look at it, that's fine. But Asian Paints, Axo, Grasim, what would you look at over here?
So if I did that, in this space, the top pick undoubtedly would be Berger Paints. Okay. You see the kind of moves and the recovery that it's made. Even if you look at the fall that it had from September along with the rest of the market, this is the first one to recover almost about 70-80% of the lost ground. 78.6% retracement. Resistance was acting on it for the last 4 weeks. This week it's taken that out. Won't be surprised to see this one regain the entire loss and cross that 625 threshold way before the others recover that loss that started in September 24. But that said, Asian Paints from a positional standpoint is starting to look attractive because the volumes in the last 3 weeks have picked up. It's holding that 2200 low that it had made, rebounding from there at least 3 to 4 times. So we know the kind of fall that it's had. So if you're looking for a positional bet 12 to 18 months out, favorable risk reward ratio, then yes, Asian Paints is something that also you can consider, but purely from a momentum play, Berger Paints is a hands down winner.
Okay, Vineet, any of the value retailers on your list with this whole play with regard to monsoon, rural recovery, V-Mart, V2, Vishal? There's just so many players. Of course, they're expensive, but they offer very, very strong growth tailwind.
V2 retail, matlab the kind of positive market commentary that they've given, and they're upending their store count growth every year to 100 stores. And you know, they score at a price point which is $100 lower than what your Trent is doing with their cheaper brand. And I think V2 retail is very, very strong, and their business updates also getting stronger. So I'll be invested with that.
All right, thank you, both of you gentlemen, for coming in, speaking with us. We'll let you go on that note. We're a minute and a half from close on the Nifty this Wednesday afternoon. And yes, we have seen a bit of pain on the Nifty, at least today, but we've recovered from the lows. 1/3% lower on the Nifty 50 index. The Bank Nifty too, maybe a wee bit, but maybe no recovery at all, almost. Let's pull up the Nifty 50, in fact, intraday, and see how that recovery has played out. There's been a bit of a recovery from the day's low. The Bank Nifty, though, I'm curious to know. I don't think there's been much of a recovery, honestly, on the Bank Nifty. There you go, relatively just pretty flat in that sense from that lowest point. Let's look at the heat map on the Nifty as well. And you know, what you'll see is some of the heavyweights languishing at the bottom. HDFC Life has now slipped 2.6% lower. IndusInd also down by just about that. Bajaj Finserv is the other one. Bajaj Finance 1.5% down, and then HDFC Bank also down 1.3 odd percent. It's a day when lenders are really suffering today, and so are the financials, even in HDFC Life for that matter. L&T is lower, and BEL, even among the defense counters, is seeing some bit of pressure. In fact, the Nifty defense also seeing some bit of pressure, despite that one or two stocks doing fairly well for themselves within that defense pack, including a Paras Defense, who spoke with NDTV Profit. Let's talk about the ones which are the winners today. Clear winners are the metal counters. Tata Steel, JSW Steel, leading that rally in metals on an otherwise weak day in markets. Asian Paints is the other one, 2.5% higher on a day like this. Not sure too many people would have anticipated that. Maruti 1.5% higher as well. Auto sales coming through, and now that that's completely digested, we're seeing that stock perked up in trade. And Trent again seeing green, second time this week. So that's how it's played out, at least on the index. Kotak Mahindra Bank is the other one, and SBI is the other one, which are also seeing some pressure. And on a day like that, you would typically see pressure on indices. Let's pull up the advanced decline on the, there you go, that's the advanced decline on the NSE, and you're seeing pressure with regard to the breadth here as well. 3:2 with regard to the declines outstripping advances. The Nifty mid-cap index, though, seeing a solid recovery from the bottom. That's a very, very healthy recovery that we've seen on the mid-cap index. The small-cap index, a wee bit in terms of the recovery that we've seen there. Let's talk about sectors now. Let's pull that one up, and we'll see metals right at the top, very likely 1.5% on metals. Consumer durables also have done fairly well for themselves, 1% higher on consumer durables. What we're seeing in terms of pain, realty down 1.5%. The Fin Nifty is down 1%, no surprise there. The PSU banking index and the banking index follow suit with around 0.8% lower in terms of the move that we've seen today. IT flat, no complaints with regard to auto either. Pharma too, up around 1/3% thereabouts. Let's look at the BSE 500 top gainers, top losers. Those are some names for you. A Maharashtra scooter sitting right up there on top, 6.5% higher on a Maharashtra scooters. That's some serious gains on a day like this. Tata Communications is the other one on the back of that Macquarie report. We spoke about that. But outside of that, you're seeing Narayan Health seeing some pressure. RBL Bank, we did speak about that as well, and there's plenty of news around that. V-Mart had its quarterly update, which came out not too impressive, down 4%. in trade today as well, and Brigade within the Realty Pack seeing 3.5% lower. Let's look at cues now. There you go. So that's probably one of the global cues that we'll have to look out for. But frankly, no major impact on India. That's the one dividend adjustment that we need to factor in for tomorrow. And that's all, in fact, that we have in terms of cues to watch out for. Completely out of time on this edition of India Market Close. From Tamanna, Neeraj, myself, everyone who puts the show together, thanks so much for watching. But stay with us on the other side if you want to know everything that's happened in markets today with Market Express. Stay tuned. Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Imports become the exception rather than the norm, and increasingly we do almost, last year for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make, in our categories that we have been supplying to our defense forces, some of the best platforms in the world.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola? Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims?
Hello and welcome viewers, you're watching Market Express and I'm your host Himakshi Bahuguna. Now let's get straight into the show viewers. So lackluster day of trade on the Lal Street. Nifty ends near 25,450 while the Sensex slumped over 300 points. Most sectors ended in the red, with Realty, Finance and PSU Bank being the top laggards. Meanwhile, Pharma, Metal and Auto led the gains, ending the day in the green. Now in the energy news, oil marketing companies are set to receive LPG compensation with 100% certainty. According to Petroleum Minister Hardeep Singh Puri, despite soaring international prices, LPG cylinder costs for consumers have remained low under the PM Ujjwala Yojana. Now this led to under-recoveries of 40,300 crore rupees for OMCs in FY25 due to the LPG subsidy. Now, the assured compensation aims to ease financial strain on companies like IOCL, BPCL and HPCL, supporting their efforts to maintain affordable fuel access for millions. Paras Defence has secured a significant export deal worth 22 crore rupees with France's Serber. Now, agreement involves supply of 30 Chimera 200 anti-drone systems, enhancing Paras Defence's presence in the global defense market. Now, this deal not only boosts the company's export potential, but also showcases its advanced technology in the counter-drone solutions. Adani Ports continue to demonstrate robust growth in its latest performance figures. In June, cargo volume surged 12% year-on-year to 41.3 million metric tons, while container volume jumped 15%. For the first quarter of fiscal 2026, cargo volumes actually rose 11%, reaching 120.6 million metric tons. On the logistics front, rail volumes RAIL volumes also showed strong momentum, with June volumes up 14% to over 62,000 TEUs and a 15% increase in the first quarter, totaling nearly 180,000 TEUs. Bajaj Hindustan has tendered part of its stake in Lakshmi Gayatri Power and Coal Limited, or LPGCL, through the company's share buyback offer. Through this transaction, Bajaj Hindustan received proceeds of 631 crore rupees. The funds from the buyback have been utilized to clear overdue optionally convertible debentures, strengthening the company's financial position. Dream Folk Services is facing a setback following the closure of select programs with Axis Bank and ICICI Bank effective July 1st. The termination of these partnerships may have a material impact on the company's business. However, Dream Folks has stated that it is actively planning measures to mitigate this impact. Importantly, existing contracts with these banks remain valid, providing some stability as the company navigates this challenge. Seagull India subsidiary Seagull Northern Ayodhya Bypass Private Limited has won a major order worth 1,199 crore rupees from the National Highways Authority of India. Now, the contract involves construction of a 4 to 6 lane Northern Ayodhya bypass spanning 35.4 kilometers in Uttar Pradesh. This project will be executed under the hybrid annuity mode as part of the National Highways Development Project Phase 7. Now, the appointed date for commencement is July 9th. RITES has secured a significant order worth $3.6 million, or approximately 31 crore rupees, from an African rail company. Now, the order involves the supply of 2 fully overhauled ALCO locomotives, which are set to be deployed across Zimbabwe, Mozambique and Botswana. Now, the company has been given a 9-month timeline to execute this order. This deal actually highlights RITE's growing footprint in the African rail sector and underscores its expertise in the locomotive refurbishment and supply. Trouble brews for Asian Paints as the Competition Commission of India finds prima facie evidence of violations under the Competition Act, including unfair trade practices and denial of market access following a complaint from the Grasim's Birla Opus Paints division. Now, the CCI has ordered a 90-day investigation into this. Asian Paints says that it's reviewing the order and will cooperate fully with pursuing legal recourse. Investec maintains a sell rating with a 2,080 rupee target price, noting that a ruling favouring Grasim could lower entry barriers in the paints market. Shares have fallen nearly 2% today in trade. Lupin has secured US FDA approval for its abbreviated new drug application for loteprednol etabonate ophthalmic gel. Now, this is a generic equivalent to Bausch & Lomb's Lotmax SM, as the exclusive first-to-file applicant, Lupin, is eligible for 180 days of generic exclusivity. The gel is used to treat postoperative inflammation and pain following ocular surgery. With estimated US sales of $29 million annually, this approval strengthens Lupin's growing presence in the US market. Shares rose 1.56% today in trade. Jubilant Ingrevia stands to gain from the EU's provisional anti-dumping duties of 95.4% to 120.8% on Chinese vitamin B4. The duties set to be finalized in months open a window for Jubilant to capture market share in Europe's choline chloride market. Now, this could boost utilization and profitability in its vitamin 4 segment. Higher realizations could also be on the cards. The nutrition segment accounting for 20% of FY25 EBITDA. Shares climbed 2% today in trade. NMDC reported June iron ore sales of 3.5 million tons, down 4% from 3.73 million tons year on year. Meanwhile, production rose 5.9% to 3.57 million tons. The company slashed fines prices by 9% to 4,850 per ton and lump prices by 10% to 5,700 rupee per ton. On to the brokerage verdict, Citi maintains a sell rating, citing high valuations with the stock trading at 5.8 times EV on EBITDA, above peers 5 times average. Citi maintains a sell rating on sale, raising its target price to 115 from 95 rupees. The brokerage expects sales EBITDA per ton to peak in Q1 but anticipates a further correction. The brokerage says that the correction will be due to softening steel prices driven by demand-supply imbalances. Citi also sees limited upside for sale despite its Q4 sales volume of 5.3 million tons and a stable EBITDA margin of 11.6%. India Pesticides has commissioned an expansion of its formulation plant, boosting capacity by 3,500 metric tons per annum to a total of 10,000 MTPA effective June 30th. Now, the 2.8 crore rupee project funded through internal accruals. This move strengthens the company's position among the top global manufacturers of fungicides and herbicides with exports to over 20 countries. Now, this is also expected to drive revenue growth and rising demand. Goldman Sachs has downgraded SBI Cards to neutral from buy, maintaining a target price of 1,006 rupees. The brokerage cites a balanced risk-reward after a sharp valuation re-rating, with the stock trading at a premium. Focus shifts to near-term credit costs and growth, with the EPS growth expected to slow, leading to a 9.5% and 7.8% cut in FY26 and FY27 EPS estimates. Goldman also anticipates gradual improvement in the net interest margins with slower gains in operating leverage, impacting profitability. VIDA, Hero MotoCorp's electric mobility brand, has launched the new VX2 electric scooter, with prices starting at 59,490 rupees, which is the ex-showroom price. Now, the VX2 is available in 2 variants. As an added benefit, if battery performance drops below 70%, VIDA will replace it free of charge during the subscription period. Now, the VX2 rides on 12-inch wheels, featuring a sleek, flowing design with a familiar VIDA silhouette, and comes in 7 contemporary color options. Ola Electric reported nearly 60,000 vehicle registrations in Q1 of FY26, with Vahan data showing a 9% month-on-month growth in June. Reports suggest a sustained demand recovery in Q2, driven by the company's recalibrated sustainable growth strategy. Ola is projected to achieve a 25% quarter-on-quarter revenue growth, aiming to meet its 800 to 850 crore rupees guidance for the quarter. Now, this follows a 4-fold network expansion to 4,000 stores, boosting volumes and margins despite past service challenges. Shares rose 1.8% today. Inox Wind was in focus after Motilal Oswal initiated coverage with a buy rating and a target price of 210 rupees, implying a 21% upside. The brokerage highlights Inox Wind's robust 3.2 gigawatt order book, ensuring revenue visibility for 2 years, and its subsidiaries' 5.1 gigawatt O&M portfolio. With India's wind capacity set to double to 100 gigawatts by 2030, Motilal Oswal expects a 38% EBITDA CAGR for Inox Wind through FY28, driven by strong execution and policy tailwinds. The stock trades at a 28% discount to Pierce's Lawn Energy. Some luxury and sin goods like cigarettes, fizzy drinks, and high-end cars may soon get more expensive. the government is considering a plan to introduce a new health and green cess to replace the current compensation cess, which is set to end by March 2026. So right now, these items attract the highest GST rate of 28% along with an extra cess. And this new move could actually keep that additional tax in place. AU Small Finance Bank strengthens its leadership by appointing two new independent directors, Nand Kumar Sarvade and Jagjit Mangal Prasad. So Sarvade brings deep expertise in cybersecurity and fraud risk, while Prasad adds decades of HR leadership experience. The appointments come as the bank undertakes broader organizational changes. So AUSFB is also sharpening its focus on expanding presence in Mumbai, signaling strategic growth ambitions in India's financial capital. Shares of HDFC Bank-backed HDB Financial Services made a strong debut on the bourses, listing at 835 rupees on NSE and BSE, a premium of 12.84% from its IPO price of 740 rupees. Now, the IPO valued at 12,500 crore rupees was open for subscription from June 25th to June 27th. In terms of overall issue size, HDB Financial's IPO stands out as the fourth largest public offering in India's history, trailing only behind the mega listings of Hyundai, LIC and Paytm. Sambhav Steel Tubes made a strong debut on the stock market today, listing at a 34% premium over its IPO price of 82 rupees, with shares opening at 110 rupees on the NSE and 110.10 on the BSE. So this impressive listing gains translate to a profit of 28 rupee per share for investors who subscribed at the IPO price. So the IPO, which was open from June 25th to 27th, was subscribed nearly 29 times overall, with strong demand from non-institutional investors, qualified institutional buyers, and retail investors. So the company, a manufacturer of electric resistance welded steel pipes and structural tubes based in Chhattisgarh, raised 540 crore rupees through this issue, including a fresh issue of 440 crore rupees and an offer for sale by promoters worth 100 crore rupees. Goldman Sachs maintains a neutral rating on KPIT Tech while trimming its target price to 1,230 rupees from 1,280 rupees. So the brokerage expects a modest start to FY26, with growth likely to pick up in the second half. It notes that automotive ER&D spending remains muted amid global uncertainties. Deal closures are subdued and no major wins are expected in the near term. The firm cites a cautious outlook due to the ongoing tariff environment. Keystone Realtors, operating under the Rustomjee brand, is in the spotlight after securing two significant redevelopment projects in Mumbai. The company was selected by 8 housing societies in Andheri West for a cluster redevelopment spanning 4.75 acres valued at 3,000 crore rupees. Development agreements are already signed with 5 societies and with letters of intent from the remaining 3. Additionally, Keystone received a letter of acceptance for the redevelopment of GTB Nagar in Sion with MHADA. This project targets a gross development value of 4,521 crore rupees across 11.19 acres, benefiting over 1,400 families. So following these announcements, the Keystone Realtors shares surged 10% today. Macquarie initiates coverage on Tata Communications with an outperform rating and a target price of 2,300 rupees. The brokerage see a bull case scenario where the stock could double over the next 3 years. So it highlights Tata Comm's shift from a passive connectivity provider to a digital transformation partner for enterprises. So the company is leveraging one of the world's largest digital pipeline networks and expanding its digital services portfolio. Macquarie also sees strong optionality in this transition. The State Bank of India has declared the loan account of Reliance Communications as fraud and is preparing to report the company's former director, Anil Ambani, to the Reserve Bank of India. In a letter dated June 23 and received by Reliance Communications on June 30th, SBI said that its fraud identification committee found irregularities, including possible fund diversion through related companies like Reliance Telecom and others. So the decision came after reviewing show cause notices and forensic audit findings. Now on to some economic data from the US. Available positions increased by 374,000 to 7.77 million according to Bureau of Labor Statistics. Now US job openings unexpectedly rise to highest since November. This is a continued strength and resilience of the labor market. Economic activity in manufacturing sector contracted in June for the fourth consecutive month to 49, although it did beat estimates of 48.8. So this is also an increase from level of 48.5 seen in May. June data comes following a 2-month expansion preceded by 26 straight months of contraction. A manufacturing PMI above 42.3% over a period of time generally indicates an expansion of the overall economy. Prime Minister Narendra Modi has left on a week-long diplomatic visit to 5 countries, including Brazil, where he will attend the BRICS summit. Before departing, the Prime Minister said India sees BRICS as a key platform to promote peace, fairness and a balanced world order. PM Modi will first visit Ghana, followed by stops in Trinidad and Tobago, Argentina, Brazil and Namibia. At the first Quad foreign ministers meeting since Operation Sindoor, External Affairs Minister S. Jaishankar reaffirmed India's firm stance on terrorism. Speaking in Washington, D.C., he said that India has the full right to protect its citizens from terror threats and will exercise that right when needed. He also called on Quad partners to adopt a zero-tolerance approach to terrorism. Karnataka Chief Minister Siddaramaiah has put an end to speculation about a leadership change, stating that he will serve the full 5-year term. Addressing the media, he confidently asserted, "Yes, I will be the Chief Minister for 5 years. Do you have any doubt?" So this declaration follows similar reassurances from Congress General Secretary Randeep Surjewala. Meanwhile, Deputy Chief Minister D.K. Shivkumar also downplayed any immediate aspirations for the top post, emphasizing his focus on strengthening the party for 2028 elections. Karnataka Chief Minister Siddaramaiah has urged the centre to roll back the recent railway fare hike. So in a post on social media platform X, he said that hike is unfair and should be reversed immediately. He criticized the move, saying that it adds to the burden on daily wage workers, students, small traders and the common man who are already struggling with the rising prices. The Food and Drug Administration will also soon roll out a toll-free number for people to report complaints against online food delivery platforms. The announcement was made by FDA Minister Narhari Zirwal in the Legislative Council. He said inspections of platforms like Zomato, Swiggy and Zepto uncovered serious issues such as unhygienic conditions and expired food items stored in warehouses. So far, the FDA has issued 34 notices, suspended 1 license and ordered 5 outlets to shut down. The US Senate narrowly passed President Donald Trump's major tax and spending bill known as the One Big Beautiful Bill Act. So the vote ended in a 50-50 tie broken by Vice President J.D. Vance pushing the legislation through. So this flagship bill includes a $150 billion increase in military spending, funding for the president's mass deportation program, and a $4.5 trillion extension of Trump's initial tax cuts. In a post on Truth Social, US President Donald Trump said that Israel has agreed for a ceasefire in Gaza. He said that Israel has agreed to the necessary conditions to finalize a 60-day ceasefire, during which time he will work with all the parties to end the war. He said that he hopes that Hamas takes the deal because it will only get worse from here. Zohran Mamdani has secured the Democratic mayoral primary in New York City, achieving a stunning upset victory over former Governor Andrew Cuomo. A new vote count confirmed his win, paving his way to the general election. Media reports called the race after ranked choice. Voting results showed Mamdani defeating Cuomo by 12 percentage points. The Dalai Lama, Tibet's exiled spiritual leader, confirmed today that he will have a successor, reassuring Buddhist followers and global supporters that the 600-year-old institution will continue. This is a landmark decision for Tibetans who feared a future without a leader and for those who see him as a symbol of non-violence and the struggle for Tibetan identity under Chinese rule. Meanwhile, China stated that the reincarnation must be approved by the central government. 14-year-old Divyanshi Bhaumik has created history at the Asian Youth Table Tennis Championships in Tashkent. So she became the first Indian in 36 years to win the U15 girls single title, defeating her Chinese opponent in a tees final. So in a remarkable run, Divyanshi beat 3 Chinese players, something never done before by an Indian at this level. With this gold medal, she has also secured a spot at the upcoming World Youth Championships. Well, with that, viewers, it's a wrap on Market Express, but please stay tuned to NDTV Profit as Sanjana Chauhan joins in with Profit 360 on the other side of the break.
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make, in our categories that we have been supplying to our defense forces, some of the best platforms in the world.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola? Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Nifty closes below the 25,500 mark, ends lower for the day. Shriram Finance and HDFC Life Insurance are the top losers in Nifty. Nifty Realty falls 1.4% as the top losing sector for the day. The government permits ride-hailing services like Ola and Uber to set their fares at up to double the base rate during peak times, an increase from the previous limit of 1.5 times, and not to go below 50% during off-peak hours as part of the newly introduced motor vehicle aggregator guidelines. Sources tell NDTV Profit GST rates on cigarettes, carbonated drinks and high-end cars is likely to rise. Sources telling NDTV Profit exclusively that the government is assessing the re-employment of 2,500 to 3,000 MTNL employees affected by the transition into BSNL. This after MTNL unions write to the government demanding clarity on the future of these employees. The State Bank of India decides to classify the loan account of Reliance Communications Limited as fraud, a move that dates back to transactions from August 2016. The bank will also report the name of Anil Ambani, erstwhile director, to the RBI in line with regulatory requirements for key management personnel involved in such accounts. Government sources say India has pitched for a social security agreement as part of the ongoing trade negotiations with the US. JobSpeak data for June shows a sharp pickup in hiring across core service sectors, with IT hiring turning positive after a muted spell, with strong demand emerging from Tier 2 cities. The toll in the explosion at the Sigachi Industries pharma plant in Sangareddy district of Telangana rises to 40 as the state government will engage with the management of the firm to ensure the compensation of 1 crore is paid to the kin of those who died in the horrific accident. Good evening, you're watching Profit 360 on NDTV Profit and I'm Sanjana. Along the next half an hour, we're going to bring you the latest in markets as well as national and international news. So let's dive right into it and have a look at how the markets fared today. The Nifty closed below the crucial 25,500 mark, ending the day on a weaker note as selling pressure intensified. Shriram Finance and HDFC Life Insurance emerged as the biggest laggards, dragging the index down. The realty sector was the hardest hit, falling with 1.4%, with Brigade Enterprises and Phoenix Mills leading the decline, extending the sector's losing streak to 5 consecutive days. But for a more detailed roundup, I'm going to quickly go over to my colleague Harsh.
Well, we've closed below 25,500, but it's not been a very bad day on the Nifty. We've recovered a wee bit from the day's low. That's the likely positive we can take out of this. And we've closed above 25,400. And those are the couple of positives to take away. In terms of what pressured the index, well, it's the heavyweights essentially, and the financials. Let me talk about the heavyweights first. And HDFC was down 1.4% nearly, and there was pressure on Reliance right through the day, and therefore those heavyweights pressured the index. It's also ICICI, Kotak, all of those which were down nearly 1% each, and therefore you saw that pressure as well. L&T was the other laggard, and that 1-2 pressured indices, and the contributors will come up on your screen and you'll see that impact from some of those names. And in terms of the gainers as well, it was the metal names which actually led. Tata Steel, JSW Steel were the key leaders in trade today. In fact, Tata Steel up nearly 4% in trade, so very strong move. But they aren't necessarily heavyweights, and therefore we didn't see much of a move in markets due to that. Due to those stocks really moving. So again, something to keep in mind. It's some of the heavyweights which have pushed the index lower. You're also seeing an HDFC Life, which is a top loser in trade. IndusInd Bank was the other one which saw some pressure. So those were some of the bigger losers. Bajaj Twins, both Finserv and Finance, were also on the losing end of the spectrum today. Now let's talk about the broader markets. Now the breadth was unfavorable at the broader end. We saw some bit of recovery, especially within the mid-cap space late, right in the last hour or so of trade, and the Nifty mid-cap from the lows bounced back quite well to close absolutely flat in trade. So something to keep in mind, that the broader end saw a bit of a recovery. Even the small cap index saw a bit of a recovery, but much lower than the mid-cap. The mid-cap recovery was especially stood out for me. In terms of sectors, we did speak about a couple of sectors, but consumer durables, metals were the key winners in trade today. Realty was the key loser. Well, there were plenty of sectors which did really nothing much. Pharma, auto, IT were some of the sectors where, just about flat to maybe 1/3% of gains that we saw today. But on a day like this, that's not a bad day to take home some bit of gains at least, and we saw some of that in trade today. So that's how it essentially played out. We've still got a couple of trading days ahead of us. Need to wait and watch how this week closes out.
Absolutely, Harsh. Thanks so much for that. And moving on to our top focus this evening, the government has unveiled the new Motor Vehicle Aggregator Guidelines 2025, ushering in significant changes for ride-hailing platforms like Ola, Uber and Rapido. Now, under the updated rules, cab aggregators can now charge up to twice the base fare during peak hours. That's an increase from the previous 1.5x cap. While fares during off-peak times can drop to 50% below the base rate. Let's take a look at this report filed by my colleague Rishabh.
The Motor Vehicle Aggregator Guidelines of 2025, rolled out by the Ministry of Road Transport and Highways, allow cab aggregators to charge up to twice the base fare when demand spikes. This is up from the previous cap of 1.5 times. But there's a silver lining as well. Fares can dip to 50% of the base rate during quieter hours. So a ride with 100 rupee base fare could cost anywhere from 50 to 200 rupees depending on the clock. Plus, private motorcycles can now double as taxis, aiming to cut traffic and pollution.
कई बार ऐसा होता है कि एक ट्रिप हमारे पास बचता रहता है, अब उनके पास कैसा इमरजेंसी है मुझे नहीं पता, लेकिन मुझे वो रेट में लगता है कि मेरा नुकसान है तो हम वो ट्रिप एक्सेप्ट नहीं करते हैं। और रेट जायज़ होना चाहिए कि जिससे ड्राइवर को भी 2 पैसा बचे और जो है मतलब सवारी को भी ना लगे कि मुझे ज़्यादा मेरे से लिया जा रहा है।
Safety is getting a boost too, with a mandatory 5 lakh rupee insurance for passengers and 10 lakh term insurance for drivers. This framework also clears way for formalization of the gig economy. States have 3 months to roll out these rules, which also slap a 10% cancellation fee capped at 100 rupees for passengers bailing without good reason.
बाइक से ओला वालों का काम सबसे ज़्यादा कम हो गया है। ओला कुल मिला के ठीक भी देता है, ऊबर ज़्यादा ही डाउन करता है, तो उससे दिक्कत भी होती है। ओला ऊबर वालों का ही भला कर पाते हैं, हम अपना पेट बहुत मुश्किल से पाल रहे हैं।
इंश्योरेंस वगैरह तो हो जाए तो बहुत ही अच्छी बात है। ये तो जो है मतलब कहाँ ड्राइवरों को कुछ बच पाता है जो अपने लिए कुछ सेव कर पाए और इंश्योरेंस करवा पाए।
You heard from the drivers, while they are very much positive about some of the newer rules like insurance, like health insurance, like life insurance, as well as the training sessions that are a part of these new motor vehicle guidelines. What they are still very optimistic about and hopeful about is the fact that they want better fares. They want a better livelihood for themselves, and that is something that these guidelines don't talk about. They only talk about surge pricing for these aggregators, but how about the contributions that now some of these drivers will now be able to get as part of the higher fares that these aggregators will now be able to charge. This is Rishabh Bhatnagar reporting from New Delhi with camera person Surat Singh.
And now let me quickly go across to our guest joining me this evening, Sachin Taparia, Chairman and Founder of Local Circles. Good evening and thank you so much. Welcome to NDTV Profit once again. I'm going to cut right to the chase. How are you seeing this new motor vehicle aggregator guidelines impacting everyday commuters, especially in terms of affordability and accessibility? Sachin, I know that you have all of the data and you're ear to the ground.
So there were 3 major issues, Sanjana, that came out in our last report. The first one was drivers cancelling rides and without any penalties, without any disincentives. And the consumer basically, left out dry, waiting for another taxi or trying to get to the airport. Very inconvenient. The second issue was surge pricing, excessive surge pricing. And the frequency of that surge pricing. And then, the third issue really was around, behavior and safety and other issues, basically. So we've been escalating these issues to the government since 2018-19. They formed the original guidelines with the 1.5 times surge. Now they have expanded it to twice. The issue that we see here with the surge pricing is that now, a 750 rupee airfare from, let's say, South Delhi to the airport will become a 1500 airfare during peak times. And that is, a concern to the common consumer because the predictability, is reduced further as to what will be the final fare. The certainty of the fare has reduced because they could charge anywhere, what they feel like pretty much. With the 150%, at least a 750 fare would go up to 1050, but not 1500. So I think it definitely benefits the aggregators, not the consumer. On the cancellation front, I think there is some good news where they have introduced a 10% cancellation penalty for the driver, so they'll cancel less. And what we found through our studies is that many times, whether if the driver did not want to, or they didn't want to go to a particular destination, they'd cancel, or if the payment mode was digital, then also we see drivers canceling because they want cash. It leads to instant cash flow for them versus getting paid a week later or a month later. So all in all, it's a mixed bag essentially from a consumer standpoint. And again, the proof of the pudding will really lie in the implementation, because they can come up with these guidelines, but if the states do not implement it, as we are seeing with the Motor Vehicle Act, as well as with these guidelines in the past, there's little that's going to change on the ground. So I think we'll have to wait and watch and see how quickly states adopt it and start implementing them.
Sure, Sachin. Local Circles has been instrumental in capturing citizen feedback on urban mobility. What would you say are the top concerns or the expectations you're hearing from your community regarding these new guidelines?
So, 6 in 10 consumers feel that there are a lot of unfair trade practices that take place with taxi aggregators. And they, of course, there is the surge pricing aspect, there is the driver canceling, and instead of, the drivers seeing a penalty, you see that the consumer ends up paying for it. Because the driver calls them and says, I cannot go there, can you cancel the ride? You cancel and you see a charge from the taxi aggregators. So again, while people feel that the cancellation penalty will help, but it will only help if it is actually implemented. So there is a lot of skepticism whether these guidelines will be implemented as it is by the states, or will it continue to be the same, which has been the case since 2019, 2020, when these first guidelines came about, that not much changed on the ground and the cancellations continued, the unfair trade practices continued. There's a lot of dark patterns that consumers report about, taxi aggregator platforms. So I think we'll have to see both the ministries, the Ministry of Road Transport, which came up with these guidelines, as well as the CCPA, the Ministry of Consumer Affairs, playing an active role to ensure that these unfair trade practices are minimized. There's more predictability, there is more availability, and the cancellation works both ways, for the consumer as well as for the driver.
Okay, Sachin, and last, do you believe that this increased flexibility and surge and off-peak pricing will ultimately benefit consumers? I know that you've been saying that the proof really lies in the pudding of execution and implementation and really the state's timely adoption to it, because I think we've also had a discussion in the past regarding dark patterns with these platforms, but we're still seeing it continue to happen. Do you think it will benefit consumers, or could it lead to a higher average fare over time?
It will definitely lead to a higher average fare over time, Sanjana. Where I think it will help is giving a bit more predictability and certainty to the consumer if the penalty clause is effectively implemented by the platforms, where the driver, before canceling, so right now, let's say if the cancellation rate is 30%, right? If that drops down to, 15%, I think consumers will have more certainty. So that's where I see, some benefit coming in. But again, it will have to be implemented effectively by the platforms and by the states for it to actually, see the light of the day.
Right. Sachin Taparia, Chairman of Local Circles, as always, giving us some very, very insightful and comprehensive data. Thanks so much for joining us and really simplifying this issue. One can only hope that this is a win-win for both the sides, whether it comes to these aggregators and, of course, the people that are riding in these taxis. Meanwhile, let's shift focus to what's happening between India and the United States. Time is running out for a crucial trade deal between India and America. With the tariff pause set to expire in just days, negotiators in Washington are in a frantic race against the clock. At stake is a massive $500 billion trade target, the livelihoods of thousands, and indeed the very momentum of India's export economy. India is standing firm, pushing on zero tariffs on its vital labor-intensive products. So let's think textiles, leather and handicrafts, arguing that without this, the dream of doubling exports will remain just that. Meanwhile, the US is countering with a proposed 10% surcharge on top of existing duties, aggressively demanding wider access to Indian markets for its agricultural powerhouses like rice, dairy, poultry and even GM soy. And hopes for this trade deal are dimming as India is standing firm on its red lines for agriculture and dairy. While New Delhi seeks concessions for its labor-intensive products, no relief appears likely on US tariffs for steel and auto components. Ajay Srivastava from Global Trade Research Initiative joins in with more on this.
The US already has an FTA with South Korea and Japan and Canada, but still Mr. Trump has imposed country-specific tariffs on them and renegotiating all these things. So any deal with the US is not a final deal. So whatever deal is there with India, with UK or any other country, they will need to be reviewed and most of them will cease to exist the moment Mr. Trump goes.
Meanwhile, India is making a significant push to safeguard the financial future of its citizens working abroad. The government is actively working to incorporate social security agreements into its free trade agreements. India has made a formal request to the US on this front. My colleague Rishabh joining in with more on this.
What we've learned is that India has pitched for social security agreement to be a part of the US bilateral trade agreement as well. This is what we've reliably confirmed as part of the ongoing trade negotiations that are currently underway in Washington. What we're also picking up is that the ball is now set to be in the US's court with regards to how they accept and how they finalize the terms of this. Remember, a social security agreement is something that we've already inked with the United Kingdom. It was inked in the form of something called the Double Contribution Convention Agreement. Apart from that, India already has social security agreements with about 22 nations. And so going ahead as well, India will be pitching to more and more countries. And this is something that the Labour Ministry has also urged the Commerce Ministry for, is the fact that we need more and more of these social security arrangements as part of the free trade agreements. Instead of the Labour Ministry going out there independently, they can easily be built into the free trade agreement negotiations with each of these countries. Remember, a social security agreement is something that basically avoids double taxation for employers. What this does is, with a lot of these Indian professionals going out every day, going out to other countries to work, what we're seeing is that usually what happens is that these workers are only able to contribute to the social security system or the pension system of the country that they've actually gone to, instead of depositing their money right here in India. A double contribution convention agreement would therefore nullify these double payments that a lot of these employees have to do, and then they'll have to pay in only one country, preferably India, where they won't lose out on any sort of deposits that they've made to these social security systems.
Right, Rishabh, thanks so much for that. We'll continue tracking this story and bring you the latest developments. Moving on to some breaking news coming in. The Banga family is reportedly planning to offload a $150 million stake in beauty and fashion giant Nykaa with a block deal announcement that is expected later today. The transaction is likely to be priced at around 4% discount to Nykaa's current market value, signaling a significant move in the company's shareholding pattern. This is the big news that's coming in right now. Market watchers obviously awaiting the Banga family's next move as they prepare to offload a $150 million stake in Nykaa with this block deal announcement coming in today. Moving on, luxury goods are set to become more expensive as the GST levied on them is expected to be hiked. These goods are taxed under the 28% slab and attract compensation cess. Sources told NDTV Profit that the compensation cess may be replaced by health and green cess. My colleague Shrimi Chaudhary brings us more on the items that are about to get expensive. But we also understand that the government is considering a 3-tier structure. Please give us all of the details.
Yeah, sure, Sanjana. So, of course, ahead of the GST Council meeting, which is expected soon, a very important proposal, under consideration to introduce a new green and health cess on select items, particularly, on the luxury and sin goods, ranging from, tobacco products like cigarettes, carbonated drinks, as well as high-end automobiles. Now, clearly at present, it attracts these select items attracts 28% of GST and are also subject to compensation cess, the regime which set to expire by March 31st, 2026. Now, a group of ministers, state and center, are all deliberating on the future of compensation cess, meaning what will happen beyond this deadline. So a couple of options are actually on table which they are deliberating upon. One is that whether to subsume compensation levy in the GST, which could move up the effective rate of GST on these select items. The second option is, of course, to have a new cess in the form of health cess or green cess, or maybe both. So these options are, under consideration. And as you know, that compensation cess was introduced, to compensate the revenue shortfall by states when the GST regime was introduced, and all those the debts which the government has taken during the pandemic was expected to fully paid by January 2026. And in fact, the 40,000 crore which could remain, that will also distributed among states is what sense we are getting. But a formula of that, a strategy of that government will come out with soon in the next council meeting is what we are getting sense from sources. On the second point, on the rate rationalization, now this exercise has been going on for some time, and a GOM has proposed a 3-tier structure. Now, GST 2.0 will see overhaul of the 4-tier structure which it has, which is 5%, 12%, 18%, and 28%. So that is going to move to 3-tier structure. Probably the chances of removing the 12% from that bracket, and maybe some items could move to 5% bracket, and some select item could move to the higher bracket, which is 18%. So nothing has been decided at this point of time. However, there are, pretty serious on the fact that this is now the time to kind of introduce and merge the new rate, rationalize the GST rates, keeping in mind that now GST is reaching 22 trillion lakh mark last year itself, last fiscal itself. And if you see the monthly average also, the GST collection is around 1.85 lakh crores. So making it a fit case for rate rationalization is the indication we are getting.
Right, Shrimi, thanks so much for that comprehensive, detailed understanding of the story. This is as luxury goods are set to become more expensive and attract more GST. Let me quickly go across now to my colleague Aishwarya, who's standing by. Aishwarya, we understand MTNL employees have staged protests over concerns about their re-employment following the proposed BSNL merger. So give us all the detailed insights on their demands and the ongoing developments. Aishwarya, over to you.
Well, 2 key developments here. First, what we're picking up from our sources is that MTNL employees, the government is assessing for them to be placed within the DOT, Department of Telecom, as well as the BSNL as well. Now, MTNL employees, there is a union and multiple unions, in fact, that have been formed over time since the transition of MTNL to BSNL has been talked about for a very long time. So these unions have about 2,500 to 3,000 employees that may be affected due to this transition. What they have done is written an official letter, a formal letter, to the Secretary of DOT, Neeraj Mittal, as well as the CMD of MTNL, and also the ministers of telecom, as well as MOS, have also been marked in this particular letter that they have written on the 6th of June we did access this particular letter, which says that MTNL, the users, the unions have been kind of facing issues as far as employment is concerned. They have urged DOT to look into this matter as far as the HR related benefits are concerned. They have been they are alleging that they've not been getting those benefits so far, such as promotions, financial upgradations, that have not been given to them since this impact has been happening as far as MTNL is concerned. They're also doing a phased protest across different cities, Delhi as well as Mumbai, from June up until the end of July as well. So this letter contains that. So these are the two key developments. First is, of course, these 3,000 employees that the government is looking at deploying between DOT as well as BSNL and other ministries. And second is that MTNL employees have written a letter and urged intervention from DOT on a very crucial basis at this point in time.
Right, Aishwarya, thanks so much for that update. Remains to be seen what's next for MTNL employees. We'll continue bringing you all those updates. That's all the time we had on this edition of Profit 360. Stay tuned to NDTV Profit for more news and updates.
Imports become the exception rather than the norm, and increasingly we do almost, last year for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make, in our categories that we have been supplying to our defense forces, some of the best platforms in the world.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola? Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers. Hello and welcome. You're watching KYC. I'm Harsh Saita, and it's a great time, if at all, if you get to invest in a really good turnaround. And just about any time is a great time to invest in a turnaround, and today's candidate is one of those. And we've started to see an uptick in the stock price. In fact, the stock is a 2.5 bagger in the last 3 years. And the stock we're going to talk about today is JM Financial. And the person we're going to speak to today is Digant Haria. He's obviously one of those who has written about JM Financial in a large fashion on his blog. And his blog was the key trigger on the stock moving as well, at least over the last couple of weeks. And the stock over the last couple of weeks has done very, very well for itself. So here's what I really want to know. JM Financial, in terms of a turnaround, they're exiting certain businesses. And they're exiting businesses in the lending space. When you exit businesses in the lending space, you will typically start to recognize credit losses. How much of that? How much of the credit loss has already been booked? What is the comfort on the current book and on recoveries? It's a larger book size in relative terms. Approximately 3,000 to 3,500 crore is the business that they are exiting. Okay, so how much of that can they garner in terms of recovery? How much will they be recognizing on their profit and loss account? The second one, how likely is the recovery on the wholesale as well as the ARC going to be at 4,000 crore? Because that's the value which Digant has ascribed as part of his valuation. And we will talk about this as part of the valuation metric in our metrics as well. How quickly will the recovery happen is the other piece. Timing of the recovery is crucial. The quicker the recovery happens, the better it is, the more the certainty, the more it's pushed, the worse it gets. What is the risk on the retail housing book? Because that book, they're going to continue to grow. In fact, they've guided that retail housing, they will double the book size by FY27 from the current book size of 2,800 crore. That's a large and tall ask. Can that also happen? And what's the risk like? What do they do with the balance book? They've said that they'll double it. And where to from there? What's the comfort with regard to asset quality on retail? That's all that I want to understand. Now, in terms of the merchant banking business, the whole point of doing lending is to try and leverage the balance sheet, all the cash flows coming into the balance sheet from the merchant banking business, and thereafter lend. Now that they're withdrawing to a large extent from lending, what does the merchant banking business do in terms of risk? Mind you, it's a cyclical business. We have seen that between September to maybe March, April, or even May of this year, we've hardly seen any IPOs. It automatically creates a drag in the business. Can that business continue to sustain in terms of growth? And what's the other lever that it will rely on in case of a slowdown in the merchant banking business? Where do they invest the cash coming in? They've also suggested that they will do payouts, buybacks, dividends, return money to shareholders in a big fashion. So is that what it will happen, or will they invest in a newer business? And therefore, given the multiple moving parts, how do valuations look and how do they stack up? All of this we'll try to break down with Digant Haria, who's the founder of Green Edge Wealth, I beg your pardon, and he will be joining us later today. Now let me quickly talk to you about the company first, try and give you some context on what JM Financial is all about. I'm going to start off with when it was incorporated way back in 1973. It was incorporated as an equity broking firm and was also doing investment banking. Nimesh Kampani saw a huge opportunity in Indian capital markets, bringing what foreign firms used to do in a domestic market, in domestic fashion. And that is what he wanted to really tap into back in 1973. And here's a broad glimpse of the journey. In 1980, it became the first company to introduce fully convertible debentures in Indian capital markets. Even I was surprised by the number of firsts that JM Financial has clocked over, I don't know, the last 40 years. Now let's talk about 1986. It engaged in the business of stock broking and securities back in 1986. It introduced equity warrants to the Indian capital markets between 89 and 94, listed on the Bombay, Ahmedabad and Delhi stock exchanges, introduced deep discount bonds to the Indian capital markets, managed 4 transactions in excess of 100 crore back in the day. That's a large amount, 1989 to 1994 we're talking about, which was unmatched back then in the Indian markets. It's the first private sector mutual fund, and it commenced operations in the 90s, in the early 90s. In 1999, it did a joint venture with Morgan Stanley, and this is in areas of investment banking and securities business. It later on went on to break up its JV, but we'll come to that. Between 2002 and 2006, here's what it did. Managed India's first IPO through book building. 3 firsts for it. First Indian dual tranche FCCB, which is foreign convertible bond issuance. First $1 billion IPO and first conditional IPO. Did all 3 of that. And thereafter launched a private equity fund between 2002 and 2006. This is. Let's talk about 2007 now. It's separated from the joint venture it had entered into with Morgan Stanley, continued to lead the Indian investment banking financial services industry as a 100% Indian company, and launched a real estate fund as well, which it still continues to operate. Let's talk about 2008 to 2012. Commenced the ARC business, expanded operations in the fixed income business. Just try and understand how deep it is with regard to its capital markets foray. 2012 to 2017, it received a license for housing finance from the National Housing Bank and commenced the SME business. Also, between 2016 and 2018, it started its wholesale lending business, which is the one which has caused some bit of discomfort, or rather a large bit of discomfort to the financials over the last 5 years. And we'll pick and we'll try and understand all of those. Now let's talk about the business as of today. What does it do? Its business can be broken up into 4 parts. The first one is the capital market related businesses. Investment banking, broking, and both retail broking as well as institutional broking, wealth management as well as asset management. Core fee based business. Now let's talk about mortgage retail. This is a business which is around a 2800 crore AUM business. Currently does affordable home loans, small loan against property, and gives loans to educational institutions. The third is the mortgage wholesale business. Builder loans, large LAP, early stage financing and structured financing. This is where the problems lie at this point. All the NPAs currently sit here, or a large part of it. Then there is ARC, which is asset reconstruction. Distressed credit, which they purchase and then they try to conduct recoveries. Not happening at this point. Then they have SRs, which they have to liquidate. And then they also ventured into turnarounds. Those are the things which are really not working for it. This is where the company is actually losing money, and this is what they are likely going to avoid doing going forward. So let's understand the revenue breakup under each of these. And I've broken this up. Right, you have asset management and investment banking, which constitutes, if you just add up, 67% revenue FY25, 61% FY24, just about 60%, just maybe 53-55% in FY23. So it's gone up gradually as a percentage of the top line. Mortgage lending has actually come down. And look at the other segment. That may just be completely ignored, but broadly it is this which is contributing to the top line. Now, this is the revenue contribution, of course. And it's again important to understand, because we've understood the businesses and now we've understood where the revenue is actually coming in from. So, now that we've understood the full business as a whole, let's talk a little bit about the metrics. I'm going to start off with the income statement, thereafter look at the balance sheet. We won't look at cash flow here. We will look at asset quality and return ratios. Thereafter, we'll look at street cred, shareholding, valuations, and we look at outlook. Outlook because it's a turnaround, mind you. So you want to look at what is it that they're changing going forward. I want to start off with the income statement first. And again, you'll see interesting nuggets and you'll want to understand how this turnaround is working. First, you look at the income statement, looks like a very uninspiring set of numbers, right? And therefore the thumbs down. Look at the top line, look at the operating profit, which has been calculated by Chinmay, who's the analyst. Provisions, which is the credit cost number at just about 7% and on a very, very high base. Look at that provisions number versus the PAT number. It's a 400 crore provisioning which is being done on a 800 crore profit after tax in FY25. Nearly 600 crore of provisioning done on a 400 crore of profit after tax in FY24. Clearly not looking good, right? And it is the problem with regard to credit costs, which is impacting profitability. Let's now flip over and look at the credit cost number over the last 4 years. And you'll notice the same trend. Look at the credit cost in FY23, it was low. FY24 was elevated, FY25 is elevated. Do we have the FY22 number as well? Because that number stood at 350 crore versus the 770 crore profit after tax. And that kind of caps off all the 4 years of credit cost and profit after tax. Now let's talk about profit contribution. And this is where it becomes very, very interesting. Look at the contribution of two pieces to profitability. Look at asset management and look at investment banking and their contribution to profitability. 80% in FY25 contributed by investment banking and asset management. Mortgage lending just 13%. Look at it in FY24, look at it in FY23, and what you will realize is a large chunk of the top line comes from these two, and the profitability, a larger chunk of that comes from these two. So it's basically the drag is coming from the lending business onto the profitability. Clearly going away from lending business makes sense at this point. Now let's talk about the balance sheet for a little bit. And I'll be quick about this. Healthy amount of equity compared to the borrowings, given that it's a retail lending business, even going forward, look at the AUM of the retail lending business around 2,800 odd crore, right? Now let's quickly look at, so a neutral here, you want to see improvement with regard to the way in which at least the AUM grows in the retail lending space. And we'll wait and watch as to how that growth comes through. But the guidance is 6,000 crore of retail AUM by FY27. That's a tall ask. Let's talk about asset quality now. The GNPA and NNPA ratios reflecting on your screen. Again, uninspiring set. The GNPA ratio is at 12%. The NNPA ratio is at 2.5%. Not looking good, right? And therefore, we've given this a thumbs down. Let's talk about return ratios now. Look at the erratic nature of it. 7.5%, 5%, 9%. Single digit. Not good enough for an Indian capital market play and financial conglomerate, which is why it gets the valuation it gets. And therefore, we'll give return ratios a thumbs down as well. Let's look at street credit though. The turnaround seems evident. Last 1 month, 18% higher stock price. 3 months, 64%. And 1 year, 75%. Clear thumbs up with regard to the performance that it has done with regard to shareholder returns. Fantastic returns given. Now let's talk about valuations before I look at outlook. Look at the price to book of this one. Around 1.6 times is the price to book. It trades at around 19 times price to earnings. And if I were to just pull this a little bit further and try and analyze it a little bit in more granularity, the market cap is around 15,000 crore. And this I've picked up straight from Digant Haria's blog. Let me be very honest, I've just copied his blog. Around 15,000 crore is the market cap. Recovery from lending plus ARC is expected to be around 4,000 crore. Based on fair value, the retail lending business should be worth around 1,500 to 2,000 crore. I've taken 2,000 crore as the number. 2 to 3 times price to book. And investment banking at 10 to 12 times earnings is roughly placed at 9,000 crore of earnings. Basically, it's the drag from investment banking or from the lending business, which is being caused, or which is the impact on the valuation, which is impacting the valuation at least at this point. If that were to change, and that is changing, this may well be up for a re-rating. Hence, this becomes very interesting. Let's look at shareholding as well. And it's a closely held company, 56% interest by the promoter within the company. And you're looking at FIs which hold around 17%, DIs 7%, and public just a shade short of 20%. We've given this one a thumbs up as well. Quickly on to outlook and what to expect and what the commentary from FY24 year end, which was the turnaround commentary, seems to suggest. They will exit the less profitable businesses, wholesale and ARC. Businesses exited have been well provided for. They're entering the loan syndication business instead, and that will contribute to top line as well as bottom line. They aim to do balance sheet light businesses, focus on ROE and cash flow, focus on fee and commissions, and they are focusing more on the retail mortgage AUM of 6,000 odd crore by FY27. Buybacks and dividends will be a focus area to return shareholder value. All of this is positive if they are able to play it out the way it does. But there are still some downside risks, and we highlighted that at the start of the show. And let me bring in Digant Haria, but before that, very quickly, how the KYC rating stacks up on this one. Let's quickly pull that up. Yes, we have that. So clearly not looking good on any of these metrics. But mind you, in turnarounds, you have to look at what's going to happen going forward. And a lot of that has already happened in terms of stock price action. Is it still something that would interest a buyer or not? And what the downside risks are? Let's quickly explore those. 4.5 on 8 is our KYC rating. Digant Haria joining us, founder Green Edge Wealth. Digant, great having you. And you know, I was going through both your blog posts, extremely informative. I want to first start off by understanding what the downside risk to exiting the current business is. Do you believe that this 4,000 crore of recovery can happen without turbulence?
Yeah, hi. See, whenever, the business pivots, or, whenever there is a turnaround, so there is an old business which has to run down and close. Then, the new businesses take off. So I think last year, Harsh, was something that the old businesses were running down, and which is why, in your presentation, you showed that the credit cost or the provisions are high, and the NPAs are high. It's just because, whenever a loan book is running down, the NPAs optically look higher because, your denominator is also shrinking very fast. But I think, this year you will see that, they have done all the provisions. So this year, actually, there could be a lot of write-backs because, their NPAs are backed by land and projects. It's not as if it's a retail loan which will never come back. So I think there could be a good amount of write-backs also. So whatever pressurized their earnings in the last 3 years, I think in your slide you showed credit cost of last 3 years. I think we'll actually see the reverse of that in the coming 3 years. So what was a headwind then would probably become a tailwind over next few years because these projects will see the light of the day. So the past business, I think whatever pain had to be taken has been taken. Now those will also actually start delivering some better numbers. Obviously, the past business runs down and they will create newer businesses which are not as balance sheet heavy. In newer businesses, that 2-3 years of clean runway, there will be no NPA problems. There will be just fee income and interest income coming along the way. So I think the numbers will start looking very, very different from this year, which is FY26. So that's the opening comment, Harsh.
Sure. Let's talk about why they went into lending in the first place. What's your rationale? And is it to a certain extent also to insulate the business from the cyclical nature that merchant banking and fee-based kind of businesses generally face in terms of downside? Is it to try and level off that risk? And doesn't this decision open the business back to the same risk that they faced when they went into lending in the first place?
Well, that's a very good question. So see, if you remember the Lehman crisis, so this 2003 to 2007 was a party time for the Indian stock markets. And, then all the broking stocks, be it Edelweiss, Motilal, JM, everybody became 10 times, 15 times in those 4 or 5 years. But then came that Lehman crisis, the global financial crisis, and by 2009-10 their incomes plummeted by say 60-70%. So it was in this 2010 that a lot of these guys decided that we have to try and go to new businesses. This just fee income and broking income is not enough. So everybody chose different paths. Like Edelweiss also took the lending path. Motilal Oswal only ventured into housing finance, but they ventured into asset management. So they started this Motilal Oswal Mutual Fund and PMS. And similarly, if you look at JM, they decided to enter the lending and the ARC business. Now, if you go back to 2011-12, lending was at the nascent stage. The public sector banks were banned from doing real estate lending. And then, that is where JM saw the opportunity that, if banks are not being allowed to do this by RBI, the NBFCs will see a boom time. They actually saw a boom time between 2013 to 17. And that is a time when, these Edelweiss, Piramal, India Bulls, JM Financial, everybody did really well in the lending business also. So at that point in time, everything was going right. But then, this sector itself got hit by so many things. First we had demonetization, then we had RERA which came in, then we had the ILFS crisis, and then we had the COVID or the pandemic. So, in 4 years, there were 4 big events which actually broke the back of the whole real estate industry. And even very, very conservative players like JMC, JM was the least hit in all of this. You look at Piramal, you look at Edelweiss, they had to do so much to come out of the crisis. But JM obviously just had to go through some losses, but nothing compared to their strong balance sheet. But the cycle was so bad, Harsh, that even a conservative player like JM had to take a hit. Then regulations also changed after 2020 in such a way that this is no longer a viable business for any NBFC to do it. Only HDFC Limited used to do it, but now it is merged with a bank. Now they'll also not do it. So this whole real estate wholesale lending is becoming more and more the forte of these, private equity kind of funds and, private credit market, and not the listed NBFCs or banks. So I think it was a natural cycle. Now you ask me that if they are going to exit the lending business, won't they again face the same problem of being too dependent on the stock markets or the capital markets? Now the answer to this question is that, see, they have seeded 3 new businesses, right, which they are not shutting down and which they are growing. So one is a wealth management business, second is the mutual fund or the asset management business, and third is the affordable housing finance business. So I think all these 3 businesses have now, almost 6 years. Housing finance has 7 years of history. Wealth management has 6-7 years of history. Asset management has 3-4 years of history. So I think these businesses are much lesser cyclical compared to the stock markets. So I think whatever they lose out of that lending, that will be made up here. And also in the lending business, they are not completely getting out. Like they are getting out of the old format, which was you lend for 5 years, 7 years. Now they will enter into small deals, which are 6 month, 12 month, 18 month. Because see, let's not forget that deal making is the DNA of JM Financial. They have been the deal makers of India. Whether it is M&A, whether it is IPOs, whether it is QIPs, and all these different kind of structured products. So I think they'll continue to do that. But now they will earn more of fee income and less of interest income out of that. That is their ambition. And I think that is precisely the DNA of JM Financial. So I think that, the bad, last 3-4 years, that the difficult part is really, really over. Now it is how well they can scale in these new businesses.
Sure. So Digant, now I have just 3 minutes. I'm going to quickly try and do a rapid fire so that I can cover as many questions as possible. What's the risk like on the retail book?
Right. So retail housing finance, I think the risks are extremely low. They have built a model where they source their own loans. So I think this is a growing space, a very hot space. I think this company itself can become a 3,000-4,000 crores or 5,000 crores market cap by 28. So this is actually a high potential. I don't see much risk in this business specifically.
And can they grow at the guided 36% CAGR? Because they're currently at 3,000, they're gunning for 6,000 by FY27.
I think it's okay if they do 25% also. See, 35% may be aggressive, but it's okay if nothing, hell does not break loose if they grow at 20-25%. And I think they have set up the infrastructure. Now they'll grow. So I just feel that, maybe if not FY27, FY28, they'll reach 6,000 crores. At least that is what we are building in.
Got it. And with regard to the top line, may not be the best way to look at it, right? Digant, there's a book which is contracting. Therefore, top line may not be the best way. What is it on the bottom line that you're looking at in terms of compounding? Because you'll see a lot of the line items go away. Like, for example, credit loss being the biggest line item will probably go away entirely over the next 2 to 3 years. What's the bottom line estimate that one can expect in terms of compounding over the next 2 to 3 years?
So I think, last year, like FY25, they did around 800 crores of profit. I think you add, say, 150, 200 crores to that just because of the credit cost. We spoke that there could be write-backs in the old business, so that credit losses will be very low. So maybe, 1,000 crores of base profit. And after that, you can have a 15-18% kind of compounding because, all these affordable housing finance, wealth management, asset management, investment banking, all these businesses in India are growing at 15 to 20%. So according to us, 1,000 crores becomes the base number for profit for JM Financial from this year. And above that, you can actually see 15 to 20% kind of compounding playing out. So that is the base case which we are working with. Obviously, we need to see how they deliver over the next 12 months. Harsh.
Okay. Digant, 20 seconds. Downside risk, if any.
So downside risk, whenever there are sharp corrections in the stock market, obviously, this stock will correct because there is a perception that incomes will go down. So there could be interim volatility, but long term really looks clear. Yeah.
Excellent. Thank you so much, Digant, for coming in, speaking with us on KYC today. And viewers, completely out of time on this one. Thanks for tuning in. Stay tuned to NDTV Profit. More action on the other side.
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make, in our categories that we have been supplying to our defense forces, some of the best platforms in the world.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola? Should I hold ICICI for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on
Hi, we're talking about Your Money Matters on NDTV Profit, and my name is Alex Matthew. As we sometimes do, today I'd like to talk to the head of equities at a very large mutual fund to give you a sense of how they manage money, how they're looking at their strategy right now, and what the outlook for the current financial year and in fact the next financial year is, so that you can plan your investments and you set your expectations. Joining me today is Dinesh Balachandran, who is the head of equities at SBI Mutual Fund. Dinesh, thanks so much as always for taking the time. And let me ask you, just to set the context, and so that those that are unfamiliar with the strategy and philosophy that you employ when you build your equity portfolios, what is it? And then we'll delve a little deeper as to how that fits into the current dynamic.
Great. First of all, thank you for having me over. Now, with regards to how we think about equities, like what philosophy we operate, we normally think about it from the perspective of three pillars. What are these three pillars? One is the business model, in terms of trying to figure out how robust is the company's business model, what kind of growth runway can we foresee, and inherently, like what are the return ratios for that particular company. That's one pillar. The second pillar is the management competency or ability, because clearly we see differences in terms of how various companies are run. Good management can obviously make a huge difference. So that's the second pillar that we think of. And then the third pillar is essentially the valuation. Like, how much do you pay for a particular company? So normally what we want in an ideal world is something where you have a great company in terms of having a robust business model run by very competent management and available at moderate valuations. Now, the problem is that real life is obviously much more messy. So while you want the holy trinity, so to speak, in real life, you have to sort of compromise on one dimension or the other. And that is essentially where the art element of investing comes in. And that is what we try to do all the time, essentially.
100%. Okay, so you've given me some perspective on that philosophy. I do want to ask about what has occurred in 2025 so far. And Dinesh, you said the absolute truth, which is that reality can often confound even the best plans. So from that perspective, it's been particularly volatile. Were you perhaps a little surprised at the kind of rebound that we've seen since March, April, particularly in the broader markets?
I definitely have to agree with that. When we were thinking about equities, particularly over the last year or so, there were two big concerns that we had. The first concern was that we saw this slowing down of growth rate. Now, when you look at the last 4-5 years, post-COVID, equity market did well, but it was also on the back of growth rates that were looking quite good, particularly when you think of COVID as the base. Compared to that, growth rate in FY22, FY23, FY24, both at a macro, aggregate perspective or individual company perspective, the growth rates were looking quite good. But starting from the beginning of calendar year 2024, it felt like growth rates were essentially moderating, slowing down significantly in certain cases. This was accompanied by valuations being much higher than historical average. So just as valuations essentially went up significantly, we started sort of witnessing moderation in growth. So that was essentially giving us sort of a lot of cause for concern. And from that perspective, we were sort of worried about near-term equity returns. And so when markets went down from September to end of February, to be honest, it felt like this was sort of a sorely needed correction just to bring valuations back in check. Now, when you think about what has happened post the end of February, early March, the rebound has been ferocious. It's almost, if you look at all the mainstream indices, they are back to the historical highs or very close to the historical highs. So definitely it has sort of surprised us. But when I try to sort of understand why it has happened and what has been the biggest factor driving this, apart from other aspects, one big change that has happened in the last 6 to 9 months is the reduction in interest rates. So when you think about the relationship between equity valuations and fixed income interest rates, there is a clear linkage, right? Because when the cost of capital comes down, all else being equal, equity valuations get supported even more. So equity valuations can go up. So for us, this has been the one big driver, if I have to think about it, in terms of what has sort of led to a very significant rebound in markets.
So the tendency, Dinesh, and it's an unfortunate tendency that when you look in the rear view mirror as an investor, the tendency is to focus on the very recent past. And so from that perspective, the reason I wanted to ask you about the performance of equity markets over the last couple of months is because of how SBI mutual funds portfolios have done. And I'm just trying to understand at this stage, when you look into the future, and I'm not talking about the next few months, are you looking at a shift? And you mentioned monetary policy. We had another massive rate cut, 50 basis points. I think a lot of people were unaware or caught unawares of that. Do you anticipate that the way that you've positioned, there could be a catch-up in the next 6 to 12 months? And how should your investors anticipate this?
Yeah, normally, like the way we structure our portfolios, we do not react too much to near-term events. Let's assume even if an event were to happen that we weren't really anticipating, normally we do not make wholesale changes to the portfolio because these portfolios are constructed with a certain medium-term objective in mind. So to that extent, nothing much is going to change. Now, at the margin, this fall in interest rates, is that positive for certain financial institutions, particularly the ones that are dependent on wholesale borrowing? Definitely. At the margin, is it beneficial for interest rate sensitive sectors like real estate? Definitely. To that extent, there is clearly a marginal positive emerging in certain sectors. But are we really going to make big changes to our portfolio? That is in general not the way we operate. So I do not foresee any big changes in our portfolio in general.
Okay. So then tell me about how, and I specifically want to get your opinion on the construction of your portfolio and your contra fund, which you manage, of course, and how are you positioning yourself there? Because I think there's a lot of interest and people hold this as part of the portfolio and long-term portfolios, and some direction on what you're anticipating and how you're building your portfolio there might give them some clarity.
Yeah. So what I'll say is this. As I was mentioning at the beginning of the discussion, sometime last year, we were getting really worried about valuations across the board. There weren't great opportunities in any sector per se. A lot of the value-oriented sectors that we were focusing on, even those sectors had gotten re-rated so much that we couldn't see any great opportunities in the market. So what we did was essentially preserve dry powder. So where the cash percentage in the fund went up substantially. And this was not really a top-down call, but more this feeling that there aren't enough attractive opportunities in the market. So to that extent, we wanted to err on the side of preserving dry powder rather than be forced into sort of investing in something. So this is something that we did in Contra Fund last year. Now, over the course of the last 9 months, as and when opportunities have opened up in certain sectors or certain themes, we've tried to sort of deploy in those areas. Definitely, like in March of this year, was the situation much better than, let's say, August or September of last year? Definitely, because a lot of stocks actually fell quite a bit. And to that extent, opportunities did open up. But unfortunately, it was like a fleeting moment kind of thing where it quickly rebounded after that. So to that extent, we couldn't fully deploy. So we still have meaningful cash in the portfolio, patiently waiting for opportunities. Now, when I think about the landscape, there are essentially more opportunities in the market today than middle of last year. Even though when you look at it from a mainstream headline index perspective, it feels like we're back to the same old level. So nothing really has changed, right? But underneath the covers, I think because of the movements in various sectors and so on, definitely more opportunities have emerged. And so we are trying to take advantage of those opportunities in contra fund. So the cash holding has definitely come down. Has it gone to zero? No. So we are still waiting for good opportunities to open up. But I do get the sense that there are more opportunities available today than essentially last year.
Okay. One reflection of that is also in your balanced advantage fund, which at last count, and obviously we're at the start of a new month, so I don't have the latest fact sheet. I'm just wondering, it was about 68-69% balanced advantage equity. That would have been higher, I'm assuming, than in previous months, and that's probably because equity markets have also moved in a certain way. So it'll be, rather than fresh deployment, I would think that it's also because of capital appreciation. Please correct me if I'm wrong. And also, where does that move going forward? Are you adequately represented in equity in your balanced advantage?
Yeah. So balanced advantage uses the asset allocation framework that we like to think of whenever we have to think about markets in aggregate terms. So last year, in the middle of last year, our model framework recommended an equity allocation of 20%, which is sort of the lowest in multiple years. That was the extent of caution flagged by the framework, because from a valuation perspective, it felt like we were in very elevated territory. From a sentiment perspective, it felt like there was a lot of froth in the markets. And from a near-term earnings outlook, as I said, we were worried that it was actually beginning to moderate. So when we put it all together, the framework was recommending an equity allocation of 20% in the balanced advantage fund. Now, the same framework in early March of this year went up to 60%. Why is that? As I said, mainly because interest rates in this framework, when we think about equity valuations, we also consider fixed income interest rates. So the fall in fixed income yields definitely served as a positive for equity markets. So that from a valuation perspective, now it felt much better than where it was last year. And sentiment also had moderated significantly in the last 6 months prior to March. And so the equity recommended allocation moved up from 20% to 60%. So in our balanced advantage fund, we hence sort of like started increasing our equity allocation, where at the bottom, from a practical perspective, we were probably at 28% or so. That has moved up to more than 60%. A lot of it was actual deployment of capital into equities. So that was clearly a very conscious move. And then on top of that, to the extent the markets rebounded, there was also a mark-to-market impact, which led to the equity weight further going up, essentially.
Okay. I'm going to try and construct this question because there are several thoughts that are running in my head based on what we've also spoken, Dinesh. But a couple of things. The evidence of drawdown in the markets getting rebounded very, very quickly. So the availability of a gap to deploy, especially if you're in a contra sort of a strategy, is limited. So that's one. Two, with the dollar doing what it's doing and heading lower, an anticipation that global flows into emerging markets and into India might look more attractive going forward, and you have more buyers for the same commodity that we are buying, which is equity, would result in a further shortening of that gap, one would assume. And three, the earnings, while there is an improvement, maybe not to the extent that you can feel comfortable at buying at possibly rich valuations. Do you anticipate with all of these things, do you agree first of all with what I've said, and do you anticipate that therefore moderate return expectations are likely in the current financial year and heading into next year?
Yeah, I completely agree with that. When you look at India, right, in some sense, from a macro perspective, things have never been better. When you look at corporate balance sheets, when you look at the way growth is sort of getting constructed, there aren't, signs of over allocation into certain sectors or something where you're really worried about India from a macroeconomic perspective. So those things are firmly in place, and there are no real concerns there. The concern really is in terms of how fast can the economy grow. Right now, it is hovering in the 6.5% plus or minus kind of range from a real GDP growth perspective. The earlier expectations were that we will inch closer to 8%. That is not visible, at least for the time being. And so that is the real sort of crux of the matter, that the economy is not going to grow at a very, very robust pace. And to the extent corporate sector is a part of the economy, so corporate earnings also are not expected to grow at a very robust pace. So now when you sort of think about flows, as you said, yes, flows are likely to be quite supportive. I don't think flows slowing down is going to be a real issue for the markets. Valuations are on the elevated side, so that's a headwind. And earnings growth, while it is improving, it is not going to improve dramatically. So when you put it all together, the end result is one of moderate return expectations, or at least that is the way we are also thinking about markets, where it's not going to be something really bad, but is it going to be a repeat of what we saw in the 2020 to 24 kind of period? In our opinion, unlikely.
Absolutely. Dinesh, couldn't have said it better. Thanks so much for joining me today. Absolute pleasure having you on the program.
Great. Thank you so much. Bye.
All right. Well, that was the head of equities at SBI Mutual Fund. Now, we're not going to leave it there. We're going to give you a sense of how to look at the last 6 months, because we're at the midpoint of the year. Can you learn anything from the way that mutual funds have performed in the first half? Of course, 6 months is a pretty short time frame in the long-term growth story of a country and indeed in the building of an equity portfolio. But Mohit Gang, co-founder and chief executive officer of Moneyfront, joining me now. Mohit, thanks so much for taking the time, and hopefully you were able to listen to what Dinesh from SBI Mutual Fund was talking about as well. But let me ask you this. What are the strategies that have worked over the last 6 months? And incidentally, I did ask Dinesh about whether he was caught on the wrong foot by this rebound that took place in the equity markets, and he said, yes, he was.
Thank you so much, Alex. Always a pleasure to be on your show. Look, I think it's been very clear that last 6 months have been the most unpredictable in the market. By virtue of the sharp move up or the sharp comeback rally which happened, no one was anticipating that the markets will turn around so quick, so fast. Second, given the geopolitical environment, uncertainty around us, no one was anticipating that markets will hold so strong and we are trading at near all-time highs now, back at those levels. So no one was anticipating these. And the sectors have also kind of surprised. For last 6 months, Alex, if you were to see, the best performing sector or theme has been the defense theme, and for all the right reasons or wrong reasons you might call it, because given the geopolitical environment, I think the best two schemes in the market have been the Motilal Defense India Defense Index Fund and the HDFC Defense Fund. I think the Motilal scheme gave almost like 38-39% return, while the HDFC scheme ended up giving almost around 21% return in last 6 months. The second best theme has been the financial services and the banking theme, which I think broadly has been a consensus call in the market, given the interest rate regime in which we are living and given the green shoots which we are seeing in terms of private capex coming in, the corporate balance sheets being extremely deleveraged, and the bank lending kind of again trying and picking up. So all those factors I think are boosting, and the banks were quoting at fundamentally very, very low valuations relatively for last 2-3 years. So that has kind of triggered a rally in banking and financial services funds. So that's been the second best sector. And the third has been the large cap space, often ignored, often not spoken about. The glorious big companies of the country have come back. The Nifty index per se has been up almost 8.5%, and a few large cap funds have been up around 7.5, 8% in the same breath in last 6 months.
Okay, so that's a pretty, it's a pretty decent snapshot of what has worked and what is not, which is not to say, Mohit, to just reinforce that point, that what has worked in the first 6 months is going to work in the next 6 months or maybe even in the next year or so, because there are periods of underperformance as well. And let's talk about those that have underperformed and why they have, Mohit. What stood out to you?
Look, I think if I were to talk of few themes, my sense is, let's say broadly, if I were to allocate as per market capitalization, then I think flexi cap themes haven't worked pretty well, because I think most of the fund managers got the combination a little wrong in terms of the large, mid and the small cap allocations, because there was a patch in time when the small and mid caps were correcting dramatically and the large caps were holding. And then again, the large caps corrected and small and mid cap kind of held back. There was never a patch where market market saw all the three market caps correcting dramatically big time and then recovering altogether. The falls have been uneven and the recoveries have been even more uneven across the three spectrums. So getting that balance right has been a typical call for the fund managers. So the flexi and the multi-cap funds have got hit a little. The value theme has got hit, Alex, surprisingly. The value theme has been a winner for last couple of years in terms of style of investing, but that's got a little hit for last 6 months. And few sectors and themes like IT been the worst performer, PSU, some names out there, few select names in infra themes. So those have also kind of underperformed the market. So these are the broader themes which have not worked well in last 6 months.
Okay, so we know what has worked, what has not worked. But let's also talk about a few schemes, and this is not necessarily in one particular category, but the degree of underperformance of a few schemes is quite stark over the last 6 months. And there are quite a few names that are, that have ranked in the top quartile in the past. Let's run through the list, Mohit, and talk about why these have underperformed.
Sure. So if I were to just rank the schemes for last 6 months of underperformance, I think few of the quant schemes, let's say the Tata Quant Fund, couple of small caps, LIC small cap fund, the Tata Digital India Fund, Samco Flexi Cap, again LIC Value Fund, Edelweiss, the recently listed IPO fund, UTI Innovation, Motilal Midcap. These are few names which have starkly underperformed, and underperformance ranging from -7 to -16% when the Nifty index has been up 8%, right? So the spectrum is pretty wide. Look, my broader reading is threefold, Alex. I think number one, themes which relied too much on value buying, I think those have got undone. Themes which relied too much on momentum plays, like the quant funds and few of the other smaller fund houses like Samco's and all those things, they have massively underperformed because momentum has got completely broken in the market, and I think that's just not working. Fund houses which want too much quality focused, they are the ones again which have got beaten. Themes like Tata Digital and funds where IT, digital, and PSU was a pretty large chunk in the portfolios, they've kind of massively underperformed. And last take is funds which were relying too much on quantitative measurements. I also see a trend of those funds underperforming in the market for last 6 months.
One of the themes over the last year and a half, and Mohit, we spoke with Dinesh of SBI Mutual Fund as well just now, Dinesh Balachandran, and he spoke about his contra fund, and he said that they did take cash position last year because it wasn't a top-down strategy. It was just that they didn't have comfort in what they were buying because it didn't fit in with the strategy that they employ in that fund, and they tried to deploy earlier this year, but they couldn't deploy completely. It has worked for some people, not for everybody, because you haven't caught the upside, and that is evident in the results. Who has used this effectively?
Alex, hand on heart, I'm yet to find a fund manager who has effectively used his cash in this last 6 month period. Honestly, I think the biggest one was Parag Parikh, sitting at a massive cash pile of almost 22,000 odd crore. The fund is also of a huge mammoth size now. And I don't see the performance speaking for kind of cash which they were sitting on, right? Honestly, and I think because as I said at the start of this conversation that the turn back was very, very sharp. It was an extreme V-shaped turn back, right? So if you haven't deployed your cash exactly on 7th or 8th or 9th of April, then you're out of the market. And then there was no way any of the funds could have cashed in on the cash pile which they were sitting on if they were smart enough to have deployed a large chunk of cash on those specific days. Then yes, perhaps they would have done wonders, but to my mind, nothing. I think Parag Parikh, HDFC Midcap Opportunities, SBI Contra, HDFC Flexi Cap, Motilal Midcap. These are few of the names which were sitting on immense amount of cash, and I have tracked their performances for last 1 month, 3 months, 6 month odd period. Alex, I don't see out of these names which I've spoken anyone for last 6 months performance, barring my senses, an HDFC Flexi Cap fund to a minor extent beating Nifty 500. So Nifty 500 in last 6 months is up 6%, and all the funds which I named have massively underperformed the Nifty 500, barring an HDFC FlexiCap, which is just about delivered in line with the Nifty 500 fund. Even on a 3-month period, they've kind of underperformed, and 1-month period they've underperformed the Nifty 500 index.
Okay, in conclusion, based on what we have decided, what is the advice that you would have for people who have, for example, seen a 16% drawdown in a 6-month time frame in a particular scheme? Do you decide to pull the plug based on this kind of performance?
Look, Alex, I think the conclusion is all there on the wall for people to read about. If the best of the brains and the best of the fund managers can't get the cash call right, then there's no way retail investors...
Speaking about cash call, Mohit, let me amend that. I'm not only speaking about cash call, I'm talking about underperformance.
Or the market.
And mutual fund underperformance, yeah.
Absolutely. So I was about to come to that, Alex. So one is please don't take cash calls. Even if you are underperforming, don't think that you can redeem out of the market right now. Sit on cash, use that opportunity to get into a better fund. Second is the markets and the sectors have been changing extremely fast this year, as is the global scenario, Alex. So my sense is this year I would strictly advise anyone against rotating sectors, rotating themes, and rotating funds very fast. My sense is market is doing that at a very frantic pace, and right now even the markets haven't settled on themes and plays for next 1 or 2 years, because the global environment is not pretty certain. You don't know which way the trade waves will, the trade and the tariff war will settle down. You don't know what next themes, barring banking and financial services. I don't think so there is a single consensus call in the market right now. So my advice is to sit tight, even if you have some losses. If the funds have great pedigree, great fund manager, good track record, decent performance, and if you've not just got beating in last 6 months, then I think stay put. But if you have seen consistent underperformance for last 2 years put together, quarter on quarter, then perhaps maybe yes, redesign, rebalance, and reshape your portfolio definitely, but not just by virtue of the last 6 months.
All right, on that note, Mohit, thanks so much for joining me today. Always a pleasure having you on the program.
Same here, Alex. Thank you.
All right, that brings us to the end of this edition of Your Money Matters. It's been an absolute pleasure bringing it to you. Do stay tuned. This is NDTV Profit.
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make, in our categories that we have been supplying to our defense forces, some of the best platforms in the world.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola? Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Imports become the exception rather than the norm, and increasingly we do almost last year.
Amit, we've been talking to you quite a bit of late. Your company's in news for many reasons, more reasons than one. This is from a numbers perspective at the beginning, doesn't seem to be a very large one, but is this opening up, how do I say, for lack of a better word, floodgates for you for the future?
Good morning. Firstly, it's always a pleasure talking to you.
Thank you.
And I don't mind the high frequency that we're talking together.
No, we like it. We like it.
Yeah. But the significance of this order is not in the value. It's in the mindset of a global consumer, which he started looking at India not just as a manufacturing hub, but today is looking at India as a development hub. Now, today, the technologies that can be developed are no more the responsibility of the West, and they have started believing that an Indian company can develop a system and a European company can consume it. They have been magnanimous enough to understand this and then put their layer of software or algorithms and then deploy this particular system for their customers. So this is a paradigm shift that I would like to see. It definitely opens the floodgates, but it's a change in mindset which is going to be permanent from here on.
And we've spoken about things in the recent past for obvious reasons, but I do want to understand, as you pointed out, this is not about the value of the order. It is in terms of the technology and what you're building and also what it indicates for the future. I'm just wondering about localization, about the prospects for Indian companies exporting more, for your company per se also. Let's not talk about only this order, but does this change the dynamics going forward? How soon could you have a larger share of exports in your entire revenue book?
So the exports, like I've always been maintaining, that this is a plan B for Paras Defense. The domestic market is extremely potent and right now positioning companies like Paras as priority one because we are IDDM kind of companies. And if you can see a defense acquisition policy, it will mention that IDDM companies or IDDM products will be priority number one when it comes to procurement. So we enjoy a market which gives us that priority and obviously that importance and whatever comes along with it. We have good visibility of business and all of that. Said that, what I'm trying to say is export market, you cannot defy if there is a demand, if there are events which are happening globally, including happening in India, if it generates a requirement for consuming an Indian developed system or Indian manufactured system globally, this is the time that Indian manufacturers need to be really upping their readiness for an export potential like this. And then plan A and plan B can go hand in hand together. The good part here is because we are developing this technology, the profitability, the viability of a product sale to a European company still holds good. Otherwise, if you're going in a globally competitive landscape, then export becomes a plan B.
Okay. Specifically on this particular technology that you've gotten into the deal with, can you take us through where it sits in your offerings and what are the avenues that could open up now that you've started doing this?
So I want to tell you this particular technology that we are discussing and we've got an LOI from Cerber. This is something that we together launched as a concept a few months, couple of years back. Then we started developing this technology. I want to mention here specifically that this particular product is one of its kind in the world. It's a It's a wideband detection and neutralization system. So it can detect a drone which is operating from 400 megahertz to 6 gigahertz. Now that's a very, very wide band. It's not a band jam system or a band detect system. It's a wideband detect and neutralization system. This system particularly you can say 90+% of drones it can detect and neutralize. So when we are looking at this technology, you're looking at this as a very, very cutting edge product globally, not just for India.
By the way, I think the street is liking what Abhin Mahajan is saying, because look at that stock that's starting to trend higher as this conversation is going on. Amit, and I heard you start off this conversation saying that this is a mind space product more than a numbers thing, but I'm still trying to understand. So therefore, does this, okay, it can do one of the two things, right? One, it can open up doors for more products with newer customers for you, or existing customers if you will, but they're already your customers so they know about you, or that the opportunity size of this product itself is large even though the initial number is smaller. Which of the two is true?
Both. The opportunity size for this product is large because this product is one of
Amit, how large? How large?
I want to tell you the value of this product is very well known, but these are not going in hundreds. These are going in thousands.
What's the opportunity? I'm just trying to think. I mean, could it run into multiple 100 crores or annually? Just give us some metric.
Multiple 100 crores is a conservative figure. Because this is a man-portable. You imagine this is not this is not a big system. It's a system as big as your suitcase. And you can carry it, put it in your VIP convoy, and you make sure you're creating a bubble of 2 kilometers omnidirectional where you can detect hostile drones and you can neutralize them. So you can imagine if I can use it for a VIP convoy, where all I can use it.
I'm just wondering, so you mentioned the frequencies that it tracks, and please forgive me if I don't understand all of the technical parameters of this. It's not something that I specialize in, but I'm just trying to understand the range, Amit. And so therefore, if you're talking about the utilization of something like this in a border region, in a scenario where warfare has moved more towards utilization of drones, what kind of coverage would you need with this kind of a product? Or would it be, and so we had one of the defense forces, a general, explain to us about how the anti-air defense system works and its layers. So if you talk about that, where does it fit in those layers?
So this becomes your front line. What it does is it is an agile system. So your system is quiet till it detects any hostility. It has completely software controlled and configurable human interface. So if it detects a drone, it will first alert the operator. It will make sure that you are designating that drone as a hostile drone. And after that designation, you can neutralize it. So this can happen in an omnidirectional, omnidirectional means I'm saying 360 degrees. Or it can happen directional, where you are using it in the border. You're not worried about what happens inside the border. You're looking outwards. So you can configure it that way. What happens is this can become your frontline soft kill mechanism. This will then has the capability to alert various other functions and get other countermeasures active, and then you can work on the intelligence given by the system. But by itself, if it is a radio frequency based drone, you can cover it more than 90%. You are making sure that you can neutralize that particular drone.
All right, sorry. Amit, I just want to come back to those numbers. So you said that into hundreds of crores is conservative.
Yeah.
So if you are the only one, do you expect heightened order inflow because of this over the course of the next 12 months? Could there be some guesstimate that you can attach to that?
I would like to mention here that this is the beginning. I want to keep it humble.
Yeah,
sure. Let this small order be the beginning of our export to European regions. Cerber is also going to be our partner as a gateway into Europe. So he's going to, and he already operates in more than 18 countries worldwide. So he's going to make sure that he's not just consuming it for his order, but he's also going to use it for his solutions for other countries as well. So I'm expecting more orders to come. system. This being a revolutionary product, it requires awareness, it requires integration with your legacy systems, and maybe it might take some time before it really explodes into a huge business. But that business is going to happen for sure, because your radio frequency drones are not going to go away just as yet.
Okay. And Amit, how long does this technological edge stay with you, you reckon? I mean, because tech moves very quickly these days, right? So you are first, and it's the only unique product. Could somebody else make something like this in the next 1 or 2 months, or you reckon there could be some lead time there?
No, it requires more effort than that. I wouldn't say that it's something that nobody can do it.
Yeah, of course.
But it requires specialized design tech, and which we have done it. We would like to hope that, in spite of somebody trying to do a full wideband jamming and wideband detection, there will be some edge that we will maintain at all times over and above that product. Considering we are also partners with Cerber, they also have their inputs and the algorithms, the refinement of the detection systems. These are all things which will keep us ahead of the curve at all times.
Just one more follow-up. You mentioned that while this opens up newer order or newer companies, from the existing clients that you have, there could be upsides as well, right? Because it's a big technology thing. So yes. Are you hearing conversations with existing clients for this order or other orders via Paras Defense?
Absolutely.
Because of this?
I wouldn't say because of this. These are two parallel activities. What we have developed for Cerber is Chimera 200. Now it has an Indian version of that, and I'm very, very proud to mention that it by itself has found their own customers. It has cleared field trials, and I don't want to name where all it has cleared the trials, but all those places, this has performed over and beyond the expectations of our customer. At some places, it has been able to create itself a category of procurement that this category did not exist when they went out for procurement. Now there is a separate category created for this called as wideband detection and neutralization system. So it already has a domestic clientele sitting in front, and we are expecting orders domestically as well.
Amit, so unfortunately we ran out of time 3 minutes back, but I still have a follow-up question, a quick one. Order book position was 835 crore at the end of February. You've given us conservative estimates for how much this could yield. So give us a conservative estimate for how you see the order book moving as well in FY26.
It was already beyond 900 as we closed in the financial year. And considering we have executed a large part of it now, we maintain that particular order book even after execution of Q1.
Got it. Okay, Amit, wish you all the best for that. Thanks so much for taking the time out and being with us and explaining us in detail.
Thank you so much.
We have auto sales numbers that have trickled in, and one company that stands out right now is M&M. Joining us on the show to discuss the PV business and how passenger vehicles have actually performed in this month as well as during the quarter. We have Nalinikant Golagunta, CEO at Automotive Division, joining in. Nal, welcome to the show, and always a pleasure to speak to you at NDTV Profit. If you could help us understand, I was just looking at the trend in the month of June, as well as if I have to look at the quarter as a whole, strong numbers that have been reported. What has led to this kind of a growth this time around?
Firstly, thank you for having me on the show. So again, a strong month, like you said, growth of about 18% and for the month, and for the quarter, again, 20% plus. In line with what we have put out as mid to high teens growth for SUV. Frankly, the strength of the portfolio is what is carrying us forward. We've had some successful launches over the last 12 months. We've had 2 ICE launches in 3XO and Thar ROXX, and then we have 2 very strong launches in the EV space as well. So it's the demand for these products and the consistent demand we have seen for the products we launched before that, which is holding us in good stead.
Right. So now, is it the SUV portion which is actually firing, and where is it coming from? Is it from rural India or urban India?
Yeah, so as you know, within the passenger vehicle industry, SUVs has consistently outperformed the rest of the industry. But having said that, I think M&M has actually done better even against the industry SUV growth numbers. So we're outpacing that as well. For us, the growth has come from both rural and urban. And if you look at last year, I think urban was probably a little bit stronger than rural. But what we've seen this year in Q1 is we have growth coming out of Bolero, we have growth coming out of infrastructure and other investments which the government is doing in the rural areas as well. So that's starting to pop up as well, in addition to the urban growth, which has been going on consistently for us over the last 6-7 quarters.
Right. So are you expecting this kind of a trend to continue where, SUV sales will see higher growth even in the rural market?
Yeah, historically, we have seen over the last 3-4 years that the share of SUVs overall in the passenger industry has grown up. I mean, if you go back 5 years, it was about mid-30s in terms of SUV as an overall percentage, but today it's in the 60s. So we believe that will continue to be the case. People are traveling longer, people are traveling on roads which can have varying quality, so they look for an SUV, and the safety that an SUV gives is also something which is a key buying factor.
Right. Overall, how much of this contribution has come in from the ramp up of new models which have boosted sales, versus the older ones?
Yeah, absolutely. So like I said, the 4 new models that we put out in the last 12 months, that's given us significant growth. But having said that, the core part of the business, which is Scorpio and 700 and Bolero, have been a strong backbone for us as well. So Scorpio continues to do 40,000-50,000 as a family. So that continues to be a bedrock for us. And on top of it, the growth is coming from the new models.
Okay. Now, when you talk about exports, we know it's still a small portion. How soon are you expecting that to ramp up? Because currently you just have 2 players in terms of peers who are capturing the export market to a large extent. There is expectation that M&M is going to follow suit as well on that front. So what's the trajectory looking like from an export perspective?
Yeah, it's a long-term game for us, international expansion. Even this quarter, we actually had very strong growth, 30% plus. But reality is it's a long game, and we will take it in a methodical way. We have aspirations outside even South Africa and Australia, where we are quite strong, and we want to go into the other markets as well. So you will see some of that plan unfold over the next 3-4 years. We probably will lead with EVs. The world-class EVs that we put out has seen strong interest, not just in India, but outside as well. So that's probably will be a core part of how we expand internationally.
Okay. And when you talk about the EV portion as well, what percentage of your portfolio in terms of PVs will be EVs from here on? Because to my knowledge, the capacity that you have is around 5,000 units per month. The last we spoke was around 3,500. Have we ramped up to 5,000 units per month in terms of production? And secondly, the contribution that it will have to the overall portfolio.
Yeah, absolutely. So you're right. Operationalizing 5,000 is what we had said in Q1, so that we are there. But you got to remember that we just have put out only the top variant at this point in time. So we are in the 4,000 range in terms of production. But as the new variants come into play, in preparation for festive, we should come very close to the 5,000 number as well overall. In general, this year, our projection is that we'll probably have about 6 to 8% penetration of our market could be in that range of EVs of our overall portfolio. And that's what we are looking at, and we are on track for that kind of penetration.
Okay. And how big an impact is the rare earth magnets unavailability? Because there was a lot of hue and cry on that front. Has that anyway impacted the EV portfolio from a production perspective, or are you seeing any impact in the coming months when in terms of production?
Yeah, so as you know that China has put new export controls on rare earth minerals that needs end-use certification to ensure non-military. You see, the rare earth metals is not just for EVs, it actually goes into quite a bit of key automotive components. But if it has to come out as assembled parts, you just have to get end-use certification. And currently we have inventory for the affected parts to meet our production needs, but we are also working actively with our supply chain to ensure that we are able to source the assembled parts. We're also exploring alternate materials, and we're working with SIAM and the Government of India to expedite the certification that we need. So we are working very closely with our suppliers to ensure that there is no disruption to production. Currently, we have inventory.
Okay. And taking into consideration inventory, I mean, Mahindra is not sitting on a lot of inventory, but what is the industry looking like? Are you seeing inventory which is piling up, or what are channel checks indicating?
Yeah, so June, as you know, is generally a shoulder month for us and for the industry. And July onwards, we start to see stocking up happening. So from the numbers I've seen, it's a little bit on the higher side for the industry, but nothing I'll be very concerned about. This is traditionally a lean month for us and for the industry. So nothing of concern per se, but we obviously need to see some customer traction coming in as an industry in July and August going forward.
Okay. July and August is going to be interesting as well because 15th August is when you do unveil your new platform. We spoke about it last time as well, and we're talking about Vision.T, and that's the concept that you've teased so far. Anything that you would want to add on it?
Yeah, no, absolutely. We're excited with it. It's a new freedom event. We will reveal a new platform which will anchor our new vision SUVs. We are excited to share our vision and hope the customers will respond to the same excitement as they've done over the last 5 years.
Right. And very lastly, Nal, the kind of growth that you've seen in the first quarter, 22% kind of a jump in terms of volumes. Are you expecting that trend to continue in terms of FY26 as a whole? Or you think there could be some dips and it would probably normalize in that 15 to 20% kind of a range?
It's very hard to do crystal ball gazing so early in the year, but our projection is that we'll do mid to high teens, and right now we're on track to deliver mid to high teens growth.
Absolutely. All right. Thank you so much for speaking to us at NDTV Profit. Always a pleasure to speak to you.
Thank you. Thank you.
Okay, one of the biggest corporate stories in the last few days has been announced by Apollo Hospitals, a move that has been welcomed by the street. And now we have a chance to understand the rationale and the strategy behind it. Here's what's been happening. Apollo Hospital will be de-merging its omni-channel pharmacy and digital health business. This will take place in 18 to 21 months, and then the new entity will also be listed. It will unlock investor value, which is why you saw that run up in the stock price on the day it was announced. But what is the idea and the strategy going forward? To speak more on this, I'm pleased to be joined by Sunita Reddy, MD of Apollo Hospitals. Ma'am, thank you so much for your time. To us here at NDTV, we always love speaking with you. Let's just understand the thought behind this. When a lot of companies and hospital companies in the medical space are value adding and adding on businesses, you are looking at demerger as the way ahead.
Yes, so if you look at what we're doing, Apollo Healthco as it currently is in the retail pharmacy space and the online digital space. So being in a different business, which is largely retail and which is also digital, we required to really separate the company, and I think that with Advent coming in as a shareholder, this was imminent. Having said that, the rationale behind it, one is that, two separate businesses, two separate companies, and the second is the synergies will still remain because it's very crucial for us to continue to work with the digital funnel that currently Apollo Healthco has. If you look at the digital funnel, they have 120 million consumers, 40 million downloads, and they do about 900,000 transactions per day. So the synergies between capturing the volumes in the funnel is very important, and that does not go away. What goes away is the creation of a new company, which if you look at the sum of the parts valuation was not getting valued. The second part of it is to look at the fact that now with this new company, with this composite scheme, what are we achieving? We are moving Apollo Healthco omni-channel business into the new Apollo technology company. The second part of it is the amalgamation with KeyMed, which is the back end. And this adds huge value. Current revenue is over 7,000 crores. This is the second significant change that will add value to the company. And of course, Apollo Hospitals will still continue to own 17%. Over a period of time, post the 18 months, the front end of the company, which is AMPL, which is the pharmacies, which is very retail in nature, will be added to this new company. And with this, it becomes Indian owned and Indian controlled. So technically, you have two companies. One is Apollo Hospitals, which is not Indian owned and Indian controlled, and then you have the new company, which is Apollo Health Technology Company, which is Indian owned and Indian controlled, and moving beyond the sum of the parts valuation, as well as locking in the synergies that the digital space brings to Apollo Hospitals, which is of course the funnel for large volumes.
And that value unlocking is something that analysts and the street has recognized well. If you can give us a sense, ma'am, of what the leadership now looks like for both. What is this new entity going to be called? I'm sorry, I'm bundling up 2 or 3 questions, but around the same space. What is the leadership going to look like? When will it be listed, and what are we calling it?
So the new entity is going to be called Apollo Health Technology.
Okay.
And what does leadership look like? Clearly, Shobna Kamaneni will be the executive chairperson. Shobna is my sister and has really grown the pharmacy business and has started the digital. So she will continue to lead this. We have an excellent team of professionals who are part of this. And Sangeeta Reddy, who is part of Apollo Hospitals, will also be on the board of the new company. And in addition to that, we have 4 independent directors, and of course, we have already got Advent as an investor who will now own 12.1% of the entity.
Okay, so
with regard to hospitals, I'm sure you're already familiar with the team.
Yes.
We have a very professional team, and we continue to have Preeta Reddy as vice chairman. I'm there as managing director, and Sangeeta also playing a role as joint managing director.
Thank you so much.
Most welcome.
Sunita Reddy there with all the details of the deal that has really unlocked value for shareholders. That's why that focus on Apollo Hospitals. Of course, some time to see that new entity list. 18 to 21 months is what they're talking about. Thank you so much.
Thank you. Thank you.
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make, in our categories that we have been supplying to our defense forces, some of the best platforms in the world.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola? Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so
Good evening, you're watching The Big Question. I'm Sanjana. India and the United States are staring at a critical deadline. With just days left before the tariff pause expires, trade negotiators in Washington are working overtime. The stakes? A $500 billion trade ambition, thousands of livelihoods, and the future of India's export engine. India is demanding zero tariffs on labor-intensive products, textiles, leather, handicrafts, arguing that without them, doubling exports will remain a pipe dream. The US, meanwhile, is proposing a 10% surcharge over MFN duties, pushing aggressively for access to Indian markets for rice, for dairy, poultry, and GM soy. India fears that 70 crore rural livelihoods could be jeopardized by cheap imports backed by massive American subsidies. And in an unprecedented move, India has also pitched for a social security agreement to protect its professionals, something only 22 countries have signed with India so far. While many deals may offer limited tariff cuts on almonds and spirits, the larger issues of sectoral tariffs on steel, on aluminium and autos, all of those remain frozen. So tonight we ask, what will it take to break the deadlock, and can India secure a trade pact that protects both its farmers and its future? Let's find out. Let me quickly introduce my expert panel this evening. Pramod Bhasin, Chairman, ICR, a business leader turned policy voice who has tracked India's trade evolution for decades. He'll help us decode whether India's red lines are realistic. A. Sekhar, National President of the Indo-American Chamber of Commerce, representing the pulse of businesses on both sides. He's going to share whether the stalemate is hurting growth. We're also going to be joined by Ambassador Meera Shankar, the former Indian envoy to the US and one of India's most respected diplomats, to bring perspective on whether politics or policy is going to drive this final leg. So let's come to the stalemate. Why talks have stalled? India's team has extended their stay in Washington. Negotiations are stuck over agriculture, tariffs, now social security. US wants guaranteed access to Indian farm markets. India says livelihoods are at stake. Pramod sir, is this just tactical brinkmanship, or are we looking at a deeper clash of economic visions?
Good evening. Glad to be here. Thank you.
Glad to have you.
Honestly, I think it's tactical negotiations. Trump has shown all the way that what he's doing through these volatile negotiations that he goes through by announcing 90-day halts and then huge tariffs and then coming back, he's just using this to bring everybody to the table, in my view. He's done this consistently, by the way, in his business career. He's demonstrated that he uses something that is called the anchoring effect, whereby if he wants 100 for something, for some item, he asks for 1,000, and if he gets 150, he's eventually the winner. So I think he's bringing a lot of people to the table with a lot of major statements. Most of them, I think we should ignore, personally, because I think we've seen lots of these happening. And I think there's lots of room for us to bridge this gap. We have a major trade deficit. I mean, the US has a major trade deficit with us. which they want to reduce. It's a $45 billion trade surplus that India enjoys with them. But at the same time, what's happening nowadays is interesting, that there's going to be a big vacuum left by China. Because the tariffs on China are going to be higher. There are many areas in which they will not be able to produce the goods at the price that they need to sell to the US. And that is going to leave a gap for us, certainly for the more labor-intensive products that you talked about, textiles, leather, other things like that. And there are areas where we can reduce tariffs. There are areas like whiskey and wine and walnuts, etc., where we could reduce tariffs to allow more American imports without damaging local producers. So, and then we have a need to buy oil. We buy it from all over the world. We can certainly buy more from the US. We can certainly look to give them greater access to some of our markets, maybe not dairy, but certainly in agriculture. There are many other areas where we could give them access. I'm actually glad that India is holding its fort. It's holding its place firm and drawing a line in the sand, because we need to do that, because otherwise we'll be chucked around by the volatility that has been created. But at the same time, I think there will be a time when push will come to shove, and we will have to agree to a certain amount of give way. But I don't think this is a lost cause at all. I think India sits in a fairly advantageous position at this time, which, if we use it well, can really help us accelerate our own exports to America for the gap that will be left behind by China. So it's very strategic at this point in time, that the game that we could play ourselves.
So I'm going to scratch the surface for assuming that there is the anchoring effect in play, and of course assuming that our negotiators are well aware of it. Pramod sir, would you say India's push for zero tariffs on labor-intensive exports, would you say it's realistic, especially when the US is hardening its stance?
I don't think so. I'm not sure it is. I suspect that if he's going to maintain a 10% tariff across the board for most countries, that he will have a hard time relinquishing that. But I do think that if we agree to that and reduce some of our own tariffs that we have high, I wonder how much of a damage that will cause. The social security issue, by the way, which I didn't touch on, is an important one. We have a lot of professionals who work in the US, who go back and forth, who are delivering great services. By the way, as you know, none of this trade surplus deficit talk includes anything on services, fortunately. But that's an important element of cost that we incur, which we never recover, and which benefits the US coffers. So I think it's worth pursuing. So
we'll get into that.
Yeah, please.
We'll get into that. Ambassador Mira, thank you so much for joining us, and welcome to NDTV Profit. Diplomatically, is there any room for a face-saving compromise, or do you think that both sides have boxed themselves in?
Well, I think that both sides will strive for some kind of face-saving compromise, because President Trump wants to show that he can succeed. And at the moment, he's apart from a mini deal with the UK, which is kind of a framework agreement. He's still in negotiation with all other partners, Canada, EU, Mexico, and Vietnam. So no deals as yet, though at the moment his negotiating stance is basically a stick. There are no carrots for India at all in the stance that the US has adopted at present. That is, I hold the stick. If you open up, I won't use it. So basically, I'm threatening additional tariffs. If you open up and give me concessions across the board, then I won't use it and impose those tariffs, except the universal tariff of 10%. The US claims it has no fast-track negotiating authority from Congress, and therefore they are not in a position to give tariffs below MFN. And if they go to Congress, you see, fast-track negotiating authority gives an up and down vote. People can say yes or no. But if they don't have it, then every congressman can move amendments or oppose it. And so it makes the task of concluding agreements with international partners almost impossible. Now, we don't know if Trump is going to seek that fast-track amendment, because at the moment, he's basically using trade as a policy to open up other countries without conceding anything in return. So with China, it's a mini deal, for the moment, it's kind of what they've struck is temporary, and there are 90 days for them to try to finalize it. But this reduces US tariffs, total US tariffs, to about 35%, while China imposes 10% tariffs on the US. So it's asymmetrical. China is confident that through subsidizing or manipulating their currency to lower value, they might be able to live with 35%. So people in India who are very confident that we can fill the space if China has higher tariffs, I think you need to take a realistic look at this. There's an opportunity. India doesn't have the manufacturing capability as yet on scale, and even Bangladesh and Vietnam actually outsell us on all labor-intensive products. So, and they have a duty advantage as well. So Bangladesh has zero duties as a least developed country. And I don't know about Vietnam, but certainly Bangladesh has an advantage. So this is something that India should pursue. And I think India has to be very clear that it has to be a deal which has mutual benefits. There are areas where we can certainly open up to the US, buy more energy, buy more aeroplanes. There are possibilities in gas as well. There are many possibilities, defense equipment, technology from the US. But at the same time, there are areas for India which are no-go, like wheat or rice. These are areas where India would find, or dairy, where India would find it very, very difficult to open up. There are things like walnuts or pistachios or other, like soybean oil, since we import oil. These are things we can buy. But to open up agriculture across the board, I think that is something which any government would find politically very, very difficult or almost impossible.
Absolutely.
So I think we have to hold firm, but also be willing to show flexibility if the US shows flexibility.
Sure.
It can't be a rollover.
Okay, so let me then bring in a word from A. Sekhar, because businesses are caught in limbo. What are your members telling you about the uncertainty?
Oh, well, Indo-American Chamber has been about 56 years, and we have predominantly members from the MSME community, and with a trade of $210 billion between us, which is to grow. We also have certain advantages, like we have certain high engineering exports, which are pretty good, but about the quality and the things what we are doing. And one more thing is that we are also pretty investing fairly well into the American enterprise to work on, so that to help them. So they do understand that our value of our knowledge, what we are able to bring in there to the table, is what is very important. So that's been one of those points which our team is trying to take advantage of. And definitely, as the rest of my panelists said, the sticky figures are something, they are little also political, like especially with respect to agricultural as well as dairy. These are two of those where, there's a predominantly, we have a huge workforce which is to be taken care. And we may agree a few things like, except the genetically modified ones, which are not absolutely a no-no, because, that's something which would put us back into serious trouble, which I think, sure, we are not going to agree to them. But on the deficit front can be easily resolved by our energy requirements and purchases. That would not be a great issue. But we still feel that, these negotiations would continue. It's not that, we may have an interim deal to happen. See, we have seen why supply chain resilience is something which is very, very vital. And so that the COVID explained us, and US is very wary about it. They can't be just dependent on China alone, and they need when you need something to have a split over to get you some high quality precision engineered products, then India would be one of the best.
India is your guy.
Yeah, India is a guy for it, and I think we are working towards that. Yeah, there are broader sectors which you need to have a give and take. We are talking about it, and US also understands that where is the point of inflection which they'll have to sort of agree. It's very important. Our team, the government team which has gone there, is pretty mature enough, and they know that to read the pulse, they work on it, and they seem to be doing a pretty good job out there, and we are pretty good. We have submitted our papers, we have been giving a lot of work on it, and in fact we recently did. In US is looking at we as a partnering for like high technology, like semicon manufacturing, quantum computing, and all those areas. So from IACC we did a series of roundtable discussions with the industry, the academia, as well as the U.S. consulate and us with our team. So we were able to submit a paper to our government to say that these are all points which you should take it up with them, which will be part of their deal when you're going for the trade negotiation. And this has been pretty receptive also there.
Okay.
So we are hopeful of that,
Okay. So for the first time, India is also pitching for something beyond tariffs. That's protection for its professionals, and what we were discussing at the start, a social security deal and why it matters. India wants a social security agreement similar to what it has with the UK. This would save professionals from double contributions and improve probability of benefits. Ambassador, do you see the US agreeing to this given its own domestic politics?
I don't. Because it's something we've been pursuing for a very, very long time, and the US has refused to discuss it all these years, primarily saying that you do not have a social security system which covers the bulk of your population on par with that of the US. So that has been the argument given. And at the moment, I think the deficit in the US is scheduled to grow. The bill, this big, beautiful bill which President Trump has presented, looks at cutting US funds for US programs like Medicaid and Social Security. So this is going to be quite tough in itself. I don't think that there would be willingness to actually discuss a Social Security agreement with India, which basically means avoiding double taxation. That is, if they are paying Social Security in India, then they shouldn't be paying it in the US, because then they can't take it back with them when they go. That is something which I really don't see this administration making a move in that direction, but it's something which we need to keep putting on the table and pressing for, because it puts our professionals at a disadvantage, since they have to contribute and can't derive the benefit of that contribution when they come back to India.
Absolutely. Pramod, so for India's services sector, is this, would you say, as big as tariff cuts on goods exports?
No, I wouldn't. I think for our services sector, just let me back up. You're talking about the Social Security issue,
That's right. That's right.
Yeah, no, it isn't. As the ambassador says, this is an ongoing discussion we've been having with the US for 15, 20 years. It is somewhat unfair, but the fact is, if they change these rules for us, then they'll have to change them for all the people who come to America from a variety of countries to work, which would be hard. It is true that our employees don't get the benefit of Social Security from the US once they come home. But, to be honest with you, I think we do get the benefit of many other things, and we do get the benefit of that Social Security and healthcare and other benefits while we're there in the US. So I don't see them doing it, but I absolutely agree with our ambassador that keep it as a negotiating point. It's a big one. It's a lot of money that we contribute to the US coffers. keep it as a negotiating point, and then work around it to see what else we can get. I do think the one area, if I may suggest, is different, is the manufacturing point about do we have the capacity or not. I agree we need more capacity, but the fact is that if the China leaves a big hole, then some of our factories will become more competitive and be able to compete, even currently, and some of that capacity can be added on. And I think that's an advantage we can take. But on the services side, I don't know how loudly I should say this, but we've all, through NASCOM and the IT businesses that I represent also, we've all asked for this for a long time. I don't know that any of us have been waiting with bated breath for it to come through.
Okay, assuming that, and one can hope, even if it is a negotiating tactic or even if it comes through, Sekhar, how much would this improve India's attractiveness as an outsourcing hub?
You see, it does definitely affect but the question is still, as far as the services as an outsourcing one, where else would you get this type of volume of people to do these services?
And talent.
Understand, yes. So I think they will have to look at us if they want to be also competitive to get their jobs done there. It will continue, and see the knowledge, the talent potential what we have, and the volume of talent potential what we have is something amazing, which with the demography what I currently have, which is at a big advantage. They do understand that. And yeah, these are points which we would use because these are like non-tariff barriers, like which is happening. So those are also ones which will take them to see that we get a better deal, to see both of us understand that we definitely need to have more trade happening between these two countries. And that's what we are catalyzing. And both governments understand that. So they'll have to have a leeway somewhere to get this done.
Okay, but while professionals, are watching closely, I think the elephant in the room and of course on the negotiating table is the biggest flashpoint that remains is the farm sector. The unmovable red line is agriculture. US is pushing for access to rice, for dairy, poultry, GM soy. India fearing price crashes, import surges, unfair competition. We're looking at 70 crore rural livelihoods that could be impacted. Pramod sir, are India's fears overstated, or do subsidies really make a level playing field impossible?
I think our fears are real. I think there's way too much employment. Unfortunately, the inefficiency of our agricultural sector does make us very vulnerable to cheap imports that may come through, particularly from the US. Their capacity to export is very substantive, far greater than our ability here to do anything about it. So I think these are real issues. Having said that, there are pockets and areas within that we can look at very carefully without harming local producers. We've talked about that. Perhaps it's whiskey, perhaps it's wine, perhaps it's walnuts. There are many other areas which I'm sure the experts know. Ashok Gulati, who works for us at ICRIER, has written extensively on this subject in the last week or 10 days. But we cannot afford really to open up the dairy sector and other sectors to an onslaught of imports from the US, which are to some extent not subsidized, but certainly are going to be driven by much higher ability to manufacture and capacity to scale, and therefore at price points which could be extremely damaging to us. So I think we've got to be very careful and very clear that that is an area we can't defend. I'll go back to one of the points you were making about professional services, if I may. The world will come to India. I don't think this is going to be impacting our ability to get more business done. All these GCCs that are coming here are not going to stop. They have nowhere else to go. It's very important we realize that. Of course, they could do more as AI and other things come in. They may do more domestically. They may insource a lot. But as you're seeing, the influx of GCCs into India is very large, and it's driven by American companies in large part. And they're the ones who will also stand up for making sure that that playing field doesn't change dramatically. But on agriculture, we have to be very careful as to what we give up and offset it with things that matters to the US. I think the point about defense, high tech, electronics, etc., is very valid. That's where we should direct our efforts rather than saying, send us more agricultural products if we can.
Okay, and beyond agriculture, India's industrial exports are also stuck in limbo. India wants lower or zero tariffs on textiles, auto parts, toys. The US is proposing a 10% surcharge over MFN duties. Without relief, India then risks losing competitiveness to Vietnam and Bangladesh. I'm cognizant that we are also running short on time. So, Ambassador, what precedent does then this set for future FTAs with the EU or ASEAN?
Look, whatever we do with the US would be a template also for what we do with the EU and with ASEAN, where we are updating our existing FTA. So we have to be quite careful in terms of weighing the sectors where we have flexibility and the sectors where we have to dig our heels in. India doesn't have commercial farming on a large scale. They're basically subsistence farmers with 2.5 acres. So the economies of scale that these huge American mega corporations are able to bring to the table is something which they cannot compete with. And since 50% of Indian livelihoods, the population, depends on this kind of subsistence farming, to really open up could cause widespread social and political turmoil in India if it increases our agricultural vulnerability. So it's something we have to be cautious about, but certainly, as I said, there are areas where we need the US and the US needs us. And the soft point is going to be how both countries can reach these points simultaneously and get congruence.
Absolutely. Thank you so much to all of my panelists that are joining me this evening for all of your insight, perspective and analysis. It remains to be seen now how these discussions move forward. But for years, like we have been saying, India and the US have talked about unlocking the full potential of a $500 billion trade relationship. But this evening's debate makes one thing clear. Ambition alone won't bridge the gap between protecting farmers at home and opening markets abroad. The choices ahead aren't just about tariffs and quotas, they're about livelihoods, competitiveness, and whether India can secure a fair deal without compromising its red lines. As negotiators extend their stay in Washington, the question isn't just if a breakthrough is possible, but whether either side is ready to make the trade-offs that history demands. We'll be here to track every concession, every standoff, and every opportunity as this pivotal chapter in India's economic story unfolds. Thank you for watching The Big Question.
Imports become the exception rather than the norm, and increasingly we do almost, last year for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make, in our categories that we have been supplying to our defense forces, some of the best platforms in the world.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola? Should I hold ICICI for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Imports become the exception rather than the norm, and increasingly we do almost last year.
Thanks for staying with NDTV. You're watching the Wednesday edition of the World Report, and I'm Arjun Samar Mahindran. Roughly 2 weeks since the US strikes on Iran's key nuclear facility, Tehran has officially suspended its cooperation with the International Atomic Energy Agency, or the IAEA. President Masoud Pezeshkian, in fact, has officially notified the cabinet of the enactment of the law suspending cooperation. Now, this comes after Iran's parliament, in fact, approved a bill on Wednesday to suspend cooperation with the UN nuclear watchdog. The latest now stipulates, the law in fact now stipulates that any further inspection by the IAEA would need approval by the country's Supreme National Security Council. And my colleague Mohammad Ghazali, in fact, joins us to unpack this. Ghazali, what's the latest you're picking up, and why has Iran taken this step? Is it just out of fear of confidential information reaching the West, or is there more at play here?
See, there are multiple reasons why Iran has upped the ante. One, because they have been accusing IAEA for spying or kind of favoring Israel and giving false report about their nuclear enrichment capacity, which led to the strikes by US and Israel just a couple of weeks ago. And that is why it still believes that IAEA is complicit or is working on behalf of Israel and is publishing some falsified reports accusing Iran of being able to develop nuclear bombs, while Iran claims that their entire nuclear program is a peaceful program. It has nothing to do with developing a bomb. Besides that, why Iran is doing it, there is also a reason behind it, that Iran also believes that perhaps this kind of pressure tactics will work with US, where Donald Trump was earlier planning to lift the sanctions on Iran and also release all the frozen funds in the West for Iran. But Donald Trump said that he changed his minds after Ayatollah Khamenei's comments criticizing Israel and US for attacking on its nuclear enrichment centers. So Iran, some way or the other, is playing the hard bargain game by upping the ante against IAEA, and because due to this law, now the IAEA inspectors can't get inside Iran to visit those enrichment centers or to even kind of determine that what is the status of the nuclear enrichment program of Iran. So that also gives them a leeway to create an official suspense over whether or what kind of damage those strikes did to Iran's capability to develop nuclear bomb.
Well, thank you so much for getting us the latest, Ghazali. Now, moving focus, in a clear message to China, the Dalai Lama has said the institution of the Dalai Lama will in fact continue, and the Gadon Phodrang Trust has the sole authority to recognize the future of reincarnation, ending years of waiting by followers of the Tibetan Buddhist spiritual leader, in fact, for details about his succession. Now, the exiled spiritual leader of Tibet confirmed today that he will have a successor when he dies, reassuring Buddhist followers around the globe that the 600-year-old institution of the Dalai Lama will continue. It is a landmark decision, viewers, for Tibetans, many of whom had feared a future without a leader, as well as for global supporters who see the Dalai Lama as a symbol of non-violence, compassion, and the enduring struggle for Tibetan cultural identity under the Dragon's rule. First, let's listen in to what the Dalai Lama actually said, followed by my colleague Gauri Dwivedi breaking it down for you.
Two very important points as far as the statement that was issued by His Holiness today. It was expected that on his 90th birthday, he would announce a successor, or he could even announce whether or not the tradition to have the Dalai Lama should continue or not. Now remember, the Dalai Lama is the spiritual head, the fountainhead of the Tibetan Buddhism thought process, and he's essentially Bodhisattva, as he's called, one full of compassion, spiritual journey, so to say, and the leader for the entire community. Now, there was an expectation that a successor would be announced. While a successor hasn't been announced today, His Holiness has very clearly pointed out that the tradition to have the spiritual leader, the tradition to have the Dalai Lama will continue. And that's a very strong message that's being given out to the diaspora, the Tibetan diaspora the world over. In India as well, we host very large number of Tibetans in the entire Himalayan belt as well. We also host the Tibetan government in exile here, and also a very strong message to China, which has been trying to host its own successor after His Holiness. So this is a very important announcement that came today. Though a successor is yet to be identified, a search will take place, but the fact that there will be one is very important, because this spiritual leader is also a rallying point for all the Tibetans the world over. And I think that is the single biggest message that's being sent out. Now, whether China is going to come out with its own successor or not, dispute what His Holiness's legacy is going to be, is something that we're going to get to know in coming days. But it's important to highlight that the tradition will continue in the strongest possible message to Tibetans, to Chinese, and to the world at large.
A day after US President Donald Trump threatened to deport New York mayoral candidate Zohran Mamdani, he has hit back as the US president, saying he refused to be intimidated after Trump said his administration would in fact have the Democrat arrested if he stops immigration and customs enforcement or ICE officials from doing their work in America's most populous city. Now, the Democrat also attacked Trump for praising New York's current mayor, Eric Adams, in his authoritarian threats. Mamdani maintains Trump's praises for Adams, who was elected in 2021 as a Democrat but is running as an independent, are unsurprising, but highlights the urgency of bringing an end to the mayor's time in City Hall. And what happens when America's richest tech mogul goes to war with America's most controversial president? Well, Elon Musk versus Donald Trump is no longer just a whisper fight, it's a full-blown political explosion. And my colleague Parmeshwar Bava, in fact, breaks down why Trump is targeting Musk, the $4 trillion bill that started it all, as well as Musk's plan to start the America Party.
In the land of rockets, electric cars, and raging egos, America's biggest billionaire and its most controversial president have just intensified their feud. It's Donald Trump versus Elon Musk yet again. And no, this isn't Twitter beef. It's no Truth Social beef either. This is deportation-level drama. Trump has now said he would take a look at deporting Elon Musk, the same Elon who once had a desk in Trump's own administration. So what happened to their bromance? Well, let's just rewind. Trump is furious over Musk trashing his beloved $4 trillion spending plan. You know, the one Trump called the one big beautiful bill. Musk calls it a disgusting abomination. He says it explodes US debt, helps no one, and turns Washington into what he called the Porky Pig Party. But Elon didn't stop there. He threatened to launch a third political party named the America Party, vowed to purge lawmakers who voted for the bill, and said the US is basically a one-party country. That's when Trump hit back, saying Musk only got rich thanks to government subsidies. To quote him, the US president said, Musk may have to close up shop and go back to South Africa. And then the ultimate Trumpism. He said, maybe we let Doge take a look at him. Yes, Doge, not the meme coin, but the Department of Government Efficiency, which Musk used to actually head under Trump. So now we have a president hinting at deporting America's most high-profile CEO, a billionaire threatening to overthrow Washington's two-party system, and Steve Bannon calling Musk an illegal immigrant, while some lawmakers are literally tweeting, "Send ICE after him." Musk, of course, denies any illegal immigration, saying he came on a J-1 visa, then an H-1B, and became a citizen in 2002, all documented. So what is this really? A spending fight, a broken bromance, or a billionaire lighting matches in the halls of power? Well, one thing's for sure, this isn't just another Trump tantrum or Musk meltdown. This could be the start of a third-party threat in American politics, or at least another headline Musk controls. But it's fair to say that from the Oval Office to the launch pad, this is no longer just about money and rockets. It's about power, it's about pride and political revenge, and the world is watching every post, every punch, and of course, every plot twist.
US President Donald Trump urged Iran-backed Hamas militants on Tuesday to agree to what he calls a final proposal for a 60-day ceasefire with Israel in Gaza that, in fact, will be delivered by mediating officials from Qatar and Egypt. In a social media post, Trump said his representatives had a long and productive meeting with Israeli officials about Gaza. He, however, did not identify his representatives, but U.S. Special Envoy Steve Witkoff, Secretary of State Marco Rubio, and even Vice President J.D. Vance had been due to meet Ron Dremer, a senior advisor to Israeli Prime Minister Benjamin Netanyahu. Trump said Israel has agreed to the condition to finalize a 60-day truce, during which time we will work with all parties to end the war, he said. He also added that representatives for Qatar and Egypt will deliver this final proposal to Hamas. Meanwhile, Donald Trump has threatened to impose a 30% or 35% tariff on Japan if a deal between the two countries is not reached before a deadline next week. Fell above the 24% tariff Japan was hit with as part of Trump's liberal day on the 2nd of April, when he announced steep import duties on countries around the world. Now, Trump also continued to cast doubt or aspersions that an agreement could be reached with Tokyo. On Tuesday, Japan's Chief Cabinet Secretary Yoshimasa Hayashi said he would not make concessions that could hurt his country's farmers to strike an agreement with Washington. Meanwhile, Tokyo stocks opened lower Wednesday due to the growing concern over the US-Japan tariff negotiations after Trump indicated that the idea of further increasing levies on imports from Japan was real. Meanwhile, Tokyo stocks opened lower. This is because of Trump's idea that a deal could not be reached. Meanwhile, here's a report.
No, I'm not. I'm not thinking about the pause. I'll be writing letters to a lot of countries, and I think you're just starting to understand the process. We've dealt with Japan. I'm not sure if we're going to make a deal. I doubt it with Japan. They're very tough. You have to understand they're very spoiled.
US President Donald Trump on Tuesday reaffirmed that India-US will soon strike a trade deal with much less tariffs, he says, allowing both countries to compete. Now, India and the US have been negotiating over a bilateral trade agreement, or a BTA as they are called, viewers, before the critical July 9 deadline of the 90-day pause on tariff escalations. Meanwhile, New Delhi has adopted a firmer stance on agricultural matters as high-stakes trade negotiations with Washington reach a pivotal moment. Government sources have informed on Monday. Meanwhile, NDTV Profit's Rishabh Bhatnagar brings the details.
If we're going to have a deal with India, possibly, and that's going to be a different kind of a deal. It's going to be a deal where we're able to go in and compete. Right now, India doesn't accept anybody in. I think India is going to do that, and if they do that, we're going to have a deal for much less tariffs.
What Donald Trump has said, and he's repeatedly been extremely positive about the sentiment around this U.S.-India trade deal before July 9 as well. Not just the entire trade deal, but the interim trade deal that is being negotiated before July 9. Sort of opposing commentary coming in from the US. It's always been very positive in terms of what sort of on whether a deal could be reached. But from the Indian side, there seems to be a stalemate that has been reached because Indian negotiators are refusing to budge on key US demands like access to agricultural sector and India's dairy sector, both of which are extremely sensitive. They tend to be very politically sensitive as well, given the fact that we are a very, very large agrarian economy, and a lot of small and medium farmers depend on those sectors for livelihood. So, for example, if American dairy enters India, they might be able to undercut the current prices that a lot of Indian farmers have set and the Indian government has set via its MSP program. So that is the number one sticking point. The other sticking point is that India wants further reassurance that there will be no additional duties once a deal is reached after after the first interim trade deal is reached under the bilateral trade agreement. That is the first, and that is another major point that there has to be as part of this interim trade deal.
Now we shift focus eastwards, where a day after Russia launched a massive assault on Ukraine, Kiev has in turn launched its deepest drone strikes into Russia, killing at least 3. Now reports say attack targeted a drone manufacturer in Ishkiv's province. It's 1,000 kilometers from the front line. Meanwhile, Russian President Putin has held a substantial phone call with French President Emmanuel Macron. It's the first in almost 3 years. For perspective, the French leader called for a ceasefire in Ukraine and the start of negotiations on ending the conflict, while the Kremlin said that Putin reminded Macron that the Ukrainian conflict is a direct consequence of the policy of Western states. With the region, the US has halted some weapon shipments to Kiev, the White House has revealed. Now, this comes as Russia's war against Ukraine has intensified in the past couple of weeks. The White House has stated that the decision was taken, in fact, to put America's interests first, following a Department of Defense review of US military support and assistance to other countries. That's what the official statement says. Now, the decision to halt some weapon transfers to Ukraine comes after President Volodymyr Zelensky pleaded with Western allies to in fact bolster its aerial defenses after intensifying Russian airborne attacks. Over in Washington at the Quad Foreign Ministers meeting, India, the US, Japan and Australia have together unequivocally condemned the April 22nd Pahalgam terror attack, vowing stringent action against state-backed terrorism. That's correct. EM Jaishankar emphasized a zero-tolerance policy for terrorism, asserting India's right to defend itself and urging the Quad partners to support this stance. Listen into what he said. Here's the report.
Quad is about deepening our convergence and expanding our common ground. I value our consultations on different dimensions of the Indo-Pacific in that regard. A lot is happening in the world, and I'm sure that our exchange of views will be very valuable for all of us. A word about terrorism in the light of our recent experience. The world must display zero tolerance. Victims and perpetrators must never be equated, and India has every right to defend its people against terrorism, and we will exercise that right. We expect our Quad partners to understand and appreciate that.
Well, yes, terrorism is something that India talks about often. This is not the first time. The External Affairs Minister was at the United Nations just a day before yesterday in New York, also highlighting terrorism. So on broad terms, certainly the Quad has made noises supporting the overall stance of fighting against terrorism and standing up to it. But that doesn't seem to be the full focus of Quad during this meeting, which happened in DC. But I do want to underline that there are other challenges that the Quad is facing. Each of those countries, Japan, Australia, India, along with the United States, even though there was so much emphasis on Quad cooperation by the United States, especially at the beginning of the year in January, there have been some shadows after that because the tariffs which Donald Trump has imposed have affected all of these countries. So there is some amount of bristling and friction there within the Quad, including Japan, which has been asked to increase its defense spending by the United States, and they're not so happy about doing that. So while overall front of cooperation as counterweight to China is important to Quad and remains in place, there are still a lot of mini fractures which have not been fully addressed.
An unnerving incident from the land down under. Viewers, in a shocking incident, an Australian domestic flight was delayed for 2 hours after a snake was found in the plane's cargo hold, as you see there on your screens right now. Now, the snake was found as passengers were boarding the Virgin Australia flight number VA337 at the Melbourne-bound airport for Brisbane. Fortunately, the snake turned out to be a harmless 60-centimeter green tree snake. However, for quarantine reasons, the snake cannot be returned to the wild. Now, news from the world of business, where CBS parent company Paramount on Wednesday settled a lawsuit filed by US President Donald Trump over an interview broadcast in October. Now, it's the latest concession by a media company to a president who has targeted outlets over what he describes as false or misleading coverage. Paramount said it would pay $16 million to settle the suit with the money allocated to Trump's future presidential library and not paid to Trump directly or indirectly. Del Monte Foods has kicked off efforts to pursue a sale as it filed for Chapter 11 bankruptcy proceedings in the US on Tuesday under an agreement with certain key lenders. Now, the company has said this in a statement. Now, Shubman Gill's team India prepare to take on England in the second test at Birmingham's Edgbaston. The spotlight is firmly on selection decisions, workload management, and of course, potential history makers. Trailing 1-0 in the 5-match series, in fact, after failing to defend 371 in Leeds, despite 5 centuries, including 2 by Rishabh Pant, India must now make bold tactical choices to stay alive in the series. This year's Wimbledon has featured a staggering wave of early exits from seeded players. On the men's side, 13 seeded players have fallen in the opening round itself, breaking the tournament record and tying the 2004 Australian Open for the most at a Grand Slam tournament. The previous Wimbledon record for most seeds to lose in the men's single first round was 11. Now, third seed Alexander Zverev was the highest seeded player to fall in the opening round. The German lost on Tuesday in 5 sets to heavy-hitting Frenchman Arthur Reidenkopf, who did not drop serve for the entirety of the match to secure his biggest career win by the PIF ATF ranking. The jury in Sean Diddy Combs' sex trafficking trial says it has reached a verdict on 4 out of 5 counts against the hip-hop mogul. The jury is in fact set to resume deliberations after reaching a yet-to-be-disclosed verdict on all but one of the 5 charges the hip-hop mogul faces. Now, the jury was stuck on the top charge, racketeering conspiracy. Prosecutors say Combs' defense team and Judge Arun Subramaniam reasoned that after just 2 days of deliberations, it was too soon to give up on reaching a verdict on all the counts. So rather than taking a partial verdict, Subramaniam told the jury to continue weighing the remaining charge. Here's a report. Well, that's all we have for you on this Wednesday edition of the World Report. Take care and have a wonderful day.
Imports become the exception rather than the norm, and increasingly we do almost, last year for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same
We have auto sales numbers that have trickled in, and one company that stands out right now is M&M. Joining us on the show to discuss the PV business and how passenger vehicles have actually performed in this month as well as during the quarter, we have Nalinikant Golagunta, CEO at Automotive Division, joining in. Nal, welcome to the show, and always a pleasure to speak to you at NDTV Profit. If you could help us understand, I was just looking at the trend in the month of June, as well as if I have to look at the quarter as a whole, strong numbers that have been reported. What has led to this kind of a growth this time around?
Firstly, thank you for having me on the show. So again, a strong month, like you said, growth of about 18% and for the month, and for the quarter, again, 20% plus. In line with what we have put out as mid to high teens growth for SUV. Frankly, the strength of the portfolio is what is carrying us forward. We've had some successful launches over the last 12 months. We've had 2 ICE launches in 3XO and Thar Rocks, and then we have 2 very strong launches in the EV space as well. So it's the demand for these products and the consistent demand we have seen for the products we launched before that, which is holding us in good stead.
Right. So now, is it the SUV portion which is actually firing, and where is it coming from? Is it from rural India or urban India?
Yeah, so as you know, within the passenger vehicle industry, SUVs has consistently outperformed the rest of the industry. But having said that, I think M&M has actually done better even against the industry SUV growth numbers. So we're outpacing that as well. For us, the growth has come from both rural and urban. And if you look at last year, I think urban was probably a little bit stronger than rural. But what we've seen this year in Q1 is we have growth coming out of Bolero, we have growth coming out of infrastructure and other investments which the government is doing in the rural areas as well. So that's starting to pop up as well, in addition to the urban growth, which has been going on consistently for us over the last 6-7 quarters.
Right. So are you expecting this kind of a trend to continue where, SUV sales will see higher growth even in the rural market?
Yeah, historically, we have seen over the last 3-4 years that the share of SUVs overall in the passenger industry has gone up. I mean, if you go back 5 years, it was about mid-30s in terms of SUV as overall percentage, but today it's in the 60s. So we believe that will continue to be the case. People are traveling longer, people are traveling on roads which can have varying quality, so they look for an SUV, and the safety that an SUV gives is also something which is a key buying factor.
Right. Overall, how much of this contribution has come in from the ramp up of new models which have boosted sales, versus the older ones?
Yeah, absolutely. So like I said, the 4 new models that we put out in the last 12 months, that's given us significant growth. But having said that, the core part of the business, which is Scorpio and 700 and Bolero, have been a strong backbone for us as well. So Scorpio continues to do 40,000-50,000 as a family. So that continues to be a bedrock for us. And on top of it, the growth is coming from the new models.
Okay. Now, when you talk about exports, we know it's still a small portion. How soon are you expecting that to ramp up? Because currently you just have 2 players in terms of peers who are capturing the export market to a large extent. There is expectation that M&M is going to follow suit as well on that front. So what's the trajectory looking like from an export perspective?
Yeah, it's a long-term game for us, international expansion. Even this quarter, we actually had very strong growth, 30% plus. But reality is it's a long game, and we will take it in a methodical way. We have aspirations outside even South Africa and Australia, where we are quite strong, and we want to go into the other markets as well. So you will see some of that plan unfold over the next 3-4 years. We probably will lead with EVs. The world-class EVs that we put out has seen strong interest, not just in India, but outside as well. So that's probably will be a core part of how we expand internationally.
Okay. And when you talk about the EV portion as well, what percentage of your portfolio in terms of PVs will be EVs from here on? Because to my knowledge, the capacity that you have is around 5,000 units per month. The last we spoke was around 3,500. Have we ramped up to 5,000 units per month in terms of production? And secondly, the contribution that it will have to the overall portfolio.
Yeah, absolutely. So you're right. Operationalizing 5,000 is what we had said in Q1, so that we are there. But you got to remember that we just have put out only the top variant at this point in time. So we are in the 4,000 range in terms of production. But as the new variants come into play, in preparation for festive, we should come very close to the 5,000 number as well overall. In general, this year, our projection is that we'll probably have about 6 to 8% penetration of our market could be in that range of EVs of our overall portfolio. And that's what we are looking at, and we are on track for that kind of penetration.
Absolutely. All right. Thank you so much for speaking to us at NDTV Profit. Always a pleasure to speak to you.
Thank you. Thank you.
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make, in our categories that we have been supplying to our defense forces, some of the best platforms in the world.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola? Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
The Nifty closes below the 25,500 mark, ends lower for the day. Shriram Finance and HDFC Life Insurance are the top losers in Nifty. Nifty Realty falls 1.4% and is the top losing sector for the day. Anil Ambani responds to SBI's order and clarifies he was a non-executive director not responsible for Arcom's daily operations, urging SBI to withdraw the fraud classification. The Apollo Group undertakes family ownership restructuring. Preetha, Sunita and Sangeeta Reddy will continue to manage the flagship business. Shobana Kamineni will lead the recently demerged Apollo Health Tech. Sources tell NDTV Profit, Harinder Pal Singh Banga and his family, one of the early investors in Nykaa parent FSN e-commerce ventures, look to pay stake worth $150 million via a block deal. Sources tell NDTV Profit, GST on cigarettes, carbonated drinks and high-end cars may go up. Government sources say India has pitched for a social security agreement as part of the ongoing trade negotiations with the US. The government permits ride-hailing services like Ola and Uber to set their fares at up to double the base rate during peak times, an increase from the previous limit of 1.5, and not go below 50% during off-peak hours as part of the newly introduced motor vehicle aggregator guidelines. The toll in the explosion at the Sigachi Industries pharma plant in Sangareddy district of Telangana rises to 40 as the state government will also ensure a compensation of 1 crore is paid to the kin of those who died in the horrific accident. Good evening. You're watching Profit 360 on NDTV Profit. I'm Sanjana. Along the next half an hour, we're going to bring you the latest on markets as well as national and international news. So let's dive right into it and have a look at how the markets fared today. The Nifty closed below the crucial 25,500 mark, ending the day on a weaker note as selling pressure intensified. Shriram Finance and HDFC Life Insurance emerged as the biggest laggards, dragging the index down. The realty sector was the hardest hit, falling 1.4%, with Brigade Enterprises and the Phoenix Mills leading the decline, ending the sector's losing streak to 5 consecutive days. But for more, let me quickly go over to my colleague Harsh for a detailed market roundup.
Well, we've closed below 25,500, but it's not been a very bad day on the Nifty. We've recovered a wee bit from the day's low. That's the likely positive we can take out of this. And we've closed above 25,400. And those are the couple of positives to take away. In terms of what pressured the index, well, it's the heavyweights essentially, and the financials. Let me talk about the heavyweights first. And HDFC was down 1.4% nearly, and there was pressure on Reliance right through the day, and therefore those heavyweights pressured the index. It's also ICICI, Kotak, all of those which were down nearly 1% each, and therefore you saw that pressure as well. L&T was the other laggard, and that one too pressured indices, and the contributors will come up on your screen and you'll see that impact from some of those names. And in terms of the gainers as well, it was the metal names which actually led. Tata Steel, JSW Steel were the key leaders in trade today. In fact, Tata Steel up nearly 4% in trade, so very strong move. But they aren't necessarily heavyweights, and therefore we didn't see much of a move in markets due to that. Due to those stocks really moving. So again, something to keep in mind. It's some of the heavyweights which have pushed the index lower. You're also seeing an HDFC Life, which is a top loser in trade. IndusInd Bank was the other one which saw some pressure. So those were some of the bigger losers. Bajaj Twins, both Finserv and Finance, were also on the losing end of the spectrum today. Now let's talk about the broader markets. Now the breadth was unfavorable at the broader end. We saw some bit of recovery, especially within the mid-cap space late, right in the last hour or so of trade, and the Nifty mid-cap from the lows bounced back quite well to close absolutely flat in trade. So something to keep in mind, that the broader end saw a bit of a recovery. Even the small cap index saw a bit of a recovery, but much lower than the mid-cap. The mid-cap recovery was especially stood out for me. In terms of sectors, we did speak about a couple of sectors, but consumer durables, metals were the key winners in trade today. Realty was the key loser. Well, there were plenty of sectors we did really nothing much. Pharma, auto, IT were some of the sectors where, just about flat to maybe 1/3% of gains that we saw today. But on a day like this, that's not a bad day to take home some bit of gains at least, and we saw some of that in trade today. So that's how it essentially played out. We've still got a couple of trading days ahead of us. We need to wait and watch how this week closes out.
Right, thanks so much for that. And moving on to some big news coming in, Harinder Pal Singh Banga and his family, the early investors in Nykaa's parent company, are set to sell a stake worth $150 million. That's about 1,284 crore through a block deal. Now, this sale represents about 2 to 2.5% of Nykaa, offered at a 4% discount to the current market price. Banga currently holds 5% of the company and will cut his stake roughly in half. Last year, the family also sold a 1.4% stake in a similar block deal. Now, your luxury goods are set to become more expensive as the GST levied on them is expected to be hiked. These goods are taxed under the 28% slab and attract compensation cess. Sources told NDTV Profit that the cess may be replaced by a health and green cess. My colleague Shrimi Chaudhary brings us more.
Well, ahead of GST Council meeting, which is expected soon, a very important proposal is under discussion to introduce a green and health cess on selected items, particularly on the luxury and sin goods, ranging from tobacco products like cigarettes, high-end luxury cars, as well as carbonated drinks. So, at present, these select items attract 28% of GST and also subject to compensation cess. Now, compensation cess is a regime set to expire by March 31st, 2026, and a group of ministers as well as centre and state officials are working towards on the future of compensation cess, that what will happen beyond that deadline. So couple of options are on table which is under active discussion, include to subsume that levy into the GST rate, which could definitely move up the effective rate of GST on these select items. And the second option is to replace the compensation cess with health or green cess, or either of two or both. Now, compensation cess, as definition goes, it was introduced to compensate state which were expected to face loss due to introduction of GST, and they've been given some share of that till July 1st, 2022. Now, government is utilizing cess money to repay its debt, which will be fully paid by January 2026, that was taken during the pandemic time, and the remaining 40,000 crore could be distributed among states. So that was also one important point which these group of ministers is looking into, and perhaps it could be one of the key agenda of the upcoming GST Council meeting. On the rate rationalization part, GST 2.0 is moving towards, three-tier structure from its current four-tier structure, which is 5%, 12%, 18%, and 28%. The sources are telling us that the suggestion has come and the proposal has come to drop the 12% tax slab of GST and merge some of the item with the lower tax slab, which is 5%, and some item may go to the 18% tax slab. However, no decision has been taken so far, and perhaps this could be also one of the key agenda of the upcoming GST Council meeting, is what indication we are getting.
And moving on, the government has unveiled the new motor vehicle aggregator guidelines of 2025, ushering in significant changes for ride-hailing platforms like Ola, Uber and Rapido. So under the updated rules, cab aggregators can now charge up to twice the base fare during peak hours. That's an increase from the previous 1.5x cap, while fares during off-peak times can drop to as low as 50% below the base rate.
The Motor Vehicle Aggregator Guidelines of 2025, rolled out by the Ministry of Road Transport and Highways, allow cab aggregators to charge up to twice the base fare when demand spikes. This is up from the previous cap of 1.5 times. But there's a silver lining as well. Fares can dip to 50% of the base rate during quieter hours. So a ride with a 100 rupee base fare could cost anywhere from 50 to 200 rupees depending on the clock. Plus, private motorcycles can now double as taxis, aiming to cut traffic and pollution.
कई बार ऐसा होता है कि एक ट्रिप हमारे पास बचता रहता है, अब उनके पास कैसा इमरजेंसी है मुझे नहीं पता, लेकिन मुझे वो रेट में लगता है कि मेरा नुकसान है तो हम वो ट्रिप एक्सेप्ट नहीं करते हैं. और रेट जायज़ होना चाहिए कि जिससे ड्राइवर को भी 2 पैसा बचे और जो है मतलब सवारी को भी ना लगे कि मुझे ज़्यादा मेरे से लिया जा रहा है.
Safety is getting a boost too, with a mandatory 5 lakh rupee insurance for passengers and 10 lakh term insurance for drivers. This framework also clears way for formalization of the gig economy. States have 3 months to roll out these rules, which also slap a 10% cancellation fee capped at 100 rupees for passengers bailing without good reason.
बाइक से ओला वालों का काम सबसे ज़्यादा कम हो गया है. ओला कुल मिला के ठीक भी देता है, ऊबर ज़्यादा ही डाउन करता है, तो उससे दिक्कत भी होती है. ओला ऊबर वालों का ही भला कर पाते हैं, हम अपना पेट बहुत मुश्किल से पाल रहे हैं.
इंश्योरेंस वगैरह तो हो जाए तो बहुत ही अच्छी बात है. ये तो जो है मतलब कहाँ ड्राइवरों को कुछ बच पाता है जो अपने लिए कुछ सेव कर पाए और इंश्योरेंस करवा पाए.
You heard from the drivers, while they are very much positive about some of the newer rules like insurance, like health insurance, like life insurance, as well as the training sessions that are a part of these new motor vehicle guidelines. What they are still very, very optimistic about and hopeful about is the fact that they want better fares, they want a better livelihood for themselves, and that is something that these guidelines don't talk about. They only talk about surge pricing for these aggregators, but how about the contributions that now some of these drivers will now be able to get as part of the higher fares that these aggregators will now be able to charge? This is Rishabh Bhatnagar reporting from New Delhi with camera person Surat Singh.
And we have a quick update coming in. Anil Ambani has issued a statement saying he's shocked by the SBI's Fraud Identification Committee order and has clarified that he was a non-executive director, not responsible for RCOM's daily operations, and has urged the SBI to withdraw the fraud classification. Now, just to refresh your memory, this is after the SBI has decided to report the loan account of Reliance Communications as fraud in a case dating back to 2016. The SBI will also report the name of Anil Ambani to the RBI. But for a background into this and Anil Ambani's downfall, once the sixth richest man, let me quickly go across to my colleague Vishwanath Nair, who's standing by for a timeline of events that has eventually led to this case, really, and a bunch of other cases. Vishwanath, over to you.
Right. So, Sandhya, Sanjana, apologies for that. But what has happened here is essentially there's been a case that SBI has filed. This is a fraud classification for Reliance Communications. This stems from a 31,580 crore loan that RCOM had borrowed from multiple lenders led by State Bank of India. According to SBI's findings, funds were diverted through subsidiaries and associate companies for reasons other than what was actually present in the loan document, and therefore this becomes a case for fraud. SBI says that it has sent a report to the RBI, which involves, of course, RCOM as well as Anil Ambani. We have to look at what Anil Ambani's checkered past looks like, because a lot of companies under him have actually gone into the insolvency proceedings and other issues that have faced these companies. The first of which, of course, is RCOM, considering that we are talking about specifically this company. 2019, RCOM was formally admitted to the insolvency. The case had been going on for much longer than that. RCOM currently owes over 49,000 crores to creditors. A insolvency proceeding is ongoing. Creditors have finalized who the bidder is who's going to buy RCOM, but the approval from the courts is still pending. We'll look at another company, Reliance Naval and Engineering, which went into insolvency back in 2020. This is, of course, a company that Reliance Group bought because that company was in stress, and then eventually Reliance Group's company also went into stress. It was actually it actually owed more than 13,000 crore to lenders. What it also did was it was actually acquired by Swan Energy back in 2023, according to public information that is available. Another company of the Reliance Group, actually one of the flagship companies, Reliance Capital, that was a big one. In 2021, the RBI actually sent it to insolvency because the company was undergoing severe financial stress. It owed lenders more than 40,000 crore. It was only in 2025 that Hinduja Group, which had actually been identified as the buyer a long time ago, but in 2025, they closed the transaction and they bought Reliance Capital under the insolvency proceedings. Outside of insolvency, other companies have also gone through stress, like, for example, Reliance Commercial Finance, which was sold to Autumn Investments back in 2022, and then Reliance Home Finance, which was also sold to Autumn Investments in 2023. So these are all the companies which have currently undergone stress. Of course, there's a lot of other storied history of Reliance Group companies undergoing a lot of financial stress, as well as questions by regulators. But of course, these are the important ones that we're highlighting today.
Right. Vishwanath, thanks so much for giving us all of those details. This is, remember, as Anil Ambani has challenged the SBI's fraud tag. We'll continue giving you the latest developments into this story. But for now, moving on, while many hospital companies are focused on value adding to their existing businesses, Apollo Hospitals is looking at a demerger as a way forward. To shed more light on Apollo's leadership and the upcoming Apollo Health Tech, we had with us Sunita Reddy, Managing Director, who provided details on this listing. Let's listen into the conversation at Apollo Hospitals Enterprise had earlier today.
Let's just understand the thought behind this. When a lot of companies and hospital companies in the medical space are value adding and adding on businesses, you are looking at demerger as the way ahead.
Yes, so if you look at what we're doing,
Apollo Healthco, as it currently is in the retail pharmacy space and the online digital space. So, being in a different business, which is largely retail and which is also digital, we required to really separate the company. And I think that with Advent coming in as a shareholder, this was imminent. Having said that, the rationale behind it, one is that, two separate businesses, two separate companies. And the second is the synergies will still remain, because it's very crucial for us to continue to work with the digital funnel that currently Apollo Healthco has. If you look at the digital funnel, they have 120 million consumers, 40 million downloads, and they do about 900,000 transactions per day. So the synergies between capturing the volumes in the funnel is very important, and that does not go away. What goes away is the creation of a new company, which, if you look at the sum of the parts valuation, was not getting valued. The second part of it is to look at the fact that now with this new company, with this composite scheme, what are we achieving? We are moving Apollo Healthco omni-channel business into the new Apollo technology company. The second part of it is the amalgamation with KeyMed, which is the back end. And this adds huge value. Current revenue is over 7,000 crores. This is the second significant change that will add value to the company. And of course, Apollo Hospitals will still continue to own 17%. Over a period of time, post the 18 months, the front end of the company, which is AMPL, which is the pharmacies, which is very retail in nature, will be added to this new company. And with this, it becomes Indian owned and Indian controlled. So technically, you have two companies. One is Apollo Hospitals, which is not Indian owned and Indian controlled, and then you have the new company, which is Apollo Health Technology Company, which is Indian owned and Indian controlled, and moving beyond the sum of the parts valuation, as well as locking in the synergies that the digital space brings to Apollo Hospitals, which is, of course, the funnel for large volumes.
And that value unlocking is something that analysts and the street has recognized well. If you can give us a sense, ma'am, of what the leadership now looks like for both. What is this new entity going to be called? I'm sorry, I'm bundling up 2 or 3 questions, but around the same space. What is the leadership going to look like? When will it be listed, and what are we calling it?
So the new entity is going to be called Apollo Health Technology.
Okay.
And what does leadership look like? Clearly, Shobna Kamaneni will be the executive chairperson. Shobna is my sister and has really grown the pharmacy business and has started the digital. So she will continue to lead this. We have an excellent team of professionals who are part of this. And Sangeeta Reddy, who is part of Apollo Hospitals, will also be on the board of the new company. And in addition to that, we have 4 independent directors. And of course, we have already got Advent as an investor, who will now own 12.1% of the entity.
Okay, so
with regard to hospitals, I'm sure you're already familiar with the team.
Yes.
We have a very professional team, and we continue to have Preeta Reddy as vice chairman. I'm there as managing director, and Sangeeta also playing a role as joint managing director.
Okay. No, it's just amazing how the businesses are run. So, which is why I just wanted to highlight that point. And thank you so much for giving us clarity on that. I'm just going to ask you. So, on the listing timeline part, ma'am, do you want to come in 18 to 21 months to change all of these structures and listing post that?
Yes, 18 to 21 months.
Okay. Let me just come to the hospitals business for a second and what it looks like post this restructuring. One of the reasons that analysts are excited, the street welcomed it very well, was because of the value unlocking which was seen. And let me bring that down to the core margins of the hospital business versus the consolidated business, which is what we talk about every quarter. As a standalone, will we expect the hospitals business to see the 24-25% margin range going forward?
Yes, I think we clocked last 24-25, 11,280 crores of turnover with a 24.3% margin. We are quite optimistic that these margins won't go away. Of course, we're adding 4 new facilities by the end of the year, which will be just partially dilutive because, we have very, very strong cash flows. And in terms of growth, current growing at 14%, with the addition of the newer potential growth, uplift in revenues of another 10% over the next 3 years. And of course, maintaining our ROCEs, current ROCEs of existing hospitals at 26%. But over a period of 3 to 4 years, this will be in excess of 20%. So I think there's growth, there's EBITDA growth, there is stability in margin, and new volumes coming in from the new company will definitely improve both EBITDA and improve margins.
In terms of, and I'm talking about hospitals now and the hospital business, in terms of expansion, I think it's safe to say among the listed players, the most aggressive expansion is with Apollo Hospitals. Some 4,300 odd beds is what you plan to increase. Are these going to be largely greenfield? Is this going to have a bit of a hit on EBITDA for some time while that expansion rolls out? If you can give us any color on that.
So the 4 hospitals that we're opening this year are brownfield. Kolkata was an acquisition which required some renovation. Gurgaon was an acquisition that required renovation. Sandhya Light was a building that already existed. Pune was an acquisition of 250 beds where we're adding 200. So in terms of, I think that these are brownfield. Further 2 years later, we will be adding 2 greenfields, which is Wadley and OMR. I mean, another facility in Chennai, which is on that OMR highway, the new part of Chennai.
Okay. So in terms of the impact of that 8,000 crore capex spend on the profitability, do you see that as any kind of a concern, the financing of that? If you just can give us a sense there.
So in terms of profitability, our existing margins are at 24.3. We believe that better operating leverage coming from volumes in the existing will drive it to 25. Having said that, we are also looking at cost-cutting measures, which will save us 80 basis points. So while looking at 120 basis points loss from the new hospitals, there will be an 80 basis point saving from our current strategy. And we do believe that new volumes, operating leverage will contribute to this. Having said that, we already have very robust cash flow. So we're generating 1,200 crores of EBITDA. This is vastly different from the time when we last added hospitals when we had only about 700 crores of EBITDA. Today we have 2,700 crores of EBITDA and we have free cash flow of 1,200 crores. Debt equity ratio 0.2 of debt. So very strong balance sheet that will enable us to grow both organically and inorganically.
Just a couple of questions on Apollo Health Tech, if I may. You've talked about a 25,000 crore revenue target. How do you go about this? What is the strategy there? And is part of it, at least for the pharmacy business, adding more of own brands and own products?
It certainly is. I think if you look at, let me break it down for you. If you look at, each of the verticals, you can expect to see a 20% growth. And this 20% more than, as you talk about private label, currently 17.6% of revenues in the offline comes from private label. The strategy is to push private label both on online as well as through KeyMed, which is a completely new funnel. So as we look at the EBITDA going forward, when we reach currently moving from 16,239 crores to 25,000 crores, there is a clear visibility of 1,000 crores of EBITDA emerging from offline, from the pharmacy business, 700 crores from EBITDA from KeyMed, and very conservative 50 crores of EBITDA coming from the digital business. So clearly, I think that 2027 we have a very strong growth path ahead with profitability and huge growth in EBITDA.
And will the insurance business have a big role to play? Because that is a fairly new addition,
Yes.
I think just about a month. How has that been doing?
So I think, we've just started. We could look at 80 crores of turnover from the first year and then move into profitability where the margin is 20%. So I think when I said conservatively 50 crores of EBITDA coming from that, insurance will be one of the revenue streams that will continue. And don't forget, 24/7 has 4 revenue streams. So I think that there's an opportunity to do so much more.
Surely. Exciting times ahead. Thank you so much.
Most welcome.
Sunita Reddy there with all the details of the deal that has really unlocked value for shareholders. That's why that focus on Apollo Hospitals. Of course, some time to see that new entity list. 18 to 21 months is what they're talking about. Thank you so much.
Thank you. Thank you.
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about
Hello and welcome. You're watching Ask Profit on NDTV Profit, and I'm your host Himakshi Bahugna. And today I will be taking up all your stock related queries. So don't forget to WhatsApp us or call us directly. The numbers are there flashing on your screens right now, viewers. And on the show, we will be joining by Vaibhav Vidwani, research analyst at Bonanza Portfolio on the fundamentals. Hi Vaibhav, good evening.
Yeah, thank you. Thank you for having me.
And Sarvendra Srivastav is also joining us on the technicals. Hi Sarvendra, good evening.
Yeah, good evening. Very, very good evening.
Yes, so our guests are there. Let's proceed further with the show. First query today, it's written by Prerna from Baroda, and she's asking whether it's the right time to invest in Exide Industries. So she hasn't mentioned the time horizon. So firstly, I'd like to take the fundamental view on the counter. Vaibhav, what's your sense on this company, and is it advisable for Prerna to enter this company?
Exide is currently trading at a PE of 40 and industry PE is of 28. So because of increasing competition in this particular segment, we have seen profit booking in this stock. As we know that there is very high demand of EVs and all, and there is very high requirement of battery, but then also this stock is not giving very good returns as per their price movement. So that is the reason, because of increasing competition. So I will say that we should wait and we should observe that what are the company's strategies for upcoming quarter, and as per that we should invest.
Okay, so thank you so much for that. And Sarvendra, I'd also like to take your view on the counter very quickly. How is it looking on the charts?
I think still below the long-term markers. That is what it's doing right now. The stock is still below the long-term markers, and my sense is that this bounce got sold into. So 390, 400 going forward. I think short to medium term will be a decent hurdle. I don't see it much kind of clearing 410, 420 in a hurry. So I think still 1 to 3 months before it can add strength to the uptrend, or else possibly I think broadly it will slip towards that 330, 320 mark. So 330 to 390 is the trading range right now. Right now we are at the upper end of that range. So I would believe that over the next 1 to 3 months you would be slightly shifting or drifting down lower towards 330.
Right. Thank you, Sarvendra, for that. And let's go across to another query. Gunjan from Patiala holds 200 shares of Nykaa at 159 a piece, and she's asking whether she should hold or sell the counter. She's made some profits of around 11,000 there, is what I can see. Again, she hasn't mentioned the time horizon. So, you know, we just got an exclusive regarding Nykaa stake sale, in which the Banga family is actually looking to sell $150 million stake in Nykaa. So how is this news going to impact the fundamentals of the company? First, Vaibhav, coming to you on this one, how do you view it fundamentally? Also, what would your suggestion be to Gunjan?
So means if a business is good, that doesn't mean that we should always enter in that business, because it is also important that at which valuation that stock is trading. So if that thing is trading at very expensive valuation, then we should not go for it. Like Nykaa is trading at a PE of 916. Okay, so it is a very aggressive PE, and that's why they are also selling their stake. And even we observe that FIIs also have reduced their stake in this particular stock, and their revenue growth is not also that much very robust that we should give that stock a PE of 900 above. So I say that we should be cautious for regarding this stock, and we should look for other stocks in the market.
Okay, so that's a caution advice on Nykaa for long-term investment. And Sarvendra, quickly, you know, this particular news that has come in, it's definitely going to have some impact on the stock tomorrow in trade, is what we are anticipating. But currently, if I talk about today itself, so it's trading at 212, was also up in trade today over 2%. So what are you anticipating, and what are the charts suggesting?
See, the data here, I'm afraid, is not, in the sense, time-wise, I have very limited data here. So long-term views, very difficult to take out from here. Apologies. I think long-term view is definitely more difficult to take out here. This just seems to be a medium to short-term pullback going on, and don't see much headroom beyond 225, 230. I think whatever bounces or whatever upsides, I think they will be capped here. In the meantime, I think 170, 180 is a good floor. So here also, I think next 1 to 3 months could be range bound between 180 to around 230.
Okay. Thank you so much for that. And just a quick reminder for our viewers, now we are live from 7:30 to 8 p.m. So in just half an hour, you know, we can solve all your stock related queries, but you have to speed up. You just have to pick up that phone and call us on the numbers that are there flashing on your screens right now. And so just, you know, our technical guests, our fundamental guests are there to help you out with all your queries. So just don't, you know, what are you waiting for? Just pick up those phones and call us. We are waiting for your calls. And with that, we have a query, WhatsApp query from Arushi. She hails from Lucknow and is asking for stock recommendations in the mid-cap IT space. So again, there is no mention of the time horizon. So firstly, I'd like to come to you, Vaibhav. What are your top 3 picks in the mid-cap IT space for somebody who wants to invest in this space?
Means for mid cap, I will be little cautious, but yes, there is one very good stock which is persistent system, as this stock earlier also have performed, and they have that ability to get orders in upcoming years. But I will say that there is continuous turbulence in this particular segment. So we should wait till the time dust is not getting settled down, and then we should enter. So, and at that time, I think so that these stocks will be also available at more attractive valuation.
Okay, okay. And Sarvendra, what's your quick sense on this, and what are your top picks, keeping a short-term perspective in mind in the mid-cap IT space?
See, once you set short term, I think it becomes more little difficult for people like us. We are more medium to long term players. Short term, you might see some little headroom on the upside, but broadly, I would also like to mention here the Nifty IT. We were very bullish 2-3 quarters back when we were at around 32 odd levels on the Nifty IT. Now I think our targets have been met. 38,000, 39,000 were the targets. They've been met broadly. 40,000 remaining a psychological mark. I don't see the index crossing that number decisively. So very little headroom, around 2.5% headroom left on the Nifty IT. So this will not be my preferred sector going forward for the next 6 to 9 months. I think ideas, if at all, possibly might come on the sell side. Stocks that are in FNO, people can look at. If you have that risk profile, in the sense that you are a high risk trader, then you can look at being able to short sell also some of those names and the large cap names which are in the index. Rest, I think you should avoid the space. If you want to do some delivery buying or portfolio allocation, I think you should wait 3 to 6 months, because I think short term all the targets have been met in.
Okay, okay. Thank you so much, Sarvendra, for that. Now let's go across to our first caller joining us from Bengaluru. Hi, Lekhna. Good evening.
Good evening, ma'am.
Yeah, how can I help you today on the show?
I'm buying Adani Solar Energy at the price of 1169.
Yeah.
Quantity is 326.
Yeah.
I want to know both long term and short term. And can I add more, or it will reach us to my buying level?
Yeah.
I want to know this, ma'am.
Okay, okay. So you bought it at 1169, am I correct?
Yes, ma'am. Yes,
and currently it has fallen down to 879. All right.
Yes, ma'am.
And you are sitting on a loss of approximately 95,000 is what I can see
Yes,
on the
ma'am.
screens right now. All right. So Vaibhav, Adani Energy is the company in which she has invested in. And firstly, we'll talk about the fundamentals of the company. Should she stay invested in this counter for another 1 to 2 years?
Yes, we can remain invested in this particular stock because overall operational efficiency is good, and they are getting orders, and management is also aggressive. So yes, we can even expect growth, good growth in revenue in upcoming years. And currently that stock is even trading at a industry P which is of 47.4. So I will say surely we can hold this stock. And if we see in this particular stock, they have delivered a 43% of revenue growth. So yes, they have good ability to show to give us good returns in upcoming years.
Okay, and Sarvendra, since the prices have fallen down, she bought it at 1169, like I said, and currently it's trading at 879. So are you seeing any sort of bounce back there on the chart so that she can actually meet those levels that she bought at?
It's a very good case study for everyone, in the sense that just because things have fallen down and you go and buy them, I don't see merit in that. This stock was in news some few years back, and in that crash when it fell from around 3,000 all the way till 500. After that, I think it's not done much, in the sense it's just around those numbers. So I think it fell till around, I think 600-700 rupees. And of course, that it has been trading in a range of, the range is broad, so from 650, 700 all the way to 1300. But beyond that, I don't see anything happening over the last 2 years. So it's a huge range, but still the stock has not been able to recover what it lost over the last few years, where the market from 2023 has hit quite a few new highs. The Nifty and the indices and stocks have performed in the bull market. This one has clearly missed that bus. So automatically, I think the quality becomes a little suspect, in the sense that technically you will not want to, this stock will not come in your filter in the top 30, 40, 50 names. So I would say that exit on a bounce.
Okay, thank you so much for that. And just a quick reminder for our viewers there, and a quick disclaimer that NDTV is a subsidiary of AMG Media Networks, which is an Adani Group company, and the channel that you're watching right now. With that, we have a caller from Hyderabad on the phone line with us. Hi, Dheeraj. Good evening.
Good evening, ma'am.
Yeah, how
good
can I help
evening
you?
to the experts too. Ma'am, actually, first of all, thanks for the show. And I missed the 1 hour show actually. It is now trimmed to half an hour.
Yeah.
Is it a daily thing or?
Yes, it's a daily thing now. So our show, Ask Profit, will be live from 7:30 to 8 p.m. So we are expecting more and more callers like you. And please don't get disheartened. We'll cater to all your queries.
Yes, ma'am. Ma'am, my query is regarding, like, I have 6.5 to 7 lakhs of corpus fund, ma'am.
Yeah.
Which I have withdrawn from the some other stocks.
Okay.
So I would like to invest it in this week or tomorrow.
Yeah.
Whichever the experts suggest.
Okay.
So,
And do you have any specific
in which-
space recommendations which you've narrowed down?
Yes, ma'am. In which direction is the market moving? Will there be slight corrections, and which sectors are looking attractive? And I would like to know 2 to 3 individual counters from both the experts, ma'am. It will be so helpful for the short-term time frame, ma'am. Like for the next 2 to 3 months, I would like to get
All
some
right. So Sarvendra
suggestions from both the experts.
Sarvendra is our man for this. Sarvendra, Dheeraj has a corpus of 6.5 lakh rupees. He wants to invest for another 3 to 4 months. So are there any top sectors that you're looking at, or top 3 companies that, in which he can actually invest that money?
I think it's a very good question in the sense that this question would be with a lot of people right now who have some idle funds lying, and then they're looking in for some trading ideas. So when you are saying that you want to do a 3-4 month kind of a thing, that becomes short term for me. Yes, short term there is a breakout on the Nifty because last 6 weeks we were struggling. We were struggling at 25,300, and we are getting some support around that. We are getting some support around that 24,800 mark. So that range is kind of broken out. So you'd assume that 600, 700 points on the upside from that breakout are possible. So 26,000, 26,100, those could be the targets coming in for the index. So another 600-700 points could be pending. But if you're wanting to take that trade, you don't want the market to fall back into that 6-week congestion. So you definitely want that the market does not fall below 25,300 thereabouts. So with that sense in mind, if you can keep that 150-200 point stop loss on the Nifty and you want to trade, yes, you might look at some stocks, but I would tell him to stick to large caps in that case. The other thing that I'll definitely point out to all and sundry who are watching the show is that you have to also identify, which I keep on telling in my mentorship programs also, or when I'm trying to explain or teach someone, that you have to always decide which drum is going on right now. So the market to me looks like a drum where 70 to 80% of the balls are red, because in the bounce back they have not got into. I have seen so many portfolios, but the NAVs have not reached October 2024. So still people are just below those NAVs. This is still qualified as a pullback. So to me, there's more red balls in a 100 drum than more green balls. I would say 70-30 or 60-40 red to green. So if you start to pick stocks, by default, if you pick 10 stocks, you will get 6 red balls, which means those stocks in the short term will give you losses, and only 3 or 4 will give you some profits. So the risk reward or the mix right now is not that great, where you go and try and pick the long side. In fact, once you reach close to 25,800, 2600, I think this red-green ball ratio would be kind of 70-30 or 80-20. So it is easier to pick red balls is what I'm trying to say right now, looking at the risk reward of the market. We don't see headroom beyond 26,300, 26,400. So the picking has to be more on the downside is what my call is, but that is only for people who who have the risk profile to do F&O. So that's a disclaimer here. If you cannot short, all you can do is book profits and sit on some cash, which you are doing. So I would say that at least keep 50 to 60% dry powder out of this 6.5 lakhs that you are saying. Even if you want to get into the market in the short term, keep around 50 to 60% of dry powder for a better opportunity. One opportunity came just 6 months back, where we were getting the index at 21,000 800, 22,000. So if that opportunity comes again, you have some dry powder get into that to get into that trade again.
Absolutely.
So keep some dry powder, and with 2-3 lakhs you can play upside with a stop loss of 25,300 on the Nifty.
Yes, sir, Vedra. Thank you so much for that. Now let's go across to a caller joining us from Bengaluru. Hi, Shiv Kumar. Good evening.
Good evening.
Yeah, how can I help you today on the show?
Thank you for taking me up. I have been allotted 145 shares of HDB Financial Services today in the IPO at the price of 740 rupees.
Okay. So how are you feeling about that?
Yeah, I'm happy because the company belongs to a good promoter group of HDFC Bank and all those things. But I was listening to your commentary on the morning session with the management.
Yeah.
But I can foresee a good growth in the coming years, just like any other NBFC companies.
Yes.
But I would like to know, if I hold for 2 to 3 years, what kind of target can I achieve? Because I know there is no technical charts available for this company right now.
Yes, absolutely. So Vaibhav is the key person to help you with. So Vaibhav, HDB Financial, a 12,500 crore IPO, and got subscribed 16.69 times and was very much, there was an encouraging participation by the investors there. And Mr. Shiv Kumar holds 145 shares at the price value, which was at 740 rupees. So what do you have to, how are you viewing the fundamentals of this particular counter there?
So if we see that HDB is available at a PB of means about 3%. So, and in that particular segment, in affordable housing and housing space, if we see, so stocks are delivering a average growth of 25% growth in their AUM, whereas HDB is delivering growth of 20%. But as they have a very good operational efficiency, means we can expect that this stock should trade at a PB of 3. So if we consider the growth of 20% for next 2 to 3 years at the PB of 3, we can expect a target of 900 in this particular stock. So still there is a 60 rupees upside in this particular stock.
Okay, so 60 rupee upside in this particular counter is what Vaibhav is suggesting. Now let's quickly go across to a caller joining us from Tirupati. Hi Siddharth, good evening.
Good evening, ma'am.
Yes, how can I help you today?
Ma'am, my query is regarding between Vedanta and Power Finance Corporation, which is a good one for investing for dividend income.
Okay, Vedanta and Power Finance Corporation.
Power Finance Corporation.
Yes. All right. So are you a long-term investor, Siddharth, or a short-term investor?
I am looking for long-term, ma'am.
Long-term. So Vaibhav, if you had to pick between the two, what would your pick be?
So if we see, dividend yield of Vedanta is higher than the Power Finance Corporation. So dividend yield of Vedanta is at 9.27. And there are expectations that increasing prices of copper will support their net profits in upcoming quarters and years, because copper is very demanding commodity at this point of time. So I recommend that we should go for Vedanta.
Okay, so Vedanta is the pick by our experts for long term. With that, let's go across to a caller joining us from Bengaluru. Hi, Mr. Murli. Good evening.
Good evening, ma'am.
Yes. How can I help you today?
Thank you for taking up my query, and thanks for the panelists also.
Most welcome,
my
Mr.
view,
Murli. Yes.
Yeah. I bought one company called Shilsa Technologies.
Yeah.
In the power sector. I bought under shares recently at the rate of 1299.52.
Okay.
I was stunned by the balance sheet and the financial performance of the company. I felt the best is yet to come. It's just a 7.63 crore share capital with 2 bonus issues included. Or is their market cap of more than 6,000 crores.
Yeah.
I felt from their management tree or somewhere I read that their best is yet to come, considering their growth, the power sector growth.
Okay.
Keeping all these things, I bought under shares.
Yeah.
I'm willing to wait for more time. Can I wait or switch over to something? But I expect a minimum return of 15 to 20% per annum.
Okay, Mr. Murli, I'll get your query answered. Vaibhav, Shilchar Tech is the counter in which Mr. Murli has invested. He bought it at 5,299 levels. Currently, it's trading at 5,342, and a very, negligible amount of profit that he's sitting at, approximately of 4,000 rupees. So what would your advice be? Should he stay invested in this counter? Is it an attractive bet for a long-term investment purpose?
Yes, he can remain invested in this particular stock because stock is trading at a PE of 41, where industry PE is of 45, and they are into the transformers manufacturing. So that particular segment is expected to have very robust demand in upcoming quarters or years, I will say, because our government is also supporting this particular segment. And if we see, they have delivered very robust growth in their revenue. Their revenue growth was of 57% in FY25, so which is quite impressive. And their EPS in 24 was 80, while in 25 was 128. So I will say numbers are very impressive, and stock is available at very attractive valuation. So sure, we can hold this stock.
So the stock is available at attractive valuation, and we can probably hold this counter for long term. With that, Sarvendra, if you could just quickly give me a sense on